you're going to get. And all that also is really based upon how well you're taking care of the gold bar too. Bitcoin, you just buy and hold, buy and hold. And that's really the beauty of it. Buy and hold. So it comes to the point of, okay, instead of you buying that McDonald's for the day, you bought some Bitcoin for the day. So it's really a test of who's feeding their flesh and who's being disciplined. Okay. If you're being disciplined, inshallah, you'll be rewarded. Okay. So because Bitcoin is still early in its adoption, right, compared to gold, which is still at all-time highs as of this recording, right? Investors view it as an emerging store of value, and this is just massive potential, okay? And a lot of asymmetric upside, especially as we start seeing stuff like the US government invest into it, start seeing other countries start teaching it within schools and stuff like that. And we can just see the world going into a lot more borderless, financial, revolutionary, and freedom era within society. Whether you're a boss trying to place some employees in a whole another country, Bitcoin is really going to be an efficient way for easier payments. Just like I spoke about in the beginning of the video, there's been times where my bank has had maintenance at 3 a.m., 2 a.m., and I haven't been able to make some transactions, but was able to go dig in the crypto stash, go to my Phantom wallet, transfer it to my Coinbase, and was able to make the purchase that I needed to. Okay, so once again, having that decentralized, safe, and pretty much having your money parked away into a world that's not controlled by maintenance times and centralized control, whether it comes to banks, whether it comes to power with when you can send your funds and how you can send your funds as well too. Banks also come with certain things such as deposit amounts and withdraw amounts too. So a lot of things are really outside of your control when it comes to that. So having your money parked into a world that's going to be a bit more free is going to be best case scenario for yourself, for your survival as a human, and for your family if you have one too. So beyond its role as a reserve asset, Bitcoin and scaling layers are solving critical pain points in global payments, making transactions a lot faster, cheaper, and more transparent than the legacy banking system. Then it really streamlines international remittances. That's really the biggest part of Bitcoin, and it's really a blessing. Lets people from other countries be able to receive funds in case you want to send some money to your family, or you might have somebody that works for you or work for somebody in another country, and you'll be able to get paid quickly within the crypto. Okay. And traditional wire transfers can be extremely slow, like 1 to 3 business days, and don't forget, that doesn't include the weekends, and it can get declined due to the fact that they don't have to let that go through if they don't want. They can be expensive. You're going to be paying that wire transfer fee a lot of the times, and pretty opaque, right? You're not going to know when the money exactly is going to hit. It's not going to be direct, and you're not going to be able to check certain things. When you send Bitcoin, you immediately can go check the confirmation link, and you can go see it on the Blockchain Explorer, see exactly when the transaction is going to get confirmed. And what a confirmation is pretty much lets you know when the other person has received the funds, most likely. Okay. And it utilizes layer 2 solutions like the Lightning Network, which allows the value to be settled globally in seconds, bypassing multiple correspondent banks and drastically reducing fees dramatically. Okay, so let's talk about the Lightning Network. It's a second layer protocol built on Bitcoin that enables near instant zero fee payments for the most part, almost zero fee. And this technology is being adopted for everyday purchases and micropayments, proving Bitcoin's capability as a medium exchange, not just a store of value. And transparent and security. So every transaction is permanently recorded on the immutable public blockchain ledger. And this enhanced auditability reduces fraud risk and fosters greater trust between distant parties, which is often lacking in complex legacy cross-border payment systems. Okay, so you don't have to worry about any things like weird holds, weird stoppages, or things like that, which could be extremely frustrating when you're trying to do business or just buy something pretty simply. And it's definitely a big help to society, right? It's bringing in the democratization of finance. Bitcoin's greatest societal contribution is arguably the empowerment of financially undeserved and its ability to act as a lifeline in politically or economically unstable regimens. And banking the unbanked. Globally, billions lack access to traditional bank accounts due to high fees, certain things like ID requirements, and stringent KYC, which stands for Know Your Customer, and AML requirements, or geographical remoteness. Bitcoin only requires an internet connection and a smartphone or computer, and the wallet-based infrastructure opens up participation in the global economy to literally anybody on planet Earth, regardless of their location or documentation status. Which means that even if people in other countries don't have their papers and stuff like that, doesn't mean that they have to starve. So you have the ability to send people who don't have their papers and stuff like that or have a traditional bank account money, even if they're working for you, helping out family. So it really just comes in clutch in a lot of areas. And it's a refuge in hyperinflationary economies. So in countries experiencing currency collapse, like for example, Venezuela, Lebanon, or Turkey, citizens often see their life savings wiped out by government mismanagement. Okay, because at the end of the day, if the government controls the fiat currency, Bitcoin is decentralized. So it's not fair that you wake up, pray every single day, grind, and slave for your family. And just because the government wants to go to war or help out too many other countries, your life savings are now pretty much obsolete. So keeping our money in Bitcoin is going to be a really, 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 really strong scenario if you really care about your family's well-being and future as well too. Because you can see governments consistently go into debt, lose certain funding, shut down, and a lot of things happen. And Bitcoin provides a permissionless escape, allowing individuals to store their wealth in a digitally scarce asset that cannot be devalued by local central banks, thereby preserving purchasing power. And users must take direct responsibility for their Bitcoin's custody, right? So you're pretty much like your own bank. You got to be responsible of your secret keys. Don't be being loose with your information. And while channeling, this promotes a culture of self-determination and deepens understanding of monetary policy, leading to greater personal financial literacy. Okay, so be your own boss. Take control of your own account. And you don't even have to have your cryptocurrency on a network with a password and username. You could just hold it on a cold wallet or hold on a network like Phantom, which is just held by secret keys. So pretty much no one can go in and grab your money, not even the IRS. And how you make your money is going to be baked into just purchasing the asset. The potential for profit is rooted in Bitcoin's fundamental economic design and its non-correlated nature relative to traditional assets. And the supply shock mechanism. The price is a function of fixed declining supply meeting exponentially increasing demand. When a halving event occurs, which is once again when 210,000 blocks decide to get put into the cycle and halve, the daily supply of new Bitcoin is suddenly cut in half, while global demand from institutions, ETFs, which stands for exchange traded funds, and retail remains constant or increases. This creates a severe supply shock that historically precedes major price action, and it's going to be a lot more superior than other cryptocurrencies due to the fact that it's finite. Okay, so this is a really, really, really superior supply shock compared to other things too. Okay, a lot of other cryptocurrencies are going to be infinite. So don't expect other cryptocurrencies to hold the same base or store of value that Bitcoin has. You have to remember that finite superiority baked within it. Okay, it's not the same as other cryptocurrencies. And institutional adoption and validation. The introduction of Bitcoin spot ETFs and the allocation of Bitcoin to corporate and hedge fund balance sheets provides massive new avenues for capital influx. And institutions have longer time horizons and deeper capital pools, which adds legitimacy, reduces volatility over time, and drives up the baseline demand, especially as we see more governments holding it. And the power of long-term holding, right? The long-term strategy known as hodling leverages Bitcoin's historical performance, the fact that it's an asset that helps future. And a lot of the times when it comes to cryptocurrency or stocks, inshallah if God wills, you don't even have to look at the chart. If you invest your money into something that's putting a smile on people's faces and helping the world, a lot of the times you'll end up with the positive P&L within like 1 to 5 years, a good chunk of the time. It's plenty of millionaires of people who've never even looked at the chart once. Okay, so take that into consideration when it comes to your psychology of where you're investing. So despite extreme short-term volatility, right, it's a side effect of inelastic supply, Bitcoin has delivered superior annualized returns over the past decade compared to most traditional asset classes, rewarding patience and a belief in its technological and monetary fundamentals. So keep all those strong choices in mind when it comes to why Bitcoin is going up year after year after year. There's a lot of reasons. And Bitcoin is not just a high-risk investment. It's a foundational technology designed to offer a superior form of money, one characterized by digital scarcity, righteousness, and offers borderless transaction capability. So feel free to help anyone around the world, help your family, or hire people from other countries due to the fact that now that we have this currency, we can easily have peer-to-peer transactions without a centralized base controlling and holding everything. No more getting your transactions declined. No more the bank stopping your payments from coming through. And by buying and holding Bitcoin, participants are betting on the continued adoption of a sound, mathematically enforced monetary system that stands as an alternative to the inflationary pressure of a fiat currency, and its utility ranges from institutional portfolio diversification, like digital gold, to providing essential financial services to the world's most vulnerable populations. Stay prayed up to God, keep grinding, and if you guys want to learn how to invest, head over to stackmode.net. Catch you in the next one. Peace. Cool. So yeah, let's go over some 930 setup. Let's go and let's check it out here. Okay, so we had Uber. See, price went up here on Friday. Had a 4-hour close above it. Okay, so that's extremely nice. I think we might definitely push up to this area of resistance up here. Okay. So with this area here, okay, this was cool. Could see price here. Decided to pass this 930 area of resistance here. Okay, 930 resistance. Price even retested off of it here. We could see on the 5-minute, we had one of these candles here. Okay, price retested off of it. I believe we're definitely going to go ahead and try and fill up to the next area of resistance at the very top here. Okay. So very extremely easy here. Okay, this is going to be like a day trading setup. We're holding these trades for like a couple of days. Okay, we're still going to buy like weeks, months out just for the contract and just in case. Well, a lot of the times these will hit take profit within a couple of days or weeks. Okay. So indicators, we're going to start off with the market open maker, okay? And we're just focusing on these 930 levels, okay? That's what really we're going to be focusing on. So, got a 930 level right here. Okay, another one right here. And one up here, if I'm not mistaken. One down here. Okay, so all of these levels here are going to be 930 levels. Right here. And right here. Okay, then I can go to my 4-hour time frame. Okay. And that's why we lock the lines. But if I wanted to, I could definitely wait for price to pull back to any one of these levels. Okay. And see if price will go ahead and give me a buy entry. Okay, so I just look below current price. Okay, set all the 930 entries that I saw. Okay, and if I see price come to this level, give me a bounce up. Okay, that'll potentially be a valid entry. Okay, same thing with this entry here. Could potentially be valid. Same thing down here. Could potentially be valid. Okay, and if you get a 4-hour close and a sweep up from these areas, then that's definitely going to go ahead and be that. Okay, so just be aware before you just instantly buy. Don't just buy the first wick. Okay, make sure you take your time. Be like, okay, I know what I'm doing. I know what I'm buying. I know what I'm looking at. Okay, so your 930 levels are really going to show you everything that you need to see. Okay. So let's go over another 930 example here. And this is really going to help you trade with the trend, whether it is a pullback scenario or an above current price scenario. Okay, so let's take this stock for example here, bam. So I'll go to my 30-minute time frame, look above current price. And let me go ahead and just start marking out areas where I see 930 reactions. So I'm gonna take my line here and mark it at the 930 reaction here too. I'm gonna put one above current price at this 930 level here. And this one up here as well. As well as this 930 up here. Okay. All the reactions I'm going to go ahead and put in just so we know where price is heavily reacting off of the most, as these are going to be the highest volume levels, and volume is going to be the amount of people that are trading. Okay, so when 930, which is when the stock market opens, okay, hits, the bell rings, people are going to be frantic, okay, putting in trades and stuff like that. Everyone's excited. So wherever market decides to open up from these levels are going to be really important. So that's a really good way to find the best pullback levels, see how price wants to react. Okay, so just going from left to right, okay, even checking out this area here at 930, for example. Okay, if I wanted to, from there, I could easily go to like my 15-minute or 5-minute time frame. Okay, wait for price to break and retest from any of these levels above. Yeah. Okay, so if I see break and retest on any of these levels, I can easily go ahead and take the trade from these 930 levels. Okay, resistance right here, 930 resistance up here, 930 right here, 930 right here. That's going to show you where the best levels are. It's going to be extreme cheat code. It's going to make it simple. Let's go over another example here. All right, we have MDLZ. So let me go to my 30. Okay. And just check it out. Okay. Ideally, I like to start off with my daily too. Make sure I see the full price action. So I can see a super low was created at the bottom down here. I can see price wants to try and meet this resistance up here that came in July. Okay, so I'm going to go to my 4-hour too, see everything closer perspective, and the resistance up here. Okay, sometimes the daily can not show you everything you need to see. And then I'm going to go to my 30-minute time frame, and we can go ahead and find pullback levels or price levels above current price in order to trade like a direction flow. Okay, so right here, it's going to be pullback level there. Wherever these green lines are on my screen is going to be exactly where markets decide to open up. So we have a level here, got a level here. Okay, as we can see, the 930 levels are correlating with each other. We got one here, and then this one is going to line up with this one. Okay, and then this one is going to line up with this one. Okay, so it's always going to line up for the most part too. The more taps that you see in a certain area, the more powerful of an area it is that you should be playing there. Okay, even 930 area right here, 930 area right here. Okay. Finding the key levels here, taking our time. Okay, and that's all below current price. Okay, so as price goes into price, if I see price pull back to any of these levels, give me a 4-hour close, then I'm going to be cool to go ahead and take it. That's the whole sweep back up. Okay, if it breaks this level, it's okay. You could try this one. If it breaks this one, that's fine. You could try this one. Okay, as soon as you get your 4-hour close though, you know you're going to be good to go ahead and kiss the sweep, inshallah. And above current price too. So it's going to be trading with the trend. It's going to be a simple way to make profit as well too. Okay. So you can get on your 30-minute time frame, look for areas of resistance. For example, if I'm taking it long above current price, gonna wait for it to get above current price and take this area of resistance right here and turn it to support and just take it back up, okay, from the original breakout. So you don't have to take the original breakout. You can let price break out, do its thing. Wherever the breakout closes from, price has a chance to retrace, turn the resistance to support. If it does that and you get a 4-hour close, go ahead and get in. And that's a good trade as well, trading with the trend. It's very safe. So let me see here. You can get in here too. And you can get in up here. Okay. So any of these levels of resistance or even support above current price are going to be good levels to go ahead and look for a break and retest. Okay. So even levels of support can go ahead and be mirrored too. So even if price were to go up past this level of support, okay, it can kind of inverse retest and mirror that level of support and go up too. Okay. So that's also going to be part of the breakout model. Okay. And certain things with high liquidity are going to have a little cleaner levels, okay, compared to smaller stocks, but even smaller stocks, you're still going to be able to find good trades. Okay. So for instance, a price break and retest here, to take it up to the next level up here. You could just keep going, doing all your levels and just playing your chart like a staircase. So that's pretty much all it is. It's just a big giant staircase. We'll check out Wells Fargo, for example. Hop on my daily. I can see that we're all-time highs. We can't touch this. Okay, there's nothing we can do here. Okay, personally, right now. Okay, we can't trade a resistance breakout. It's at all-time highs. So what we have to do is wait for price to come back down so we can buy it back up. So here's how to find the pullback level. So now that I see the data on my daily, I see what's going on. Let me go down to my 30-minute. So I'm on my 30-minute time frame. And I'm going to look below current price logically. I want price to touch one of the levels below current price and sweep back up. Okay. So that's going to be the goal and objective. So let me go ahead and get the line tool here. Okay. And I can go ahead and put the prices down at the 930 doubles. So let me go ahead and put in line price here, line price here, down here. And I can go ahead and see the prices of the lines completely to the far right in black. Okay, so if price comes down to any of these levels, gives me a 4-hour close and bounce, I'm gonna be good, inshallah. Okay. It's about taking the right trades, okay, taking informed trades. Okay, this is gonna be a low right here too. Okay, and you can see some of these lows are gonna mirror each other. Okay, this low is matched with another low over here to the right. Okay, and then we have this resistance up here too, which matters. Okay. And then down here, boom, area of support down there too. Have another one too. Okay. Just mark out your clean levels, okay? You don't gotta make it difficult. Just play what needs to be played. Okay, so if price comes down to any of these levels, it gives me a 4-hour close. I'm not gonna play the first tap. Okay, if price comes down to any of these levels, gives me a 4-hour close, I'm gonna be good to go ahead and take the pull back up. Okay, confidently. Okay, these are 930 levels where market wants to open up at. Okay, and just burst in upwards direction a lot of the times. So a lot of the times market will mirror what it's done in the past. So it could definitely do it again for sure. So we'll go over PayPal here. I'll start off on my daily time frame, get the bigger picture. I can see price made this low right here. I can see price at least wants to come test this resistance area up here. Okay, so I'll get on my 30-minute time frame. Okay, and I'll look for a pullback area to see if we can go ahead and catch it back up to this area of resistance right here. So let me get on my 15-minute or my 30. I'll do the 15 for this example. And I'm gonna go ahead and look at the key areas. Okay, I have this area right here. 930 is clean. Keep finding the best areas, all I'm focused on. Okay, right here. That's the ultimate low that was created. Okay. You can also lock your lines too if you notice your lines moving too much. Okay, up here, price decided to short downward. Even up here. Shorted downward. Okay, and as you can see, a lot of these are just correlating. A lot of these lines of levels are correlating with each other. Yeah, a lot of these 930 levels are going to be solid. Yeah, we can definitely trust a lot of these levels for sure. Okay, so that's going to go ahead and be PayPal. So I can go ahead and see this area here. This area of resistance clearly above me. Okay, I can wait for price to either break here, retest off of this area, or I can try this area up here. Okay. Or if it doesn't work here, I could try this area here. So it's all about patience. Like, you can win the trade if you truly want to. It's just about waiting to see, like, okay, will my trade do what I need it to do? Okay, and even for a pullback level, if I see price trying to dump down to here, okay, turn this area of support into resistance and then fall down, which it could potentially do, and meet up with this low, then that's going to be in probability too. So bread is everywhere. Bread is all over the place. It's just depending on how patient you want to be, what type of setups you take. And just because there's bread everywhere doesn't mean you should be taking a short and then taking a long and then taking a short and then taking a long. Like, your trade frequency and how much money exposure you have in the market is going to depict like how profitable you are really. So it's like, yeah, you can see everything, but just take the trades as data. So yeah, if you see a profitable trade, you can either take it as data or take it. But if you take it, I advise you stick to that model. Okay, so if this is break and retest and you're a break and retest trader, you see support getting broken, turn into resistance, then okay, it could be potentially a decent trade down to the next level. Okay, but if you're a breakout trader, this is something that might not work out for you. Okay, depending on certain situations and your criteria, for example. Okay, but you do have a 4-hour close underneath the level, so even a breakout trader here would potentially be able to take this too. Okay, so focus on your criteria, focus how you trade. Okay, and it's not always going to work on all markets. Like Forex made shorting really popular because the chart is a lot more sideways. But when it comes to stocks of crypto, stock pretty much just goes up in straight line over the years. Okay, in the long-term scenario. So it's a lot different, but both the technicals and all technicals work on all charts. So that's the cool thing. So once you learn once, you can apply it to any market that you understand or want to get into. So we'll talk about Cisco here. Okay, we'll restart from scratch. So Cisco here, I can easily just see, okay. So I know on the stock market too, price is trying to go in an upwards direction, and crypto, because people are working hard to increase the value of their company or make cryptocurrency more useful, whether it be just innovating new technologies or etc. Okay, so they want their value and their shares to go up, so they get paid more on dividends and stuff like that, and share exits. So even the normal workers, like for Nvidia, for example, a lot of people who just worked in Nvidia past 10 years just became millionaires because they were able to retire early because the company blew up. Okay, so if you work for a company and it blows up and they give you shares, it's going to be a really good way to retire early. So it's showing you that trading is going to be a really quick way if you want to retire early, as long as you invest your money correctly, you get in at certain lows, and you invest in the future. Okay. So know that price is always going to try and chase resistances for the most part. Always, always, always. Okay, because it's trying to break out into new highs. Okay, people are trying to get paid more for their shares, so price is trying to chase new highs. Okay, and the richest traders are going to be the U.S. stock market traders, so it's one of the most important markets. Okay, so price is always chasing higher resistances, always. Okay, it's always looking to break into new all-time highs for the most part. No company wants their stock to be going down. It's not beneficial for them. Okay, so I'm going to go ahead and start my 30-minute here. I'll go in my 15 here, and I'll look below current price and above. We'll do both. Okay. So for this candle here, it's 9:30 candle. I'll put the, go ahead and delete everything. Put this level here. Get back on my daily. You can see price wants to at least come up here. So price is always going to be hunting either an area of resistance above current price, or if an area of resistance is too far, like all the way up here, okay, it's still going to be aiming for all-time highs ultimately. But depending on your expiration dates and something like that, okay, then closing in an area of support above current price is going to be solid too, because we know that just like we saw, support can be broken and turned into support. So put everything logically, put it together like a puzzle piece. So if I get on my 15-minute here, let's see the structure and everything closely. You can see price wants to bounce from this low here. Okay. Price bounce from this low here. Price bounce from this low here. All I got to do is focus on 9:30 levels. I don't really have to focus on anything else. Okay, as far as the stock market. Okay. And this level too. Okay. And then a lot of these levels too are going to be related to each other. So a lot of the times you'll see a lot of levels working at the same areas over and over again. Okay. And right here. All right, boom. So let's say we have all these levels, for example, okay, that I think are going to be solid, good levels. Okay. And this level here. Okay, let's say I go to the far right, Cisco. Okay, I can go ahead and just see certain things. Okay. So I know that price is trying to at least chase this resistance up here. I can go to my 30-minute and see everything cleanly. Okay, I can just wait for either a pullback or resistance breakout how I want. Okay, I can see at this level I already got a pullback. So price decides to fall all the way down, come up, and then pull back to this level right here. Okay, and we just did all the 930 levels. Okay, then it's not okay. This level's important. So if I wanted to, really, I could delete this one. And because we have all the data to the left verifying that this low is valid, okay, and I have a 4-hour close verifying that the pullback is valid, I can easily go ahead and take this up to the next area, like up here, for example, okay, and see if this area up here wants to turn it into resistance. Okay, so you can use certain different scenarios to make bread, just about thinking how logically you want to play. Okay, it's a big puzzle piece, and if you play logically, there's going to be money everywhere. Okay, which is why people just make money by just buying and holding. Okay, it truly can be that simple. So let me check out here. Okay. Even right here on Pfizer, okay, I expect price to come up to this area of resistance up here. Okay. I'm sure I could go to the left and find some good levels for reasons why. Price wants to react the way it does. So we have a low right here. I have one right here. We have another one down here. Okay, go ahead and go to my current price. Okay. So I know if price pulls back to any of these black lines, okay, it's going to be effective for me to go ahead and get in at those positions. 930 low right here too. Okay. The further we go back, the more data we're going to collect. See if everything that we're doing makes sense and correlates. We got one up here. Got one here. All right, and then we go ahead and go to my current price. And guess what? So you can see here that this line that I just went ahead and drew from all the way to the left correlates. Okay, so correlates with this line right here, verifying this low with a push up here. Okay, so on Pfizer here, this trade goes ahead and makes sense too. Okay, you can easily go ahead and potentially take it up to the next black line up here. Okay, so many different ways you can go ahead and take a trade. Okay, many different formations, and it's just going to depend on what way you're looking at the market and how you want to take your setups. Okay, so let me take you through another example here. So let me go ahead and pull up a high liquidity stock. Will go over NVIDIA, for example. Let me start off on my daily. Okay, logically thinking, I know that the stock market wants to go up, so my take profit is going to be these all-time highs up here, for example. Okay, let me go to my 15-minute time frame. And let me go ahead and start marking my levels. So I'll do levels below current price and above current price. So I got support below current price right here. And you can see which direction these 930 candles are moving in by just seeing how the flow works. So if you clearly see a top resistance wick and then price falling down, then you know price reacted off of the top resistance wick here, not the bottom. Okay, so just check out the flow. You can easily see which direction the price is moving in. Okay, we got a 930 level here. Got one up here. We got one up here. And so we got one here. Got it's precision scrolling and just taking our time on these setups. 930 resistance right there too. 930 support. Price shorted down from here. 930 support here. Okay, and you see everything correlating as well too. 930 support here too. Then we got some down here. Okay, and then once you have your levels, you're good. Okay, you have your data here. You know how to play your reactions. You know what you're looking for. You're not going to be playing without any data or information on your screen. You know exactly what you're going to be looking for. So let's say price decided to go in upwards direction here. Price went up right here. And then we got right here too. These are going to be all the best levels. Anything with the 930 reaction is going to be the best level supply. Okay, let's say we stop there. So I can go to my 4-hour time frame here, just analyze everything. Okay, I can still see that price wants to go ahead and try and at least touch the black line all the way up here. Okay, and as we can see, we got price shorting at this black line here, but we do have a pullback at this level here that did work. So if price pulls back, holds this level here, could potentially be good. Okay, take this up, point there. Okay, maybe break and retest here, potentially break and retest here. Okay, or price can potentially short from these areas too. Okay, resistance mirrors, and these are going to be the cleanest levels to play a lot of the times. So it's about taking your time, analyzing what works, analyzing the cleanest levels, and playing with potentially just needs to be played. Okay, so even right here, we have this area of resistance. So right here. Okay, so yeah, price reacting with this area of resistance too. So break and retest can happen at any of these areas. Okay, and a lot of these areas are going to be about 1 point per. Okay, so it's going to be good money even if you day trade just these small zones in between. Okay, so break and retest, they should work all between these areas, and it's going to be an easier way to just catch your day trade flow. Okay, so if you want to make some money multiple times during the week, okay, just boot up your account, mark out all your levels, and then you can catch your flow. Okay, be responsible with your trades. Okay, and be ready to just close relatively quickly. You can't really cook your trades like this, especially when you're trading on a smaller time frame basis. So even right here, let me go ahead and do all the levels. Starting off on Walmart here, get on my daily. Okay, this price actually already hit all-time highs here. So let's find a pullback level. Okay, that's good. So we know that price wants to at least touch this resistance up here. Okay, so let's find a pullback level below current price. So let me get on my 15-minute time frame. Just pay attention to the dotted line here. Okay, and I'm looking at all levels below current price. So we got this level down here, 930. Got some 930 support down here. Some more 930 support here. Got down here. Okay, just about marking the best levels that we can find here. One right here. Got one right here. Down here. Okay. This is the bottom wick because price is going up. This is the top wick because you can see price going down afterward. Okay, read the flow. That's how you can determine what candlestick it is. And sometimes it can be easier to detect than others, but for the most part, you're going to be able to get it. In here. Okay. Zooming out. Then we got this area here too. Okay. So just finding the best areas below current price, waiting for price to give us a 4-hour close and pull back to these areas. This area down here. And up here. Okay. And now you have the cleanest levels. Okay, so you can see here in Walmart, if I get on my 4-hour time frame, you can see all the areas where price wants to dip down to. Okay, so if price comes down to any of these areas below current price, it gives me a 4-hour close, I'm going to be good. Okay, I can clearly see that price wants to short down to this level here too. So even if I wanted to take a short, I can clearly see that price wants to short down to this level here on the black. Okay, it's already more than halfway done, and yeah, price definitely wants to make its way here. Okay. And then after price gets here, if it decides to want to bounce here, it's going to be another question. Okay. If it decides to break this level, even after a small bounce, that's fine. You try this level. Try this one. Okay, try this one. Okay, you'll know the pullback area as long as you have your levels down. Then you can go ahead and buy months out, buy some years out, catch the whole sweep back up. Okay, that's going to be a lot more profitable than just catching a tiny burst move. Okay, you know exactly where you're trying to buy. Go grind real life, stay down. Okay, keep grinding bread, keep putting that bread away, and then when the play comes, you can catch the whole move, you can buy the contract that you want, and your money's going to be able to 10x. Okay. So once you have your levels here, just be grateful for bear markets too. If markets ever dipping down, have all your levels placed down. Okay, especially on the stock market, you can take serious advantage of the 930 manipulation, and you can see the best levels, and go ahead and buy certain amount of shares or buy months out or years out for options and stuff like that, and just let your bread make bread. Okay, catch the whole sweeps back up. So this is going to be one of the best ways to do it and to see which levels are going to be clean to play to the downside. Okay, so if price is going to the downside and you're like, okay, where's the bottom? So these are going to be potential bottoms, and wait for your 4-hour close. Don't buy on the first wick. Buying on the first wick can really get you destroyed, and you might get irritated. Okay, so just don't get irritated and stick to a plan that's logical. So even for Apple here, I can see it bursting all the way up. Even if I wanted to take a pullback trade, okay, I could easily go ahead and do something like this. Mark this level here, this one here, this one here, this one here. Okay, and all the data is going to be here for us. Okay, literally all the data is here for us. Everything that we need. Okay, 930 level right here too. Another one right here. All the information that we need. Every ounce of it on the screen. Okay, all the levels that we need right here. Price decided to bounce upward. Okay, sometimes price is going to go ahead and mirror certain transactions. Okay, price decided to short from here twice. Okay, so resistance once and then resistance twice. So sometimes 930 is just going to mirror level happen to the left. Okay, right here, price decided to bounce upward. Price decided to short. Actually, no, price decided to long. Okay, it's about just being precise for what we're looking at. Right here. And then right here. Yeah, a lot of times if there's a lot of lines in one area too, that area could be potential good zone as well too. Okay, potentially right here. Potentially right here. Okay, right here. Okay, so cool. Yeah, these are going to be just the cleanest levels I can find here. So then from there, I'm going to be able to go to my 4-hour time frame. Okay, and I can look below current price. Okay, if I see price pull back to any of these levels and give me a 4-hour pullback, then I know, okay, inshallah, I'm going to go ahead and be able to get in and catch the whole sweep back up. Okay, so I'm only looking at 930 levels personally, waiting for pullbacks and catching the whole sweep back up. Okay, so that's how you trade if you see something bursting up. Okay, and don't buy things when they're overextended. Okay, wait for price to come back to these levels and catch it back up. promise you it's going to be a lot more worth it on your risk to reward and on your P&L. Okay. So if you've ever seen your portfolio down and noticed gas, groceries, etc. getting more expensive, what's the cause of everything? It's going to be inflation. It's the silent thief. And most people think that inflation just means prices go up, but it really means that your money is worth less and it's going down. The 7% inflation each year turns $100 that you own into just $93 of real buying power, even if your account balance haven't moved an inch. And when inflation spikes, the market reacts like a toddler with no nap. Growth stocks drop, companies can't hike prices fast enough, and profit margins get squeezed. And suddenly those charts are nothing but red candles heading in a downwards direction. But here's the part that nobody talks about. Inflation doesn't destroy every portfolio equally. It's about what you're invested in. Some assets actually thrive in the chaos. Commodities, real estate, energy plays, and even those boring dividend giants that simply pass rising costs straight to consumers. I'm going to go ahead and break down exactly what inflation is, and let's understand it, class, inshallah. So, the term inflation, you guys might have heard of it in school, around, you might have heard your parents talking about it, seen it on the news, etc. We're going to want to break down exactly how it causes other prices to go up, whether it be it on goods, etc., and how it affects stocks and stuff like that as well, too, and how it can affect your portfolio. So, what is inflation in the first place? So, too much money and too few goods. So, in life, things work off of two things: supply versus demand. So that's how things become valuable. So if there's a lot more demand than supply, then that means that something is going to be valuable because people want whatever it is, which is why it's in demand, but there's not a lot of supply of it. Why? Because people are buying up all of it. Okay, so supply and demand are going to be the two factors that come into play when we're looking at inflation, or even just understanding how humans trade or economies work in general. So too much money, but too few goods. Okay, so inflation is the rate at which purchasing power drops. It means that your dollar, so your US dollar, buys less today than it did yesterday. Okay, so whatever your fiat currency is, whether you're using the euro, US dollar, etc., inflation is the rate at which the purchasing power drops, meaning that your $100 might not buy you the same amount of goods as it did 10 years ago. Okay. So the demand pool. So everyone has cash and wants to buy the same limited items. Okay. So that's why prices go in an upward direction and cost pushes. So let's say materials, right? Such as oil and wood, they get expensive. So companies raise prices in order to survive. And the result that comes out of play is that, let's say you'll need $1.05 today to buy what cost $1 last year. And then year after year after year, it keeps going up. So it might start off as $1.05 today, but then 5 years from now, that same item could be $2. Okay. So if you're buying an item for $2, what you did for $1 just a couple of years ago, okay, you're now paying double the price. Okay. So unless you doubled your income, then you have to be ready to, one, subside your income for certain scenarios too. So if goods are getting more expensive, but your income hasn't increased, you either got to A, increase your income, or learn how to rebudget your current income. Okay, that's just how inflation works. So for example, just to break it down, in 1950s, let's say a burger, right? Let's say it was 10 cents. Okay, and then today, 2025, 2024-ish, okay, let's say something's $8. That's happening because more dollars have been printed. The more dollars that get printed and created, the less valuable it becomes. Okay, the reason why diamonds, gold, or even take Bitcoin example, are going to be valuable resources is because they are limited. But take the dollar, all they have to do is go up to the printer and keep on clicking print, and dollars will continue to spawn. So yes, we need dollars in order for the economy to flourish and for us to barter at a successful rate. But if humans continue to lead by their flesh and think that printing more dollars will solve everything, then humans will continue to pay certain consequences, such as dealing with more mental stress for having higher real estate prices, higher grocery prices, higher gas prices, etc. So how do we measure inflation in the first place? We got to take a look at the economic news event results. So let's go and let's jump into it. So let's talk about CPI. CPI is going to stand for Consumer Price Index. So for example, let's take a hypothetical basket of goods: eggs, gas, rent, and clothes, right? The government is then going to check the price of the basket of assets that people need in order to see if it got heavier. Okay, so that's what the CPI report is going to measure. A lot of the times after the CPI report occurs, you'll see a substantial move within every single market, whether it be at the crypto markets or the stock market. Okay, and then we're going to have PPI. Okay, PPI is also going to be very important. PPI is going to stand for Producer Price Index, and it's inflation for factories. So, for example, if it cost Apple more to make an iPhone, okay, then that means the PPI would be up, okay, and they will eventually charge you more, okay, which means that the CPI, Consumer Price Index, would be up, okay. So if it costs Apple more to make an iPhone, the Producer Price Index would be up. Why? Because Apple is the producer. Now, if they're charging us, the consumers, more, then the Consumer Price Index, the CPI, would go in an upwards direction. Okay, so core inflation at the baked center of everything. So CPI minus food and energy, right? Consumer Price Index. So why? Because food and gas prices swing wildly, okay? And the Fed prefers core to see the real trend. Okay, so looking at the core inflation of everything is really going to be a much better statistic to look at when it comes to how the economy is actually doing within the full broad picture. But looking at every single news event, such as the rate changes, etc., are really going to help you give you a good measure of how the economy is standing up and a direction of which the market could potentially head to. All right, let's talk about the melting ice cube with everything. So cash is a liability. Okay, so cash is a liability. Okay, this is Stackmode Chris talking to you guys right now on some personal stuff. Okay, ignore the presentation for just a second. You guys should not be spending your cash. Okay, you need to be spending your cash to pay off credit. That way you're going to be able to get more credit and you're going to be able to spend that. Okay, you need to be investing all of your cash. Okay, you should not be spending your cash. Okay, you have to understand that it's a trap. Even when it comes to certain things like taxes, even if when you start touching M's, 6 figures, 5 figures, etc. Okay, if you just save your money and just sit on it and don't invest your money into something that's going to be bringing you into more income, okay, you're going to be getting destroyed on taxes. Why? Because you're just holding more still cash. You're not benefiting the economy and you'll get punished for that. Okay, so please, cash is a liability. The only reason you should use cash is to clear your credit and to build wealth. Don't hoard cash. Don't hoard cash in your walls. Don't hoard cash in your bank account. Okay, your checking account should be pretty much empty. Okay, because why aren't you invested in the assets? Okay, you should have your life together. You should have your credit card. Okay, you should be able to survive off of that. Okay, when it's time to pay off your credit card, take your assets. Okay, when you have your profit, take some off the top. Okay, and you're going to be able to pay off your credit card and keep that cycle and flow going, so your money is infinitely going to be flowing in a river. Okay, the moment you pause your money, okay, the moment struggle starts to seep in. So I'm telling you, keep your money flowing on a river at all times. So a lot of people think hoarding cash is the play, okay? And I know I'm Stackmode Chris, but I'm telling you guys, if you're going to stack up into investments. Put your cash into investments. Don't just sit on your cash. Don't be having your money on just to put the money phone up to your ear and post on the gram. Oh, that's corny, okay? Put all your cash into straight assets. I don't care if you do real estate, Bitcoin, stocks, doesn't matter. Some of you dividend ETFs, okay? So many different avenues, whatever you're comfortable with. But I'm telling you, if you want to help your family, even if you die right now, you still want to be making sure some money is being generated. But you can't do that if you just have 100,000 pause in your bank, okay? But if you have 100,000 in an asset, your family could eat forever off of that. You have 100,000 parked in a dividend, your family could eat forever off that monthly income. But if you have 100,000 parked within a Chase account, Chase is just going to take that money and go trade with it themselves. Okay, so understand that cash is going to be a liability under every single scenario. Cash should be used to pay off credit and invest into assets. Don't get trapped, okay? So let's say, for example, right? And this is why God says interest is haram in the first place. It's pretty much useless, okay? So try to invest your money into things that are going to give you a positive equity for curve, because things like a 2% APY, APY stands for annual percentage yield. Okay, so trying to put your money into a account that gives you 2% per year, 3% per year, 4% per year, it's pretty much going to be all of the rest of your time. Especially when inflation comes into play, you have to learn how to increase your income, especially if you're going to plant your income at least plan it into something that's going to give you a much higher percentage yield at the end of the year. Okay. So any type of small percentage APY account, personally, I'm going to tell you, it's just not worth it, truthfully. Okay. So for example, let's say you had a saving account giving you 4% APY, right? And inflation is hitting at -6% each year. Okay. The real return is going to give you -2%. You're poor. Okay. You're poor in every scenario. So I'm telling you, keeping your cash inside of your bank account is a trap. I'm telling you in every single scenario. If you don't believe me, you can go look at your own economic data. But the fact that things only get more expensive means that you need to up your income. Okay, you need to up your income, and in order to do that, your cash needs to always be moving in the river. If you want to have your cash inside of the desert field, that can be you. But if you want to have an easy time in life, I really recommend you guys put your cash inside the river. You must invest in assets that grow faster than inflation to break even and to even see any type of profit for yourself, your kids, or your family. So get in your bag and use your cash, throw it into assets, don't keep it still. So let's talk about the Fed's brake pedal. So fighting fire with ice. So when inflation gets hot, the Federal Reserve raises interest rates, right? Which means borrowing gets more expensive, mortgages go up, credit cards start going up, okay? And spending starts slowing down. People start buying fewer houses and cars, which means that demand drops, okay? Prices start cooling down. And in the long run, if people aren't buying products, then these products that are created by companies that are listed as IPOs on the stock market would not be benefited from that. Okay, the more products that are being bought for a company means that higher earnings reports are going to go ahead and be reported for those companies. Better earnings reports, a lot of the chances it is for that company to keep breaking into new all-time highs repeatedly, causing it to go in an upwards direction. But if people aren't buying any items from these companies and people aren't being consumers, then the stock market could head within a downturn due to the fact that the money is not flowing in the ecosystem as rapidly as it should be. Okay, so as soon as consumerism slows down, then the stock market within the short term becomes affected by that. So let's talk about impact on tech versus value, right? So growth stocks, let's talk about tech. So a bad effect, right? So these companies promise money 10 years from now. So when inflation is high, money in the future is considered kind of worthless almost compared to money now. Okay, so investors sell tech. Okay, but then you're gonna have like value stocks. Okay, companies that sell certain boring things make cash now, so they perform better when rates rise because they have pricing power. Okay, so it really depends too. When certain economic data reports come out, certain stocks are gonna get a lot more affected than others. Okay, take like a Build-A-Bear, for example. Okay, that's a very consistent stock that goes up year after year after year after year. Okay, and it's not really based off of the future value. Okay, it's just people going to the mall and building cute bears, couples, kids, etc. Okay, but tech stocks, they are focused and based off of intrinsic value due to the fact of what they do for the future and how they innovate the future. Okay, so not saying either one's going to be better than the other to invest in, but when it comes to certain periods of inflation, if no one has enough money to buy certain expensive pieces of technology, etc., then a lot of companies will suffer. But then companies who just sell certain things like food might progress during periods of inflation. So it really depends on what time period you're in, which is what's going to determine what batch of stocks are going to be performing the heaviest. So you might ask me, Chris, how do we avoid inflation? Okay, what do we do? So commodities, real estate, and things like Bitcoin are going to be a really, really good way in order to park your money due to the fact that these things are going to be worthwhile and useful a lot of the times. People are always going to need a house. Okay. The reason why people invest into Bitcoin is because it gives you borderless transactions. And especially now as times start progressing a lot more, especially US Americans are more open to traveling to other countries. So instead of having to take their US dollar and put it through transfers, just being able to spend that Bitcoin all around the world gives us a lot better suitability as humans. And then we're going to have commodities. You know, you're going to have energy, gold, silver, copper, etc. Physical things that people are going to be able to buy. So let's break down what these all mean. So commodities, right? So commodities. So if the price of stuff is going up, then owning the companies that produce the stuff is going to be a direct hedge. Okay. So any type of gold mining companies, etc., especially, okay, because gold is going to be a asset that especially goes up when economy isn't inflation, okay, due to the fact that it's something that's going to always be useful and it's a limited resource. Okay, and let's talk about banks. So banks can charge higher interest rates on loans when the Fed raises rates, which potentially increases their profit margin. So be aware of that. Okay, and real estate. So rents tends to rise with inflation, and fixed rate debt gets inflated away. So your mortgage payment stays the same, but your income usually rises. Okay, so keep all of that in mind too. So pricing power is going to be the secret weapon for everything, honestly. So can they raise prices? So the ultimate stock market defense is holding companies that can pass costs to customers. So people buy iPhones even if they cost $50 more, right? Due to the fact that it has a high pricing power. Okay, or take a commodity product. Okay, if brand A raises the price of white t-shirts, then you would buy brand B, okay, giving it no pricing power. Okay, but when you're investing into certain companies that have exclusivity, okay, certain companies that only do what they do and puts a smile on many humans' faces, then even if inflation were to occur, a lot of people would just see that as an opportunity to buy as the market going downwards. Okay, so especially certain tech stocks too that still have a lot of future value and have a lot of expectations to change a lot of things in a lot of ways. You know, if they're going in a downwards direction, people are going to look at that more of an opportunity rather than, oh, the stock market is failing, etc. So the bottom line for everything, just wake up, pray to God, be a disciplined person. I want you guys to look in the mirror, feel confident, feel proud of yourself for what you got put up. Okay, feel proud of yourself knowing that you can handle your responsibilities, knowing that you can help your family if things come into play. Okay, don't let your cash melt and don't let it freeze in your bank account either. Okay, own productive assets. I don't care if it's real estate, crypto, shares, dividends, whatever. Find your bread and butter. And if you're struggling to see what you want to invest in, head over to stackmode.net. Stay prayed up to God, keep grinding. I'll catch you guys in the next one. Peace. Class, are you guys investing or are you guys gambling like a casino? Let's go and let's talk about the difference between disciplined trader versus the gambler. Each scenario is going to go ahead and represent the scenario that we should be doing, which is A, being disciplined, being humble, not having ego, making sure we're being persistent and consistent within our investment methods. Or a gambler, someone who doesn't play within their risk parameters, does anything, overtrades, is emotional. And let's talk about the difference between the two. And which one are you? So the gambler's mindset. Focus on instant gratification, which is going to destroy you. Anything that comes super quick could definitely be lost extremely quick. Things take time to build, have to be planted like a seed. Okay. And the gambler's mindset, trader and investor, is going to seek quick, massive returns. And they view the market as a zero-sum game of luck, often driven by the excitement of large immediate payouts, instead of thinking of consistently trading the market year after year after year, generating income so they could stop trading effort and exertion for income. Instead, they could make their money, make them money. Instead of having that mindset, they're thinking, okay, let me just make this quick play real quick and try to pull out $10,000 from this trade instantly without any experience or anything like that. And the gambler's mindset trader is going to have irrational hope. They believe they can predict short-term price movements through gut feeling, hype, or just any type of randomness to the trade, ignoring historical data, quantitative metrics, or technical analysis, just buying things based off of the fact that, you know, I think it's going to go up. I think it's going to go up. Okay. And without any true fundamental analysis behind it, make sure you have data behind why you want to get in, whether it be a technical data on the charts or fundamental data. Be like, you know what, this company's doing well. They just put an earnings report out of X, Y, and Z. I think the company's profitable. You know what, I think this dividends PE ratio is going to be worthwhile getting into due to the fact that it's pretty good. Okay. Compared to other dividends. Okay. So just examples here, but you can go ahead and use logical formations before you just enter in any trade. But the gambler is just going to be entering anything, and you don't want to be doing that. Plot your trades logically and take your time. And they treat capital as lottery tickets. And each investment is seen as an all or nothing bet. Never take your whole check. Never take all of your business income and invest it into one play. Don't do that. Okay, take your time, diversify, have risk into it. And that means that they often risk an unmanageable percentage of their total capital on a single position. Okay, so don't do that. Make sure you guys are controlling where your income is, spread it out, have it in different investments, and keep stacking cash. Okay, and the disciplined trader mindset, focus on statistical edge. Okay, and they view the market as a long series of probabilistic outcomes, expecting not to win every single trade, but definitely expecting that
you know what, I can only lose the trade when I close too. So having that mindset is really going to keep you in the game. If you're here to trade year after year after year, stocks, cryptocurrencies, etc., go up year after year after year. So the goal is not to win every trade, but to execute a positive expectancy model of over 100 plus trades over the course of a couple of years, gaining data, and then having an edge. And disciplined traders are going to be process oriented and understand that success is measured by adherence to a predefined trading plan, not by the single of an outcome of a single trade. So even if you make a whole bunch of money on one trade, you're still going to be disciplined. You're still going to be waking up, praying to God, being consistent, being humble, not losing sight of the plan. Okay, you can't just make $10,000 on one trade, right? Which might happen. Sometimes you catch a gap up and things like that. It might be unintentional money, okay? But you can't do that and then play with a whole different position size the next day that's way over leveraged, not in any calculations of your risk parameters, thinking you're the best trade ever just because you hit one trade. Relax, okay? Withdraw, take a step back, breathe, pray on it, be grateful, and then come back with a logical, process-oriented mindset and make the next trade. And the disciplined trader focuses on capital preservation and just cash preservation in general. And the primary objective is to protect existing capital, okay, which is risk management, with profit generation as secondary, and dependent outcome. And losses are budgeted expenses. So for example, the gambler buys a volatile stock based on a Reddit post, for example, or Instagram post, instead of actually looking at the chart, doing their own statistical and fundamental research, making their own analysis, which you should be doing, expecting it to double overnight, right? And the disciplined trader buys the same stock only after confirming its consolidation near a key support level in a trend, allocating less than 1 to 10% of their capital per trade, okay? Letting their money make the money, letting it stack up, and letting their capital just always generate. So the edge, the chance versus quantifiable advantage. So the gambler's edge. The gambler operates with non-existent or poorly defined methodology, and their decisions are typically random and highly discretionary and impossible to replicate or backtest. And no validation. They never test their strategy. They remember big wins, okay, and have confirmation bias, thinking that, you know what, it's going to do this over and over again. Now, I understand that if you find a strategy that works or some technical analysis that falls into place repeatedly, that's amazing. But don't expect this to work 100% of the time. Don't have an idealistic view of this will work, this will work, this will work. Don't think that you're really going to lose, but be comfortable with losing. You should only be investing in that you're cool with losing in this way, that if you win, you're not going to be emotional. Same thing if you lose, and that's going to go ahead and be able to cancel out any anxiety or fear that you're having on the markets. So the gambler is going to be following Illinois too, and trades based on news headlines, social media chatter, or recommendation from unreliable sources without performing due diligence and doing their own research. Don't do that, okay? Don't be a sheep. Do your research. Make sure you want to invest in something that you believe in, something that you feel a connection to. Be like, you know what? I think this is a good strategy. I think this is a good investment. I think this play is strong. And go ahead and get into it. And unseen rules. Entry and exit rules change mid-trade. And the plan is subjective. So if they say, you know, I'll sell when it feels right, or I'll hold until I'm even, instead of having logical checkpoints where they want to exit their trade and enter their trade. And we'll talk about the disciplined trader edge. The disciplined trader must have a statistically verifiable edge and a set of rules that over time yields a positive expensive T, okay? So their win rate is high, okay? And their average win percentage is high, okay? And even if they take a loss, their whole account is not going to be destroyed due to the fact that being a disciplined trader means that you're not trading with more size than you should be trading with, meaning that even if you lose, your account's not going to be destroyed. Why? Because you're trading between 1 to 10% of your account. And the disciplined trader backtests and optimizes their strategy if anything is wrong. And strategy is going to be rigorously tested and studied and backtested over decades of historical data. And the trader knows the system's maximum drawdowns and expected monthly return range. And the disciplined trader has a written plan. Every scenario is detailed in a formal trading plan. And this documents defined setups and valid market conditions, risk rules, and exit mechanisms. Okay? The trader is going to calculate certain mathematical expectancy of their system. Be like, you know what, my win rate is this percentage. There's certain trading journal programs that can go ahead and calculate it. And I'm working on the Stackmode app right now, which is going to help you guys calculate your trade journal as well too. So risk management, annihilation versus preservation. And this is arguably the most critical divergence. And a trader's long-term survival is entirely dependent on rigid risk control, which a gambler fundamentally ignores. So I'll talk about the gambler's capital allocation. So averaging down, they panic when a trade moves against them and buy more to lower their average cost instead of just staying on business on their position. Okay, be like, you know what, I lost. Let me go ahead and have a set place where I should be closing at, and if it exits there or if the price hits there, I'm gonna go ahead and close and exit for a loss. Okay, but instead, when the moves are going against them, they're gonna add more with that gambler's mindset, trying to convert the small loss into a big win. Instead, that small loss just turns into an even bigger loss most of the time. Okay, turning into a catastrophic concentration of risk. And sometimes playing with no stop loss can be bad. So it depends on what you're investing in and how you're investing too. If you're on futures and Forex, you should be trading with stop loss. Why? Because margin call is a thing. You don't want to get margin called by the broker and other broker money. So play with the stop loss, especially if you're on futures and Forex. Okay, stop loss in crypto, you can get away with no stop loss, depending if you're buying and holding, same thing with ETFs. But for futures and Forex, definitely stop loss. Please do not gamble on futures and Forex, playing with leverage especially. And they believe that the market must come back, all right? And they refuse to accept a small loss, often leading to a margin call or a total account wipeout, which is most of the time only possible on futures and Forex. The gambler is also going to trade with emotional position sizing. And their position size is determined by current emotion or desire for profit, not mathematical risk. And they often risk very, very high percentage of their accounts, 10 to 50% of their account on one trade. And the gambler faces ruination probability. And that's the mathematical certainty of eventual losing all your capital due to oversized losses and emotional decisions. Now let's talk about how to be a disciplined trader. So the disciplined trader position size. So they have a fixed percentage risk. They never risk more than typically a fixed small percentage of their total capital per trade. Okay, so if you have $1,000 in your account, okay, and you're risking 1 to 10% of your account per trade, you're gonna risk between $10 and $100 of your account per trade, okay? Keeping your risk in place. And let's say stop loss. So a stop loss is placed before the trade is entered. So once again, especially if you're on futures and Forex, you gotta know exactly where you're gonna exit at and where you're gonna enter at. And it defines the point where the trade idea is invalidated and the risk is contained. And the risk position is sized. So the position size is calculated based on the distance between the entry price and the stop loss, ensuring the monetary risk does not exceed the 1 to 10% rule. And the disciplined trader ensures that even a string of 10 consecutive losses will only deplete the account by 10% if you're trading 1%, but if you lose 10 trades in a row, and I recommend 10%, 5 to 10% of your account if you're more experienced, because 10 trades, then you could destroy your entire account. But you shouldn't be losing 10 trades in a row realistically. Now, research and information processing. The gambler's information flow. You don't want to be trading like a gambler. So the gambler prioritizes novelty and social proof over objective data. Information is consumed for emotional validation rather than strategic input. There's a reason why God says don't gamble. Gambling is wrong. Okay, it's bad. It's the reason why is because you don't have any jurisdiction in it. Okay, you're not trading with any logical output. You're not making monetary decisions with any logical output behind it. Okay, just throwing your money into the void, hoping for the best. It's not what we want to be doing. So hearsay and media hype. So they trade based on unqualified tips, sensational news stories, or expert predictions on cable television. Don't trade like that. Do your own research. Hop on your charts, hop on your broker, make your own analysis and decisions. And superficial charting. They may use rudimentary technical analysis. Okay, so you might draw random lines, okay, but ignore volume, market structure, or context. And their analysis is descriptive, not predictive or actionable. Okay, so you can go ahead and mark out something, right, that may look bullish on the 15-minute, but then on the weekly time frame, it's a whole different story. Okay, so you can't just look at one time frame either. Don't trade like that. Don't just look at one view. Look at the whole global perspective on every single time frame, and then make your decision. So, lagging indicators. So you can only get in indicators after price has already done its thing. So indicators are going to be pretty late. And getting it late is not always going to be a bad thing. Sometimes it's going to make it more confirmed within a trend scenario, but getting in certain indicators is just, it's not going to be it. Okay, like MACD, for example, it's very late. A lot of indicators are just pretty late. They can be used for confirmation, but you don't want to be relying on that. Okay, understand how the wicks work, support and resistance, and read how the chart needs to correlate. So the disciplined trader. So the disciplined trader uses a multifaceted, systematic research process to validate setups that align with their quantifiable edge. Okay, know what you're getting into. If you're going to trade break and retest, you're going to trade some break and retest. If we're going to trade reversals, you get in a reversal. Okay, and get some data behind it. Study your setups, back test it, paper trade it first. Make sure it works before you start putting money into the market. And the disciplined trader is going to utilize a blend of TA, technical analysis. You can go ahead and look at your patterns. If you're looking for break and retest, put your volume into play, make sure it's something people trade, and look at the momentum. Okay, see how it's moving. And relevant fundamental analysis, see if it's a profitable stock, see if it's something that trends heavily, to really form a complete picture. And track the events too. Know when earnings is going to be too. You don't want to get into a trade and the earnings is the next day. Okay, that's going to be a form of gambling. Make sure earnings is pretty far away and then make your decision. Even if you're a long-term investor, wait till earnings happens first and then go ahead and get in. And they're going to always be on top of the economic data releases or any stock or company releases that's going on, or any type of negative news that could affect the price movement as well too. Okay, you can head to couple of news sites which lets you fact it, like forexfactory.com. You can fact check and see all the news and the data reports and put that into correlation. That helps a lot with futures, for example. And TradingView, for example, shows you all the stock news, and a lot of brokers do too. And look at the market structure. Focus on the who, what, where, and why of market movements. Why is price making resistance here? Why is price making support here? Okay, ask yourself these questions before you get into the trade. Put everything together in your brain, lock it in, and then go ahead and make your trade. And work on the directional bias of the higher time frames. Feel like, okay, I want to get in the trade here because of X, Y, and Z, and then make your decisions. And the trader's analysis really answers, okay, why do I want to get in here? Okay, what's my maximum loss? And I understand we're on the charts trying to make some money, but don't lose yourself, okay? Take your time, build up your capital, be disciplined. Because if you full port your account on one trade trying to make some money, you're going to be wishing that you were disciplined and you took your time. So I'm telling you guys, being disciplined is going to be the most worthwhile decision in the long run. So impulse versus automation. So the gambler is going to be trading based off of impulse. You got to pretty much be a robot if you want to be a successful trader. So the gambler is going to be chasing the market, entering super duper late on big giant candles, getting in the trend late and just missing the whole thing. Okay, and getting pulled back on, getting wicked back on, and just living in drawdown. And they often buy at the high or sell at the super low after the move is already completed, catching the final remaining scraps and pieces. Okay, so revenge trading. After a loss, they immediately enter a new larger position to win back the money. And this is the fastest way to accelerate capital loss. Okay, don't do that. Okay, don't do that. If you take your loss, you got to get off. Okay, plan yourself a better trade. Be like, what, why did I get into this trade? Did this trade really make sense? Okay, and if it did, okay, cool. Accept that loss. Take a better one, okay, or try again. Play something with better volume. Okay, there's probably some reasons why the trade didn't work out. Because if you notice, once you start playing S+ setups, they're going to work out a large percentage of the time. Not every time, but a very, very, very large percentage of the time. So ask yourself, why did I lose before you just get in the trade again, trying to make some money back? And keep a record too, okay? Know how much you're making, know how much you're losing, know how consistent you are, because it's really going to help you go back and see, well, I've been slamming, well, I've been crushing it. And a lot of brokers keep track of that, but you guys can keep track of it too. So the disciplined trader, you got to be like a robot in the game. You got to get up, be a robot, okay, grind. And the most disciplined person, the most robotic person when it comes to keeping their emotions stable is going to win, okay? You can't be letting fatigue, emotions, anger, fear, anxiety, and none of that get to you. Okay, you got to be a boss, stand on business, and get to it. And execution is for a disciplined trader, and it's robotic and unemotional. And the moment the trade is entered, all necessary parameters, the stop loss and the target are set. And strict adherence. Traders are only taken when the market offers a setup that perfectly matches the criteria in the written plan. Okay, the edge. And talk about the trade journal. Every single trade is logged with the entry, exit, reasoning, psychological state, and a chart screenshot. And this data is used to iteratively improve the edge over time. Okay, you can go back, be like, whoa, okay, I was crushing it here. Let me stick to this. Why am I changing it up? Let me invest into this. Okay, this led me to a positive equity curve at the end of the year. Okay, let me stick to this. Okay, it's gonna help you guys keep your data. And you're going to have a positive expectancy focus, wanting to crush your goals and be a better you and just be better every single day. And you understand that the goal is not $10,000 profit today, but the statistical certainty that $10,000 will be achieved by repeating the process over a period of growing your seed, stacking wins, stack mode. Okay, take your time. Okay, it's not a race, it's a marathon. And be in the game for decades, years. Okay, don't just lose your account overnight trying to make a FOMO trade. Relax, be disciplined. I'm telling you, it's going to be worth it to be disciplined. When you're chilling on the beach, when you're driving in the Lamb, when you're doing what you want to do, when you're chilling in your house, okay, when you're put up because you stayed down and you were in stack mode, you're going to be cheesing hard, okay? It's going to be worth it and chill up. So let's say, for example, the trader reviews their journal and finds their system has an 80% win rate, okay, on Tuesdays. And they use their objective data to confirm their edge. Let's say news is on Tuesdays and they notice that the news correlates with their edge, and then they go ahead and keep trading that and they find a profitable way to make some money, for example. And let's say the gambler, okay, they review their account statement, sees a negative balance, leading to frustration, more reckless trading, booting up their account more, whole check into it, okay, and just losing their whole mindset, okay, and not sticking to a consistent edge, which is going to help you grow your account over and over again, okay? Take your time. So, psychological mastery, detachment versus attachment. Trading is 80% psychology. I'd really say like 90%, okay? Because there's been times you can really give someone really good levels, and if they don't know when to close or if they're greedy, they can still destroy it all, okay? So the final differentiation lies in how losses and profits are internalized. So the gambler, they're really attached to the outcome, okay? They have way too much greed. They're fiending to win every single trade, and they're very impatient, wanting to make a trade every single day too. You're not gonna trade every single day. It's not realistic. They close profitable trades early too, destroying the risk to reward because of the fact that they're scared, okay? It's why you gotta trust God, okay? Relax, okay? Only trade with what you're okay with losing. You're gonna be cool. Let the trade play out, and if you see something, believe in it. And they hold losing trades for too long, okay? Now, if you see your trades going in the opposite direction and it's way past your stop loss, okay, you could go ahead and close your trade, especially if it's way past your stop loss. You got to. Don't hold something that's clearly not going to go ahead and reverse anytime soon. That's ego trading. And that's viewing losses as a personal failure or an indictment of their intelligence. And this fuels revenge trading and their need to prove the market wrong, which could lead you to throwing more funds into a loss. And mood swings. They experiences extreme emotional volatility with deep euphoria on wins, okay, extremely happy, cheesing hard, jumping up and down. But then when they lose, crashing out, sad, okay? Be stoic. Whether you win or lose, just keep going. Stack mode, put 50% away, keep 50% in your account, keep stacking it up, keep going, go on to the next trade, okay? Keep getting richer, keep getting better. And the disciplined trader, they're detached to the outcomes. They have a sense of neutrality built into them. Okay, and you got to accept that a single trade is meaningless. Even if you make way more money on one trade than the other, that doesn't mean that that trade was better than the other. Did you stick to your process? Did you stick to your rules? Were you grateful? Okay, and stay humble after your wins. It's really going to keep you guys focused on the process, and which is really going to get you to the next level, inshallah. So the focus is on executing the edge perfectly, regardless of the P&L, profit and loss, and learning from losses. A views of a losing trade that adhere to the plan as a successful win. Okay. So even if you didn't make any money on the trade, if you stuck to your entry plan, you stuck to your stop loss, you saw what you needed to see and it just didn't work out, that's a win. Okay, keep yourself mentally balanced, keep yourself mentally good, and understand that losses in life and on the market are just tuition for you to learn from experience and go forward, okay? And objectify, okay? They use if-then statements to govern their actions. If price has stop loss, then they're gonna exit. If price turns resistance into support and they're looking for a long, they're gonna enter. Okay, if price hits resistance, they're gonna exit. Okay, so you guys are gonna go ahead and have some parameters set. Like, you know, if price does X, Y, and Z, I'm gonna do X, Y, and Z. Okay, and that's gonna help you trade logistically, robotically, and play the chess moves correctly. And mental discipline is gonna be important. The disciplined trader sees a loss, not as I just lost $1,000, but I just incurred a 1R loss. You know what, it's okay, which is budgeted. I planned for this, and it's statistically necessary for the system to eventually produce 2R, 3R wins. Okay, so when you lose that 1,000, but then you make 4,000, you're not gonna be mad. You're gonna be like, you know what, I'm happy I only lost 1,000. I'm glad I didn't just risk my whole $10,000 account trying to make a whole play. Okay, because I just stayed within my risk, caught a nice trade, and I didn't blow my account even though I took a loss, and I made it back the right way. So don't be a gambler. Gamblers are driven by emotion. Don't be drinking alcohol. Don't be doing nonsense. Don't be trading with the mindset of, you know what, I'm going to come on and make some money. Nah, come on with the market and be like, you know what, I'm going to make some good financial decisions. I'm going to come onto the market. I'm going to enter because I have some logical parameters on why I'm about to enter. I'm going to enter because support is at this area here. You know what? Price doesn't want to go below here. This is safe. Let me go ahead and take this trade here. Oh, resistance just turned into support. Let me take this trade here. Okay. Take the money out of the picture. Focus on the charts. Take your focus off the P&L too. Okay. Get your eyeballs off the P&L. Don't be staring at that. Look at the chart. And the disciplined trader, focus on statistics, focus on getting better. Okay. Understanding that the ability to even trade in itself and make some money just looking at the screen is a blessing. Okay. Straight from God. God is great. Okay. So let's go hard. Let's keep going. Let's keep pushing harder than ever. So don't focus on the money. Professionals focus on the process, the discipline behind it. And to succeed, you must first manage your risk. And only then can you manage your profits. Stay prayed up to God, keep grinding, and head over to Stackmode.net for all trading education. Catch you in the next one. Peace.
Bitcoin mining is the network's backbone, and it's not just about earning crypto, it's how Bitcoin is created in the first place. Miners use powerful computers to solve the puzzles. They secure the blockchain with an immutable new block each time. And this process is the global security system that prevents double spending and fraud. And it verifies all transactions across thousands of independent computers, replacing a central authority. Without miners, Bitcoin wouldn't even exist, and it would collapse. But with them, it's become one of the most secure financial systems on Earth, powering the trust and transparency of decentralized money. Let's go and let's talk about how Bitcoins are created and why the government owns it. Inshallah, if God wills. Let's go. So, class, welcome. Let's go and let's talk about how Bitcoin is created in the first place. So Bitcoin is generated by mining it. Okay, Bitcoins don't just spawn out of thin air. And as you know, Bitcoin is also a limited cryptocurrency. So other cryptocurrencies for the most part are going to be infinite, but Bitcoin is actually going to have a limited amount of currency. Okay, there's only 21 million Bitcoins that exist. Okay, and each one of them is created by getting mined. So what happens is a computer, okay, and the computer is obviously powered by resources. Okay, so certain countries take more power than others to create certain Bitcoins. Okay, so if you're in a country that charges a lot for power, then you'd be paying more on your electricity bill in order to mine the cryptocurrency. Okay, and what you would need is a super powerful computer with a graphics card that can handle the Bitcoin mining. Okay, so what a graphics card is, it's a piece of the computer that's external. Not all computers have external graphics cards. Some have inbuilt graphics cards, which is why they're slower than others. But what you need is a really powerful computer. And then from there, you'll be able to load up the Bitcoin mining software and it can go ahead and get created. We're going to talk into the technicals, exactly how everything works. Bitcoin mining is super duper cool. You might even want to do it and see if this is a good way that you guys might want to generate some income, depending on what country you're in as well too. You'll be able to save a lot of money on power, and you could potentially mine yourself or create yourself a Bitcoin for way less than buying it. So let's jump into it, class. So what is mining even in the first place? Mining is not digging dirt. Bitcoin miners aren't digging into the ground with actual pickaxes, digging into the dirt, looking for resources. No. Okay, so what it is computers mining Bitcoin via a software. Okay, and the job is to secure the network and process transactions. Okay, so it secures the network by making everything decentralized. So in a traditional bank system, let's say you wanted to send a wire transfer, for example, right? The bank would be able to decide whether yes or no if the transaction wanted to go ahead and get approved or declined. Within a decentralized network, such as sending Bitcoin, things like that don't occur. Since everything is done by smart contracts, okay, everything is autonomous and automatic, done by computers, okay? And that's what Bitcoin mining comes into place too. Even creating Bitcoin, instead of just clicking print on the dollar like they do with fiat currency, Bitcoin actually has to go through a whole process in order for a Satoshi to be created in the first place, okay? So Bitcoin mining helps keep Bitcoin decentralized. The reason why the US dollar fails is because they just go up to the printer and click print. Okay, there's no real strategical process that goes from start to finish for the most part that keeps its base value cooked in. Yes, you can just print more dollars, but that would inflate the other ones. Since there's a finite amount of cryptocurrency, there has to be a secure process in place in order for it to be created, for it to be fair for everybody. And mining is the way it's done. Let's keep going. So think of the blockchain network as a public notebook. So you might have heard of what the blockchain network is. So the blockchain network is pretty much a public copy of everything that's been done. every transaction that's been created, every Bitcoin that's been mined, and every transaction that's happened. Okay, so the blockchain is pretty much going to be a verifiable place to where you can see if your transactions were even completed as well. Okay, so within the blockchain, you'll be able to put in your, let's say, address. Let's say you did a transaction. You could copy that transaction address, put it onto the blockchain or some type of blockchain checker, and you could see if there were any confirmations. Okay, confirmations are pretty much going to go ahead and let you know when your transaction is ready to be completed. Okay, either the money has been sent over and it's about to hit somebody's wallet, okay, or it's on the way to hit your wallet, okay, depending on the situation. So the blockchain is a public notebook that everyone has a copy of, and mining is the process of adding a new page, okay, which is a new block to this notebook. So page 1, right? Let's say Alice sent some money to Bob. Okay, let's say they sent 5 Bitcoin. You're going to be able to see that. Okay, you'll be able to see the Bitcoin addresses, etc., and you'll be able to see when the transaction was sent, how much Bitcoin or how much cryptocurrency was sent, and you'll be able to see the miners working on certain things as well too. Okay, you'll be able to see when Bitcoin transactions have been implemented and grounded into the blockchain. Whether a big whale is buying or selling, the blockchain shows us everything. Okay, keeping cryptocurrency really, really safe. So proof of work. So once again, Bitcoin, it's not created like the dollar. You don't just go up to the printer and click on print over and over and over again. It's created by POWs, also known as proof of work. So to add a page to the notebook, computers must solve a super hard math puzzle that requires a pretty powerful computer as well too. So make sure you guys have a good graphics card inside of your computer before you think of doing anything like that. Okay, so to add a page to the notebook, you got to have a super powerful computer, and then the computer has to do calculations and try to guess the number. Okay, so imagine guessing a number between 1 and 1 trillion. Okay, you have to guess randomly. So computers then make trillions of guesses per second to find the random number, okay, which is going to be the hash. Okay, so that's how the proof of work works, and that's pretty much all the work that the computer is doing. The computer is constantly running calculations, trying to find and guess the correct numbers in order to generate a Bitcoin. Okay, and that takes a lot of power, a lot of resources. So make sure you guys are watching your energy bill before you think about getting into this. So this is exactly what I mean. You need a powerful computer. Okay, your computer has to be good. It can't be a weak computer. Okay, so understand that you cannot mine Bitcoin from your laptop. Okay, you cannot mine Bitcoin on a laptop anymore. Okay, so these with, you know, saying with the screen, a little keyboard, not cutting it if you want to mine Bitcoin. Okay, get yourself a real strong desktop with a real graphics card before mining Bitcoin even crosses into your brain. Okay, so you need specialized machines called ASICs. An ASIC stands for an application specific integrated circuit, and they do one thing: guess numbers for Bitcoin. Okay, they're loud, hot, and they use a lot of electricity. Okay, so before you guys think about just putting it into your room, keep all of this into play. Okay, keep all of this into play. Save for Airbnb owners as well too. If you guys have Airbnbs, what people are doing is signing up for Airbnbs and mining Bitcoin at Airbnbs in order to save money on power bills and stuff like that. Or people are also even moving to other countries in order to save on power bills too, so they can mine Bitcoin for a lot cheaper. So keep all of these things into play and understand that the future is really changing a lot. People are starting to get a lot more equipped and doing a lot more strategical moves to mine all the Bitcoin as possible before it goes away. So what's the point of this? Like, why do it in the first place? So the reward, right? The winner who solves the puzzle first gets paid in brand new Bitcoin. Okay, a brand new Bitcoin. So Bitcoin is created by whoever has the best computer, right, and is solving the most problems. Okay, the more computers you have solving more problems, okay, the more Bitcoin that you're going to accumulate in the first place. Okay, so it's going to be either one computer or a whole room full of computers. Okay, and what they're doing is they're doing math. Okay, 2 + 2 equals, okay, and then whichever one of the computers can find the hidden number, okay, goes ahead and generates the Bitcoin. Okay, after you find the random number, or one of the computers generates it and finds the right calculations, then a hash is going to go ahead and get created. Okay, then from there, you're going to go ahead and get paid within your Bitcoin. And you keep doing that, keep doing that. Now, the computers do have a high chance, once again, to consume a lot of power, which means that the resources inside of the computer, processor, graphics card, RAM, etc., have a high chance to go out and combust. So before you think about doing this, make sure you guys have some money to the side to pay your bills, maintain everything. So I don't want you guys going broke to do this. But this is how Bitcoin is created by computers solving complex math, looking for a specific number. And once again, the more you have, the more Bitcoin you'll be able to generate. Since the more computers you have, inshallah, if God wills, the quicker you'll be able to look for hash codes, and the quicker those computers will be able to solve different types of calculations. So what's the point of this? Why is it essential for security in the first place? So it's costly to cheat, right? So to fake a transaction, you need more computer power than all other miners combined, making it pretty much obsolete, not even worth it, and not even, once again, not even worth the while. So immutable. So once a block is buried under other blocks, it's mathematically impossible to change it, because the way that Bitcoin works is that the computer is hunting for hidden numbers. Okay, it's hunting for random numbers and it's trying to guess the correct numbers. So the chances of it being faked or created within a false context would pretty much be almost impossible. Okay, since there's so many numbers and it's looking to guess the correct one, and it's decentralized. So no single boss controls the ledger. So no people can just be like, you know what, we're going to decline this transaction. We're going to approve this transaction. Oh, you want to send $10,000 to somebody in another country? You know what? We're going to go ahead and decline this and shut down your bank. Okay. That's happened to people. Okay. And that's not fair. It's not fair. There might be money you might need to send to somebody in another country to help send your family some money, to help pay your employees or whatever. Cryptocurrency is such a beautiful blessing on this earth. God is the greatest, you know, is being able to send $1 million to somebody the next day. Boom, just like that, snap of a finger, and nothing is even remotely concerning. Okay, it's beautiful. We want to be focusing on buying as much cryptocurrency as possible, guys. Focus on it. Okay, focus on it. So no single boss controls the ledger, guys. It's decentralized. We're all in this together as a family, and thousands of miners protect it together. Okay, the cryptocurrency community, it's really a family. They just want people to send money and collect their money freely, without any restraints, without any cringe blockages or anything like that, without any 3 a.m. shutdowns. They just want people to send their money borderless all around the world and spend their money all around the world. God is the greatest. You know, to be able to live in this type of time period where we can have this type of decentralization, it's really a blessing. Okay, take advantage of this time period, guys, and let's keep learning about cryptocurrency. So let's talk about the wall of energy. What is this? Okay, so it's a feature, not a bug. So people complain about energy use, but that energy is a wall protecting the money. So you have to understand that the printers, okay, if they just keep printing the dollars, inflation is going to continue to increase. Okay, which is why the US government, for example, is running to cryptocurrency to kind of save its tail. So energy equals real world cost. Okay, you can't really fake that. When that mean power bill gets sent over to you, you got to pay that. It just is what it is. Okay, it's kind of hard to dodge that because it costs real actual money, electricity to mine, and you need an actual account too. You can't just be like a fake person. You got to actually go sign up for the power account, put your card on there, etc. So because it costs real money, electricity to mine, you're incentivized to play by the rules, keeping it safe and free though for everybody. Okay, free for everybody to jump in, I'll say. Okay, because some things are going to be gate kept through certain other things, but as far as just the freedom to start, anybody can start. Okay, you might just need the ASICs computer, pay for the energy, but as far as just the freedom to start, anybody can start. So if you cheat, you waste electricity and you lose money. Okay, so it's pretty much not going to be worth it at all, because the point of this is to gain some Bitcoin. So inshallah, you can maybe see some profit. So keep everything stable and keep everything well-rounded. Make sure you have everything planned before you just start trying to do anything. Okay, so let's talk about the life cycle, right? So a broadcast. So if you send one Bitcoin to a friend, the network is going to hear it. Okay, the blockchain is going to see it. You could see if the transactions were completed via what's called confirmations. Okay, so compete. Miners then race to solve the math puzzle, the hash, to box up transactions. Okay, and then verify. The winner shows their proof and everyone checks it instantly. And this keeps it secure. Okay, this page is glued to the notebook forever, also called the blockchain, and then the miner decides to go ahead and get paid. So that is the full 1, 2, 3, 4 cycle of how Bitcoin mining actually occurs. Okay, so the computers are looking to solve the hash puzzle. Okay, after the computer solves the hash puzzle, then the miner will go ahead and get paid in Bitcoin, inshallah, if God wills. So keep it simple. All right, y'all. Happy Bitcoin mining. I pray you guys do well. If you want to go set up a rig or set up your own basement, do it. Okay, be ready to pay that electricity bill, but I believe in you guys. If you're interested in Bitcoin mining, head over to stackmode.net for all trading education, and I'll teach you guys and we can talk about absolutely whatever. Stay prayed up to God, keep grinding, and I'll catch you in the next one. Peace.
This is going to be the ultimate guide to futures. We're going to be understanding how contracts work, how the leverage works, and risk management. Let's go on and jump into it. So what is a future contract in the first place? So a futures contract, it's a standardized legal agreement to buy or sell a specific asset at a predetermined price on a specified date in the future. They are traded exclusively on an organized exchange. Okay. So unlike forwards, which are custom contracts, futures are standardized for quality, quantity, and a delivery date, which facilitates high liquidity, okay, which pretty much means volume and the amount of money that's running through it, and guarantees performance through the clearinghouse, ensuring quick, seamless transactions so you can quickly buy and sell, and orders can go ahead and run through everything. And let's talk about the future date. So certain futures dates, I'm sure you guys, let's say for example, I have a futures contract, it'll see something like September, Aug 24. Okay, so your futures contract will go ahead and represent the certain date that's on it. Okay, and the maturity is going to be the legally obliged date that it has to occur, or the commonly settled cash date. It's also going to have a predetermined price, and this is the price agreed upon today, and that's known as the futures price. And as far as the underlying asset, certain commodities can be traded as well, such as physical products like crude oil, for example, gold, corn, or even wheat, for example. And financial indices, which are super popular, such as NQ, which is going to represent the New York Stock Exchange indice, known as the NASDAQ 100. Okay, the ES, which is going to represent the S&P 500, and the YM, which is going to represent the DIA, also known as the Dow Jones. And the primary use is to manage the price risk, also known as hedging, okay, or to bet on the future direction of prices, okay, for speculation, okay. So understanding the contract specifications. So every futures contract has a non-negotiable set of specifications set by the exchange, okay, also known as the CME and ICE. And understanding these is fundamental to calculating risk and profit. So contract and unit size. These are the precise quantity of the underlying asset governed by one contract. So for example, WTI crude oil, okay, that's an asset that's going to be able to be traded, okay. One contract controls 1,000 barrels, okay. Or for the E-mini S&P 500 contract, one contract is going to be nominal to $50 times the S&P 500 index level, okay. And impact, okay, is going to determine the notional value, and the total value is going to equal the price times the contract size. Okay, so that's how much it's going to cost in order for you to enter in, multiply the cost of the initial contract in the first place. Okay, so every contract is going to have different prices as far as the day margin, okay, which is going to be the minimum amount and required in order to open the trade in the first place, but the trade has to be required before the day ends. Okay, and if you need the full margin in order to hold trades overnight. And tick size and value. The tick is the minimum price fluctuation allowed for a contract. So for example, for WTI crude oil, the tick is going to be 0.1 cent per barrel. And for tick value, a single tick's movement dollar value for crude oil, 1,000 barrels, is a 0.1 cent move. Is going to be divided by $10, okay? And then that's going to give you an equation of 0.1 times 1,000, okay? So the math is going to go ahead and math like that. And the tick value is going to determine what you're being played off of to. So crude oil is going to be a different tick value calculation compared to MCL, okay? Micro crude oil, for example. And it's going to determine your P&L per contract, per tick movement, okay? So delivery and settlement. How the contract is resolved at maturity. Physical delivery. The actual asset is delivered. Okay, agricultural commodities, physical, and gold. And this is common for producers and consumers. And cash settlement. The contract is settled by paying or receiving the cash difference between the contract price and the market price on their expiration date. Okay, so for instance, like stock index futures. And this is most common for speculators, aka people who are trying to get paid based off directional bias. And expirational cycles. Standardized months, the contract can expire. And these are often cyclic. And commodity cycles often run on seasonal cycles and quarterly for grains. And financial cycles also occur. Okay, they often use the March expiration date, which is going to equivalent to the H. Okay, so if you guys see like SEP H or NQH, okay, ESH, you know, something like that, for example, that's going to be related to the expiration cycle. If you ever see like YMM, okay, that's going to go ahead and equal to June expiration date. September is U, December is Z, and these are the quarterly cycles for the futures contracts. And the power and peril of the leverage. Okay, leverage can be powerful. It's going to pretty much be a multiplied version of your money, but you can also lose your money. So make sure you're being consistent with what you're doing. And defining leverage in the first place. Gearing. Leverage in futures allows traders to control a large notional value of an asset with a relatively small amount of capital, known as margin. And the magnification effect. While potential profits are magnified, losses are magnified to the same exact degree. And a small move in the underlying asset can lead to a huge percentage gain or loss in the initial margin posted. And futures versus stock leverage. Futures typically offer far higher leverage, often 10 to 1 to 50 to 1, okay? Compared to standard stock margin, which is going to be like 2 to 1 or 4 to 1, which is going to be a lot lower and a lot safer. So, leverage, okay? If a crude oil contract has a notional value of 70,000, okay, that's going to be 1,000 barrels at $70 a barrel, okay? That's where that 70,000 is going to come from. And the initial margin is 7,000. So the leverage ratio, okay, it would be 70,000, okay? And take that by 7,000, okay? And that's going to equal a 10 to 1 ratio. Why? Because 70,000 times 10 equals, or 7,000 times 10 equals 70,000. So yeah. And that's where that 10 to 1 comes from. So since the 10 is going to be the multiplicative of it, the 10 is going to be the first number, and then 1 is going to be the base value of your contract. So 1% of this move, okay, would be a $700 loss, and that represents a 10% loss on your $7,000 margin, for example. So key risk and mitigation strategies. So understanding the primary risk associated with futures is non-negotiable for safe trading. And market risk. The risk that the price of an underlying asset moves against your position, this is the primary risk. And mitigation. Strict stop loss orders and limited position size is going to be important for risk management. And understand basis risk. Basis is the difference between the spot price, okay, and that's going to be your current cash market price, and the futures price. And basis risk. It's the possibility that the basis will change unexpectedly between the time a hedge is placed and when the futures position is offset, and this reduces the effectiveness of the hedge. Let's talk about gearing risk, okay? For leverage, the risk that small price changes result in disproportionately large losses, potentially exceeding your initial margin, leading to a negative account balance. So just like I initially spoke about a couple of seconds ago, could sometimes be subject to getting sued, okay, due to the fact that you owe money to the broker since you're playing a leverage asset, and if you don't have a minimum amount of money required enough to trade, they can go ahead and take you to court and try to get their money back. Okay. So leading to a negative account balance. So mitigation, never over leverage and always maintain a buffer capital above the maintenance margin. So if it requires $500 in order to trade, you shouldn't be trying to trade with $520, because if you go down like 2 ticks, your P&L goes to 480, it'll all be wiped out, taken to zero. So that 520 minus the 480, because you went under the margin amount. So they're going to go ahead and take all of that. That's called getting liquidated. And you're going to go ahead and be left with 0, and depending on how quickly the market move happened that liquidated you, you could sometimes be put in the negative, sometimes negative 100, and then you would instantly owe the broker money. Okay, and they're definitely going to need that, so be careful. So liquidity risk, the risk of being unable to exit a position quickly at a favorable price, more common in lesser traded contracts or far out expiration months. And mitigation, stick to highly liquid contracts. Okay, just play the major indices. Okay, you can play like oil, ES, NQ, stuff like that. Okay, with tight bid and ask spreads. And the M2M mechanism and margin calls. Okay, marketing to marketing. Marketing to marketing is the daily settlement process. And every day, the exchange determines the profit or loss on your open future position based on the closing price. And credits debits your margin account accordingly. And daily settlement, it ensures solvency. P&L is a realized daily and not just at maturity. And the clearinghouse, it acts as the counterparty to every transaction, eliminating credit risk. And marketing to market is the key process that enables this guarantee. And the margin call. A margin call is issued when the margin balance drops below the maintenance margin. Okay, it's a level due to adverse marketing to marketing adjustments. So for instance, if it costs $500 in order to keep a position open and price goes down to $450, okay, because say a large wick happens, okay, then you would get liquidated, okay, put at 0 or sometimes negative bank account balance. And in order to fill the maintenance requirements or fulfill the negative balance, a trader must deposit the funds back up to the initial margin level, typically within 24 hours, and failure to meet the CAL results can result in mandatory liquidation of the position by the broker. And if they're negative, you could owe the broker money once again, so be careful. So marketing to market, here's an example. With the S&P 500 E-mini contracts, okay, with a multiplier of $50. So day 0, contract open, okay, and day 1, the settlement price, okay, it's gonna be at $4,490, okay, daily P&L, okay, say you lost $500, okay, so then from there, okay, let's say you lost that. Say you lost $500, okay, then you're gonna be at $4,500. So now that you're at $4,500, okay, say the contract margin amount is gonna be $5,000, okay, or $4,500. If you don't get your account back up to that $4,500 amount, okay, then you could take a loss, okay, and your account could go ahead and be liquidated, for example, okay. So futures versus other financial instruments. Understanding how futures differs from stock and options is crucial for selecting the right trading vehicle. So, future, okay. When it comes to certain types of leverage, okay, you can spam contracts, okay, on certain things like micro contracts, for example, right? But be careful for certain things like fees, okay? Fees are going to be something that's going to really harm your account, okay? The more you just click on buy or sell, the more that you just spam, okay, the more returns are going to be negated based against. So plot your trades in increments. So futures are best suited for risk transfer, okay, hedging, and high leverage speculation, and that requires sophisticated risk management due to marketing to marketing and unlimited loss potential. And the dual purpose, hedging and speculation. Okay, hedging. Hedging is the use of the futures contract to offset the risk of adverse price movements in the underlying cash market. And this is the original and primary purpose of futures. So the producer hedge, short hedge. Say a farmer expects to harvest 5,000 bushels of corn in 3 months. To lock in a guaranteed selling price today, they sell, okay, aka go short, okay, expecting the price to go down, a short futures contract, okay? A consumer hedge, you'll say a long hedge. An airline knows it needs 10,000 barrels of jet fuel in 6 months to protect against rising prices, and they buy, aka go long, against oil futures contracts today. And speculators aim to profit from correctly forecasting the direction of the futures price, and they provide essential liquidity to the market. And a trader believes that interest rates will fall, causing bond prices and treasury futures to rise. and they buy the contract. And short speculation. That's when a trader believes that a stock index is overvalued, due for a correction, and it's going to go ahead and go down. And the importance of speculators. They absorb the risk that hedgers want to transfer, ensuring that the market has enough depth to facilitate hedging transactions efficiently. So OI, the total number of futures contracts that have not yet been offset by an opposing transaction or delivered upon. It measures the liquidity and size of the market. And rising OI with rising prices can illustrate a strong upward trend supported by new money entering the market, meaning that it's bullish. And backwardation, an inverted market, a market condition where the futures price is lower than the spot price. And this usually indicates current or near-term shortage of the futures commodity, leading to high immediate demand. And contango, normal market. It's a market condition where the futures price is higher than the spot price, and this is most common state, often due to the cost of carrying the commodity, storage, insurance, interest until the delivery date. And the roll, the process of moving a position from a near-term expiring contract to a further out contract. This is done to avoid physical delivery or keep a speculation alive. Okay, and they sell the expiring contract and simultaneously buy the next contract, or vice versa, depending on your position. Okay, so focus on your risk. Okay, don't blow up your account. Take your time, paper trade, try out futures, and don't just be clicking buy or sell. Okay, make sure you guys are plotting out your trades or really understanding what you're doing. Okay, be intimately responsible with your money and understand how leverage works and margin works depending on what broker. It's going to be different for all brokers. Stay prayed to God, keep running, catch you guys in the next one. Peace. Thank you for watching.
Dividends, let's talk about it. How can you guys pretty much live off of just your money, infinitely making you more money in retrospect? Let's talk about it. Dividends decoded, the path of income. So the quest for passive income. Let's define financial freedom. So income without labor. So passive income, and I know you guys have heard of it. What is passive income in the first place? Passive income is money earned regularly with little to no ongoing effort. This is distinct from actively trading stocks or working a job. Dividend investing focuses on making your money work for you. So the challenge of inflation. Inflation erodes purchasing power, and a successful passive income strategy must aim to generate income that not only covers living expenses, but also grows fast enough to outpace rising costs over the long term. So why do dividends matter within the first place? So they give you reliable cash flow. Dividends are regular payments that are paid and made by companies to their shareholders, and they can provide predictable cash flow, which is crucial whether you're reinvesting or funding the current expenses. And let's talk about the compounding effect. When you use dividend payments to just buy more shares of the dividend, the next payment will be even larger, inshallah. And this is the magic of compounding, exponentially accelerating your portfolio growth over decades. So for example, imagine receiving a $100 dividend payment. If you spend it, the growth stops. But if you use it to buy more shares, let's say a dividend costs $50 a share, a dividend ETF, right? Let's say hypothetically, for example, you invested into Stackmode ETF, right? Let's say it existed. All for example, okay, Stackmode ETF costs $50 and you make $100 on the payout. You could buy 2 more shares of Stackmode ETF because it costs $50 a share and you got $100 from the payout. Okay. So stack it up, stay in Stackmode, stay down. Keeps it fun, keeps it fresh. So the corporate distribution of profits. So definition and source. A dividend is essentially a distribution of portion of a company's earning, decided by its board of directors and paid out to its shareholders, and it reflects the profitability and financial stability of the underlying company. So let's talk about the dividend yield. The yield is the annual dividend payment divided by the current stock price, expressed as a percentage. It is a key critical metric for income investors, showing the return on investment purely from the dividend income. So the payment frequency. So in the US, most companies pay dividends quarterly, right? Let's say for 4 times a year. However, some firms pay monthly, which provides smoother income, and others pay annually, okay? So if you're getting paid monthly dividends, then you could budget out your bills, for example, based off that income. Some dividends only pay annually once a year, and some dividends pay quarterly, okay? So every couple months. So the dividend safety.
The most important factor is the company's ability to sustain and grow the payout. Investors often examine the payout ratio, dividends paid by dividend earnings, to ensure the payment is covered by current profits and is not at risk of being cut. So a high yield is going to be attractive, right? But a growing upwards dividend is generally better than a high but stagnant one. And companies with long track records of increasing dividends are often referred to as dividend aristocrats or dividend kings. Okay, so you want to be playing a dividend that's increasing in size. More people are investing into it year after year, and it's making good, consistent investments, and it has a good bundle of stocks within the ETF. So key dates and dividend types, let's talk about them. So 4 crucial dates: the declaration date. So the day the company's board announces dividend payment, specifying the amount, record date, and the payment date. And we'll talk about the ex-dividend date. This is the most critical day. To receive the dividend, you must own the stock before the market opens on this date. And on this day, the stock typically drops by the amount of the dividend. And the record date. The company list of shareholders eligible to receive the dividend is finalized. And this is generally 2 business days after the ex-dividend date. And the payment date. It's the day the dividend is actually credited to your brokerage account, so you can actually go spend it, withdraw it, and put it in your bank account. And types of payouts: cash dividends. The most common type. This is a direct cash payment deposited in your account, either in US dollars or the local currency. And stock dividends. The company pays shareholders in additional shares of stock rather than cash. And this increases the number of shares you own, but reduces the per share value. I want to talk about special dividends. So one-time non-recurring payment, usually much larger than a regular dividend, often resulting from a major cash windfall, a sad sale, or extraordinary profits. So for key distinction, the ex-dividend date is what truly matters for investors in the long run. If you buy on or after this date, you miss the current payment. If you sell on or after this date, you'll still receive the payment, for example. So let's deconstruct the exchange traded fund. Okay, once again, ETF stands for exchange traded fund. So class, it's an instant diversification tool. It pretty much gives you a basket of assets. So an ETF has a collection or a basket of dozens, hundreds, or even thousands of individual stocks, bonds, or other assets. When you buy one share of an ETF, you gain ownership in tiny pieces of all the underlying assets. And it trades just like a stock. So unlike traditional mutual funds, ETFs trade on stock exchanges throughout the day, just like an individual stock. This gives them greater liquidity and pricing transparency. And the low cost and transparent. And the expense ratio. So ETFs are generally low cost vehicles. The expense ratio is the annual fee charged by the fund, expressed as a percentage of your total investment. The lower, the better for long-term returns. And passive management. Most ETFs are passively managed, meaning that they simply track an index, like the S&P 500, for example, or Bitcoin. Some ETFs track cryptocurrency as well too, and these keep management costs low comparatively to actively managed funds, which try to beat the market. So there's going to be crypto ETFs, tech ETFs, ETFs that focus on power companies, etc., and a focus on diversification. The greatest benefit of ETFs is diversification. If one stock in the fund performs poorly, the impact of your overall investment is minimal because it's balanced by hundreds of other holdings. And this significantly reduces risk. It doesn't always have to be hundreds, it could be however amount the ETFs has in their basket. So the powerful synergy, right? Dividends plus ETFs, crazy. So check it. Safety in numbers. So mitigating payout risk. If you invest in a single high dividend stock, and the company cuts its dividend, your income stream is severely damaged. And dividend ETF holds dozens of these companies. So if one cuts its payout, the overall effect of the ETF's dividend income is negligible. And reduced volatility. So dividend paying companies are often more established and financially stable, leading to less volatile stock prices compared to high growth, non-dividend stocks. Combining these steady stocks into an ETF smooths out the ride even more. And we'll talk about the ease of income generation. So simplify management. To create a diversified dividend portfolio manually, you would need to buy 50 to 100 individual stocks and manage all their dates and tax paperwork. Okay, so that's how you would have to do it normally. And ETF pretty much does it all for you, simplifying the investment process immensely. So it gives you a nice monthly income stream, especially once you have enough money invested into it. And each ETF pays out a different dividend amount. Do your research before you invest. So many dividend ETFs are structured to pay out monthly rather than quarterly, providing a more consistent and easier to budget income flow for those relying on the payments in order to live off the what's called passive income. But a lot of the times you have to do something active to get the passive income. Okay, so it's like you get to retire by making the right decisions, inshallah, if God wills. So think of an ETF as a pre-made high quality soup. Instead of spending hours buying and preparing 50 different ingredients and hoping the recipe works, you buy the ready-made dividend soup with proven ingredients and a consistent flavor. Okay, so making it a lot simpler. So accelerating growth, dividend reinvestment plans. So automating the compound process. What is DRIP? Okay, a DRIP automatically takes the cash dividend you receive and uses it to purchase more shares or fractional shares of the same ETF. This happens automatically, removing the need for a manual intervention. So long-term wealth accumulation. Then reinvestment phase is critical during your accumulation years. And by automatically buying more shares, you are increasing your share count, which means the next dividend payment will be significantly larger than it would have been otherwise. And the power of fractional shares. Most brokerages allow ETFs to be bought in fractional shares through a DRIP. And this ensures that every penny of the dividend is put back to work immediately, maximizing compound from day one. The transition to income. When you enter retirement and need the income, you simply turn the DRIP feature off, and the dividends will then be paid out to you as cash, providing a regular passive income stream. So here's a crucial tax note. All right. So even if you reinvest the dividend using a DRIP, the IRS considers that dividend income to be income that you receive. You must still pay taxes on it the year it was paid, unless the investment is held within a tax advantaged account, like a Roth IRA or 401k, which also have limited amounts that you can put into it per year. So keep that in mind. So dividend ETF categories, tools of the trade. So let's talk about dividend growth ETFs. So the focus of them. The companies with long history of increasing their dividends, and the goal of them is to increase the total return and have an inflation-proof thing that people can invest into safely. And the benefit of them, you sacrifice high current yield for faster dividend growth, protecting future purchasing power. For example, funds tracking companies that have raised dividends for 10 or more consecutive years. And high yield ETFs, they're stocks with the highest current dividend yield and the maximum immediate cash flow involved with them is going to be super duper heavy compared to the other ones. And they have a higher yield, which often means higher risk, and these companies may be in declining industries or struggling financially. And these funds are concentrated in real estate investment trusts or certain utility sectors. Now let's talk about the sector-specific ETFs. It's concentrated exposure to sectors known for high payouts, and it's targeted income and diversification within a specific sector. And it reduces broad diversification, yields higher returns, but has a higher risk specific to that entry. Okay, so if you're in a crypto ETF, for example, okay, and crypto's in a downtrend in a bear market, you would go ahead and fix that. Okay, but that's just how trading works in general. So for example, you're gonna have utility ETFs, consumer staples ETFs, financial sector ETFs, crypto ETFs, etc. So figure out what you want to invest in. So building your income portfolio, let's talk about it. So one, some step-by-step implementation. So identify your goal. What do you guys want to do? How much do you want to make? And what do you want to do in the first place? Okay, determine how much annual income you require for retirement. How much do you need to pay your bills? How much is your rent or mortgage, right? How much is your internet, your car, etc. Okay, and use the 4% rule or similar withdrawal strategy to estimate the portfolio size needed. So select the ETFs that collectively provide a realistic, sustainable dividend yield, typically between 2% and 5%, and avoid extreme yields unless you fully understand the underlying risk and what you're investing in. And automate contributions. Set up automatic monthly contributions from your bank account to your brokerage account. Okay, if you want to do automatic, or you guys can do manual, up to you. Just put yourself on a consistent schedule. Keep putting money away and get into stack mode. So consistency is the most important factor in long-term success. And activate the DRIP if you can. And ensures that all dividends are automatically reinvested to harness the power of compounding until the day you need to rely on the income. So portfolio example, right? Some hypothetical allocation. Okay, so let's say 50% core dividend ETFs. You could do 30% a high yield dividend ETF, and then 20% in like a global real estate ETF or a crypto ETF. And that's just for example. Do your own research, but that's just how someone would break down the portfolio. So Your job is only to contribute regularly, get into stack mode, wake up, pray to God, stay humble, put the money away, don't look at it, hide your balance even, okay? You can actually put your balance on all dots, hide your balance, just deposit, keep stacking, okay? Stay down and live off a minimal amount, okay? Make it fun, make it hard, make it challenging, okay? And periodically rebalance the portfolio to maintain your desired allocation. And the ETFs manage hundreds of underlying stocks for you, or depending how many the ETF holds. And some tax implications, right? Let's talk about where to hold your assets. Taxable accounts, right? Brokerage accounts. So qualified dividends. These are taxed at a preferential long-term capital gains rate, which is 0%, 50%, or 20%, which are typically lower than ordinary tax and income rates. And non-qualified dividends. These are taxed as ordinary income at your current marginal tax rate. This includes most dividends from real estate investment trusts, REITs, and foreign companies. So we'll talk about some tax advantage accounts though. Roth and 401ks, okay? They can be ideal for dividends, but keep in mind that Roth and 401ks are going to be limited. So Roth IRAs, as of when this video is going to be recorded, is going to have around a 7K limit per year that you can invest in, okay? And then when you're 50 years old, plus, then you could do 8K a year, okay? And then you're going to have the 401k. And 401k, you're going to be able to invest, I think it's around like 23,500 if I'm not mistaken, and then it increases to like 31,000 once you're 50. Let me know in the comments below, but pretty sure that's it if I'm not mistaken. But some traditional accounts, tax deferred. So dividends grow, right? Tax deferred. It's where you pay no tax on them until you withdraw the funds in retirement, at which the entire withdrawal is taxed as earned income. Keep in mind, these numbers could change, and this is just as of 2025 when this video is being recorded. So strategic placement. It's highly recommended to hold your highest yielding non-qualified dividend ETFs like REITs funds inside your Roth accounts to shield the highly taxed income from the IRS forever. So conclusion, the dividend blueprint, right? So the combination of dividend income and exchange traded funds creates a powerful, simplified, and resilient passive income engine. So you can diversify. Use dividend ETFs to gain exposure to hundreds of dividend paying companies instantly, mitigating the risk of a single company cutting its payout. And reinvest, right? Harness compounding by activating dividend reinvestment plans, also known as DRIPs. Okay, not talking about clothes. Until you guys are ready to transition from the accumulation phase to the income phase. And optimize your taxes. Prioritize saving for retirement with a Roth account, as all dividend income and growth within it will remain permanently tax-free. So the combination of dividend income and exchange traded funds creates a powerful, simplified, and resilient passive income engine. Decide what you want to invest in, do your research, and if you need some help deciding what you want to invest in, you can head over to stackmode.net. Stay prayed up to God, keep grinding, and I'll catch you guys in the next one. Peace.
So let's go and let's talk about central bank digital currencies, also known as CBDCs. Now, don't confuse this with cryptocurrency, because cryptocurrency is decentralized and doesn't have a ruler, and CBDCs are money ruled by the government. And think of this as a digital version of cash in your wallet, but with one massive difference: it's programmable. So that means that in theory, the issuer could track every single transaction you make, limit how much that you could save, or even decide what you're allowed to buy. And supporters claim that it is the upgrade our financial system needs to be faster and safer, but critics are calling it the end of the financial privacy embedded in us as humans forever. So we're looking at the future of convenience, or are we looking at the ultimate tool for our total control? Let's jump into it, inshallah. So what is a CBDC in the first place? CBDC stands for Central Bank Digital Currency. So imagine if the cash in your pocket turned into a computer code, but it was still worth exactly the same amount. That is the basic idea of a CBDC. And this digital money issued directly by the country's central bank. Okay, it's not physical paper, and it doesn't come in coins. It exists only on computers or digital wallets. And unlike some cryptocurrencies that change value wildly, a CBDC is meant to be as safe as a dollar bill. Okay, so think of it like virtual cryptocurrency just created and ran by the government instead of it being on the peer-to-peer decentralized network. Okay, so the government's pretty much creating a currency in order to combat cryptocurrency coming out and its whole decentralized features. Okay, so we'll talk about the benefits. Let's jump into what it is and let's continue. Physical cash versus the CBDC. So we already use credit cards and apps like Cash App, PayPal, Venmo. So how is this going to be any different than things like that? So the commercial bank money that works today. So when you swipe a card, your bank promises to pay the store, okay? And it's an IOU between the banks, okay? And the CBDC, it's a direct liability of the central bank, and it's like handing someone digital cash directly without a middleman bank needing to promise the payment, okay? And as far as the speed, so regular bank transfers can take days, especially on the weekends. And also, when it comes to wire transfers, things like direct deposit when you're getting paid, things like that work on a time-based schedule, whether it be your direct deposit hit at 6 a.m. Some people have direct deposits hit at 6 p.m. Okay. Some people don't have direct deposits that hit on weekends and have to wait for the following business day, such as a Monday or a Friday, etc. Okay. But with CBDCs, payments and bank transfers are going to be instant. Okay. So they're creating a base and a way for people to instantly send money without having to use outside apps. Okay. So sending money today is like sending an email that goes through 3 different servers before actually arriving. And it has to all get approved too. Okay. If you decide to send money via wire transfer, it could definitely bounce. Okay. And sending a CBDC is like handing whoever you need to instant money. Okay. Or instant $20 bill, but doing it over the internet instantly. Instead of sending the $20 bill via the mail, waiting for the bank to sign off on it, and then sending the $20 bill to the person you want it to go to. That's how traditional banks work. So CBDCs really save a lot of time, make things a lot quicker. Okay. And hopefully, inshallah, that'll bring a lot more control back into people's hands versus how we want to spend our money and when we need our money. So if CBDCs are out, what's the point of crypto, Chris? So if they're the same thing, and when they're not, and they both use digital technology, the real difference that comes in between them, okay? One is decentralized and one is not, okay? So they both use digital technology, okay? Sometimes the blockchain, but they're both different in the point of who controls it, okay? So cryptocurrency, Bitcoin, Solana, your XRPs, Ethereum, all decentralized. And the term decentralized means that it's not controlled by a centralized network, okay? When you decide to send Bitcoin to somebody, okay, it directly gets sent to their Bitcoin wallet, okay? No ifs, ands, or buts, okay? Peer-to-peer transaction system, also known as the decentralized system, okay? Then you're going to have the CBDC side, okay, which is going to be controlled, just like traditional banks, by that centralized bank fiat currency system, okay? But the price will be stable, okay? So $1 will equals $1. It's not going to be fluctuating as much. And as far as privacy concerns between the two, crypto is often anonymous, okay? You have to go into the blockchain in order to check certain transactions out, etc. But CBDCs allow the government to see the transactions in order to stop crime, any type of money laundering, or any type of fraudulent activities happening. Okay, so think of Bitcoin kind of like a digital gold that you own yourself. And CBDCs are going to be like digital dollars managed by the Federal Reserve. So one is for freedom and investment and speculative purposes, and the other is going to be for stability and spending. Okay, so one's purpose, okay, it's going to be for speculative, freedom, and investment reasons. And the other purpose is going to be for stability, spending, and sending your money how you want within your centralized bank, okay, when you want, without having to use any type of external apps that you may potentially have to get approved for, especially when you already have your bank. Let's head over to the next slide. So let's talk about the 2 types of CBDCs. Not all CBDCs are for regular people, okay? There's going to be 2 main types. One, you're going to have the retail CBDC, okay? So this is going to be just for the day-to-day person. It's used for buying coffee, clothes, paying bills, and it really just acts like cash in an app, okay? And then you're going to have number 2. Other side of it, you're going to have your wholesale CBDC, okay? This is going to be for banks, and it helps huge banks send millions of dollars to each other instantly and safely, replacing the old slow systems. Okay, so retail is like the debit card in your wallet, and wholesale is like the armored truck that moves money between bank vaults. Okay, So really understanding the two different types of services and reasons why is going to help you make some future investment properties, especially when we start seeing banks implement CBDCs more and more due to the fact that they're trying to create some type of competitive edge against the whole cryptocurrency decentralized space. Okay. So why create a CBDC? Okay. Governments aren't just building these for fun. Okay. One, it's for competition to create a space for them to still be profitable in the financial world, especially as cryptocurrency grows year after year after year after year, and people are starting to wake up to what's actually happening and how the currency works. Okay. And the efficiency of everything. So payments become instant and cheaper. So no more 3% credit card fees for shop owners, etc. And financial inclusion is going to come into play. So people who don't have bank accounts can still have a digital wallet on their phone to receive money safely. So that means you can still be able to do jobs and get paid exactly how you want. And in case you get declined by any app such as Cash App, Zelle, or anything like that, you're still going to be able to survive and pay your bills how you need to. And programmable money is what it is. So the government can send stimulus checks that expire if not spent, or can only be spent on food using CBDCs. Instead of having to get checks or use certain cards to spend money, CBDCs could be used to fund government programs to help out citizens. Okay, so during an emergency, the government can pretty much airdrop money directly to everyone's phone without having to mail paper checks and give everyone an essentially virtual card by using CBDCs. Okay, so we can start seeing things transfer away from traditional bank financial fiat currency system that we've been seeing for the past couple of decades into a whole new blockchain involved world. Okay, let's head over to the next slide. So let's talk about the risk and the concerns. So why are some people worried in the first place? So with great power comes great responsibility. Okay. So giving the government total control over digital money has risk, and it's going to be a privacy loss factor that comes into play. So cash is going to be private. Okay, if you buy a candy bar with a $5 bill, nobody knows where it came from even. With a CBDC, the issuer can technically trace every penny that you spend, which takes away people's privacy, which adds control back into people's lives. So if money is programmable, they could stop you from buying things. Okay, so that means that they could deny transactions, freeze certain things, just as a normal bank account can. But banks and credit unions have a little bit more separate control from just the straight up government centralized system directly. Okay, so cybersecurity reasons as well too. If the central system is hacked, the whole money system could freeze, or even if it goes down. So let's say a CBDC risk system is running on like a system like AWS. Okay, if AWS were to go ahead and shut down, that means people weren't going to be able to access their funds. Okay, so do you want convenience or privacy? Okay, both things are going to go ahead and have concerns, and a lot of factors are going to come into play. So deciding what you're using your money for and how you want to invest is going to change year after year after year. So make sure you guys are staying on top of things. And as far as compliance for even your own stores, even if you want to take CBDC currency, and we'll see how the things change over the next couple of years. So are CBDCs real yet? Answer is going to be yes. Okay, it's not just a theory. Many countries are already using and testing them. Okay, for the Bahamas example, using the sand dollar. So the Bahamas is the first country to launch a full CBDC. So people use it to pay across different islands using mobile phones. And then we got China. Okay, China using the digital yuan. And millions of people in China are already testing the eCNY. Okay, electronic CNY. Okay, it's just digital fiat currency for China to buy subway tickets, groceries, etc. And then we got US. We got the Project Hamilton. Okay, the Federal Reserve and MIT are researching how our digital dollar would work, but haven't launched one just yet. But the United States is working on things. Okay, so over 100 countries representing 95% of the world's GDP are currently exploring a CBDC. Okay, and this is going to be research done as of 2023, and we can start seeing a lot of things change, especially when it comes to government-funded projects, such as like food stamps, unemployment, or anything like that. Instead of people getting the money placed on certain cards or traditional bank account systems, a CBDC wallet could be used in order to have people spend money on that throughout the entire network. So monies came a long way. It came from seashells to gold coins, seasoning, to paper bills, and now we got plastic cards, and now we can just send money digitally with numbers on the screen with our phone. And CBDCs seem to be the next logical step in a digital world realistically. So as you grow up, You got to understand how money works. You got to be able to adapt, and you got to be ready to change how your asset classes are being moved and how your money is growing, especially as things get more expensive over time. Your money has to be working for you. Okay. Keep that logical perspective. If the world is going to get more expensive over time, that means that your money can never stop working, especially when we have to do things like use the bathroom, sleep, etc. You have to be getting money while you're doing that stuff. Okay. If you want to be competitive in this world, you got to be getting money at all times. In your sleep, while you're awake, while you're getting money, you should be getting money, and it should be that serious, inshallah. Okay. So CBDCs offer speed and safety, but we must come to terms with the fact that you're going to be losing respect of privacy, but you are going to be getting a lot of convenience as well too. Okay, no more long paperwork, waiting for cards and stuff like that. And a lot of that stuff can be frustrating. Okay, just instant funds that come on a wallet, and we'll really see how it plays out for the future. So stay prayed up to God, keep grinding, and head over to stackmode.net for all trading education. Catch you guys in the next one. Peace.
So we're going to be talking about how whales manipulate the crypto market within the first place. So whales are going to be cryptocurrency players that have tons of money, for example. Okay, so if you ever see an order come in for like $1 million plus, that's going to go ahead and be a whale. And sometimes whales can go ahead and control a lot of the markets, especially if something doesn't have a high market cap, which is going to equal the value of something. So for instance, someone purchases $5 million worth of Bitcoin, it won't really move the market much due to the fact that Bitcoin has $1 trillion market cap. So it's extremely valuable, and a lot of people are investing into it. So it's not going to move the market much. But for instance, say somebody invested $5 million into whale coin, okay, some random meme coin that just dropped. Okay, they pretty much now own all of whale coin. Okay, they bought all the shares pretty much since they invested $5 million. Okay. Due to that fact, if any time whale coin goes up, since they're a majority holder, as soon as whale coin decides to go up, they can go ahead and sell. And since they're a large majority of the shareholder, the price is going to go ahead and tank with it since they hold a large majority of the value. Okay, so that's what a whale is. A whale can affect your trading in different ways. Let's go ahead and let's talk about what we can do and how we can trade with the whales in order to make sure we're making profitable trades. Inshallah. Let's go. So what's a whale in the first place? So in the world of cryptocurrency, a whale is an individualized or entity that holds an immense amount of our particular digital asset. And due to the decentralized and often less regulated nature of the market, the actions of these whales can have a disproportionate impact on price, liquidity, and overall market sentiment. And their large transactions can single-handedly trigger significant price swings, whether in a positive direction or negative direction, creating both opportunities and risk for smaller investors. So the market influence that whale has. So whales are not just big investors, they're market movers. Their buying and selling can create price momentum that a typical trader can't due to the fact that they own such a large percentage of the value that's being traded into it since they have such a large percentage of it. Okay. And concentrated ownership. The concentration of wealth in the hands of few people, entities, individuals, or hedge funds included. So a few whales means that they control a large percentage of a token supply, giving them significant control over its price. Okay. And it has a large psychological impact. When a whale makes a move, other traders take notice, and this can trigger a chain reaction of buying, okay, which is FOMO, or panic selling, and as others try to follow or get out the way. So the psychology of manipulation. Whales don't just move the markets with their money. They exploit human emotions. They understand that FUD, okay, FUD stands for fear, uncertainty, and doubt. All things that are banned because we trust God, we trust our plan, and we're not here to fail. And FOMO, okay, and we don't trade with FOMO, okay. FOMO is banned too because we trade with logic behind our trades, okay. We know what our entry is, we know what our exit is, and we know what our stop loss is way ahead of time. Okay, we're strategic, logical traders. We're not falling into any type of FOMO, so we're good off that. But these are psychological triggers. And a whale's goal is to not just profit from the price change, okay, but it's to get other traders to do the heavy lifting for them by creating a narrative that encourages mass buying or selling. So strategic moves that whales do. Whales make calculated moves, not emotional ones. and they plan their actions to maximize their profit by preying on the emotional reactions of others. So this is the illusion of momentum it creates. A whale's large buy order can give the illusion of a strong market momentum, drawing in retail investors who fear missing a rally. Okay, because people might see like, oh man, the price is deciding to go up, but it could go ahead and be overextended, for example. And whales and their affiliates can use social media, okay, and other news outlets to spread stories that justify their market movements. Like for some reason, people like to go ahead and tweet certain things like, oh, the market made this much today, it lost this much today. Market's going to always fluctuate. Just pay attention to the chart and put everything together. Okay. So don't be manipulated by what you see on social media. Okay. Take actual education, implement it into your trade, do your research, and take your time. So for example, the fake sale wall. So if a whale places a massive sell order at a slightly higher price than the current market price, this sell wall is going to create the illusion that a strong resistance wants to be created there. And that can scare other traders into selling their holdings at a lower discounted price. And once the price drops, the whale can cancel their fake order and buy it right back in at the discount. And some common manipulation tactics. Understanding these tactics are going to be your first line of defense in order to avoid fake outs, things like that. And they're designed to be subtle, but they can be identified with some careful observation. So we'll talk about pump and dumps. Okay, so a group of whales can buy a large amount of low cap coins. Okay, so for example, if they bought whale coin, okay, and let's say a group of individuals in a Discord, it's the real thing, real people, things I've seen myself. Okay, a group of people in a Discord come together. Let's say they own 60% of the coin. Okay, they're going to begin from the lows. They're then going to go ahead and push ads, social media advertisements, pay social media influencers or hack social media influencers to push the meme coin that pretty much has no intrinsic value for the future. Okay, and since they own a large majority of it, by the time the stock starts going up, starts getting hype from the internet, they're going to go ahead and sell. Since they're in at the bottom, they're going to make millions of dollars. Since it's trading, okay, you make money when someone's losing, and when you lose, someone's making money. So since they're in at the bottom, they're going to go ahead and sell. And since they own 60% of it, the market will go ahead and crash. Okay, so that's what a pump and dump is, and don't get manipulated by that. Okay, take your time. So wash trading. Okay, and this involves when an individual or group simultaneously buys or sells an asset to create fake trading volume in hindsight. And this makes the asset appear more popular in liquidity than it actually is, attracting legitimate traders. So a lot of meme coin traders started creating their own tokens do that. So check out the flow. Okay, and the flow is going to give you the ability to see all the orders coming in, okay, and see where the transactions are coming from. Is it a diverse flow coming in from a bunch of different addresses, which is going to indicate it's a bunch of different people investing in it, which is going to indicate it actually has value? Or is it just one address buying over and over again, which is going to indicate a whale, okay, one person buying large quantities of something? And a whale places a large order on one side of the order book, okay, and this is using the buy or sell. Okay, so order book shows you who's buying and selling, okay, and they use one side of the order book, okay, to trick others into believing that there's strong market interest. Then they can cancel the order before it can be filled, and often at the same time they execute a real order on the opposite side to profit from the price shift. So since people are looking at the flow so heavily instead of looking at the chart, they end up getting faked out and they end up just losing a trade. Okay, so make sure you're taking a look at your TA, okay, your technical analysis, take a look at your chart movements, and look at the flow too if you want to. Make sure everything lines up and correlates. So here's how to spot a whale's footprints. So while you can't read their minds, you can track their movements. So some tools give on-chain analysis, and they can go ahead and reveal suspicious activities, and they can help you avoid being a victim of manipulation. And some unusual volume spikes. So you can go ahead and look for sudden and inexplicable spikes in trading volume, okay? So that means a large amount of people are getting in a certain direction that are not tied to any major news or fundamental developments. And some on-chain analysis. You can use blockchain explorers to track large funds who are transferring to and from exchange wallets, okay? So you can see what type of cryptocurrencies are getting withdrawn the most. And a massive amount of a token being moved to an exchange could indicate an upcoming sell-off. So order book analysis. Pay close attention to the order book and be wary of a thin order book that suddenly gets massive. A single buy or sell order placed on it. And what you can do to protect yourself. You can't stop a whale from manipulating the market, but you can build strong defense against it. One, okay, just master the charts. Okay, master your technical analysis. Make sure you're understanding what you're looking at, and you might even be able to buy when the whales are going to be buying within a positive direction. Okay, just trust God. Okay, keep studying the market, and once you're buying when the whales are buying, that's actually definitely when you're going to be profitable, inshallah. So your best protection is about not outsmarting them, but sticking to a disciplined strategy and buying at levels to where you're actually going to participate where the whales are going to be buying at too. So key levels are going to be important. Okay, so if you're looking for an area of resistance to be broken, if it turns to support, then it looks like people want to go ahead and buy it there. It wants to hold there, and market might want to continue in an upwards direction from that level. Okay, so some things you can also do to protect yourself, just in trading in general. Never invest more than you can lose. Okay, no trading with rent, no trading with important bail money or anything. Okay, and this golden rule of crypto trading reduces the emotional pressure that makes you vulnerable to manipulation. And you can also diversify your portfolio. Don't put all your eggs in one basket. Okay, spreading out your investments across multiple assets can reduce the impact of a single asset being manipulated, and you're not just going to be hoping the whole time that one thing sweeps while everything else is going in an upwards direction, whatever direction you want. Stop loss. Okay, set your stop loss. Okay, stop losses automatically sell your asset if it falls to a certain price. So if your broker supports stop loss, go ahead and use it in case it's like 3 a.m. Okay, and price starts dumping and you're in a long trade. Okay, and it passes a certain area that you're more comfortable than losing with. You can go ahead and set your stop loss, and it'll go ahead and close you automatically. Okay, that's the key function of it, is that it closes you automatically. So while you're doing something, driving, the gym, whatever, okay, your trades will go ahead and do its thing. Okay, you can set your take profits, which is a limit order that'll go ahead and make your trades close automatically. And then you can set a stop order, okay, which will go ahead and cancel out your trade if it hits a certain price threshold that you don't want it to, causing you not to lose all of your money, but just some amount of money that you're comfortable with. And I can't stress it enough, please do your own research. Okay? Do your own research. Don't take anyone else's trades that you just see, okay, unless you're trying to actually study and understand the market. Okay, do your research, and knowledge is going to be power. Okay, and in the end, the crypto market is really just a game of psychology. Okay, as a lot of people have made a lot of money. Okay, I've made a lot of money just buying and holding. Okay, just simply buying and holding. Okay, people are millionaires who don't look at the charts. Okay, but just buying and holding. So ideally, that's just going to be the main concept of it. Buy the dips. Okay, if you want to learn how to buy the dips, head over to Stackmode.net. Okay, so buy the dips, buy certain low points. Don't buy at all-time highs. Okay, that's also going to be a big thing too to succeeding. And try and follow what the whales are doing. Try and buy at key levels. Okay, buying at key levels is going to be a good way to go ahead and make some profit as well too, inshallah. Okay, buy key levels. Okay, key levels are going to be areas where everyone wants to buy at. Okay, an area where everyone wants to buy at is going to go ahead and attract whales. Okay, wherever the money's moving, you should be moving to within the market. Okay, so by arming yourself with knowledge, getting more informed, heading over to Stackmode.net for mentorship, getting a free trading mentorship call, and maintaining a disciplined strategy, resisting emotional trading, you can navigate these volatile waters safely. And your goal isn't to beat the whales, and it's to avoid being their meal, also known as liquidity. Okay, liquidity is pretty much people who are just losing, and you don't want to be ammo collected in order for the real trade to actually happen. Okay. Stay prayed to God, keep running. Catch you in the next one. Peace.
Let's go ahead and talk about crypto wallets. So I want to go ahead and break down the difference between hot wallets and cold wallets, as well as keeping your crypto secure by making sure you guys lock down your seed phrase. So let's jump into exactly how we can secure our cryptocurrency, inshallah, if God wills. Boom. Let's talk about how to secure your crypto like a pro. So if it's not your keys, it's not going to be your coins. I want you guys to understand the difference between ownership and just keeping your keys on a broker that if they get shut down or something like that, you won't have access to your crypto, or they could even limit how much crypto you could send, withdraw, deposit, etc. And that's not what you want. The whole reason we're trading crypto in the first place
It's so we can have some freedom over our money, inshallah. So let's talk about it. So hot versus cold wallets. So the vital distinction, understanding where your private keys live is going to be step one. Understanding where your private keys live is going to be step number one. So the hot wallet is going to be online. Apps on your phone or your computer, for example, Coinbase or MetaMask, keys are on a device connected to the internet. Convenient, but can be hackable. If people guess your Google or hack into your 2FA or multi-factor authentication, etc., then they're going to be able to have access to your crypto. Not what you want, because then they're going to have access to your money. So let's talk about what a cold wallet is. So a cold wallet could be like a USB drive, a little block device, etc. And it's going to be a physical device, and it's a hardware wallet that stores keys offline. And it never touches the internet, and it only signs transactions. So what you can do is buy your crypto on a hot wallet and then transfer it to a offline cold wallet. So it's kind of going to be like cash, but cryptocurrency. So you guys are going to be able to transfer it to hot wallets and transfer it to your bank if you ever need to, etc. So a cold wallet is pretty much going to be like cash, but for crypto. And a hot wallet is going to be like the online live store where you can purchase and store cryptocurrency as well too, but it comes with limitations. Let's continue on. So the seed phrase, also known as the recovery phrase, make sure you guys keep this safe. I don't care if you guys put it inside of a notebook, if you guys write down the keys on a piece of paper. A lot of the times it's going to be a 12 to 24 key word phrase, okay? And it's going to be random words like this. So for instance, like which, collapse, practice, feed, etc. And then 24, some brokers only do 12, okay? So when you create a wallet, you get 12 or 24 random words, and this is going to be the key to your vault, pretty much. If you lose the words, okay, then you cannot get access to your vault. Once again, if you lose the words, you're not going to be able to gain access to your vault. So never type it in on a computer unless it's somewhere where you feel it's secure and safe. Try not to take photos of it because people can hack into your iCloud. I'm not too sure about Google. I haven't had a Samsung phone in a few years, but I'm sure there's going to be ways that people could access your photos too. And try to write it down on like a piece of paper, multiple piece of paper if you can. Store it somewhere, you know, in case paper gets burned, lost, wet, etc. And try and just store it password protected. If you do store it online, there's going to be ways to password protect your documents. You guys can put it inside of a WinRAR file. WinRAR is going to look like the stack of books. It's going to be an icon. And you should be able to put a .text file, .txt. And you could put it inside the WinRAR and then password protect it. And then you could upload it somewhere, wherever you want, because only you know the password at the end of the day. So keep these words secure and safe. Please, for the love of God, do not lose these words. And there's going to be a lot of phishing scams and stuff like that too. You're going to see online like, hey, I lost my account, and it's going to be a bunch of random words like this. They want you to log in, buy crypto, and they're going to try and take your money. So never try and take people's money. Never log into somebody else's wallet. Okay, be righteous, be focused on God, and be focused on your bag. Stay in your bag. Don't try and scam. Don't try and do little weird stuff trying to get some money real quick. Stop it. Okay, be genuine, work hard, and most importantly, pray every day. So keep these words secure, and you guys can also keep these words for your kids, your family down the line, etc. Just as long as you keep it secure. Stuff happens in life though. Once again, papers could get wet, fires, etc. A lot of stuff goes down. But if you write it down like some metal, keep it with you, and upload it to multiple sources with a password protected form, then you could have your money secure in a nice way. Let's continue on. So hardware wallets, okay, the standard. Boom. Physical security. To be a pro, you must move significant funds off exchanges such as Coinbase, okay? And how it works. The device generates keys internally, and the keys never leave the chip at all. And you must physically press buttons on the device to approve any outgoing money. So hackers cannot press the buttons remotely. You got to have the actual cold device in front of you. Now, you can't be running your mouth telling everyone on the block like, yo, I got 10,000, I got $1 million on my crypto wallet right now. You know what I'm saying? That's not playing a good game. Still, you got to be secure, just like if you have cash. you got to worry about little security things. And for verification, you must physically press buttons on the device to approve anything. Okay, so unless somebody actually has it or rob you, God forbid, okay, keep it safe, keep it locked away, keep it inside of a safe, even if you got to, and just keep it secure. And some popular brands are going to go ahead and be Trezor, there's Ledger, Cold Card, and Bitbox. There's going to be some other ones as well too, and they pretty much just look like little USB devices. Now, let me go ahead and tell you guys about something. May God bless his soul. There is a guy who lost his hardware wallet, and he had a bunch of cryptocurrency on it. And he spent millions of dollars clearing a trash excavation site trying to look for it because he accidentally threw it away. So it just like cash, you got to take care of it. There's been times where I've had cash inside of my coat pocket and I accidentally put it inside of the washing machine. And thank God you could wash cash, so it was okay. But like little things like that, like you got to just be on top of it if you're going to have a cold wallet. So if you're lazy, if you're not consistent with your things, you know what I'm saying, things like that might got to change. Pray on it, get better, improve, and just understand that the hardware wallet and cold wallets, you got to take care of them. It's going to be secure, but you got to keep it secure yourself in real life. All right. And the passphrase, the 25th word, the hidden wallet, advanced security feature supported by most hardware wallets. So the seed phrase plus the passphrase equals a totally new wallet. So if someone finds your 24 words, God forbid, they see wallet A, okay, and it's going to be more of a decoy, okay, a dummy, a fake, but your real money is going to be in your wallet B, which requires the extra word that you memorize. So if you forget the passphrase, then the funds are going to be lost forever. No recovery, there's no support you can go run to like, hey, I lost my money. Like, no, you want to play cryptocurrency, you want to invest in a cryptocurrency, you got to have the responsibility of pretty much being your own bank. Okay, you control when you send your transactions, you control how you store your transactions, and be on top of your stuff. Okay, just like if you're your own bank, you could choose between cash, digital currency, etc., whatever you want. Okay, same thing with cryptocurrency. You can go hot wallets, cold wallets, find your sauce, do your thing, and do what feels right for you. Okay, if it feels right in your stomach, then that's just what it needs to be. Okay, so fire and flood protection. So paper burns. Psh. Writing your seed phrase on paper is going to be risky. Houses burn down, pipes burst, stuff could get wet. So you could use things like steel plates. Use a center punch, if you guys have ever seen that, kind of like the things that look like Braille. So you could use a center punch, or you could use tiles to record your seed words on a stainless steel or titanium surface. This way that if anything happens, such as a disaster, God forbid, as long as you don't lose it, it's going to go ahead and be indestructible for the most part. It can survive house fires up to 2,500 degrees Fahrenheit and corrosion, and as well as any water and things like that. And it's just a one-time cost, kind of like a safe if you wanted to keep your cash, jewelry, etc. safe. So it's a small price to pay to secure your life savings absolutely forever. So keep that in mind. There's going to be multiple things you could do, multiple ways you guys are going to be able to keep your money secure and safe. But keep your money to yourself. Okay, evil eye is going to be a very real thing in the world, sadly. So don't be running around telling everyone on the block where you have your cold wallet, where you have your phrase, etc. Okay, keep it just between you and your family, inshallah. So as far as the security checklist, right, let's ask ourselves, do we buy a hardware wallet? Okay, because if not, you could go ahead and invest into a Trezor, Ledger. There's going to be multiple ones you could check out. Hop on Amazon, eBay, the internet. There's going to be some hardware wallets you could check out. Okay, God wills. And write the seed phrase on steel. Try not to do it digitally just in case you ever get hacked, God forbid. And never type the seed phrase into a computer or a browser unless it's password protected. If it's password protected, okay. And try to use the extra passphrase for extreme large amounts in case somebody ever gets your 24 words. And always do a small test transaction first. Okay, you want to do a small test transaction first. So that's going to go ahead and be it. I love you guys so much. Stay prayed up to God. Keep grinding. Don't ever give up, even when things get hard. Pray to God every single day. Try to work out if you guys are feeling any type of anxiety or anything like that about your money. Keep it secure and don't be overly boastful. Okay, spend moderately, and catch you guys in the next one.
read Quran, and listen to God. It's the easiest way to be successful. Catch you guys in the next one. Peace. What's going on, guys? Let me go ahead and show you the full guide on how to detect when prices are going to go ahead and reverse, whether it be for an uptrend or a downtrend. So let's talk about it. So first, price is going to reverse when it meets at its congruent areas or opposite areas. So what does that even mean? So if price, for instance, is trying to find an area of resistance, price has a chance to reverse at an area of resistance again. Okay, so that's going to be one potential reversal pullback area. So if you're looking for a short, this is going to be setup number A. Okay, if you're looking for a short setup, okay, then we're going to have setup B for the short. Okay, or if there's an area of support above current price, okay, price can come up and turn that area of support into resistance. Okay, this is also going to be a probable area to short too. Okay, so both of these models right here are going to be usable in order to catch a reversal trade to the downside. Okay, so if you think price is going to go in a downwards direction, okay, if you think sellers are stepping in and price is going to short, then you're going to go ahead and be able to play model B. Okay, and you're also going to be able to play model A. Okay, so model A and model B are going to go ahead and work if you're trying to short trades, for example. Okay, so let me go ahead and show you if you're trying to long a trade. Okay, so let's talk about model C. Okay, model C is if an area of support decides to be created. Okay, an area of support is going to be an area where price decides to bounce upward at. Okay, so an area of support can go ahead and be mirrored and bounce that again. Okay, so if you see an area of support getting bounced at similar times, then that can go ahead and be a trade. This will also count as model C too. Okay, say price didn't exactly do a clean level of support. Okay, let's say price decided to break past this level of support that's going to be right here. Okay, so let's say price decided to do that. Okay, price could still run through it downward, come back up, and give it support. Okay, and that still be a support mirror. Okay, and then you can go ahead and take it up to the areas of resistance, which would go ahead and be another reversal point. Okay, so we're going to be closing at congruent or reversal areas. Okay, so if you're in a long trade, then you're ideally going to be closing an area of resistance. Okay, because you're expecting price to go in an upwards direction. Price can't go up if it doesn't break resistances or break past areas of supports above current price. Okay, it has to do one of the two. Okay, so you know price is going to try and either A, reverse at the resistances before the breakout, or reverse at the area of support above current price. Okay, causing a support into resistance. Okay, candlestick formation. Okay, also known as break and retest. Okay, so as far as a long example two, okay, example D, price can also break an area of resistance, turn it into support. So resistance can be broken, turn it into support, and the price can go up to the upside and decide to go up. Okay, so this is going to be like the staircase model, and this is going to be my favorite model personally when it comes to longing trades. Okay, even when it comes to pullbacks. Okay, so even prices or areas of resistances below current price, price can still hunt back down to it eventually, turn it into support, and then you can catch an even bigger sweep up. Okay, so let's go and let's talk about on the chart how we can identify certain pullback levels. Let's make it easy. So if I'm on the stock market and cryptocurrency market, I like to always start off on my daily time frame. Daily time frame is going to give me my bird's eye view, and I'm going to be able to see absolutely everything. I can see 5 years worth of price action on one chart, for example. Okay, so I can also use my 4-hour time frame too. 4 hours are going to be amazing, and it's also going to be my bread and butter time frame too. So if I'm on the daily time frame here, I know that price is always going to be trying to chase new areas of resistances or supports above current price. Okay, why? Because if I'm on the stock market, I know that people are working hard within the company, generating revenue, generating items, okay, and giving those items to the public, okay, in order for people to buy, which will generate more revenue, okay. And when the company generates more revenue, earnings reports beats, you're going to see these financials down here where you can see surprise, estimated. So it'll be a report that estimates how much money a company will make. And if they beat it, then that means that they beat their earnings. That means that they beat the reports that they thought were going to happen, the estimates. Okay. If they beat the estimates, a lot of the times price can move in either a positive or a negative direction sometimes too. But once a company has shown that it's profitable, especially when it's paying out dividends, which is something to where the more shares that you have, the more money that you get paid out in dividends, then it's going to go ahead and show you that, okay, this company is potentially profitable. And as you can see here on the daily time frame, from just 5 years ago, price was at pretty much $2 a share. Okay, $10 a share. Price is now at $178 a share. Okay, if you know the old NVIDIA prices, then if you know, you know. But NVIDIA had a squish, so the numbers got smaller. It used to be a lot bigger than this. But yeah, so you always know that price is trying to hunt an area of resistance above current price. Okay, always know that. So price is trying to hunt areas of resistances above current price, especially all-time highs. Okay, all-time highs is definitely a level that's trying to get hit and destroyed, so then price can continue upward. Okay, and then price can continue trying to make some more money. Okay, or the company can make some more money due to the fact that their share value is going to be increased. Okay, so instead of a certain person being a billionaire, you know, they could be a trillionaire depending on the stock value. So that's why I want it to go up. So here's how you know price is going to reverse. Okay, one, it's like we talked about with Model A. When price decides to come across areas of resistances, even if it's way in the past, you're going to see here on this blue line, price reversed at this area one time here. Okay, once. Okay, twice, 3 times, 4 times. Okay, 4 times. 1, 2, 3, 4. 4 times price decided to short at this blue line area here. Okay. And if I'm going to trade a breakout, this is why I don't trade the first candlestick personally. I like to wait for a 4-hour candlestick. So I'm going to wait for a whole new 4-hour candlestick to be above the zone for me to trade that personally. Or I would wait for break and retest. I would just wait for the resistance to be broken completely. And if it turns to support, then I'll take it up. Okay. That's also how you trade break and retest too. Okay. So, you know, price is going to be trying to break this area that one day. So even if price is below current price, I can see that, okay, price has this area of support created right here. Areas of support are going to be important because it's going to show you where price pretty much already wants to retest and bounce from. So areas of support below current price are going to be really important. But so are areas of resistances. Okay, heavy areas of resistances can also show you, especially with support, can show you and be like, okay, this price area can go ahead and be a decent area to buy. Okay, so check out this area right here. Okay, so if I put this area of resistance here underneath the circle, I could check that this area of resistance decided to get broken here. Okay, price got broken here. But once I got up, price decided to turn this area of resistance here, got broken, and turn into support here. Okay. So resistance broken, turned into support. Tried to hold it here once, got broken down, and then came up and did it again. And then price decided to bounce up. Okay. So you could wait for price to either come down to areas of support like here and see if price wants to bounce up. Okay. So either that, or you're going to wait for price to come in contact to an area of resistance. So price can either bounce down there. Okay. Or price can go ahead and bounce on the candles on top of it. Okay, maybe at these areas of resistances here. Okay, and just wait for price to go ahead and react because we know that resistance can be broken, turn into support. Okay, or price can go ahead and bounce at an area of support that was already there. Okay, so you can use that in order to make trades. Okay, make it extremely simple. Don't make it too hard whenever you're catching your reversals and your sweeps. All right. So either play a support mirror, resistance mirror, however you want to trade. That's all the formations of reversals. Stay prayed to God. Keep grinding. I'm going to catch you in the next one. Peace.
Most beginners lose money trading futures, not because the market is hard, but because they start wrong. Today, I'm going to show you the right way and the simple steps to your first profitable futures trade. By the end of the video, you'll know exactly how to pick the right contract and how to avoid the traps that wipe out new traders, and the exact setup professionals use to stack consistent wins. No fluff, no complicated math, just a clean, actionable beginner framework that actually works in live markets, prop firms, and even if you've never traded futures in your life, inshallah, if God wills, you'll know how to trade it by the end of this course. Let's jump into it. Okay, so this is going to be how to trade futures and catch dips and certain lows. Okay, so we're just going to go ahead and jump straight into it. So what you want to do is start off doing top-down analysis. Okay, top-down analysis is when you're going to be starting from your highest time frame and scaling down to your smaller time frames. So what we're going to go ahead and start off with is our weekly time frame. Okay, our weekly time frame are going to be our eyes. Okay, you're going to be able to see absolutely everything you need to see on the screen. You got to start on a higher time frame. Especially on futures, you cannot sit there and tunnel vision on things like the 5-minute and the 1-minute and not understand the true directional bias. Okay, we're also going to talk about some logical things and some logistics of why it's better to play certain directions within the US market. Okay, and futures is going to be a US market. Okay, we're going to talk into everything, and this is going to be the full futures guide. Okay, so we're going to go ahead and have the weekly here, right? Weekly time frame is going to be our eyeballs. Okay, we're going to be able to see everything we need to see on the higher time frame basis. That's going to be pretty relevant. Then from there, you want to go ahead and head down to your daily time frame. Okay, you're going to go down to your daily time frame. It's going to show you a little bit more candles than you would see from your weekly. Okay, and each one of the candlesticks that you're going to see is going to determine the amount of price action that's happening within a certain time frame. So if you're on the weekly time frame, each one of the candlesticks that you see will represent 1 week. If you're on the daily, each one of the candlesticks will represent 1 daily. Okay, so that's how things fluctuate and change. Okay, so it's just about knowing when to use certain time frames and how to use the flow. Okay, and once again, the flow is going to be going from your highest time frame to your lowest time frame. Okay, highest time frame to your lowest time frame. So we're going to go from the weekly to the daily to the 4-hour time frame. Okay, the 4-hour time frame is going to be extremely important, and we're going to talk about why. So if I get on the 4-hour time frame, we're going to see here in the bottom right of trading view, okay, you're going to see the words ETH. Okay, so look in the bottom right here, you'll see the words ETH. ETH is going to stand for extended trading hours. Okay, it's going to stand for extended trading hours. And what that is going to show you more candles that would be hidden than if you didn't see. So market is open normally from 9:30 a.m. Eastern time, okay, to around 4 p.m. okay, Eastern time. Okay, that's going to be like the basic stock market time. But with extended trading hours and with futures, market is also open on Sunday. It opens at Sunday at 6 p.m. and is open until, I believe, Friday at around 6 p.m. as well too, Eastern time. Okay, so extended trading hour is going to show you the Sunday hours, which you need to see. Okay, if I turn off extended trading hours, okay, the chart is going to look a little different, and you're going to see little areas like this, okay, where you're going to see gaps in between certain spaces. But if I turn on electronic trading hours and I go back to the same place, I'm going to see price have a filled in area there. Okay, so that's why extending trading hours is extremely useful to use, and why you can't just live completely on your higher time frames. Okay, all your time frames are going to be useful. Okay, you got to use all your time frames. Got to. Okay, all your time frames are going to be important to use. They're all going to help you out, and it's about knowing when to use what, once again. Okay, so that's going to go ahead and be that. So you're going to go from your weekly to your daily to your 4-hour to your 15-minute. Okay, weekly, daily, 4-hour, 15-minute. Okay, That's how your futures flow needs to go. Do not just tunnel vision on the smaller time frames. Yes, the futures income is nice. Yes, you can scalp and make some money, but it's not just about that. It's going to be about the discipline. It's going to be about catching your nice big trades, okay? You don't want to be just trading for pennies, okay, especially on futures. This is why on futures, I recommend be on the live account, okay? Because when you're on the live account on futures, things are a lot different, okay? You can hold your trades overnight, okay? When you're on prop firm, you cannot hold your trades overnight, which hurts your profit significantly, okay? The extended trading hours time is going to be when a lot of price action decides to occur. So when you get a good entry and you see which way price is flowing in, you can make some nice money and turn a small account to a lot, okay? Fairly fast with futures. Now it's going to be a lot of power in your hand, okay? When it talks about futures, it pretty much just means make or break, okay? You can make or break all your profit, okay? So let's talk about some certain things when it comes to futures before we get into the chart. Let's talk about margin. So margin is going to be an important thing when it comes to the futures market. Margin is going to be the amount of money required in order to open a contract. So in order to outplay this, right, thank God we have the new micro futures accounts. So micro's futures accounts cost less than normal's futures contracts. So let's say you're trading the NASDAQ 100, also known as the NQ, okay, which mirrors the QQQ, okay, stock or ETF. So index. So NQ, right? Let's say it costs $1,000 to open up one contract of NQ, okay? On most brokers, it'll cost you like at least $1,000 to open one contract of NQ. Thank God, though, we have something called the micros, which helps us trade more efficiently, and this way we can trim and get more value for what our account size is. So now we have micros. So now you could play something called MNQ, okay? And instead of spending $1,000 on a contract, you can then spend $100 on a contract, okay? And you could flip that fairly simply, okay? Let's say you're on YM, okay, which mirrors the US 30, okay? It might cost you $500 to open one contract, okay? And if you're trading MYM, for example, it will go ahead and cost you just $50 to open one contract, okay? And you could still make some great money. And instead of buying one contract of YM, you could buy multiple contracts of MYM and be in a much better position, okay? So you could think about that. So the micro contracts are going to be new contracts. I believe they came out like 2021, something like that. Fairly new, thank God. And now we have the ability to trade with less money. So even if you do have a big account, you could trade a bunch of micros and trim and trade how you want and hold your trade as long as you want. And as well, when you trade the micros, they're going to have lower overnight margin. Okay, so OVM, overnight margin. Okay, so it might cost $50 to open a micro contract during the day, but if you want to hold it past 5 p.m. Eastern time, then the margin might go up to like $400 a contract. Okay, so you got to make sure you're having the overnight margin and the day margin if you want to hold overnight. Okay, so pay attention to that, and every broker is going to have its own different amounts. Okay, it's a lot of important things to know before we just jump into trading futures, because you can get what's called margin called, where if your account goes underneath the amount that required, let's say MYM, okay, let's say it requires at least $50 in your account. If your account goes underneath $50, let's say it goes to $48, it'll go ahead and just wipe all of that and put it straight at zero, okay? And if your price action goes against you too fast, you might even owe the broker money sometimes, okay? So you want to make sure that your dollar amount is a pretty good amount over the amount of margin. So if it requires $400 to hold overnight, then try and have at least like $800, $700 or something like that, okay? This way, you're going to have some wiggle room and things like that. So the things outside of futures are going to be really important too. And how long you hold the trade is also going to go ahead and be limited. So how long you hold the trade is going to be based on the certain month too. Okay, you can't sit there and hold futures forever because they do expire and have certain expiration months, which the broker will tell you a lot of the times. So now let's go ahead, and which is why you'll see on your broker sometimes it might ask you to roll over your contract. Okay. So once again, starting on your higher time frames is going to be our bread and butter. Okay, it's where we're going to succeed at. We want to see the higher time frame trend. Okay, let's talk about some logical things too as well before we jump into the chart fully. Okay, I want you guys to pay attention to this. This is going to be MYM, right? Look at how this chart trends. Okay, year after year, even with certain dips, we're trending in an upwards positive direction. Okay, we're trending once again in an upwards positive direction year after year after year after year after year after year. So personally, I don't think it's smart to trade futures to the downtrend. Okay, the Forex community has spread over to US traders, and now US traders think that they should be shorting a market that goes up year after year after year after year. There's also certain laws in place called the short sale restriction, okay, SSR. And the short sale restriction prevents stocks from just flash crashing to 0%. Because don't forget, definitely remember this, but don't forget, futures are just indexes. They're just a bunch of stocks put into one big giant conglomerate, and then you can trade it like that. Okay, that's all it is. So if stocks crash, futures will crash. Okay, that's just how it is. So you want the stocks to be up and afloat. And same thing for the US government. It's beneficial for the world, okay, the global economy, okay? The more money the US has, the more we can look better and help other countries out, etc. Okay? So, if the stock market goes within a positive upwards direction, right? If futures goes in an upwards direction, okay, that's going to incline more companies to be able to hire more employees, okay? And the more employees that are hired, the more taxes that are going to be paid. The more taxes that are being paid is going to equal a richer White House. A richer White House is going to give the country more credibility, recognition, and ability to do more things. Okay? So, there's logical reasons why we want the stock market to go in an upwards direction. Okay, logical reasons why you don't want the market to crash down. So don't fear crashes whenever you're trading. But in futures, I recommend to buy lows. Okay, there's going to be two things we're going to be looking for in futures. We want price to already, and let's talk about support or resistance. So support is going to be an area where price is bouncing in an upwards direction. Okay, so if you're on your higher time frame and you see price made a certain low going in an upwards direction, okay, that's going to indicate an area of support. Okay, it's going to indicate an area of support. Then the opposite of that is whenever you see price falling in a downwards direction. Okay, whenever you see price falling in a downwards direction, then that's going to be called an area of resistance, indicating that sellers are coming into place. So resistance is going to be when price is falling in a downwards direction. And then we're going to have support when price is bouncing in an upwards direction. Okay. And that's just going to go ahead and be the difference between the two. So putting this into perspective, we have to go ahead and realize, like, okay, support and resistance correlate with each other. Market can only go in two directions. Okay. But I can see on my weekly time frame, year after year after year after year after year, market's going in an upwards direction. Okay, so my US futures traders, please do not have that Forex mindset. Okay, I want you guys to look at the Forex chart real quick. A lot more sideways. This is why Forex traders short. Okay, there's a reason why they short. Okay, because you can get off with things like this a lot easier, a lot cleaner, and a lot better. Okay, this market is not meant to go in an uptrend. Okay, as we can see, futures goes in a consistent uptrend. Okay, due to the fact that it's going to help the US in a lot more cases. Okay, so we have to keep that in mind. That's why price is going in upwards direction. So let's talk about once again how we can go ahead and trade. We want to be buying two things. Okay, you want to be buying when price makes an area of support. Okay, because all your setups are going to look the same. Your setup should always look like a V. Okay, so market will always make the left side of the V, and we'll talk about this in a second. And then you're going to catch the remainder of the right side of the V, because price always wants to try and break all-time highs. So as we can see on the futures market here, we're always constantly making new all-time highs pretty much, okay? And that's due to the fact that, once again, it's most beneficial for the world, the economy, and the global infrastructure of everything, okay? So price is always going to be hunting towards all-time highs, which means price is always going to be hunting to go in an upwards direction. So even if price is in a downtrend, I personally don't like to short. I like to just wait for price to make a low, and then I'll go ahead and I'll take my trade, okay? So let's talk about how you know when price is ready to make a sweep up, okay? There's going to be two things we're going to be looking for. So you want price to be, once again, just bouncing at an area of resistance going in an upwards direction, okay? And then you want to close at an area of resistance or support above current price. That's because price has an ability to reject at an area of resistance multiple times, okay? And one day it might break, but you don't want to eat the reversal, okay? You want to catch your formation and structure completion. Think of trading as a puzzle piece. Everything should click and form together. So resistance areas can short within a downwards direction twice, okay? And then we're also going to go ahead and have an area here where resistance gets broken, turns into support, and then price goes in an upwards direction. Resistance here getting broken, turn into support. Okay, this is going to be another example of the V formation too. Okay, and in this instance here, you would have bought at this area of support here, okay, and catch it up, because you know price wants to mirror or at least reach the area of resistance. You don't know if it wants to break out immediately, okay, but price at least wants to go ahead and reach it, and that's what matters, okay? Catching your resistance gap fills. So let's go and let's keep talking about it here. So I like to go ahead and start on my weekly here because it lets me know, like, okay, am I at all-time highs or not? Okay, because if I'm at all-time highs, then I know I'm going to be needing price to dip down, make a certain low, and then I'll be able to go ahead and catch my sweep in an upwards direction. Okay, so let's go and let's go to daily here. Okay, and I'd like to go ahead and wait for certain formations. Okay, so take an area like this. This on the daily. Okay, I see price made an area of support down here twice. Okay. And even if I wanted to go ahead and just take it up to like this area of resistance, you know, that would have been solid. And as you can see, just based off this tiny support here, went ahead and caught the whole gap fill, and this would have been around 669 points within a couple of days. And on futures, that's disgusting money. Okay, that money is nasty. So what I'm looking for, especially on my, so I like to see my weekly here, make sure I'm not at super all-time highs, because I'm looking to long the market. Okay, and I'm waiting for price to make a little base on the daily. Okay, so I need price to make a little base. So right now I can see price making the left side of the V. Right now we're heading straight down. Okay, we're heading straight down, and then I need price to form a low, and then I'll be able to catch the right side of the V and catch it back up. Okay, so that's what we're going to be looking for. But in order to do this, we got to be patient. So right now I wouldn't short, okay, because people are going to be fiending to buy any low opportunity. So I'm going to wait for price to go ahead and create its low. Okay, I'm going to show you a good example of what that looks like. I'm going to go to my 4-hour again. Okay. When you start seeing price make that nice curl, especially with 4-hour closes, then that's when you know you're going to go ahead and catch your nice trade. Okay, take this little sweep curl up right here, right? Even if I decided to close the trade at this area of resistance up here, that's still a really, 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 really nasty futures trade. Okay, this is 862 points. Okay, just catching the V. Okay, catching it to this area of resistance up here. Okay, and as you can see, price decided to go ahead and fill the V. Okay, and you're just going to go ahead and be able to farm money on the micros, farm money on whatever. Okay, let me go ahead and just log into the paper trade here and just show you how much this would have made, for example. Okay. Go ahead and close that. So boom, even right here, right? So let's say you opened a trade right here. Okay, and I like to play with like 100 tick stop loss. Let's say I'm trading YM. Okay, 100 tick stop loss, right? I'm risking $50, and my take profit would be this resistance all the way up here. Okay, 473 ticks. So I'm risking $50 to make 236. And as you can see, price decided to continue forward. So as soon as price starts to make that nice V, so I'm looking for multiple 4-hour candles, and then I'm waiting for price to sweep in a upwards direction. Okay, I'm waiting for price to sweep in an upwards direction. So I can see price making an upwards V, even if I entered right here on this candle, okay? Because I want price to go ahead and make the formation of the bottom for me. Okay, I don't know where price is going to bounce at. Okay, it's too many people try to predict the ultimate bottoms. Okay, but you know that price at least wants to try and mirror areas of resistance. Okay, before it gets broken. So take advantage of the V. So even if you entered right here, right, you'd be able to enter right here. Okay, 100 tick stop loss. As you can see, stop loss just didn't get hit. And then we decided to go ahead and take profit all the way up here at this resistance of here, 484. Okay, and then you can go ahead and catch nasty trades over and over and over again, waiting for your V formation. Okay, so what I'm going to be waiting for is for price to make a certain low. I'm waiting for price to nosedive down. After price makes a low, okay, let's say maybe about this much on like the 4-hour at least, okay, then I'll be able to catch the remainder up until the previous resistance or support that it stopped at. Okay, and then I'm going to go ahead and close there. I'm not going to play for the breakout. Okay, I'm just going to go ahead and catch the V fill. All your trades should look like a V for the most part. Okay, so right here, I'm waiting for price to go in a downwards direction. Okay, I'm waiting for multiple 4-hour candles. I don't like to just go off of one 4-hour candle. I can't just see price make this one wick area here near this area of support and be like, oh yeah, this is going to be the best trade ever. Nah, I want to actually wait. This is where the 15 minutes is going to come in too. So I can see on this area here, I have a previous area of support over here, and then I have an area of support over here too. Okay, price going in an upwards direction, starting to curl. Okay, but I'm going to wait for more 4-hour candles. Okay, maybe even some more daily candles to form too. Okay, and then I'm going to go my 4-hour here or 15-minute. Let me find myself a good take profit. Okay, so take profit here, even if I want to close at like this resistance area up here. Okay, so let's say I get like one more 4-hour candle or something like that. Okay, I might be able to go ahead and take this V formation up until at least this area up here. Okay, and then I'm going to go ahead and put a 100 tick stop loss. Okay, and then I can see if this area actually wants to go ahead and fill and catch it up to this area of resistance either here, or I could try and catch it up to the, yeah, I mean, honestly, I wouldn't be greedy. Try not to be greedy when it comes to futures. Just take your nice trades and just wait for redips and just do it again. Okay, because the greediness can really get you nipped in the butt. So I would really just take like your 15-minute take profits like this, catch your nice sweep, catch your nice V, close at this area of resistance up here. Boom, close out the area of resistance right there. Get on my 5-minute here, you're going to see the resistance here. You know, price might want to mirror that. And then you can go ahead and close your trade up there. Okay, very simple, very easy. And just go ahead and take your money. Okay, so even if price is in a downtrend, okay, price still has to go up to come down. And price has a better chance of going in an upwards direction than it is just falling in a straight downward direction. Okay, especially when it comes to futures. Okay, use your higher time frame, look at your bias, and put everything into perspective. Does it make sense to short something that continuously goes up in an upward direction year after year after year after year, regardless of inflation or anything? And the answer logically would just go ahead and be no in every single scenario. Okay, so when you're reading your futures chart, it's really just about taking your time, getting in your bag, and really just making sure you understand and can read what you're looking at. Okay, it's about taking your time. And when you take your trades, you got to take your profit. Okay, you got to be closing at these areas of resistance or support above current price. You got to. Okay, I wouldn't hold past up here. Okay, we also have this take profit up here too as well. Okay, if you wanted to take something like to up here. Okay, and this would be for like a 1-to-1, and then price decides to continue to go up in an upwards direction. over and over. This area of support could be a take profit as well too. Okay. And then that's the cool thing about futures. As each take profit gets hit, you can go ahead and keep dragging your stop loss if you want, or you can go ahead and set your final take profit at a certain area, have your stop loss, and just buy at certain logical areas and just pray that you win. Okay. Because price most likely wants to reach these areas of resistance again. Okay. Even if price wants to fall straight down from these, that's fine. At least it went ahead and touched it. That's okay. Okay, it's not just going up for no reason. It might want to go ahead and touch this. Okay, and that whole window of it going up is just money sitting there waiting to be farmed. So collect your income. Okay, whole sit there, whole bit of money just sitting there waiting to be collected. Okay, so sit there and collect your money. Okay, even at this area of support right here, because as we know, just like resistance can be broken, turn into support. Support can be broken, turn into resistance. Okay, so that's why a take profit right here will be reasonable as well too. So if price goes up, okay, let's say it does this, breaks this, okay, price might want to fall down here, okay, or price might want to fall here. Okay, so that's why these are all going to be different take profits due to the fact that these are areas of resistances and supports above current price. And I can see price is trying to recover here. Okay, so you can see it on your smaller time frame. Price really trying to recover certain areas. And it's about making sure you know when to close. Knowing when to close is going to be the most imperative and important thing. The trend already started. Okay, the chances of the trend just reversing here super duper hard, it could be pretty low. Okay, so it at least go ahead and touch this resistance. If it breaks this, then try the support. If it breaks this, then try the resistance. And it'll keep trying each leg until it finds a place it might want to reverse at, find a super low, then break that previous high and do it over and over and over and over and over again every single year. Okay, so it's about playing logically. So if you're a futures trader, if you're going to trade some futures and you want to make some quick income, okay, because futures, you only got to deposit one time. Okay, and it's about waiting for the right setups too. But after you deposit that one time, you can go ahead and you can get in your bag. Okay, you can run up your bag super duper duper hard. Okay, and it really just depends. Okay, so do some practice. Stackmode.net for all trading mentorship. If you guys have any questions, stay prayed to God and keep grinding. That's how you guys are going to be able to trade futures.
So imagine waking up in an economy where money can appear out of thin air, or one where every coin is locked behind an unbreakable vault. And that's the clash we're diving into today. Let's talk about quantitative easing versus Bitcoin's fixed supply. And it's a true economic showdown to be talked about. So in one corner, you've got quantitative easing. It's the central bank's money creation lever. And when the economy slows, they print even more, inject more, push more, and it can rescue markets. But it can also quietly stretch your dollars thinner over time. And in the other corner to fight against it, you have Bitcoin. It's a digital asset that refuses to bend, and only 21 million will ever exist. No printing press, no emergency button, just a predictable, halving-driven drip of new supply that's immune to human panic. So let's go and let's jump into it, class. Inshallah, if God wills.
All right, so let's go and let's talk about the economic showdown. So, Bitcoin has scarcity involved within it. There's a limited amount of Bitcoin available. 21 million Bitcoin exist. But versus fiat currency, the traditional fiat currency, such as the US dollar, there's an unlimited supply, okay? But with that unlimited supply, things catch up over time. So let's go and let's talk about exactly what I mean. So mechanism, quantitative easing, right? So the term QE, let's talk about it. So QE stands for quantitative, Q stands for quantitative, okay? And E stands for easing. Okay, and here's how it actually works. So it's not just printing cash, okay? It's an asset swap. So step number 1, the central bank creates digital reserve, okay, out of nothing. And they use these reserves to buy treasuries and mortgage-backed securities from commercial banks, okay? And now banks now have the cash reserves and are incentivized to lend it out to companies and people. And in result of all of this, the central bank balance sheet then explodes, okay? And the Fed's balance sheet grew from 4 trillion, okay,
to 9 trillion during 2020 through 2022. Okay. So let's go and let's break down the further logic of what this all means, because there's definitely going to be consequences for everything that we just spoke about. And let's talk about it. The canceling effect. So who gets the money first? So new money doesn't reach everyone at the same time. It flows just like a river does. Okay. And one, the insiders, okay, banks, okay, / government, they get the money first at near zero interest, okay, and they buy assets for cheap, okay, they buy it for a low price, okay. God says no interest anyway, so they finesse the whole system. So the asset owners, right, let's talk about the rich people. So stock and house prices rise due to the influx of cheap capital, okay? And let's talk about the wage earner, okay? By the time money reaches you, prices for food, okay, just a basic item, let's say like a piece of chicken, for example, okay, or macaroni, okay, 1 year you might be paying $5, okay, for a chicken sandwich. Next year you might be paying $7. Okay, 5 years down the line, you might be paying $13. Okay, you went from paying $5 a chicken sandwich to $13. Okay, yes, we can print infinite currency, right? But there's going to be consequences to everything. Okay, it's going to be supply and demand, equal opposite forces in everything. Okay, so understand that the fact that infinite money gets printed means that over time things have to get more expensive in order to compensate, because people are going to start just having more money. Okay, and there's going to be more money flowing in the river, so the numbers have to balance out logically. Okay, so knowing this, we have to understand that your income has to catch up. So let's focus on point number 2 here. Okay, so point number 2. The asset owners and the rich. So stock and house prices rise due to the influx of cheap capital. Okay, so they go up due to the influx of cheap capital. We need to think about this logically. Okay, so while food, rent, and stuff is getting more expensive, okay, stock and housing prices are also rising. You guys should be trying your hardest to stack as much assets as possible. If you don't know what an asset is, that's going to be anything that's pretty much going to turn your money into more money. Okay, whether it be real estate, okay, you could do stocks, okay, cryptocurrency, so many different avenues, okay, business, pay for ads and start you a digital business or physical business, whatever. Okay, just whatever is turning your money into more money, that's going to be an asset, because you have to understand that your income has to catch up. I don't want you guys to be struggling in society. Okay, your income has to catch up, and just like God says in Quran, we have to spend moderately. Okay, we have to spend moderately. I'm really telling you guys, the key to life is just following what God says. Okay, if you guys aren't religious, you need to go start reading the word, man. Okay, it really helps a lot. It's a lot of psychology in there. Okay, especially as a trader, an investor, somebody trying to have their finances together, you need to definitely read Quran if you can. Okay, so spending moderately. Okay, so stop being so much of a consumer. If you realize, okay, there was times I was spending my whole bag on DoorDash, on this and that. Okay, having no assets stacked. Okay, and I'm not saying don't live life. There's going to be times where we want to live a little life. Okay, I understand. Okay, there's times, you know what I'm saying, I go out, you know what I'm saying, you might pop it a little bit. Live your life, do your thing. But that doesn't need to be a consistent every single week, every single day thing. Okay, save your money. Invest your money. Okay, so when I say save your money, save it in some assets if you can. Okay, don't just have your money sitting in your bank account, because inflation, food, rent, etc. is rising. Okay, which means if you just have money sitting still, you're going to pay more taxes over time. Okay, so always try and keep your money flowing in the river. Okay, this way, by the time tax time comes, you're going to have an easy time paying it off. Inshallah, if God wills. Okay, so let's head over to the next slide. So the response, okay? Absolute scarcity. Bitcoin? Where my Bitcoiners at? All right. So, Bitcoin, the 21 million hard cap, okay? And this limit is not something that needs to be taken lightly, okay? Bitcoin is gonna go away one day, okay? Bitcoin is not infinite, okay? It is not infinite, okay? You need to understand that it's a resource that is going to expire, okay? That in itself, that alone gives it value, okay? So there's 21 million, okay, Bitcoin that has to be mined until it goes away, okay? Depending on when you're watching this video, you should be able to do a quick Google search to see how much Bitcoin is left, okay? People are starting to buy hundreds of millions of dollars worth, including the US government. So check your watch, okay? Because time is ticking, okay? So this limit is not a promise. It's math, okay? It's enforced by tens of thousands of nodes globally. To change it, you would need to convince the entire network to devalue their own wealth, which would be practically not something that people will be wanting to do, okay? And there's a whole decentralized consensus behind it. So that word decentralized, okay, you might have heard of it. Let's talk about it. Decentralized means no banks, okay, control anything, okay? No banks control anything. What it is all peer to peer, okay, which means person. Okay, so we got Joe, and then I'm gonna go ahead and we got Jack. Okay, so we got Joe and Jack. Okay, Joe lives in the US, okay, and Jack lives in China. Okay, Joe hired Jack to do some work for him, okay? Joe hired Jack to make some ads for him, okay, for his company, okay? But he's in China, though. He's in China. Keep that in mind, guys, okay? If you're trying to wire transfer some money to somebody in China, okay, or somebody in, let's say, Africa, okay, for example, okay? I know China has some cryptocurrency laws and stuff like that. So let's say Jack is in Africa, okay? So Jack is in Africa, and you're trying to send some money to him, okay? He's making some ads for you. He's trying to get his paycheck. And what's a good way to pay him, okay? Might be a little difficult to use PayPal. Might pay a lot of transfer fees. Might pay a lot of this. Okay, especially if you start trying to send large amounts of money, they might flag your account and be like, hold on, why are you trying to send so much money to somebody in another country? Okay, they might get questioned, and it's your money. Okay, not cool. This is where cryptocurrency comes in. God is the greatest. Okay, so thank God crypto exists now. Okay, if you want to send some money to somebody that you hired in another country, your family, whatever, however much you want, whenever you want, okay, you can instantly send your currency. And that's the decentralized network. Okay, that's the difference between centralized and decentralized. Decentralized, you can send it when you want, you can send it to who you want, and you can send it to where you want. Okay, whenever you want. Centralized, stuff works on times. Okay, I'm sure you guys know that direct deposit time. Okay, waiting for that 6 a.m., waiting for that check to hit. Okay, certain times like that. That's the whole centralized system. Okay, cryptocurrency strikes that out. Okay, and let's talk about an immutable ledger. Okay, so once a block is confirmed, it is thermodynamically secured by energy. Okay, rewriting the history would require more energy than a medium-sized country could consume. So once it's confirmed, once it's on the blockchain is going to be where all pretty much the cryptocurrency information lives. Okay, once all the blockchain information has been confirmed, okay, and set in stone, shouldn't change. Okay, inshallah, it shouldn't change. So that's what makes Bitcoin a big help in society, especially when we're just trying to live some life and do some things. Okay, we might have some family in other countries, and We just want to live like people. Okay, come on. Let's go to the next slide. So the supply shock. Okay, let's go and let's talk about the halving. Okay, halving. So half, as you guys know, 50%. Fraction is 1/2. Okay, because 1 plus 1 is 2. Okay, so programmatic disinflation. So every 210,000 blocks, okay, which happens every 4 years, okay, which is, yeah, pretty much how often it happens, the issuance cut happens by 50%. And this creates a predictable supply shock. So let's break it down. So pre-2024, the Bitcoin inflation, okay, was around 1.7%. Okay. Post 2024, okay, inflation went down to 0.85%. Okay, which became scarcer than gold. Okay. And projections, if this math continues, by 2028, we should have the inflation at 0.4%. And then 2140, when Bitcoin decides to go away, which is by the time when people calculate, inflation will be at 0.0%, of course. So while the fiat supply accelerates, right, exponentially to pay the debts, Bitcoin supply decelerates, okay? You have to understand that it happens because it's a limited currency, okay? It's limited. It's not something that's going to be here forever. Try and get it when you can. You don't want to be one of those people who regret it and be like, oh man, I should have bought some Bitcoin. And you just didn't. Okay. So make your decisions now. Put some money to the side. Okay. You don't need to be buying no clothes, McDonald's, no DoorDash, no right now. Buy some groceries. Okay. Buy some groceries and grind. Okay. Wake up, pray to God, grind and stay down. Okay. Live a little life, of course. Take care of your mental health. But try and put some money away. Okay. We got to have this asset flowing. Okay. Let's get it. Inshallah. So the systematic comparison. So fiat currency, US dollar, man, cash, you know, good old dollars. Let's talk about it. So policy, okay, it changes based on politics and crisis. Okay, if the US economy is doing well, then that means our dollar is going to be more valuable. If it's doing bad and we have a lot of debt, etc., the US dollar is not going to be as valuable. Okay, and that's just what it is. And people will want to run to other assets, which once again, assets are things that turn your money into more money. Okay, because fiat currency, the money, is not as valuable. Okay, so they at least want to try and generate more, which makes logical sense. Defense, survival. Okay, so unlimited amount of fiat currency can be printed, press of a button. It's kind of just numbers on the screen. Even kind of same thing with credit too. And system, okay, permissioned. Banks control the access. Okay, they can tell you no, and they can tell you yes. Okay, and the outcome, right? Your savings lose value over time. Okay, due to the fact that it's not growing in anything. Okay, it's not in the river. Okay, it's sitting still on the rocks. Okay, and let's talk about some Bitcoin. So policy, okay, set in stone with code, okay, can't be changed, which means Bitcoin is going to have the same intrinsic value baked into it a lot of the times. Okay, and of course there's going to be chart depending on where the price is at, all-time highs versus a low, for example. Okay, but for the most part, with it having that fixed supply, okay, it's going to remain valuable. Okay, fiat currency, if the US started getting bombed right now, the US dollar probably wouldn't be as valuable. Okay, so certain things just are logical with that. So supply, okay, strictly capped, okay, 21 million, and it's very costly to mine. Okay, you can't just spawn Bitcoin at a press of a button. You actually have to have a whole logistical system. Okay, Bitcoin is created by proof of work. Okay, the computers have to show math. You know, when your teacher asks you to show work, that's what the computers have to do. So it's pretty much a bunch of computers. Okay, or it might be one, however much the person has who's mining the Bitcoin. Okay, and what they're gonna go ahead and do is look for mathematical equal signs. Okay, they're trying to solve a code, okay, to give the hash. Okay, and in that, the computer has to keep solving these codes. Okay, and it has to show work. Okay, and that proof of work, and if it's correct, okay, then they're rewarded with a piece of Bitcoin. Okay, and then they keep doing that, and then every mathematical problem that's solved, then a Bitcoin gets created. Okay, and it's all solved by supercomputers. Okay, could be very, very expensive to run depending on your country. Okay, so before you just go try and boot it up, look into it. Please do your research. Pray to God on it. Take your time. Okay, and it's open to all. Anybody can buy Bitcoin. Okay, you can buy some Bitcoin right now if you want. I don't care if you got $2. Okay, get in that habit of buying assets. Try and keep yourself broke. Okay, because what do you have your cash in your bank account for? Go buy some assets, live off of credit if you can, and stay down. Okay, keep doing that. And then when it's time to pay your credit, boom, 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 and keep the money flowing. Keep it flowing. Okay, don't stop hustling. Okay, I know life happens. Don't get depressed. Keep your head on straight, man. Okay, there's gonna be things that go down in life. There's gonna be times your emotions are gonna be shook up. Okay, there's gonna be times where you can't stack up. Okay, your car might break down. Okay, things happen in life. Okay, you might have to pay rent. You might have to pay direct deposit on a new crib. Okay, and rent. Okay, depending on whatever it is, any situation, right? Hospital bills. Okay, just pray to God on it. Okay, pray to God on it and keep hustling. Okay, don't get in your head. Don't get poopy pants and don't get depressed because you got to get to this money. Okay, I'm telling you, when you pray on it, you keep going forward. You keep hustling. Things get easier. Okay, but you got to keep hustling. Okay, after you pray, you got to keep hustling. Okay, don't grieve. Okay, don't get sad. Just focus. Focus. Okay, don't take that money and indulge in food. No alcohol. Okay, if you're drinking, quit that. God says don't do it. It makes you weak. Okay, no alcohol. Take that money, buy some assets, buy some Bitcoin. Okay, change up your lifestyle. It's really deep. Okay, if you catch yourself buying certain kinds of food, ask yourself why. Okay, why? Why am I eating these Doritos? Why am I booting this up right now? Okay, when's the last time you had some vegetables, some fruit? Okay, you gotta change your lifestyle. You guys are so obsessed with investing and trading, but we all have to realize that we have to change our lifestyles. Okay, this stuff takes money. Okay, it takes money to invest. So if you want to invest, you need to change your lifestyle up. Okay, put some bread away. It's cool to stay down. Okay, it's cool to save some. Okay, wear the same clothes for weeks if you got to, but you know how much Bitcoin you have in the stash. You know how much assets you have stacked up. Who cares what anybody's saying? Okay, because if you want to get to this Bitcoin, it's gonna take a certain level of discipline. Okay, it's gonna take a certain level of staying focused. Okay, we can't be being lazy when we say we want to be stacking assets. You gotta choose. You gotta be relentless. You gotta be a dog. Okay. So, before Bitcoin expires, I don't want you guys to be like, man, I wish I bought Bitcoin. And it's like that's not how you want to go out. Okay, leave something for your family. Okay. And take care of yourself, inshallah. So let's go. Let's head over to the next slide. So the hardness of money, right? Stock to flow. So why hardness matters in the first place? So money is a technology for storing time and energy. And hardness measures how hard it is to produce more of it. So let's talk about the S to F ratio. Okay. And existing supply, okay, divided by the annual production. So let's talk about the real estate, right? High S2F, okay? Because real estate is pretty hard to build, okay? You need a whole crew of people. Stuff could be changing now, though, because they do have houses that you can just drop on a plot of land, okay? That's like carried by a giant truck, okay? So it really depends. That could change as humans develop more innovative technology and ways to get housing quicker.
But as for now, real estate is pretty hard to build. And let's talk about gold, right? So gold takes about 60 years to double supply. Okay. And Bitcoin, okay, it's the hardest asset ever discovered. Ever. Okay. So gold has a 60 S2F, Bitcoin, as of 2025, has 120 S2F. Okay. And if money is easy to produce, right, such as fiat currency, which is unlimited, people won't save it. They're just gonna go ahead and dump it and blow it. Okay. And if money is hard, okay, Bitcoin, civilization can save for the future. Your Bitcoin is like your gold. Okay. You should not be touching your Bitcoin. 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 Okay. Keep it in the stash. Keep it locked away. Keep those secret keys locked up. Okay. Don't be touching that Coinbase card. Don't do it. It's not worth it, guys. Okay. So let's stack it up. Let's stay down. Okay. Spend that credit. Okay. Spend that credit and build it back up. Spend that credit, build it back up. Pay your bills, spend that credit, build it back up. Keep hustling, keep grinding. Okay, spend that credit, credit. Fiat currency, unlimited, pretty much almost not real. But think something like Bitcoin, okay, something like real assets like gold, okay, that there's limited resources and actually exist, okay, whether you're buying the gold, ETF, etc., just understand that investing into assets that have value are going to be a lot more worthwhile than hoarding fiat currency for no reason. So let's jump into the next slide. So the verdict of everything, okay, we're witnessing a global competition between two monetary operating systems. Okay, you got the debt path. Okay, fiat requires inflation to service global debt. So your savings are the fuel for the system. Okay, eating it all up. And then you got your true savings path. Okay, Bitcoin, it's an exit valve. Okay, a savings technology that cannot be debased by any central authority. Okay, and this is not financial advice. Do your own research. Okay, do your own research. Okay, I'm not saying go take all your money, dump it into Bitcoin, but do your research. Check it out. Okay, check it out and do your thing. Okay, stay prayed to God. Keep grounding. Head over to stackmode.net for all trading education. And I'm going to catch you guys in the next one. Peace.
All right, so we're going to go ahead and talk about the bear market. Okay, so pretty much whenever cryptocurrency starts heading in a downtrend, okay, sometimes that's going to induce panicking. Okay, it can induce a couple of emotions, such as like panic selling. Okay, certain things, whether you want to feel like you might want to dump your entire portfolio, okay, because of how many negative trades that you've taken within a certain bear market cycle, right? Or if your portfolio's down, okay, but we don't want to do that. Okay, let's not think of the market that way. Let's think of the market logically. Okay, so just like we always cover and talk about, there's benefits to making sure that these markets go in upwards direction. Okay, cryptocurrency included. This is something that governments hold, many people hold, hedge funds hold, and just people with large quantities of money hold. Okay, so cryptocurrency, it's not going to be something that's going to be useless. Okay, it's going to be something that's going to be instructing and providing power back to us, the people. Okay, so it's something that people are investing into due to the fact that people can easily send money from one person to the other. Okay, without having any bank intermediaries in the middle of it. Okay, so if you want to send a wire transfer, for example, okay, from $1 million from one person to another person in China, a lot of the times that transaction might not easily go through, okay, without being first approved by the bank. Cryptocurrency removes the whole bank in the middle, okay, and works on this whole blockchain system, okay, letting people make their transactions on their own accord. So if someone wants to sell $1 million in cryptocurrency to a person in China, they can go ahead and do that and easily and instantly using the decentralized space. Okay, so let's jump into it. So cryptocurrency has many uses. If you see market going in a downtrend, all it is people selling as well too. Okay, just like we see this chart right here. Okay, this is a left to right chart. So if people got in at this low down here, okay, and market starts going in upwards direction, of course when market decides to fall down and correct, okay, people call it a bear market, but of course it's going to fall down and correct though. People got in way back here and they're going to go ahead and take profit. So when people are taking profit, getting their money out, that's going to cause the shares to fall down. Okay, so all the crypto supply will fall in a downwards direction the more people sell. Okay, so whenever we see market going in a downwards direction or a bear market, okay, that just means markets going in a downwards direction, which also means people are just selling. Okay, but these are going to be opportunities where markets also going to go on discount. Okay, so if something is $50 right now, okay, and it's something that you want, and then it goes on sale, and you see it on sale for $20, okay, you might even get two of those things, okay, due to the fact that it's on sale now. Okay, so think of crypto market dumps like that. Okay, think of things going on sale. Okay, market has to go up in order to come down. It can't just go up in a straight line forever. Okay, it has to work in a staircase formation. People have to buy, people have to sell. Hence why it's called trading. Okay, when you're winning, somebody's losing. When you're losing, somebody's winning. Okay, so let's cover the mindset and really just understand how we can prepare for when market's going into downtrends. Okay, so let's define the bear market and root causes. So bear market is generally defined as a decline of 20% or more, okay, from the recent highs, marked by widespread pessimism, low confidence, and a sustained decline in prices and trading volume. Okay, and key definitions. So the 20% rule. So why subjective? A 20% drop from the all-time highs signals market distress. And in crypto, drops of 70 to 85% on certain things like meme coins and stuff like that can be common during major bear cycles. So that's why you don't really play meme coins and things like that. It's not really worth it since they just don't have enough value. Okay, and they can easily just go ahead and fall in opposite directions without much of a backbone behind it. Okay, versus something like Bitcoin, where that's a lot less likely to happen. And the more actually it dips, the more people are going to buy. Okay, people are putting in $300 million orders plus, etc. Okay, anytime Bitcoin dips down. Okay, so it's way different. So it's going to be sometimes too where certain cryptos go cold, okay, and they start consolidating. So what consolidating means that it starts going in a sideways direction. Okay, not much price action up or down, and you want to stay away from those. Okay, so you want to trade something that goes in upwards direction year after year and is gaining percentage year gain, okay, making your money more money, making it a stable investment. So watch what cryptos we invest in, okay, and primary catalyst, right? Let's talk about it. So some macroeconomic factors. So global inflation that can affect crypto prices, interest rate hikes by central banks, and traditional asset market declines often correlate with crypto downturns. Okay. Excessive leverage cleansing. Okay. Overly aggressive market buying. Okay, with borrowed funds. So there's going to be times where people can trade Bitcoin with borrowed funds, right? With something called leverage. So just like, futures, there's going to be things called crypto futures. Okay. And on crypto futures, you can trade with the same leveraged amount, okay? And any leverage amount, depending on the broker, goes up to like 500x and stuff like that, okay? And sometimes when market decides to go down, okay, it creates instability. And bear markets, meaning markets going in a downwards direction, it purifies the market by liquidating these highly leveraged positions. Since the more leverage that you're playing with, the smaller that your stop loss is going to be. Okay, meaning that your trade has to close at a certain area automatically versus if you're playing with no leverage. Okay. So regulatory uncertainty. So major government crackdowns or unclear legal frameworks in key jurisdiction can trigger broad market fear and lack of trust within certain cryptocurrency markets. Okay, so we saw in 2022 COVID area during the SEC, okay, the government exchange for securities, okay, they were having some problems with the crypto sphere, but since then things have been passed, things have been regulated, and as we can see, crypto is now shooting into new highs constantly with tons of optimistic future ahead of it. Okay, and let's talk about project failure and exploits. So the collapse of large projects like major stablecoins or exchanges lead to contagion and a severe loss of investor trust. Okay, so if you see certain things like certain exchanges fall down, or certain brokers where a lot of people invest in just shut down randomly, that could put some fear into the market. More fear into the market, less people are going to be investing. Okay, but that's just things that can happen. But just like a bank, banks have random maintenance where you can't pull out your money. Okay, so anything has its cons, anything has its pros. Okay, only thing's perfect is God. Sometimes things are going to shut down, just is what it is. So psychological game, right? Conquering FUD. So investment success during a bear market is going to be 80% psychology. Okay. Really 80%. I'll say like 90% plus. Okay. because you can have really the best levels on the screen, okay, and I've done some tests with certain students, okay, you can give somebody the best levels, but they don't close where they need to close, okay, due to the fact that their analogy or how they process it in their head might be completely different, okay. So trading is really going to be psychology and how you look at the market, okay. So mistake number one, okay, so mistake number one that people make, this is the main reason why people will remain unprofitable, okay. Their stop losses are going to be too tight, okay, way too tight, okay, causing them to panic sell, okay. So selling assets at low prices locks in permanent losses. And the single best way to lose money in a bear market is to sell everything when despair is the highest, okay. Sometimes you got to sit and you got to hold through certain periods expecting price to sweep up. Now, I'm not saying hold every single trade, just certain past the worst dump of all time or past your stop loss. But if you have a calculated trade that you have planned and it starts going in the red, it's part of the game, okay? And the game is really about who can survive when market's in drawdown or your account is in drawdown, okay? And who can't, okay? Because whoever's going to sell all the positions when market's in drawdown for a loss, their account is never going to grow, okay? You have to be able to sit there and stomach through it. There's times I've had tons of time. This is why time is going to be one of the biggest factors in trading. This is why crypto is really amazing. Okay, well, when you're trading cryptocurrency, you have time. Okay, cryptocurrency, as soon as you buy, you can hold it forever until the end of time. So you have time. So if you sell, okay, that's going to be on you. Okay, there's no time running behind you. As soon as you buy some spot cryptocurrency, okay, when you just buy crypto on a normal broker, okay, and you can just buy and hold without any leverage, okay, and no leverage buying cryptocurrency, just being the normal way, it's called spot. So when you do that, okay, you can decide like, okay, I'm going to sell in a couple of years, okay. It's not as easy to do that with other instruments, okay. Other instruments can be time gated, such as like futures, for example, okay. Futures, each contracts, they have expiration dates, okay. So things can be a little bit different. So let's talk about tactic number one, right? The zoom out, okay. We got to zoom out. We got to get the whole long-term perspective. This is why we use our higher time frames, okay. Time frames we're going to be using. Okay, some great notes here. Time frames that we focus on. Weekly. Okay, we're going to use our weekly time frame. We want to see everything on the larger, higher time frame scale. Okay, after we check out our weekly, maybe for take profits. Okay, and take profit is where we close the trade out. Okay, say you got it at an area of support. Okay, and you close at an area of resistance above current price. You can go ahead and do that. Okay. So you're going to have the weekly. You're going to have the daily, okay? And then you're going to have your 4-hour time frame, okay? Then you're going to have your 4-hour time frame, okay? So using those time frames all together is really, really going to help you put your trade into perspective and be like, okay, this is the type of setup I want to be taking from now on, okay? And these are the type of trades that I just take, okay? So that's what you want to focus on, okay? Weekly, daily, and the 4-hour. So let's talk about zooming out. So the HODL view. So we're going to focus on the long-term vision, okay, of 3 to 5 years plus. And all major crypto bear markets have been followed by new explosive bull market cycles, okay? Look at the monthly or the yearly charts, okay? Not the 5-minute charts. Okay, tactic number 2, okay, reduce obsession. Okay, we should be grinding in real life, stacking up some bread, okay, putting some money away, okay, and just growing our capital in the real life so we have more money to come put into the markets, okay, but constantly checking P&L, seeing how much money you're up and down, it's not what we want to do, okay, focus on the charts, okay, you could look at the charts, see where it's at, but even that, don't turn it into unhealthy obsession, okay, take your time, check your charts out, maybe once a day, a couple times a week, okay, but don't sit there, stock on the position every minute. Okay, constantly checking the price feeds lead to anxiety and they lead to impulsive behavior. So set clear rules and limits and then step away from the daily chart fluctuations. So it's really about a battle of just you versus you at a certain point. So quote for perspective, right? Be fearful when others are greedy and greedy when others are fearful. Okay, so when everyone's scared, price is going in a downwards direction. As soon as it starts making a curl on your weekly or daily, you can go ahead and get in, buy that, and then you buy the low where everyone's fearful. And then by the time it's at all-time highs, that's when you're going to start seeing the posts like, oh, everyone, and then everyone's going to start buying at all-time highs. Okay, it happens constantly every single cycle. So when we know how to sit through the bear market cycles and buy certain dips, we're going to be able to prepare and be a lot further ahead than other people due to the fact that we can analyze something so simple. Okay. So accumulation through DCA. So let's talk about DCA. So DCA stands for dollar cost averaging. Okay. So DCA, it's dollar cost averaging. What is that? Okay, it's one of the most powerful tools for risk mitigation and capital deployment in volatile bear markets. And it needs the need to time the bottom. Okay, and let's talk about the DCA mechanism. So fixed schedule. So investing a fixed dollar amount, let's say for example $100. Okay, at regular intervals, let's say weekly or monthly. Okay, that's going to be DCA. Okay, when you're just regularly putting away a certain amount of money, okay, that you can. Okay, pay your bills, get some groceries, and then you can invest. If you're going to say you're going to invest $1,000 in Bitcoin a month, okay, then go ahead and do that. Okay, if you can do more, then do more. But DCA means just take a percentage of your money, okay, break it down and put it into some cryptocurrency or whatever investment. Okay, I don't care if you get $10, okay, go ahead and break it down, put 7 of it into crypto. Okay, just having that type of stack mode mindset is going to help you grow your currency and help you stack way, way, way faster. Okay, and your portfolio will flip in no time. And shalom. So reducing the timing risk. So, and also keep yourself broke. Okay, so if you keep yourself broke, it's a strategy I notice a lot of people do. Okay, it's something I definitely do. Okay, I don't keep any money in my checking account. Okay, after I pay my bills, I get my big lump of groceries. Okay, I do what I need to do. Okay, I buy what I want to buy. And then from there, every dollar that I have the rest, okay, I'm going to pay my credit card. Okay, and then after that, I'm just going to invest. That's all I do. I put every single dollar into investments and I just keep myself broke. Okay, I paid my rent. I got groceries, so I'm not going to starve, thank God. Okay, and I did everything I need to do. So I'm good. So I can keep myself broke and I'm going to survive. Okay, so keeping yourself broke, whole time you got money stacked away in investments, it's going to be a really, 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 really good thing to do. Okay, just changing the whole mindset. Just, you know what? I don't need to go get this coffee today. I'm going to bring some coffee from home. I'm going to take this money and I'm going to invest. Okay, so it's something personally my wife really helped me out with. Okay, just changing the whole mindset of everything. Okay, changing the whole mindset of everything and really understanding like, okay, you know what? Let's not eat out today. Let's stay down, groceries, and the rest of this money is investment money. Okay, because this stuff, it adds up quick. It's easy to spend $40 on a DoorDash meal, $50 on a DoorDash meal for 2 people, okay, quickly, okay? But $50 worth of groceries, it really goes a long way, okay? So it goes a much further way, okay? So it's about just staying down, making the right decisions, and then we can go ahead and ball later. Yeah, so the compounding effect, right? So this strategy becomes exponentially more effective when asset prices are depressed, okay? As your fixed investment buys a larger portion of the supply, okay? So when market is in a downtrend, okay, and market's about to make that curl in the upwards direction, okay, and then we have cash to just stack and throw in there, and you buy, okay, even if you don't have all the cash in the world to buy at the low, as it curls up, you can keep adding, okay, and that you hit your trade, okay, and it's just about mindset. Then from there, take that capital, and then you can go ahead and deploy more cash into there and just keep stacking your wins over time. Nice. So thriving the strategy. All right. So let's talk about some fundamentals there. So bear markets separate speculative noise from real technology. Okay. So this is the time to ignore hype, okay, and focus exclusively on fundamental analysis and your technical analysis. Okay. So when market's in a heavy downtrend, let's say there's a speech from a president or something like that that has dropped the market. Okay. We want to be looking once again on our weekly and daily time frames primarily, okay, and we're going to be looking for that V curl up, okay. We want market to make an area of support, okay, and then we want to see market start to curl up, either after a couple of days from the daily or a couple of weeks from the weekly. Preferably weekly curls are going to be really, really nice, okay, because that means price really wants to reverse. Okay, if you start seeing 2 weeks in a row, price action, price filling in the V, okay, a lot of the times that's going to be the setup you would like to take. Okay.
So, and we're going to ask ourselves too, if something is going down, why is it going down? Okay. Was there any bad news behind it? Okay. Did something happen? Okay. And let's think about utilities and use cases. So does the token or protocol solve a genuine, tangible problem? So we'll talk about Solana, for example. Okay. Solana, you need it to trade meme coins. Okay. So that point alone, Solana has value. Okay. If people want to create their own cryptocurrency coin, okay, they got to generate some Solana first if they want to make their own meme coin. Okay. But then we'll take something like a random meme coin that's just a joke. Okay. It doesn't have any community behind it. No, nothing. Okay. Just a random meme coin. If it goes down to zero, okay, a lot of people wouldn't be surprised. Okay. Because does it solve any genuine, tangible problems? But then you're going to have something like Ethereum, for example. And Ethereum was created due to the fact that Bitcoin is limited. Okay. So one day Bitcoin will be gone. So people still want to trade cryptocurrency, so that Ethereum was created. Okay, so Ethereum has its purpose there. And instead of using power to create it, like Bitcoin's using power to create it, Ethereum is created using computers and smart contracts. So it's a lot more power efficient for the earth and it's healthier. Okay, so Ethereum actually has real uses compared to certain other things like random just joke meme coins. Okay. So, because if something has a real use and it dips down, people are going to be hounding to buy that dip. Okay, the second something valuable dips, people are hounding, buying tons of it. Okay, the second Bitcoin dips, people putting in hundreds of millions of dollars worth of orders, whether it be governments, BlackRock, any type of companies, anybody. Okay. So, talk about the cryptocurrencies team. So, is the development team public, experienced, and actively building during the bear market? Okay, and you could check certain GitHub commits too. So certain cryptocurrency coins, okay, even though they're dipping down, they're working on tons of stuff on the back end, okay, looking to progress the future forward. And the community and governance behind it. So does the project have a vibrant, resilient community and a clear decentralized government model? Okay, so just like Bitcoin has tons of community behind it. You got companies such as MicroStrategy, also known as MSTR, okay, big representative of Bitcoin. Okay, things like that. Okay, and also have, once again, governments, US government, other governments, etc., participating in buying Bitcoin and other tokens as well too. So the tokenomics of everything. Okay, so analyze the supply schedule, vesting periods, inflation and deflation mechanics, and allocation of the team versus the public. Okay, and blue chip versus speculative asset, right? So blue chip cryptocurrencies, they're going to be our big heavy hitters. Okay, our Bitcoins, our Ethereums, XRPs, etc. Okay, and these assets, they have the deepest liquidity. Okay, and liquidity is going to equal money. Okay, and money equals the amount of people. Okay, the more money something has, the more people are trading it. The more people are trading it, the higher liquidity it has. Okay, so liquidity is going to mean money. So they have the highest and deepest liquidity and have proven recovery patterns over multiple cycles. For example, Bitcoin's 80% drop in 2018, followed by new all-time highs. Okay, so people, once again, if something's a valuable resource and it dips down, people are going to be hounding and fiending and hungry to buy the dips, because I know I definitely am. Okay, I just bought some Bitcoin today. Okay, so speculative meme coins. So assets with high returns during the bull run are often the first to lose all liquidity in a bear market, okay, making them highly dangerous accumulation targets. So focus on protocols with established ecosystems. Okay, for example, layer 1 networks and major DeFi apps. Okay, so let's get assets with high returns. Okay, during the bull run, the first to lose all liquidity in a bear market. Okay, so focus on protocols with established ecosystems, things that have been around for a couple of years, okay, and has some value. Something you can sleep on your investment. So that's one thing we want to think about in trading, you know? So sometimes we hop on the markets, we think about money. You know, that's the right mindset. We're trying to run up a bag, but sometimes we got to play it safe. So the safest trades, a lot of the times, what people don't know, the safest trades, a lot of the times, is what's going to make you the money. Okay, focusing on discipline, being as safe as you possibly can with your money inside of your account. A lot of the times that'll lead you to running up that big bag. Okay. So people are going to claim that market's going into a bear market
when all it's doing is going in a downwards direction. Okay. People who think that market's going to run up infinitely, going up, 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 up forever, it's extremely unreasonable. Okay, market's going to obviously fall down, correct, even if it's a hard correction. You have to understand that there's people who've been invested in years, months, and many more days before you even thought about it or even got in. Okay, so we have to think about those players and how long they've been waiting to close. Okay, so that's why quote unquote bear markets happen. Okay, markets just selling off due to the fact that there's too much supply. Okay, people who got in way in the beginning of time are holding so much of it, they're like, all right, I'm going to take my money and do something with it. Okay, and hence, and then a succession of everyone doing it at the same time, okay, leads to a bear market, leading price to go in a downwards direction. So staking, okay, so we'll talk about this in a second. But understand that the goal is really to increase your total asset count while the prices are low. So this is why I really promote the V, okay? So market, it's gonna fall by itself, okay? Market's gonna do its thing, and the left side of the V is gonna be market falling. Now, once market makes a bottom of the V is when we wanna look for a setup, okay? Look on the weekly or the daily, look for the bottom of the V, and then catch the rest of the V gap fill, okay? That's what you're gonna be looking for. Okay, catching the rest of the V gap fill. So you want to buy something at a low ideally and catch a sweep up. Okay, buy something at a low and catch a sweep up. Okay, because if you buy something a lot of the times, okay, especially if you like an options trade, if you buy something at super all-time highs, okay, you can expect to get pulled back on. Okay, but understand that, yeah, certain positioning, it really does matter. Okay, especially if you're gonna buy certain things that you're not expecting to hold for years and years, especially if you're trading something like leverage crypto. Okay, then we want to go ahead and think about that. Okay, so yield farming. Okay, so providing liquidity to decentralized exchanges to earn trading fees and governance token. Okay, so that's going to be one of the things that some people do too. Okay, and that's going to be something that's just involved, but we don't really have to worry about that. Okay, as well as staking and then stablecoin allocation too, allows you to earn low risk, low yield while maintaining purchasing power for potential market dips. Okay, so there's going to be certain things you can do. Yield farming, you can pretty much kind of like the bank, get APYs, annual percentage yields on your money. Okay, if you invest in a certain cryptocurrencies. Okay, so you can do that. That's a potential option. I don't really recommend that. Buying spot or just buying normally in a normal broker is going to be just a lot safer too. Okay, because certain of these yield farm coins can go down and then you're not going to get certain of your returns that you expect back. But some of them do provide nasty returns like 40% per year and things like that, okay, on your money. So yeah, that's some things in the cryptocurrency space. So, okay, and then, yeah, but market will always recover. So even if market decides to go in a downtrend, okay, if something's a valuable asset, it's putting a smile on people's faces. Inshallah, if God wills, it'll hit a sweep back up. Okay, so following every 70%, right, major drawdown in Bitcoin, for example, people were thinking, oh, it's the end of the coin, it's the end, like it's over. And Bitcoin has not only recovered, but has gone on to achieve significantly higher all-time highs every single time. Okay, and the bear market is not the end. It's simply just the consolidation phase where people are just getting a opportunity to buy in. Okay, so it's just an opportunity. So bear markets are an opportunity, hence why a large amount of millionaires were made in the 2008 recession, for example. Okay, how were millionaires getting made in one of the worst times for people? Okay, but it was really just the worst time for people who weren't investing. Okay, if you were investing during that time, you would have been able to make some really, really, really great money. So yeah, so this is why we take advantage of any dips now. Okay, any dips, we're gonna go ahead and buy the lows, and then you can catch the whole sweep back up. So the bear market, it's just not the end. Okay, it's not the end. Especially if something is valuable, inshallah, you could expect to sweep up. So essential risk management and security. Okay, so self-custody is key. So let's talk about some crypto things right now. So let's talk about keeping our crypto safe. Okay, So keeping your crypto safe is gonna regard in a couple of things. So if you keep your crypto in a broker like Cash App or Coinbase, Kraken, or things like that, okay, they're safe. But if these brokers, happen to shut down, then you lose access to your cryptocurrency, okay, or something like that. Okay, so you're not gonna have access to certain things. Okay, so what you can do eventually, okay, you can keep it on a broker like these for now as you stack up, but I advise once you get past like 4 figures to the 5 figures range, then go ahead and move and start. You can still buy on these exchanges, is what they're still useful for, but after that I recommend moving your coins to what's called a cold wallet. Okay, so you could either use it's going to be a hardware wallet where you can actually physically plug it into a computer and then you can get access to your crypto. So those can be destroyed. That's the only bad thing about that. So again, we talked about certain things like the guy clearing the landfill, okay, looking for his cryptocurrency. Okay, so things like that are going to come into play. So you can actually just use a seed phrase. There's going to be certain things like Phantom, okay, Phantom on the Apple App Store. It's really, really good. It's just going to be like a ghost icon, okay, with like some eyes. And there it's going to be backed up by a seed phrase. And the seed phrase is going to be a 12 to 24 word seed phrase. And yeah, you can go ahead and just either write it down on pieces of paper, email it to yourself with a secure key, and just keep the code, spread it out somewhere. Okay. So you can do things like that. So cool. So now we're gonna be good. Okay, so we're gonna focus on bear markets and we're gonna be waiting for curls. Okay, we're not gonna think of bear markets as bad. We're gonna eyeball them. We're gonna see opportunity in that. Okay, we're gonna see the good in it. All right. So cool. So that's gonna go ahead and be that.
The real danger in the options trading space isn't the market, it's the people jumping into it with zero understanding. And options can either be one of the smartest tools in your trading toolkit or one of the fastest ways to blow up an account. And the difference comes down to one thing: knowing what game you're actually playing. Most people think that options are some get rich quick button. They might see a clip on TikTok, hear someone brag about a 300% gain, or see something on Twitter, and suddenly they're buying weekly calls or puts like it's a lottery ticket. And that's exactly why they lose. Options aren't risky by nature, but they're risky when you don't respect how they work. Let's go and let's talk about and see if options are too risky, and let's talk about the difference between a gambler and a proper trader. Inshallah.
All right, let's go on. Let's talk about the truth. So is options trading truly too risky? This is the prevailing myth in finance, is that options is just strictly gambling. So with options, it's a little bit different. So let's go and let's break it down. So on options, you make money based off of time. So there's going to be 2 directions you can either buy based off of. You're either going to buy calls, which is when you're waiting for price to go in an upwards direction, or you can go ahead and purchase some puts, which is when you're going to be waiting for price to go in a downwards direction. Okay. Now on options, you get paid based off of predictions. So let's say for current example, a share price is at $50, right? So let's say you opened a stock and it's at $50 right now. If you think it's going to go up to, let's say, $55, okay, then you would go ahead and purchase a calls contract since you think price is going to go in an upwards direction. Let's say the share price is $50 and you think price is going to go down to $40. In that instance, you would go ahead and play a puts contract since you think price is going to be going in a downwards direction. Okay, so speculation is what they're mainly going to be used for. When speculation means that you're getting paid based off of directional bias. Okay, also hedging too. So since options contracts aren't pure ownership, you're getting paid based off time, and if your time prediction is right within a certain time period, then you'll get paid depending based off of that. So on options, you want to a lot of the times too have some time on your contracts. Once again, that's going to be one of the most important things that separates it from gambling versus actual trading. Okay, so your time matters a lot. There's going to be things called Greeks. You're going to have your delta, gamma, theta, and those determine how your profit moves. Okay, the more time that you have on your options contract, the more it's going to kind of pseudo play as a actual real investment. Okay, but if you have your options contract expiring tomorrow, the chances of a certain number hitting could be very, very skeptical. But if you have your options contract expiring in a couple of years, the chances of it hitting could be very, very likely. So It can be gambling if you make it, but it can also be a really, really good way to keep your money, let your money flow within the market and dominate the instrument by just taking advantage of the time under contracts. So let's talk about if there are insurance policies on your portfolio, and let's go ahead and explore the mechanics of risk versus reward on options. Also, one thing on options too, options you can make infinite profit. Okay, so your profit that you can make is infinite, but your risk is going to be set. So if you pay $200 for an options contract, the max you could lose is going to be $200. Okay, but the max you could win is going to be infinite. Okay, so that's the big advantage of options too. So let's go. So just like we talked about in the last slide, what is an option in the first place? An option is a contract, not an asset itself. It derives its value from an underlying asset, stock, ETF, or index. So a call option, right? It gives you the right, but not the obligation, to buy shares at a specific price by a specific date. Okay, so if you think price is going to go in an upwards direction, then you're going to go ahead and purchase a call options contract. Okay, calls, think of picking up the phone. What do you do when you pick up the phone? Okay, you call. Okay, and then we're going to have the puts to the right. Think of putting the phone down. Okay, so call, pick the phone up, puts, put the phone down. Okay, so puts give you the right, but not the obligation, to sell shares at a specific price by a specific date. So calls is if you're betting on the price going in an upwards direction, and puts is going to be if you think price is going to go within a downwards direction. Okay, the United States stock market though is made to go up year after year after year after year. There's also laws in place such as the short sale restriction law, which kind of prevents and helps things from crashing down to zero very, very quickly. So a lot of the times on options, you might be better off playing calls, since it's going to go ahead and be on the actual investor side as well too. And the double-edged sword, let's go and talk about leverage. So options provide leverage, and one standard contract controls 100 shares of stock. And this is where the risk and reward are amplified. So scenario, right? Let's say stock XYZ is at $100. So the stock investor, let's say they buy 100 shares, right? So if the stock price is at $100, in order to buy 100 shares, that would cost $10,000. Okay. And an options trader, let's say they buy one call contract, okay, with a $5 premium. So let's talk about the decimal numbers on options too. So if you ever see an options contract, let's say 2.50, you always want to multiply every options contract by 100 to get the real dollar value. Okay, so 2.50 times 100 is going to go ahead and be 250. If an options contract is 14.20, okay, we're going to multiply that by 100. That's going to equal 1420. Okay, just make it super easy. Okay, whatever you guys see, you multiply that by 100. So let's say the stock price is, or let's say the options contract is 5.70. Okay, then multiply that by 100. It's going to go ahead and be 570. And that's how you're going to go ahead and get the share price for that. Okay, so if the stock goes to $110 and you have a calls contract, then that would be a 200% return. Okay, but if you have it on shares, then that would be a 10% return. Okay, let's just say that for example. So if the stock stays at $100, the stock investor loses nothing, and the options trader would lose 100% of their $500 because the contract expires worthless. Okay, so if your contract doesn't move the amount of ticks that you think it's going to move within that time period, then the options contract could very, very easily expire worthless, and you would see it at a negative 100%. But when you're buying things like shares, you're actually having the actual investment, and you have the ownership power within your account forever until you decide to close. And why is it risky in the first place? So options aren't inherently risky. So gambling behavior is risky, and most retail traders fail due to two specific factors, right? Let's talk about time decay, theta. So options have an expiration date. Every day that passes, the contract loses value if the stock doesn't move, and stock owners can wait forever. Option owners are also fighting the clock. So a good way to counter this though, if you do want to play some options or you see some good plays, try and play what's called leaps if possible. Okay, leaps are going to be contracts that you're holding for like 1 to 2 years out. Okay, try to stay away from like 0 DTEs and things like that, and use your options as a seed to plant for the future. Okay, if you're buying contracts like 1 to 2 years out, and let's say the share price is at $50, right? Once again, so if share price is at $50 and your take profit, you think it's going to go up to $60. Okay, the best contract to buy would be a $51 call. Okay, and you might ask me, Chris, why would we not buy the $60 call if that's our take profit? Because on options, once again, you get paid based off of prediction, and there's going to be bonus points on option. So if the share price is at 50 and you buy $51 call, but your take profit's at 60, that's going to be a lot of bonus points versus just buying the take profit 60 contract, because then your contract wouldn't really start juicing and making good money until it gets hit. So if you buy a number before your take profit, you're going to get a bunch of extra bonus points and it's going to hit really, really hard. Now let's talk about buying out the money, right? Try not to do that. Try not to buy cheap contracts. Also, don't forget that it's called trading. When you're winning, somebody else is losing. When you're losing, somebody else is winning. So beginners buy cheap, unrealistic contracts hoping for a lottery win, and these have a low probability of profit. And consistent losses of small amounts add up to account blowups for sure. So don't just buy any random contract thinking it's going to hit. Try and buy 1 to 2 years out, and whatever the current price is, try and buy one above if you're going to purchase a call. Okay, so if the share price is at $50, try and buy a $51 call contract. Okay, if the share price is at $50, you think price is going to go down, try and buy a $49 put contract. Okay, play it like that, buy 1 to 2 years out. The chances of you losing is going to be really, really low. And using options for safety. So professional traders use options to reduce risk, not just to speculate. So the cover call income. So let's say you own 100 shares, right? You sell a call option against them and you collect the cash premium instantly. This lowers your break-even price on the stock, and this is safer than just owning the stock. Okay, so whenever you have enough shares of a certain stock, you're going to be able to actually sell the options contracts. Okay, and then you're going to have protective puts as insurance. Let's say you own 100 shares and you're worried about a crash, then you would buy a put option. If the stock crashes to 0, which most of the time, if it's a half decent investment, it won't, then you have the right to sell it at the strike price, and you've capped your maximum loss, protecting you on really both sides and just giving you a lot more leverage on your account to manage and maneuver your money exactly how you just want. So covered calls and selling options is something you can also look into. I'm going to be dropping a video on that very, very soon as well, inshallah. But before that, let's talk about it. So let's talk about selling versus buying the premium. So the house usually wins in options, and the house is going to be the options contract seller. So the options contract seller is pretty much wanting you to do some insane decision. Okay, they want you to make the most dumb decision of all time, and then they're going to get paid off of it. So that's not what you want. You don't want to get taken advantage of, so you need to outplay them. Okay, so the statistical edge. So approximately 70 to 80% of options expire worthless. Therefore, buyers have unlimited profit potential, but a low probability of success. But if you want to see a lot more successful wins within your options trading portfolio, I recommend you guys focus on contracts 1 to 2 years out. And once again, wherever the current strike price is, buy one above or below that number in order to have that consistent value. Okay, that way you're pretty much gonna trick it into almost a shares type of play. Okay, but you're getting the options profit. Okay, focus on time and stay near the current price. And sellers have capped profit potential, but have a high probability of success. Okay, due to the fact that they know people are going to make some uneducated, silly decisions and destroy their account. So don't let it happen to you, inshallah. So conclusion. So risky trading usually involves buying short-term options, right? Like 0 DTEs, weeklies, etc. And conservative trading involves selling options or using spreads or buying contracts within 1 to 2 years out to define your risk in every single scenario. Really just protect your money, okay? You're not on this earth working hard for no reason. Don't go burn your money down to the ground making dumb decisions, okay? You got it. So if you're not focused on your take profit, options can definitely be a problem. If you get reversed on certain areas, the Greeks are going to really hit you extremely hard. And it's things that's happened to me. There's been times where I've been up at almost $1,000 in a day, come back later on due to the fact that I was playing 0 DTEs, come back to negatives, okay? So it's not things like that I want you guys to go through. It's extremely toll taxing on your mental when you guys are trading, and it can bring a lot of anxiety on your next trade, and I don't want you guys to go through that. So understand that they're going to be too risky if they're going to be treated like lottery tickets. So if you're buying weekly out the money calls, 0 DTE without risk management, expect those results. But they're not too risky if they're used for hedging, income generation, or if you're buying leaps, which are going to be contracts that are 1 to 2 years out. Okay, so the danger really lies in the trader, not the trade. Okay, so control your flesh, be disciplined, don't make dumb decisions, stay prayed up to God, keep grinding, protect and provide for your family, and catch you on the next one. Trading can be difficult sometimes, but through prayer, discipline, and being consistent, you won't have any days of you just sitting at your screen wondering how everything slipped out of your control. Emotional trading days feel heavy, but they don't have to follow you into tomorrow. The truth is, recovering starts with separating the market from your identity. One bad day does not make you a bad trader. Sometimes it's just the wrong mindset meeting the wrong moment. So let yourself step back and give your mind space to cool down, because the clarity never shows up when your emotions are running the show. Once the noise fades and once things shift, the mistakes you made earlier stop feeling like failures and start looking like signals, little messages from the market about what needs to change. And that shift alone is powerful. It turns frustration into fuel, because the real comeback doesn't happen on the charts. It happens in your head. When you decide that today's chaos isn't your story, it's just a chapter, when you choose to reset instead of spiral, when you remind yourself that disciplined trading is built on composure, not emotion, then that's when you'll start seeing the profits flow in. Let's go and let's jump in how we can control ourselves and become a more disciplined trader, inshallah. So, trading discipline, it's going to be the factor that determines if you're going to be profitable or not. Okay, if you're not going to stick to your trading plan, if you're not going to stick to your risk parameters, okay, and if you're going to lead with your flesh, you're going to continue to get those results over and over and over again. Okay, so being spiritually grounded is going to be extremely important. In Quran, okay, it states, and those who, when they spend, do not excessively or sparingly, but are ever between that, justly moderate. Okay, so that means that you want to be spending your money not in excessive manner. Even when you start making 10, 20, 30K a month from trading, okay, you don't want to excessively be blowing through your money. Okay, take your time and having that grounded mindset, trade after trade after trade mindset, stacking it up over time. Okay, no matter how much money you make from the markets, you're going to stay patient. Okay, you're going to still stick to your risk parameters. I don't care if you start making 50K a trade. Okay, you still wake up, pray, stay disciplined, and keep taking the same type of setups, because exactly what got you there is what's going to keep you there. So don't lose that consistency. Don't lose that discipline that's been built into you just because you start touching the money and the numbers that you finally want to get. Okay, do not start spending excessively, and do not start making excessive decisions once you start getting to a certain point. Okay, that doesn't mean once you start getting a 90% win rate, okay, to just start putting on 5 trades a day just because you have so much conviction. Okay, based off of past results. It's about being consistent today and every single day. Okay, and finding peace through God, balance, and moderation. So let's go to the next slide. So you got to recognize the tilt. Okay, check yourself emotionally. Okay, you know when you're about to get upset. You know when you have a feeling of wanting to trade over and over and over again. Okay, you know when you're having feelings of wanting to crash out. Okay, so keep heed of your emotional red flags. Okay, before you can fix it, you got to admit to yourself, okay, that things got to change, that you're broken right now. So an emotional trading day usually involves revenge trading. Okay, so if you take a loss for $200, okay, say that was in between your 1 to 10% of your account risk parameters, right? That's fine. But then you take another trade. Okay, so instead of just using $200, you now lose $400. Okay, and then say you try to put on some size trying to make back that $400. Okay, and then you end up losing $800. Okay, and that's how the cycle starts, and that's how quickly you can blow up your account. So don't revenge trade. Okay, if you take a loss, close your trade, and that's it. Okay, plot out another trade, a cleaner setup, and stick between your 1 to 10% of your account rules per trade. Okay, because trying to make it back will end up turning your account into a whole different spiral in a different direction than you'd expect it to go a lot quicker. Okay. Because if you lose, you might lose again. If you lose again, you might try and risk more than normal trying to make back the double losses. Okay, so I'm telling you, if you don't recognize the tilt, you could lead into a whole different spiral and mental mind space than you'd want to be in the first place. And paralysis. Okay, so staring at the screen, making you unable to execute a good setup. This is why it's really important to have your stop loss set up as well as your take profit too, with limit orders, especially if you're trading futures or Forex. Okay, this way you guys aren't going to have any emotional paralysis. Say something just clips way past your mental stop loss, you're not going to freeze, okay, because you don't want to lose all that money and close out your trade, even though you know you should, okay. And increased size, once again, increased size usually comes into play when revenge trading comes into play, okay, but for the most part, you shouldn't just be increasing your size out of the whim. Stick between 1 to 10% of your account per trade, okay. So don't double down on risky trades out of anger or out of past losses. Okay, and check yourself. Okay, so ask yourself, are you feeling anxiety? Is your heart racing? Okay, are you cursing at the monitor? Are you breaking things? Okay, if so, you got to stop immediately.
Okay, you got to stop right then and there. Okay, get up, go pray, take a breather, hop off the charts, immediately check yourself right then and there. Okay, it's not worth destroying your family's future, destroying your seeds that you have planted in the ground because of a quick moment of disparity and anger. It's not worth it. Okay, keep your account alive. In this game, it's not really about making money. It's about who can be consistent, who cannot be led by their flesh, and who can be disciplined every single day. Okay, so let's head over to the next slide, class. So the pattern interrupt. Okay, walk away physically. Okay, if you notice yourself, especially if you're on prop firm or trading something quick like futures or forex, where you can instantaneously lose money fairly quickly, okay, you got to get off the charts. Okay, hop off the charts. If you notice you have a trading addiction, you got to pray to God, okay, and really ask to get better. Okay, ask yourself, why are you taking so many trades too? Are you chasing money? Do you have bills that you're trying to pay? Do you have some debt that you're trying to clear? Okay, because you can't trade out of desperation. Okay, trading is not something that you look to when you're dead broke trying to make it out. Okay, you got to get your life together first, get some income, then come onto the charts. Okay, get closer to God, build that relationship with yourself and know yourself intimately and deeply. This way you can check yourself and check any type of emotional parameters or boxes whenever you feel like you're about to crash out or having a rough trading period. Okay, you can't solve a trading problem with more trading. Okay, you need to sever the connection between your brain and the charts. Okay, so once again, you cannot solve a trading problem with more trading. You have to sever the connection between your brain and the charts. Okay, so close the terminal. Okay, if you notice yourself crashing out, taking multiple trades during a day, okay, you got to close TradingView. You got to close your broker and you got to just hop off. Okay, or sign out of your brokerage account and log into paper trading. Okay, and change your environment. Okay, leave the room, go outside, take a breather, and the change in lighting will really help reset your circadian rhythm. So when you come back on the charts, you're going to be like, you know what, I was tripping. Why was I crashing out and doing all that? Okay, and don't check quotes on your phone. Okay, whenever you enter in a trade, stop staring at it tick by tick. Okay, enter your trade, have your alert set at your stop loss and take profit, or set your limit orders. Okay, and don't look at it. Don't look at it. Okay, because I'm telling you, you might look at it, make a decision that will ruin your trade, okay, and then end up taking another trade, and that could start a whole downward spiral that you don't want. Okay, so understand that trading is pretty passive and hands-off. Okay, after you've aggressively studied and gained the knowledge, once you actually hop on the charts, it's going to be pretty passive. Okay, so let's head over to the next slide, class. So you got to reset your biology completely and get out of survival mode. Okay, give yourself a cold reset. So your nervous system is in fight or flight mode, especially when you enter a trade for the first couple of times. Okay, and you got to force it back to rest and digest. Okay, so some actionable tactics. Number one, praying to God. Go to God about all your issues. It's really going to help and really going to build accountability within yourself too. Okay, you can't just be blaming the markets like, oh, market's doing this, market's manipulated, market's not manipulated. Okay, it's been going in an upwards direction, especially United States stock market, year after year after year after year after year. It's not manipulated. You have to check yourself and hold yourself accountable. Okay, if you're making monkey decisions, don't make monkey decisions anymore. Okay, check yourself. There's plenty of times where I've made monkey decisions. Okay, plenty of times where I blew an account within a couple of minutes. Okay, due to the fact that I was chasing that quick money. Okay, so checking yourself and staying in tune with yourself, even when you fail, is going to be an important part of being a CEO and being a boss. When you're a trader, you're not just on here trying to get some money. Okay, you're signing up to be a business person. Okay, you're signing up to be your own boss. You're in control of your finances whenever you come onto these charts. You're in control of when you get in, when you get out, and how much you're going to risk. Okay, so don't run around blaming the market when you got to take accountability for the actions that you did. Okay, so breathe. Okay, breathing is also going to be a really good tactic too, something I've been working on myself. Okay, so breathing is really going to help you out. Okay, if you notice you're about to crash out, close your eyes, take a big breath. Okay, and working out in the morning too. If you notice that feeling of high anxiety or intensity in the morning, make sure you guys start your day with a prayer. Okay, and then go work out. Okay, when you guys work out, your body's going to release a lot of cortisol. Okay, and it's going to be in more of that healing and building mode instead of fight or flight mode. Okay, so your journal. Okay, make sure you guys have a trading journal. I don't care if you do it on Notion, Discord, a physical trading journal, whatever. Okay, just get it out, write out your emotions.
Okay, write out your goals, write out how you're feeling. Okay, and emotions loop in your head until you write them down. Okay, once they're on paper, your brain is going to feel safe, okay, to let it go. Okay, so if you notice yourself, you're struggling with over trading, like, man, I keep taking 4 trades a day, I can't accept a loss. Write down why. Write down what you're trying to chase. Why do you want the money that bad? Okay, and break it down logically, and it's really going to help you be more intimate with yourself. Okay, and write answers to these 3 questions. Okay, what specific rule did you break? If you notice yourself losing consistently based off of just emotional decisions, okay, ask yourself how you're feeling before you enter the trade. Okay, and ask yourself, what's the worst case scenario? If stop loss gets hit, okay, because if I'm hitting my 1-to-4 risk to reward ratio trades, let's say I'm risking $100, okay, if I'm making $400 per trade, okay, then I'm still going to be profiting $300, okay, which is going to give me more extra room in case I ever have a losing streak. Okay, so the worst case scenario is that you hit stop loss. But the thing about it is that if you stick to your rules, okay, you stick to your discipline, you stick to the plan that you wrote down, if you stick to your stop loss, how are you going to be unprofitable? If you have a decent win rate, you're sticking to your risk to reward ratio, okay, and you're staying in between your risk management parameters, trading between 1 to 10% of your account per trade, how could you lose? The math is right there for you. Okay, the only way you lose in this world is when you lead with your flesh. Okay, it's the only way you will ever lose. If you are disciplined and consistent, it's almost impossible to lose. Let's head over to the next slide. So, radical acceptance. Okay, forgive yourself. Okay, beating yourself up creates more emotional pain, which leads to more bad trading tomorrow. Okay, and sunk cost. The money is gone. Okay, once it's gone, don't try and chase it back. Don't try and boot up your account again and be like, oh, I'm about to recover all this. No, don't do that. Okay, you cannot trade to get that money back. Once it's gone, it's gone. Once something is gone in the world, it's gone. Okay, but that's perfectly fine. Okay, because you can only trade new setups. There's going to be better setups. Okay, and view every single loss in life, in business, wherever. Okay, just view it as a lesson. View it as tuition. Okay. Some of you might be in college, okay, paying for your tuition. Treat every single loss in life, I don't care if it's on the charts, okay, business, relationships, whatever it is, if you need to view it as a lesson to learn and progress and go forward, okay? And you're not your profit and loss, okay? You're your risk manager. You're still going to be the same person if you're making $50 a trade or $50 million a trade. Okay, you're still going to be the same person. Okay, your spirit is still going to be the same. So the money is not the thing that changes you. Okay, the thing that changes you is the knowledge. Okay, and you learn how to keep your spirit happy, how to not go through pain. Okay, and that's what we're here to do on this earth. Okay, pray to God and find out ways to keep our spirit happy and avoid pain. Okay, if you notice yourself crying at the end of the night because you crashed out your account and you got bills due the next day, okay, you need to learn from that pain so it doesn't happen again, so you don't grieve your spirit. Okay, so if you're frustrated due to your own actions, stop doing it. Okay, pray to God on it, check yourself, and come back stronger and better. Don't let it happen again. Let's head over to the next slide. The return protocol. Okay, start small. Okay, don't jump back in with full size. Okay, if you got to scale down, take a step back. Okay, because it's not about the money. It's not about the money. Okay, if you notice yourself crashing out, if you're trading with $200 a trade risk, okay, and you're crashing out with that, lower it. Maybe you should be risking $50, $100. Okay, lower your size, especially when your confidence is damaged. Okay, so for the next 3 days, okay, try to trade with 50% size or less. Okay, if you just had a horrible streak of losing, crashing out, being led by your flesh and emotional decisions that led you to straight destruction, okay, take a step back. Okay, it's all good. You can always come back stronger. So try it for the next 3 days. Try and trade with 50% size or less. Okay, and prove to yourself that you can follow the rules before you're allowed to go back to risking your full normal size amount of capital. Okay, because before you can even start touching the money, you gotta have the discipline built in you. Okay, you're not gonna touch a thing, or you're not gonna be able to keep a thing if the discipline isn't built in you. It won't matter. I'm telling you, it won't matter. So if you're making $1,000 a trade, you should still be happy if you're making $100 a trade. Okay, just the fact that we can come onto these charts, look at candlesticks going up or down, and clicking buy or sell and being able to make money is a blessing. So why are you ruining it for yourself? Okay, please don't make it hard. It's welfare. Okay, it's welfare here. And all you have to do in order to get it, you don't got to go sign up on no website. All you have to do is be disciplined. Okay, be disciplined. And praying to God is going to be the #1 way on this planet to build discipline. Then from there, you guys can start working out. Then from there, start grinding every single day. Then from there, you're going to get very strict on your setups. When you're praying to God every single day, you have a strict health diet regimen, okay, and you're sticking to your trading plan. Trading is not going to be difficult for you. I'm telling you, it's going to be very, very, very simple, okay? But most people who struggle with this, and it just shows you how undisciplined 99+% of the world is, okay? The main reason why 95% of people plus aren't profitable is because most people on this planet lead with their flesh. Everyone always wants to feel good all the time. Everyone always wants to be comfortable all the time. Everyone always wants to be happy all the time. And that's not realistic. Okay, you have to be disciplined, consistent, and you have to have that iron edge regardless of what's happening in life. Okay, if you want to live in a fake realm, okay, being led by your flesh, that's fine. You'll continue to get those results. Okay, but if you want to be the 1% in the world who's ready to reap the harvest, okay, who's ready to get the resources, who can help everyone else out, okay, you gotta put yourself through the fire, okay, and you gotta come out not tripping. Okay, let's head over to the next slide. So tomorrow is a new market. Stop tripping about the past. Okay, that little bread that you messed up, forget it. That account that you blew up, forget it. Okay, whatever happened back then, it happened back then. That was a weak version of you, and it's time for that version to die. Put it away. Okay, come stronger. Build yourself a whole new version and come way better. Think different. Okay, so wake up, pray to God, and work out. When you guys are working out consistently, it helps your cortisol run through your body a lot less intensely, so you're not going to have random crash out spurts. Okay, working out is really, really going to help you. Okay, and walk away from the computer too. If you notice yourself pansying on the market, spamming buy or sell because of a loss, relax. Walk away, go pray on it, check yourself. You probably did some emotional stuff that's your fault, and cool down physically. Okay, then go journal the mistake. Okay, throw it in your Discord, your Notion, your trading journal in real life, notes on your iPhone, whatever. Okay, you gotta release the loop. You cannot do the same things in life and expect different results. Okay, so if you're doing something in life and it's working, okay, you notice you're waking up, you're praying to God, you're grinding, and you're getting somewhere, continue to do that. Okay, but if you throw off the loop, if you notice yourself throwing in random days of doubling your leverage, okay, then your risk to reward and your consistency is not going to be able to be built like that. You can't be risking $100 one day and then 2 days later you're risking $400. It's not how you're going to build yourself. Okay, and then when you return to the market after a crash out series, start smaller. Okay, start smaller, because you're not even ready for the money right now. So if you're blowing up your account, you're not even ready for the money. Some of you guys are thinking about the money, but you're not even ready for the money. Too many of you forget about the grind. If you have a skill, a talent, and discipline in this world and you pray to God, you'll get to some money. But some of you forget about praying to God. You forget about the grind. You forget about the hours of studying that it takes to be successful in whatever you want to be in. Okay, I don't care if you want to be an athlete, if you want to be a CEO of a business, okay, whatever you want to do in this world. If you forget about the grind, and most importantly, if you forget about God, you're not going to be able to be successful. That emotional turmoil might catch you, and that one bad day could destroy you. But understand that one bad day does not define who you are in your career. Okay? Stay hard, stay disciplined, stay focused on God, and keep grinding. Don't ever give up. I'll catch you on the next one. Peace.
Class, let's go and let's jump into why you have to be disciplined, especially if you're going to be on a funded account, on a prop firm account, or trying to get any type of withdrawal. And let me tell you guys something. There's been times where I've lost a withdrawal on day 4 out of 5 of my payout. Okay, due to what? Due to me being undisciplined, due to me being greedy, due to me having too much ego. And I don't want you guys to go through the same things. Okay, there's no reason to be going through that. There's no reason to be that disgusting and sloppy. And I want you guys to learn to just be consistent. Okay, there's going to be a lot of cost that come when you trade without your rules, when you let your ego get to you, okay, when you don't humble yourself, Okay, and there's a reason why God tells us to be humble and have humility. Okay, because you can really destroy yourself. Even when you're running up that big bag. Okay, I was excited. Okay, running up that big bag, posting PNL on social media, and this was before I was even stack mode Chris. Okay, like super duper excited, overzealous, over trading, and guess what? Destroyed it all. Okay, ended up getting no payout and lost the account at day 4 out of 5 out of my withdrawal. Okay, what was I doing? Okay, and I was up way over the amount than needed to crash out the account. Okay, and it was just completely my fault. I realized I had too much ego. I needed to humble myself. And I realized that I just couldn't believe that I was wrong on that one trade, especially after one streaking to earn the account in the first place. And prop firm can kind of screw up your head and screw up your whole mental realizations. This is why I personally do recommend, even if you're on a prop firm account, even if you guys are good in getting withdrawals, okay, start a real account. Okay, do these 2 things. Take the prop firm profit, okay, and reinvest it into account A. This is going to be your long account. Okay, your long accounts are either going to include your cryptocurrencies, your stocks. Okay, make sure you guys are trying to buy shares. So this way, you guys' money is always going to be making you money. Okay, because don't forget, prop firms can shut down. Certain things like that are possible. Okay, so just make sure you guys are taking your time, putting everything into perspective, and really just reading through the lines of absolutely everything. Okay, so account B. Okay, replicate whatever you're day trading on wherever you're day trading on your prop firm. So if you're day trading futures, for example, on prop firm, then start a real account and copy trade on there. Okay, the same trades that you do on your prop firm account, just do it on your live account, even if the size doesn't correlate. So this way you're always going to have your money in your hand. So even if the prop firm shuts down, whatever happens, whatever correlation decides to go within a downward spiral, okay, you're always going to have your income there on the side. So you got account A, always making you money. Your money's always making you money. Okay, instead of indulging in consumerism. Okay, a lot of reason why people can't pay their rent and stuff like that is because, one, they're not stacking up. And you can't only stack up. You got to make sure your money's being used as a tool. It's being utilized. Okay, then rent's not going to mean nothing. Bills aren't going to mean nothing. But you got to sacrifice. If you don't sacrifice, you won't get wealthy. Okay, and once again, getting wealthy is not for everybody, and that's okay. Okay, but if you're a person who wants to get wealthy, you have to learn how to sacrifice. If you don't do that, you'll never get to where you want to be. Okay, so when you have account B, make sure that you're keeping your profits in there. Okay, use your prop firm account as your income engine. Keep your profits in account A and B and keep stocking it up. Keep stocking it up. If you get to the point where you do find consistency on the prop firm, okay, you do have discipline and you found yourself a consistent edge to where you can constantly withdraw, that's amazing. Okay, alhamdulillah. Now, account A and B, don't touch them. Okay, just keep funneling money into them. Keep funneling money to them. Keep going, keep going, keep going, keep going. Okay, until either the A, the prop firm shuts down, or B, you just want to get off a prop firm entirely and just start focusing on account B and playing with your leverage and not playing without any rules or anything like that. So you can really use prop firm to get ahead and generate some income. So discipline is going to be the gateway to success and capital in general. So proprietary trading firms are not testing your strategy. They get paid based off of knowing the fact that you're going to be someone who's not disciplined. Okay. So prop firms only make money whenever you lose. So once again, whenever I didn't get a withdrawal on day 4 out of 5, right? I couldn't believe that I was taking a loss, right? Prop firms will kind of gas your head up. You know, they'll give you the nice fancy certificate, you know, after you guys went through all that hard work. Okay, so you start feeling like a good trader. You might start thinking you're better than you even are. Okay, then from there, they gate your profit behind certain days. Okay, so this is going to be a psychological game they play, because don't forget, unlike brokers like Robinhood, Webull, etc., where you invest your money, okay, the brokers get paid off of whether you put the trade now. So whether you click sell or buy, they make money. So it doesn't matter. They're not really betting on whether or not you win or lose your trade. They don't care, because they already get their fees as soon as you click enter. Okay, they get their fees. And everyone pressing enter, the conglomerated fees turns into their capital and their income as a company. Okay, so a broker is a really good business to start, honestly, as long as you just set up the software and get all the approvals. It's a really, really, really strong business, since you just get paid based off of fees. Okay, you just need participants. So, but prop firms, for example, okay, prop firms, they only get paid when you buy an account. Okay, so they're going to psychologically change everything, and they might put into retrospect like it might be easy to go ahead and get a withdrawal, etc. But behind the thin lines, behind the challenge rules, etc., they're hoping that you fail. Okay, so winning 5 trades is not normally how it goes in order to get your money on a real account. okay? And they know that. So they're trying to take advantage of giving you the quote unquote capital, okay? Even though it's really a tenth of that, okay? Say if you have a 50,000 account, it's really like a $5,000 account, especially with the drawdown, etc. Okay? So don't get tricked by the numbers. Don't get tricked by certain things that are just in your face. You got to really read between the lines. And the reason why a lot of prop firms get successful or enforce a little more rules, like having to send proof of you taking the trades and stuff like that, or breaking down your trades, stuff that you just don't really have to worry about in a real account. Okay, so if you want to trade prop firm, that's going to be you. But if you want to stay down, stack up your bread, run it up, and then invest, that's a highly recommended option. Okay, but if you master prop firm, you master the rules, and you found yourself able to get withdrawals consistently, use it as an engine to fund your real accounts. Okay, so preserve your capital, especially once you guys start winning. Certain prop firms like Top Step, for example, the drawdown likes to catch up with you. Okay, so even when you take a loss, you have to make sure that you're keeping everything inherently in perspective. Okay, keep up with your drawdown. It's not going to work like a normal account. And being a reliable steward of your money is going to come to whether or not you want your account to be alive. Okay, are you chasing money, or do you want your account to be alive? Okay, because if your account's alive, the money will always be there. Okay, I just checked my Webull portfolio today. You know, thank God, up a really nice percentage. Okay, answered and just been stacking up, not looking at it, investing over and over and over and over again. Okay, but you guys have to learn how to sacrifice, have to stay down. I've been wearing the same clothes every single day. Okay, haven't been buying anything new, just been paying bills, taking care of what I've needs to been doing. But I go look in the stash and I'm happy. I'm cheesing. Okay, so don't worry about whatever anyone has to say in real life. Okay, you know what your stash looks like. Okay, when you can go and put in the stash, you can go pull out 100K, you can go pull out 10 bands whenever you want at any time needed. You can get up, you can go swap cribs whenever you want, anytime needed. It's not a lie anybody can tell you. Okay, you're good. So just focus on yourself. Focus on putting that money in the stash. Stay down. Okay, you don't need the newest phone. You don't need the newest shoes. You don't need the newest this, and that. Okay, right now you're probably broke. If you don't have at least 10K, you're broke. Okay, so you don't need to be buying none of that. Some of y'all have the newest phones and not 5,000 in the stash. And it's time to really change our mindset. Okay, because I noticed when I was silly spending, I sat back and realized, wow, if all of this was invested properly, I wouldn't even be having to work as significantly hard in the future. Say when you're 60 years old, you have $2 million in ETF account. That alone will give you 70K a year. And that's just $2 million. Okay, then you could have another M and some cryptocurrency generating you equity there. Okay, and that's by 60 years old. 60 years old is $3 million. Is not that much by 60 years old. Okay, that's many years. Okay, a lot of people become millionaires like 23 to 28. So it's a lot of years, a lot of time you have to stack up M's. Okay, so once you do that and you stay down and you invest, you'll never have to work again. Okay, you'll pretty much just be able to live for free. Investing is how you live for free. There's no such thing as free, but investing is how you live for free. Once your money is making you money infinitely, you live for free. Then you don't have to stress about anything. So it's about how you put in this mental perspective into your own account. And you got to just ask yourself, like, do you really want to be wealthy? Do you want to get to where you want to be? Because if you do, you're going to follow your rules. You're going to do what needs to be done. You're not going to be over trading. You're going to be trading between your risk parameters. Okay. And if you go over that, that's all you. You're just telling yourself that you don't want to get to where you want to be. So the discipline is really going to ensure that you stop yourself from destroying your account and just stop trading before you just hit the drawdown limit and you destroy your account without even realizing it, or you just blow a profit that you've been working really hard and consistently to grind. Okay, just because you have one bad day, that doesn't mean just crash out the whole account. You shouldn't be hitting maximum daily drawdown at all. Okay, take your one loss, hop off, plot an even cleaner setup, come back and get back in your bag. You're good. So true trading discipline, especially when it comes to futures, forex, etc. Your mechanical execution is really going to need to be on point. Your technical analysis and the way that you fundamentally look at the chart, it has to be in a logical perspective, especially when you're trading stocks and crypto. Understand that's a left to right chart. Okay, just like us as human beings, we start from babies and we grow older. Okay, everything in the world works from left to right. Okay, everything has a start to finish. And understanding that, putting that into your technical analysis, you're going to understand, okay, this is why price is dipping here. This is why price is making a high here. It's finished at this point. It's going to go down and try and break that finish line again and continue, make a new finish line, okay, making new highs, etc. So have a really good fundamental, logical understanding of the chart before you even try to boot up even a prop firm account, okay, especially before you put your own money into a live broker. Okay, and don't forget too, prop firm accounts, you're still spending your own money. Okay, I know you guys are playing with the quote unquote like prop capital, but you're still swiping your card to buy the account. Okay, so all that money that you're using to swipe your card to buy the prop firm, you got to really ask yourself, like, okay, would this be more worthwhile in like an ETF or a profitable stock or something that's just going to passively make you money pretty easily, maybe like a long option? Okay, so ask yourself that before you make any decisions. So enter trades only when the exact setup becomes present to you as well too, okay? If it's not the setup that you want, don't be taking that. Don't be fiending for money. Don't be desperate, okay? Relax, okay? Especially when it comes to the market. Go work harder at your business, and you can't force trades. If you think you're gonna force trades, and if you think you're gonna be right at the market, okay, you'll learn, okay? You'll learn that the market is right. And if you're wrong, you're just wrong. And you have to be okay with that, okay? You'll plot on another trade, and I promise you guys, if you just stay disciplined, you keep studying the charts every single day, you'll start placing right trades consistently. Okay, stick to the course, even when it's hard, even when you're frustrated, you just crashed out, you just destroyed your setup, whatever. Okay, relax, you're good. I promise you, you're good. I've been through all of that, and I'm telling you guys, once you get to the other side of profitability, once you start just checking your account, cheesing, you just start seeing green, money making you money. Okay, it's a real blessing. Okay, it's a real blessing that God even put this in your mind. Okay, so you're good. Stick through it. I promise you. Just stay down, and I promise you, everything's gonna make sense in a couple of months. So trading without emotion. So think of that kind of like a smart contract in the cryptocurrency world, right? That's like a machine without executing the code. So you can't really do that. You got to become a robot when it comes to trading and investing in general too. You got to become a robot. You can't be emotional. You can't be panicking when price is going up or down. Okay, and even when you are smiling at P&L, you can't be excited. You can't be quick to withdraw everything. You can't be like, I'm gonna just go withdraw everything and go ball out. Go buy a car, relax. Okay, that's your future money invest in for your family. Okay, you can make real deal plans with that. Go buy some land, go buy some houses. You can make real boss moves with that. Once you get your capital to a certain percentage, it's so easy to just turn your money into more money. Whether doing a lucrative amount of things, whether it be real estate, stock options, shares, crypto, whatever. Okay. So take that prop firm account money and siphon that into certain long-term investments, and you'll be good. And your plan is really going to dictate everything. Okay. Your discipline is going to ensure that you follow that plan. Okay. Once again, whether you're feeling like you want to do it or not, like if you want to take that FOMO trade, go ahead and do it. But if your portfolio isn't looking like how you want it to be at the end of the year, you can only be mad at yourself. Okay. You can only be upset at yourself. But if you're sticking to each setup over and over and over and over again, you'll get to where you want to be. Okay, and that's the real difference between the people who are successful in this world and who aren't. Too many people are too focused on emotions, like, oh, this is boring, this is whoop-de-whoop, this is etc. And that's why people just aren't anywhere. Okay, people don't know how to sacrifice. Okay, if you want to live in pleasure, if you want to live in leisure all the time, that's okay. You'll get that. You'll most likely have late bills. You'll most likely be driving a car that's not nice. Okay, and you just won't be doing the things that you want to be doing. But I promise you guys, if you sacrifice for a couple of years, you'll be living in extreme leisure. Extreme leisure. It doesn't even matter your income level too. You could be making 30K a year, 40K a year. If you're saving and you're investing constantly, stacking up every single dollar and using it as a tool, you'll be good. You'll be good. There's janitors who's retired as millionaires, okay? Just by making the right decisions. It's all about decisions. Life is about decisions. And if you want to make the wrong ones, that's fine. But if you see someone flying down in their Rolls Royce, don't think that they got gifted that. No, I'm telling you, it's not many people who can give somebody a Rolls Royce. That person probably stayed down, stacked up for many years, many months, went through many struggles in order to get that. Okay. So make the choice. Do you want to be disciplined or not? So emotional trading is going to be your biggest threat. All right, if you want to be a pansy, that's fine. That's fine. But I'm telling you, if you want to come onto these markets, you have to be ironclad. You have to be structured. There's some serious people you guys are playing against. You guys are playing against people like me. You guys are also playing against other competitive players like Warren Buffett even. Okay? People who want it bad, and it's trading. Okay, don't come on here thinking that it's about to be light. You're coming into the arena. Okay, trading is very serious. Okay, it's called trading. This money isn't flying out of thin air. You're trading with somebody. Whoever's losing, you're taking their money from them. And when you lose, somebody's taking your money from you. Okay, you have to understand, why am I getting my money taken from me? Who's taking my money? What better players are taking my money? Whenever you're losing, someone is taking your money from you. I want you guys to really let that bake into your brain, especially my competitive people. Somebody's taking your money from you because they're more disciplined than you, because they're more patient than you. Are you good with that? I'm not. And that's why I had to humble myself real quick and get it in order, because I'm not good with people being ahead of me. Okay? I'm here to be the best. I'm here to win. And if you're here to win, it's time to be patient. It's time to be more disciplined than everybody. It's time to be more structured than everybody. Okay, while everyone is being loose and doing everything and being emotional, let them do that. Let them do that. Okay, but if you want to be pull up in your palace, pull up, driving whatever car that you want to drive, living how you want to live, eating what you want to eat, inshallah, okay, it's because you sacrificed. You stayed ironclad. Okay, you weren't worried about the pleasure. You knew the pleasure would come later. So don't be revenge trading too, okay? Some of you guys revenge trade because your mind goes into survival mode. Survival mode happens when you think you're about to just not eat, not have a roof over your head, etc. One, if you go into survival mode after you lost a trade, you're probably trading in a mode of desperation. Is this prop firm account like something that you're betting on? Okay, right? Because you should be fine without, whether or not trading works, okay, you should try to have income generated so that you could be fine until it gets to a point where trading can completely over dominate everything and by just your passive investments, okay, like ETFs, for example, okay, then that's fine. But until then, okay, you should be fine. Okay, whether or not your trades work out, you should be fine. And if not, you're investing too much. You're investing way too much. And you're probably over leveraging as well too. So don't increase your position side after a loss too. Don't lose $500 on your account, right? And then put on $1,000 worth of size, trying to make that up, trying to make that loss back up, and then profit after that. Just stop, okay? Come back to a completely fresh trade, completely new day, and start over again. And don't move your stop loss, okay? The automatic order that closes out your trade for a reason, don't move that. Keep that there. And don't exit prematurely, all right? God put this in your brain for a reason. Don't panic. Don't be closing that take profit too early, okay? Relax. Set your alerts and let take profit hit. If you close that take profit, if you close before take profit hits, okay, you're ruining your risk to reward. So if you're supposed to make $400 on that trade and then you only make $220, and then your next loss, you lose $310, okay, instead of you still having $90, right, instead you're just down, okay, you're down to $310 minus $220. Instead you're just down, okay? So take your time, okay, and don't micromanage a trade that's moving in your favor. Okay, set your alerts, don't look at it, get up, go do something else, go get some more money. So having a funded trader mindset, focus on the process, prioritizing executing the plan amazingly every single day, okay? Study what you want to do, study how your setup should look, and get some data and evidence, especially month after month after month. You should understand how the market works. And results are going to be secondary. Consistency and execution is the only metric that matters to the firm. And you'll have a long-term view. A funded account is a career, not a single trade opportunity. And discipline smooths out the equity curve, turning random results into predictable income over months. Why? Because you're sticking to the same risk parameters. You're losing the same amount consistently. Okay, your wins are pretty much calculated, especially when it comes to futures and stuff like that. Okay, and don't worry about the risk. Okay, so don't worry about the risk. One, you have to know that not every trade that you're gonna win. Okay, so you can't just be thinking, what if I lose? What if I lose? What if I lose? Get that out of your head. Okay, but understand that you need to calculate your risk though. Okay, in order to get that feeling out of your head, you're probably too leveraged in. You probably have too much money in a trade. And calculate your risk though before calculating the potential profit. So instead of worrying about, oh, am I going to lose? Am I going to lose? Or worrying about how much I'm going to make, how much I'm going to make. Just calculate, okay, this is how much I'm going to lose. If I lose, I'm okay with this. So even if the trade works out or not, you guys are going to be okay. So discipline is your only true form of edge and risk management. All right. And discipline is really going to be the separator between passing your test. Okay. It's pretty simple to pass most of the prop firmer tests. Okay. You can go ahead and just gain some consistent rules, and a lot of times you'll get your account. Now, keeping the account, this is a completely different deviation. Keeping the account is a different ball game. It's about staying on this course of action year after year after year after year after year. Okay. Not a single ego-ridden day. Okay. Mistakes just aren't going to be tolerated for. And if certain mistakes are made, your account will be punished. So if you want to keep the account, I really recommend you guys just pray to God. Okay. Keep your ego in check. Stay humble. Even when you guys start withdrawing big amounts, stay humble. Stay humble. Stay humble. It's really going to help you guys just stay focused on the process. Okay. And don't look at your P&L too much. Don't be looking at your money too much. Just wake up every day and grind. Okay. Don't look at your money too much. Wake up and grind. Just keep going. And funded traders understand that rules equals money. Inshallah. Okay. Stay prayed up to God. Keep grinding. Head over to stackmode.net for all trading education. Peace.
Investing, trading, all of it is forever, guys. So I want you guys to think about plants for an example. What do plants need? Water, sun, good soil, consistency, 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 and you'll get the plant that you want. Whether it be a beautiful rose bush, a giant oak tree, a blueberry bush, whatever you want. It comes through consistency. Investing is forever. It's forever. Don't think you're going to hop in this game, run up a couple of bands, and then hop out. That's for the quitters. Investing is forever. When you guys hop into this journey, when you guys start hopping on these charts have been around since before I've been alive. I'm 22 years old right now. And before I've been alive, people were trading Forex. People were trading certain stocks, etc. And I assume, inshallah, if God wills, that after I'm gone, people will probably still be trading the markets if the world is still going and flowing. So investing is forever. Don't think so quick, so instantaneously, so fast. When I was a day trader, I got consistent. It took me some time, lots of failure in the beginning. And that's why I thank God I'm able to come on here and coach. I'm so passionate about it. And I'm thankful I get to make some money in the process. Of course, I'm here to be fully transparent. Yes, I make money in the process coaching. Yes, I make money selling my trades. But I'm also really, really humble to the fact that I get to help another person learn a skill so they can feed their families, so they can help somebody, so they can pay their bills on time. So yes, I get to thank God. All due to God. Without God, I'm nothing personally. So thank God. Thanks to doing this, I get to coach you guys, make some money in the process. But I also want you guys to avoid a lot of hardship that I've gone through. And one of my students on a call that I was just on the other day, actually really told me that. Well, he was like, he laughed. He was like, I'm thankful you went through it. And I'm like, I'm thankful too. Like, for real. Like, it sucked going through it at the time. But now being able to tell you guys certain things like, hey, you might not want to get in at all-time highs right now because you're probably going to get dumped down on. So being able to tell you guys little tidbits and stuff like that, or, hey, market's dumping right now. You might not want to be in along. Let's wait till buyers step in. Being able to analyze certain emotional factors based off of anxiety, rushing. And I understand why people want to get in and rush trades. You're trying to touch some money on. You're trying to touch some money on. I'm trying to touch some money on. We're all trying to touch some money on. Okay? You're not alone. You are not alone. I promise you, you are not alone. You're trying to touch some money on. I understand. But in order to touch some money on, one, we got to pray to God so we can be healthy. Okay? Mentally and physically. So we can even think, so we can get some money on. So be humble to God. Really, really, really important factor. No matter how much money you start touching. Stay humble to God. Don't change your ways. Don't change your ways as a person. Don't start treating people badly. Don't start disrespecting people. Even if they hurt your feelings, break your heart, whatever. There's no need to disrespect people. You know, I'm not perfect. There's times I've definitely made mistakes. But don't let the money change you, even when you do start touching that big bag, because it is easy to start thinking, well, you know, whoop-de-whoop, or I'm better than people, or why aren't people doing X, Y, and Z? And everyone's going to live their own life. But if you want your network to be full of grinders, full of investors, full of people who care about taking care of their families, stay around that. Don't try and change your whole life, start investing, and think you can hang around the same people. Because I'm telling you, it's going to be frustrating. Okay, and when you start changing and leveling up mentally, you don't want to be disconnected while you're there presently trying to enjoy yourself, but you're not going to be on the same mental space. Instead of you guys going to McDonald's, you're going to think, well, I got food at home. Why not just buy some Bitcoin or some shares? Why not buy this options play? Why not load up a futures account? You know what I'm saying? Your mindset changes when you start investing. So the people around you, if they're not on the same wavelength and journey, it will and it can frustrate you. But don't let it get to the point where you just start disrespecting people. But yeah, like, don't, like, you know what I'm saying? Sometimes people are broken spirited. Like, if people are broke, they're broke spirited. Like, for real. That's really what I think. Because it's not even about money. It's just, you're waking up every day. And I think it's just abusing the body that God has gifted us with. Because how are you not waking up every day and grinding? How are you not putting some money away for your family so they can eat? So how are you not trying to get a bigger home for your family and a safer home for your family so they can live in a better environment? You know what I'm saying? So I do understand the frustrations, but if you're an investor, if you're a hustler, you're a grinder, and you're ready to change your whole life around, your whole life is going to change. You're going to be a really consistent person, okay, inshallah, especially when you start praying every day. Working out Monday through Friday, 5 days a week is a really, really good way to build consistency, let off a lot of stress, and really just stay mentally focused. And investing constantly. As soon as you get some money, buy some shares. As soon as you get some money, buy some crypto. As soon as you get some money, buy an options play or whatever that you planned out. Boot up your account. Okay? Do what you need to do. Try not to waste your money on prop firm, because ownership is really the main priority. You can sell your shares whenever and put it right back in your bank account. Prop firm, they have little parameters that are set up for you to fail, because prop firms only make money when you buy a challenge. So, of course, they're going to make things very difficult and hard for you so you fail. On the other hand, we're going to go ahead and have your actual live account. You can pull out your money whenever, whether it be your crypto, shares, futures, whatever. You can just pull out your money, okay? You can pull out your money whenever. So, think about it. Ownership. Ownership is the reason why you want to trade, okay? You don't want to just have money to have money. You want to throw your money into the asset river so you can have ownership, so you can have more houses, so you can own more percentage of a company or an ETF, so you can get paid more dividends maybe one day, okay? You want to have more ownership of more Bitcoin. So when Bitcoin goes extinct, Bitcoin is not infinite, if you didn't know that. And when Bitcoin goes away, you're going to have Bitcoin. Ownership is what we're investing and trading for, okay? Ownership. Think about it, guys, okay? You have money just chilling in your savings account. Why? What is that doing for you? Ask yourself, if you have money sitting in the savings account right now, what is that doing for you? Or your checking account. Why is it there? Because once I turned on my brain, I personally try and just live off of the credit card, okay? All money goes into assets, and then take the money out, pay off the credit card with the assets or income that's flowing in, pay off the credit card. And when tax time comes, take money out the assets, pay your taxes. Why is money sitting in your checking account when houses get more expensive year after year after year after year? When food costs more year after year after year after year after year? There's no more dollar menu at like McDonald's and stuff. Okay? Not everywhere. Prices fluctuate per city. Because of why? Inflation. So why is your money just sitting around? People like to complain. Stuff is just getting more expensive every year.
Do something about it. See, and that's broke to me. It's not even about money. It's just don't hang around complainers. Investing is forever, so you're the one who's going to do something about it. Inshallah, you're the one who's going to take care of your family. If you're watching this right now, you're the one. Okay? And you can't fail. Inshallah, you got to keep going until you die. Don't stop. Don't let any relationships affect your mental. Don't let any people around you affect your mental. Don't let any loss of any funds affect your mental. Okay, stay focused on God and stay strong, because this journey is going to be a long one. You're setting up right now to be the provider, whether it be for yourself or your family or your loved ones. If you're investing, you're probably doing it to give your family or yourself a better life. So be ready to be a provider. There's going to be days where it's going to be frustrating. It's going to be days where you're going to check your P&L. It's going to be red. It's going to be days where you're not going to be making some money. And that's okay, because it's forever. It's about staying consistent. It's about staying resilient. It's about coming back every single day and not giving up, no matter what. Because I'm telling you, whoever doesn't give up wins. The people who stop, the people who quit, the people who think it's a scam, the people who don't have self-control, who don't pray to God, okay, all going to be failures. All going to be failures. Because until I started praying to God, that's when I started winning. As soon as I started praying to God, I started winning. Okay? Until I started praying to God, like, I just wasn't winning. Okay? But then as soon as I started praying, started winning. Started getting healthy. Was able to lose 100 pounds in 8 months. I just privated the short just because it had some explicit pictures. I don't think it's very, halal content. But yeah, I'll stuck for Allah. I don't want to be showing myself like that on the internet. Also, watch how you guys present yourself too. When you guys start running up money, because whoever's watching this right now, I know you guys will go far, inshallah. So if you're watching this right now, watch how you present yourself too. Watch how you present yourself on the internet. Don't just be out here balling and flexing on everybody. Motivate. Okay, because we're all on this earth for a reason. So whatever keeps you going on this earth, do that. And try and inspire the next person so we can all just be happy on this planet. All right, because that's really what it's about. Yes, we're here to get some money, but I'm telling you, investing is forever. The big plays will come as long as you stay consistent, you stay focused, you keep taking the same type of setups, you keep putting the same money away. I don't care if you have $1 million in shares, $1 million in Bitcoin. As soon as you get $20, if you put $15 into it, that mindset is the reason why you got to that $1 million. Keep stacking it up. Don't get that big ticket and then blow it and then go back to zero. Don't do that. That's something I had to learn from. Okay? Run it up. Stay consistent. Stay prayed up. Keep your mental straight and keep what you got. Don't lose what you got. Whether it be relationships, whether it be your money, whether it be your plays, don't lose what you got. Don't lose what you got. Okay? I love you guys so much. Head over to Stackmode.net for all trading education. Stay prayed up to God. Keep grinding. Free ebook and course there too. If you guys want to check that out for free. You guys can book a call with me for the first time for free. Let's break down whatever you're going through. Let's break down an investment plan for you. I want to get you guys focused. I want to get you guys set up with a full financial parameter and a full financial system so you could be successful in this world, inshallah. The stuff is only getting more expensive and they don't want you to suffer. Love you guys, for real. Peace.
When the dollar starts becoming worth less, people start running to assets such as real estate, gold, and silver. Today, we're going to talk about how to invest into gold and silver, why you should invest in the gold and silver, and what inflation is, and why people run to asset classes in the first place because the dollar starts failing. Let's jump into it, inshallah. So gold and silver are going to be hard assets that are going to be pretty safe to invest in, especially in an inflationary world where things just get more expensive over time due to the fact that more currency just gets generated over time. So the currency devaluation. So purchasing power is melting over time. So inflation isn't just about prices going up over time. It's about the value of the currency going down. So prices go up to correlate with that. So governments print money to service debt, which dilutes your savings over time. This is why I tell you guys all the time about the asset river. Okay.
You want to always try and have your assets and your money flowing in your river. If things logically get more expensive year after year after year after year, then you have to have your assets flowing in a way that your money is always making you more money. Okay. So once again, I'm going to repeat, your money should always be making you more money. Okay. Don't get outplayed by the certain calculations that just debase in the world normally. If things get more expensive over time, then logically, in order to counteract that, in order to feed yourself and your family, your money should always be making you more money. So we'll talk about the 1971 shift. So that's when Nixon ended the gold standard. And since then, the US dollar has lost over 85% of its purchasing power. And the hidden tax, inflation helps debtors, which is pretty much just the government's, but it hurts savers, anybody just stacking up cash in your bank account. If you have just a whole bunch of cash stacked up in your bank account, it's actually doing nothing but hurting you. Okay, even if you've worked overtime for a job before, okay, you might have seen that you've actually had to pay more in taxes. Okay, the more cash that you have just stacked up stationary, the more that it hurts you. And it transfers wealth from you to the state, which goes back to the government. So in 1920, 1 ounce of gold bought a high-end suite. And today, 1 ounce of gold would be about $2,600. Okay, so it still buys a high-end suite. And the gold stayed constant and the dollar collapsed. Okay, so keep that in mind. The gold stayed constant while the dollar collapsed. So that means that having your money parked in an asset class like real estate, people are always going to need houses. Gold, people are always going to be wearing jewelry. And other asset classes that stay constant and only rise up while the dollar collapses are going to be the asset classes that you want to focus on for the most part. So gold, people call it the ultimate hedge. A lot of the times, if you pull up the chart, you'll see gold year after year after year after year heading in an upwards direction. Okay, it's not stopping. And due to the fact that something has to counteract the dollar. So gold is going to be the human standard that people just use whenever the dollar is crashing or the economy isn't in a good place. So here's why central banks buy it. And central banks are going to be the banks where me and you bank at. Okay, the banks that hold our fiat currency, where we can go pull out our money to pay our bills, go to the ATM, etc. And the fear trade. So gold performs best when real interest rates are negative. And that's when inflation is higher than bond yields. Okay, and central bank demand. So in recent years, China, Russia, and India have been buying record amounts of gold to de-dollarize their reserves. Okay, so they're trying to de-dollarize their reserves in a significant manner. Okay, buying less time storage for their fiat currency and buying more time on their actual currency by investing into assets. Okay, you're doing nothing but losing time if you have more fiat currency. So fiat currency needs to be thrown into the river immediately. Otherwise, you're wasting time. Think of theta on options, if you're familiar with that. Over time, on a stock options contract, the options expires. Okay, think of your fiat currency the same way. Okay, if rent over year after year after year after year gets more expensive, if 1 year a house cost $200,000, but then 5 years later it costs $500,000, that means that your asset class has to be in a constant river, each and every single one of them. Okay, all your businesses, your profit has to be being reinvested into that. More stocks, more shares, more cryptocurrency. Okay, buying more houses if you're in real estate, etc. Okay, buying more land, and you could do whatever you want with the land. You could farm on the land, pay people to host ATMs on the land. Okay, people could build stores on your land. People could build antennas, cell towers, etc. But when you own assets and you keep stacking up your assets, it gives you a multitude of opportunities to be presented in front of you for your money to just make you more money because you invested in the right things. So volatility. So gold is slow, and it's not for getting rich. It's for staying rich, and it's wealth insurance, not a lottery ticket. Okay, so stacking up gold over time. A lot of people might buy certain jewelry. Okay, go smelt it, take it to the jeweler, whatever, and either the jeweler will give them an exchange rate for the gold. So you're going to have multiple ways to invest in the gold too, which we're going to talk about. If you don't want to go the actual physical gold route, you're also going to have the ability to buy things like shares, etc. So let's jump into it. So silver is going to be the industrial hybrid. So it's the green energy paradox. So silver is unique, and it acts like money during crisis.
but trades like a commodity during booms due to massive industrial use. So as far as conductivity, silver is the most conductive metal on Earth, and it's essential for electronics, 5G, and EVs. So for modern technology, silver is going to be needed. So silver is also going to be something you could invest to too. If you ever see a pullback on the charts or anything like that, silver is going to be an asset class that goes up year after year after year after year very confidently, especially while the dollar is collapsing. And let's talk about the solar boom. So photovoltaic cells, okay, solar panels, consume massive amounts of silver. As the world goes green, demand explodes, okay? So photovoltaic, okay, that's just solar panels. Solar companies are booming all over America, all over the world, and other countries as well too. Okay, especially countries with less green, less trees, taking advantage of that solar energy. So seeing silver going in an upwards direction year after year after year would make sense. Try to plant your seeds with things that make sense with the future, whether it being putting smiles on people's faces or helping people work throughout the day by day. Silver is needed in absolutely everything. And let's talk about the gold to silver ratio. So it's historically about 15-1. So 15 ounces of silver will give you 1 ounce of gold. And today it's often 80-1. And many argue that silver is undervalued relative to gold. And we'll see how that starts changing, especially during the AI era. When we start seeing robots and certain things start getting developed, the use of silver could go up in an industrial rate. So there's going to be two ways to invest. So you could either have a bunch of bars, whether it be silver bars or gold bars, stacked up. Some people do that, put it in a safe or leave it with the bank, etc. Some people also have jewelry. You could buy Rolexes, Audemars Piguets, Pateks, certain chains, real Cuban links, whether it be it bracelets, chains, etc. And some people take it to the smelter, melt down the gold, take that to the jeweler, and then you can go ahead and get some money for that. Or you're going to have the digital way, which is going to be via stocks and ETFs. So you could buy shares that represent gold. So in the stock world, it's going to be the GLD. So if you want to buy gold shares, you'd have to look up GLD. You could also buy gold options as well too. I have some recaps posted on my channel, some wins I've taken on that. Used to trade that a long time ago. And SLV is going to be for silver. And then for miners, as far as the mining industry, in order to mine the asset classes of gold and silver, you can look up GDX. And the pros of them have very high liquidity. A lot of people trade gold, from Forex traders to stock traders, options traders to futures traders. Golden is extremely, extremely popular asset class that's traded. It's low fees. It's easy to hold in the Roth IRA as well too if you just want to buy shares and hold. And the cons, you don't own the actual metal. So if the fund fails, then you have a paper claim, not actual gold. And as far as investing in the miners, it gives you leverage. So if gold is up 10%, miners might go up 30%, but they have risk as far as fuel costs, strikes, etc. And the physical side of everything, you have no counterparty risk, total privacy, and it's useful in extreme disasters. That can be true and also not true. Your house could burn down, etc., and then it could be hard to get to the gold bars. The gold could maybe survive depending on how long it's in the fire, but still, that could be relative to a lot of cases. And cons, you got to worry about security. You can't be letting everyone know that you got a whole bunch of gold bars stacked up. That's not going to be ideal. You got to keep that very private between just you and your family. And storage issues too. When you start stacking up more gold bars, having a safe might be hard if you're trying to move houses or something like that, etc. And it can be hard to sell quickly. You got to go to the smelter, melt it down, and then go to the jeweler, get an exchange rate on that. And they might give you a lower price than you might actually should get because they're trying to make some money too. You know, it's the world. We're all trying to make some money. And tax. So it's often taxed as collectibles too, which is a 28% capital gains in the United States rather than stocks. So a strategic allocation. So how much is going to be enough? So most financial advisors suggest precious metals should be a hedge, not your whole entire piece of the pie. So be conservative, 5%.
Okay, it gives you just enough insurance to sleep at night. If you want to have a couple of gold bars in real life, then that would be fine too. And just keeping your asset classes divided in certain scenarios could really help you, especially during hard times. You might not have access to the internet, and you might need to go take the gold bar to someone who could exchange it for either some fiat currency or a car or just an item that you need. So having multiple sources of backup plans for your income is really, really going to help you. And gold pays no dividends if you do just have the actual gold bars. It just sits there. So try not to just invest 100% of your money into gold, or you're going to miss out on compound interest. And not even interest, but just compound equity curve just in general. Whether you invest it into a stock that goes up year after year after year due to the fact that it's just making tons of profitable decisions, then you don't want to miss out on that. If you have one gold bar, 10 years later, if you don't do anything, if you don't get up and keep grinding and keep hustling, you're not going to have any more gold bars. Okay? But if you invest and put $1,000 into a stock, 10 years later, you could have did nothing and come out with $100,000. Okay, so having your asset classes divided is really going to help you. But there could be a time where you need to pull all your money out of your stock account and you have gold bars and you can exchange that, put it right back in your stock account. So there's going to be different scenarios and different floats, especially jewelry too. If you have any real gold jewelry that you don't care about, I would think about smelting it. Gold is extremely, extremely valuable, and just keep that in consideration. So is it a good hedge? I'm going to go ahead and say yes, but here's to clarify your goal. If you want to get rich, then focus on stocks, business, crypto. And if you want to stay rich and have protection over your purchasing power over decades, gold is going to be an extremely, extremely good standard. And if you want a speculative play to invest into, you could play gold futures. Gold is on Forex. Gold has stocks and shares you could trade. And same thing with silver too. So you could just make your decision in order to protect you over time. Take a look at the chart before you trade. If you're struggling with what to invest in, head over to Stackmode.net. Stay prayed up to God. Keep grinding. Catch you guys in the next one.
If you're not familiar with cryptocurrency or how it works, let's fix that right now, because today you're getting the ultimate beginner-friendly guide to cryptocurrency that actually makes sense. No hype, no jargon, and just straight clarity. Crypto isn't just internet money. It's a digital system that lets you send, store, and grow value without needing a bank. And the best part, you don't need to be a tech genius to start. You just need the right roadmap, and I got you. Step 1, I'm going to teach you guys how to understand Bitcoin. It's the foundation. Think of it like a digital gold, and know the difference between coins and tokens. Coins run their own blockchains, and tokens live on blockchains. I want you guys to understand risk management, because new investors lose money because they skip this. Never invest based on hype. Always focus on projects with real utility and making sure that it's putting a smile on people's faces in the future. Let's go on, let's jump in, and let's understand what cryptocurrency is, inshallah. So let's go on, let's do a deep dive onto crypto, and let's understand it, inshallah, if God wills. So why does crypto matter in the first place? It solves the trust problem. So traditional money relies on banks, okay? So the money sits inside the centralized bank system, okay? And within that system, people can only make certain decisions with their money. If you have 100,000 parked in the bank, you can't go to the bank and pull all of it out immediately. Same thing with certain apps like Cash App, Zelle, etc. There's going to be withdrawal limits, and there's going to be deposit limits as well too, okay? Due to the fact that the bank has to centralize and control everything, so that on their end, they have to have enough money to distribute to everybody, okay? Because the bank is using our money. So understand that if the bank freezes your account as well, then your money is going to be gone. Crypto solves all of this. It's censorship resistant. No government can stop a Bitcoin transaction, not a single one. You could be in any country in the world, and it makes it permissionless. That's the main reason why people fight so hard for cryptocurrency. It's because it's righteous. You know, everything doesn't need to be rat race and controlled, especially with other things being as controlled as they are. You know, you have to go pass emissions for your car before you can drive it and do certain things already. So the fact that we can't spend our money or withdraw our money how we want is a problem. It's a problem for me and a problem for many other people. And thank God we have the resolution for this. Cryptocurrency has come into play to solve this. Also, it becomes an inflation hedge too. So central banks continue to just keep on clicking print, okay? They print money constantly, over and over and over and over again. Keep on clicking the print button, okay? Making it worth less. And Bitcoin has a fixed supply, which makes it scarce, okay? And that scarcity
has a lot of value built into it, just like gold, diamonds, etc. Anything that has less or has a strict supply, okay, is automatically going to go ahead and be valuable. Okay, anything that has less supply than something else will be more valuable a lot of the times. And cryptocurrency is giving you true ownership on your currency. Okay, you could be in any country in the entire world, as long as the country has a bank account system that lets you withdraw from certain brokers, okay, such as Coinbase, etc. You can take that money from your cryptocurrency, spend that anywhere in the world. You don't even have to transfer it to fiat currency if you don't want to. You could easily just get your cryptocurrency, spend it on like a Coinbase card, and you can easily just spend your cryptocurrency straight up without having to transfer it to a centralized bank. So you can be completely your own bank. You have total control and total responsibility for your money too. So there's also going to be a couple things that come into play with this. So say things like fraud. If you make a transaction on mistake, okay, for a bank, you could call them up and be like, hey, I did this on accident. Could this be reversed? And a lot of the time, since it is a controlled system and it is technically kind of their money also, so they have the ability to, you know, pause things, freeze things, and make certain transactions not go through in case ever needed. And that could be in a good thing or a bad way too. Because say for instance, you're trying to send some money to a family member in another country. They could also decline that wire transfer if they wanted to. Cryptocurrency, nobody can decline your transactions, okay? Nobody, okay? You are gonna be your own bank and everything works on autonomous smart contracts. So on a normal bank, if you wanted to send $10,000 to somebody, once again, the bank has the ability to say yes or say no, okay? It's gonna be completely up to them. But if you send it via cryptocurrency, instantly it'll go ahead and get sent over, okay? But that's also putting more responsibility in your hands too. So because of that, you have to be making sure that you're sending your cryptocurrency to the right addresses, and you have to making sure you're sending the right type of cryptocurrency and sending it via the right type of networks, okay? So because you're your own bank, you have total control, okay? But that also means a lot more responsibility. So before you send certain cryptocurrencies and stuff like that, etc., make sure you confirm every single address that you're looking at. This way, you'll be able to ensure secure transactions and making sure that you're getting your money and making sure that your transactions are hitting the way that they're supposed to. Inshallah. So under the hood of everything, right, let's go and let's talk about the blockchain. So miners and nodes. The blockchain is not magic. It's a global network of computers, okay? So nodes, let's talk about them. Nodes are computers that keep a copy of the ledger. Okay, they verify that you actually have the money that you're trying to spend in the first place. Okay, and let's talk about POW. POW is going to go ahead and stand for proof of work, and it's how Bitcoin is created. Okay, so specialized computers that secure the network using energies, and they compete to solve math puzzles and problems to add the next block. Okay, so what's happening is these computers are constantly running problems through it, okay, trying to figure out what is going to be the next block that needs to be added, okay, into the hash, etc. Okay, and these computers take up a lot of power, okay. So consensus of it, 51% of the network must agree on the truth. Okay, hacking it requires impossible amounts of energy that just doesn't exist, because it would have to go ahead and determine and calculate so many different type of numbers and transactions in order to see what next block would even have to be added into the equation. Okay, so mining is how Bitcoin is generated, okay, and not by pickaxe mining. Okay, so check it out. Just like we know diamonds and gold, you need like an actual pickaxe or a drill, etc. Okay, and then people go out there, find it in the caves. Bitcoin works a little different. Okay, the computers have very powerful graphics cards and intensive hardware inside of them. Okay, and what they're doing is that they're solving problems constantly. Okay, so it's answering like 2 + 2 and trying to find the equal sign. Okay, testing out every math puzzle. Okay, trying to find the next block. Okay, and when you do that, okay, you get rewarded with Bitcoin. So that's how Bitcoin is created. People have powerful computers that take up a bunch of energy, okay, which is why it can be expensive to mine Bitcoin as well too. And then those computers are trying to solve complex problems. Once those problems are solved, then the miner is then paid in Bitcoin. And that's just how it works, and that's how Bitcoin is created.
So let's go over the big three, right? The big three. So the big three are going to be Bitcoin, okay? You're going to have your Ethereum and Solana, and then you're going to have your stable coin. So let's jump into each one of these and break it down. So you're going to have your Bitcoin, okay? Bitcoin is going to be the most valuable cryptocurrency as of today's date, due to the fact that it's not infinite, okay? There is a limited amount of Bitcoin. There's going to be 21 million Bitcoins available. It is not an infinite cryptocurrency such as Ethereum, Solana, etc. Okay, so that's why Bitcoin right now is the most valuable cryptocurrency. Okay, it's slow, secure, and most importantly, scarce, giving it baked value already. And it's not for buying coffee, okay, but you can if you want, but it's for preserving wealth over decades. Okay, so think of it as digital gold. So understand that Bitcoin is here to fight against inflation, because if these dollars keep going up, say 10 years ago, right? Say rent was $700 at one place, okay? And in today's day and age, say the rent is $1,400, okay? That means that the rent doubled, okay? But did people's income double, okay? That might not always be the case. So when you park your money into an asset, something like cryptocurrency, okay, year after year after year, your money's going to grow just as inflation decides to grow too. So it's going to give you a hedge against inflation and being able to protect yourself from the economy going in a downwards direction, inshallah. So let's talk about the smart contracts. So just like we talked about, Bitcoin was created by computers that use power, okay, POW, proof of work, okay. Ethereum was created based off of staking, okay, POS, okay, which is going to be a lot less economy taxing system in order to create cryptocurrency. So pretty much Ethereum came out to prepare for when Bitcoin does go away, okay? So the computer, okay, it's programmable money, and apps like DeFi and NFTs are built on top of these, okay? Think iOS or Android. And for Solana, the reason why Solana is going to be really important too is because it's going to be used in order to trade meme coins, okay? I'm sure you guys have heard of that. And meme coins can't be traded until you have Solana first. And then you're going to have utility and stable coins, okay? So this is kind of going to be like the fiat currency version of cryptocurrency. So instead of parking your money into a token or coin or something like that, expecting some profit returns, okay, stable coins such as USDC stay at $1, giving you a safe place in order to park your money in the cryptocurrency world without it fluctuating up and down all the time. So utility tokens like Link provide data feeds, and meme coins like Doge are communities built on certain factors, okay? So figure out what you want to invest in, figure out what works for you, and let's go and let's keep going. So whenever you start trading cryptocurrency and you generate a wallet on whatever broker you choose, okay, you're going to get a 12 to 24 word phrase, and this can be used to log into your account. So if you don't want to sign in with a usual email and password, because you know those can get hacked, etc., okay, you can use a seed phrase. Okay, it's going to give you 12 to 24 random words, and you can keep these words safe in order to get back into your account. So with cash, say the problem with that, you know, if you have a bunch of cash stashed in your house, it can get moldy, you can get robbed, the house can catch on fire, etc. A lot of things could happen to cash. Okay, but with your cryptocurrency, it's like keeping your cash, but digital. Okay, and it's not behind a email and password. It's going to be behind your seed phrase. Okay, so you can write your seed phrase down. Okay, it's going to be 12 to 24 random words. Make sure you write them all in a row. Okay, they're going to be listed like 1, 2, 3, 4, 5 to 12 to 24, etc. Okay, so make sure you have the order correct, because that definitely does matter. Okay, try and write your seed phrase on a piece of paper, a notebook you have, whatever, okay, and never screenshot it, okay, never screenshot it. Okay, Apple, people can get into your iCloud, and then people can get access to all of your funds. Okay, try not to type it onto a online computer software, like no Google Docs or anything like that. If you do, try to just keep it on a flash drive. You can do like a notepad, .txt file, something like that, and you can password protect it with 7-zip, WinRAR, anything like that too, if you want it as well. Just try to keep it as secure as possible. So if you lose this, your money is going to be gone forever. Okay, no support desk can help you. Okay, it's just going to be gone, out of existence. Okay, and it cannot be recovered. So make sure you guys are keeping your seed phrase secure. Keep it safe, because this is going to be your longevity. This is going to be your money, and this is what's going to take care of you. Okay, you guys don't want to be losing this. Okay, inshallah. So let's talk about the trade-off of everything. Okay, let's talk about CEX versus DEX. Okay, so CEX is going to be centralized. Okay, so whenever you're thinking CEX, think of the normal traditional bank system. Okay, so pros, right? You got some easy customer support. It's pretty easy to get your money back whenever things happen, but there's also going to be things that come into play. Okay, sometimes you might have random 3 a.m. maintenance. There's been times where my crypto had to come clutch because my centralized bank is doing maintenance. Okay, but my cryptocurrency was available, thank God. Okay, there's also been times where your funds can be frozen. Okay, and there's also going to be that Monday through Friday window in order to get paid. Okay, so times correlate versus when you get paid. On the decentralized network where cryptocurrency is traded, doesn't matter. Everything is based on the peer-to-peer transaction system. Okay, if I send 10K to somebody, it'll most likely be in their account within a couple, or their crypto wallet within a couple of minutes or hours. Okay, if I send someone 10K via wire transfer, okay, it would have to be via Monday through Friday. Okay, and it would have to hit at like 6 a.m. or like 9 a.m. or something, some time like that. And keep in mind, the centralized bank, if they wanted to, could completely decline the transaction. Okay, decentralized, everything is peer-to-peer. No one can decline anything, but no one can also recover your mistakes if you make any. So it's decentralized, okay, giving you total privacy, you keep custody, and instant swaps are going to be available. But understand that there's no customer support. Okay, if someone says, yo, send me 10K Bitcoin, and you send them Solana, that's it, man. Okay, you have to understand that that's it. So there's an extreme responsibility. So make sure you guys are staying humble. Make sure you guys are staying focused. Make sure you guys are waking up and praying to God, most importantly, and keeping your head on straight. Okay, you don't want to be having a moment of franticness or having bad mental health and making an accidental decision where you just lose all your cryptocurrency. Okay, please don't do that. And let's talk about what gas fees are. Okay, and I'm not talking about gas that you put in your whip. Gas fees are going to be every transaction that has a tiny fee attached to it. Okay, that's going to be a gas fee. Okay, any crypto transaction that has a fee attached to it is a gas fee. So on Ethereum, this can be like $5 to $50. On Solana, it could be like 0.0001. Okay, so your gas fees will go ahead and fluctuate depending on what asset you're buying and purchasing. So let's talk about the dangers of everything. Okay, we want to make sure we're being as safe as possible. So the fat finger error, this has happened to so many people. Okay, if you send Bitcoin, okay, but then they're asking for Ethereum, it's deleted forever, or some random person is going to go ahead and get the money. Okay, crypto transactions are completely irreversible. Always send a small test amount, especially if you're sending big amounts. Okay, if you're about to send 10K, see if $5 goes through first. Okay, if they get that, then go ahead and send it again. Okay, take your time. Do not make fast, overzealous decisions, because you can very quickly destroy and lose all your crypto value on accident too, is really the crazy thing. Okay, so if you want to trade cryptocurrency, you say you're ready to be your own boss, be ready to stand on business, CEO. Okay, you got it. I believe in you guys. Manage your currency well. And social engineering. So hackers won't break the blockchain. Okay, what they'll try to do is trick you. Okay, they pose as support agents or send fake website links. Okay, or what they'll try and do is be like, oh, here's a 12 to 24 seed phrase, word seed phrase, and you can come in and try to log in and you'll get all this money. What they want you to do is deposit into that account. They have access to it, and then they go ahead and clear the account. Okay, do not log into anybody else's crypto wallet. It's not worth it. Stay logged in on your wallet. Stay focused on your bag. Don't try to rob nobody. Don't try to get no money from nobody else. Stay focused on you and yours and what God has planned for you. And bear markets. So crypto sometimes has winter cycles, just like the stock market, where prices can drop 80% for certain cryptocurrencies, especially if they're not valuable, and stay down for years. So only invest money that you can afford to lock away for plenty of years. Okay, you should be on the brink of almost death before you pull out your money from your cryptocurrency wallet. Okay, try not to pull out your crypto wallet. try to live off your credit card, okay, and invest all your cash into assets if possible, inshallah. So the psychology behind everything, okay, so time in the market, okay, is going to be a lot better than timing the market. Okay, so many people are trying to time the market for exactly what it is every single time, but understand that sometimes you just gotta be in the trade for some time. Some of you guys are closing your trades way too early and wondering why you're not profitable at the end of the year. Okay, you need to have your life together outside of the markets so you can actually sit on your plays for some years and build some actual capital. So don't buy at the top. We're going to go ahead and go over some chart work too at the end of the presentation, just so I can go and let you guys know some quick sauce. So try not to buy at the top of all-time highs. Okay, wait for market to dip down, okay, and then catch the sweep back up. Okay, but do not buy at all-time highs, because a lot of the times you're just going to go ahead and eat a pullback straight down. So the DCA strategy, DCA stands for dollar cost average. Okay, so you can go ahead and set up an auto buy. You can set up a certain amount of money per week too, if you wanted to. And even if you did buy all-time highs, because your cryptocurrency is really going to be more like savings more than income. Yes, you're still going to be making great income after the years do pass, inshallah, but for the most part, it's really going to be more of your savings. So even if you did buy all-time highs, you can have that consistent amount that you're constantly investing in. Okay, I don't care if you do $50 a week, $20 a week, $500 a week. Just choose whatever's comfortable with you for your income level. Okay, and come back in 5 years. Okay, and I'm telling you, most long-term investors who don't even look at the charts outperform 99% of day traders. Okay, and that's a very, very, very true statistic. And you guys are going to be able to touch millions, okay, if God wills, without stressing yourself out, by just making the right play, by just watering your seeds today. Okay, so start growing your account, be patient, and keep going. So here's some golden rules for cryptocurrency. If it's not your keys, it's not your coins. Okay, if you have your cryptocurrency parked into a broker that's email password and doesn't have any recovery keys or secret keys, it's not really your cryptocurrency coins. If the broker shuts down, then boom, it's not really your true crypto in your hands. So I recommend like Phantom Wallet or anything like that, where you guys can digitally store your crypto very, very safe. You can also store them on a hardware physical device as well too, where it be the USB drive or whatever. And the golden rules of everything, right? Never share your seed phrase. Okay, your seed phrase is going to be that 12 to 24 word phrase. Okay, that's going to go ahead and keep your account locked. Okay, you do not want to be giving out your seed phrase. Okay, you lose your seed phrase, things can get difficult. Okay, no customer support you can call to just get your money back. So ignore direct messages. Don't log in with anyone 12 to 24 word seed phrase thinking that you're going to get money. Stop. Okay, purge any type of mindset where you're thinking about stealing or getting quick, easy money. Purge that. Okay, invest only what you can lose. Make sure you guys are paying your bills first. Don't think you're about to invest in a cryptocurrency and you can ignore all your bills because you're about to hit the best play ever. That's not how a real investor would play. Okay, structure your life, get it together, and then come onto the market. Okay, and do your own research. Okay, don't just get in because your friend said, yo, this is gonna be the best coin ever. Don't do that. Okay, because then you're not gonna have enough conviction and confidence to hold through volatility. Okay, if this is the play you've been researching for weeks, month after month after month, if price dips, you're gonna have so much conviction and you might even re-add. Okay, so it's gonna be a lot of things when it comes to buying cryptocurrency. So let's go in how to read the chart. So reading the chart is going to be quite simple. What we're going to do is focus on our higher time frames. Okay, so what I'd like to go ahead and do is go for my monthly time frame. Okay, then from there, I'm gonna go to my weekly time frame, daily, and then 4 hour. Okay, so we're gonna go from the monthly to the weekly to the daily to the 4 hour. Okay, and when we do this top-down analysis, we're gonna be able to get the full bird's eye view of absolutely everything, just so we can see the full perspective of the market. So always start off on your highest time frame first, then scale down. Okay, and the smallest time frame I'm gonna go to look at the cryptocurrency chart is going to be the 4 hour chart. Okay, because cryptocurrency, you want to be holding for weeks, months, and years. So focus on your higher time frames. There's no reason why you should be caught up on the 5 minute, 1 minute, 15 minute trying to trade cryptocurrency. It's not the wave. You need to have the full higher time frame picture so you know how many years, months, weeks to hold for, etc. Also, before we get into the chart, understand that cryptocurrency always wants to go in an upwards direction. Okay, most people can only buy, and this is the same thing for stocks too. Most people can only buy. Okay, most brokers don't let people short cryptocurrency, etc., unless they're trading crypto futures. So the fact that most people can only buy means that it's meant to go up year after year after year after year after year. Okay, so we do not want to be buying at all-time highs if possible. Okay, so what you want to do is wait for what's called a pullback. So pretty much buying anywhere other than all-time highs. So all-time highs is going to be up here at this current level of 126,000 right now at the time of this recording. I'm on my monthly time frame. I can see on the monthly time frame this chart goes up year after year after year after year after year. This is a bullish asset. So I'm going to go ahead and go to my weekly time frame. Okay, and I understand something about the market. I know market always wants to go in an upwards direction if the asset is going to be valuable. Okay, which means people are always going to be looking for an opportunity to buy. Okay, because they expect for it to go up year after year after year after year. So with that logic, I know that price always wants to go and head to break previous all-time highs. Okay, that way it can continue to keep going. Okay, you can see all price does is break all-time highs. Okay, and then it'll go ahead and fall below it. Okay, and then make some new all-time highs. Okay, we'll fall from there, and then one day, inshallah, we'll try and get above this all-time highs too. Okay, and then we continue to go in an upwards direction. But within the chart, we have to understand that price has to go up in order to go down, and price has to go down in order to come up. Okay, so price will always hunt an area of resistance above current price, or it's going to go ahead and hunt an area of support above current price. Okay, so always know that. Okay, your price will always hunt an area of resistance above current price or an area of support above current price. So the strongest area of resistance on every chart is going to be all-time highs. Okay, so you want to also be focusing on things that trend too. So if I'm looking at Bitcoin here, okay, I can see Bitcoin goes up year after year after year after year after year. If it's not trending up year after year after year after year after year, it's a lot of the times it's going to be a lot more straining to make some profit within the decade's time span. Okay, so next thing you want to be looking for is the V structure. Okay, so all your setups should look like a V. So here's what I mean by this. So the reason why I say the V is because market will always make the left side of the V for you. Okay, the left side of the V is going to go ahead and be what's called resistance. Okay, so whenever you see market falling within a downwards direction, that's going to be called resistance. Okay, so market will always make the left side of the V. Okay, it'll always make the left side of the V, and it'll also make the bottom of the V. So many people try to predict where market wants to bottom out at, and here's how you know if the true area of support is real. Okay, make sure you're on your weekly or your daily time frame. Okay, and then from there, once you see market deciding to curl in an upwards direction after falling heavily, okay, how you confirm to see if the V is real. So here we have the left side of the V. Okay, we got market trying to make a bottom of the V here. Okay, but we want to see if the right side of the V is real. Okay, so the whole right side of the V, all this whole gap up here to the previous area of resistance is going to be money that we're just waiting to collect. Okay, all of this is just going to go ahead and be money. So all your setup should look like a V. Okay, try to buy when market is curling in a upwards V direction. Okay, all your setup should look like you catching the right side of the V. Okay, so that's how you know when it's time to buy. Try to buy at certain lows. Okay, let market make the left side of the V, and let market make the bottom of the V. Okay, let market make the left side of the V, and then let market make the bottom of the V. After you're on the daily, you start seeing like 2 to 5 candlesticks going in upwards direction. Okay, that's how you know the support is true. Okay, you don't want to just see one little wick, okay, and see it going up and be like, oh my gosh, it's going up from there. But if you see multiple days in a row, okay, price hitting an upwards direction, the chances of this support holding is going to be really, really high. Okay. Especially after it dumped down for many, many, many days. Okay. So cool. So that's going to be the full guide on how to trade cryptocurrency. If you guys want some more one-on-one mentorship, head over to Stackmode.net. Come on and book a free call. Or you can check out my free course and ebook. Stay prayed up to God. Keep grinding. I'm going to catch you guys in the next one. Let me know what you think in the comments below. Peace. So a single rate hike doesn't just cool the economy. It changes the math for every crypto asset in your portfolio. And here's the reality. When borrowing money gets expensive, the big whales pull out of risk and run to safety, leaving retail investors holding the bag. And we're talking about a liquidity drain that can wipe out months of gains in minutes. If you want to survive the next FOMC meeting without ever getting wrecked, you need to understand exactly how this mechanism works right now. Let's go and let's talk about rate hikes. Inshallah. So let's understand when the Federal Reserve moves, global markets shake. And we have to understand the mechanisms of how traditional monetary policy dictates the fate of digital assets. And in this case, we're going to be talking about crypto. Let's continue on. So what is a rate hike in the first place? So it's the Fed's primary tool to fight inflation. Okay. And it's pretty much a tightening. And it's when they raise the federal funds rate, which is the baseline interest rate for the economy. And borrowing costs end up rising due to this fact. It becomes more expensive for banks, businesses, and consumers to borrow money. So it's going to be more expensive in order to get loans, certain private equity, and just borrow money in general. And spending slows. Higher loan costs mean fewer mortgages, fewer car loans, and less business investments, which means the economy would slow down. So less people being able to get large sums of money. Okay, it's not a lot of people rocking around with over 5-6 figures. So less loans logically would mean less cars being bought, less mortgages equals less houses being bought, which would then cause the people who own the houses to lower the cost of the houses to try to get rid of it and make some profit. So whenever rate hikes come into place, it really just throws off the whole balance. And the goal of the rate hike is to reduce demand to lower inflation prices. Once again, this often causes pain in asset markets because since people have less money, less free cash, people are going to then have less money to flow into assets. So imagine if the economy is a speeding car, okay? Imagine that as inflation. And a rate hike is going to be the Fed slamming on the brakes. And the goal is to slow down without crashing the car, which causes a recession. Now, there is going to be repercussions for this, upsides and downsides. So keeping everything in mind is going to be extremely, extremely important. But when a rate hike comes into place, it means that banks, businesses, and consumers are going to have a harder time borrowing money. And the seesaw, so the dollar index, the DXY, you might have heard of it. So there's a strong inverse relationship between the strength of the US dollar and the price of Bitcoin. This is also because Bitcoin is used as an inflationary hedge since the US dollar is going to be a infinite currency. Okay, it can continuously just be printed, and owned by everybody. Bitcoin is going to be a finite currency. Okay, so only a certain amount of people will be able to own Bitcoin. Once it's gone, then it's going to be completely gone. So rates up equals the DXY would be up, which is letting us know that this is strong US dollar and that the economy is trying to progress. And crypto down, okay, would be in relative relation to this, okay, equaling weak asset prices. So when the Fed rates hike, global investors buy dollars to access those higher yields. And a stronger dollar makes it more expensive to then buy certain Bitcoin assets, other cryptocurrency assets, and stocks, which suppresses the price. Okay, so while crypto is going down, though, gives you a really, really good opportunity in order to save your cash and buy assets at a low. Okay, try and capitalize and always buy assets at a low. If you analyze that the setup or whatever you're looking at is meant to go up year after year after year after year after year after year, if it's hitting a low point, invest at the low points. Stop buying at all-time highs. Okay, and don't just look at when something is going down as a negative thing. Price has to pull back in order to go up. So if price pulls back, see that as an opportunity. Ask yourself, is that going to be a good buy? And if you're struggling to identify setup, head over to Stackmode.net or just watch my videos. Okay. Take advantage of the economy. Okay. When economy or when assets are down, take advantage of that. I don't care if it's real estate, Bitcoin, stocks, whatever. When assets are down, you have to take advantage of that low, because just like everything else, price, inshallah, will sweep back up. And you don't want to be in a position to where like, oh man, I wish I invested at X, Y, and Z time when you could have. So take your action, do what you need to do, and make your decisions today. Okay, catch your assets when assets are at a low. When the economy is in shambles and everyone's panicking, that's the time you need to be buying. It's really important to try and have some cash on hand. This way you're going to be able to make some good decisions and invest into these investments when you need. So while rate hikes hurt crypto in the short term, the reason for the hikes might fuel the long-term bull case. Okay, and the long-term counter narrative. If inflation wins, then the Fed raises rates, but inflation could still stay in a high stagflation point, and fiat currency loses purchasing power rapidly. And the hard money hedge, and that's why a lot of people look to and run towards Bitcoin, for example. Okay, Bitcoin, yes, is good for profit, but you can make a lot of money quicker playing options or futures, for example. But just the fact that Bitcoin has a fixed supply, it gives you a sense of asset superiority. So once it's gone and somebody has it, all right, and if you weren't to have it, then they would have an advantage. Okay, so Bitcoin's fixed supply, it's 21 million, and it's designed as an escape valve from failing fiat monetary policy, since we know that over time, the US dollar is meant to cost, or it's meant to give us less and less and less purchasing power year after year after year after year, since more dollars will just be printed. And the pivot hope. So the market's always trying to predict when the Fed will stop hiking and start cutting. And that's going to be the pivot. So the moment they pivot, crypto usually rallies super duper hard, because once they start pivoting, people are going to be like, all right, you know what, economy's safe. And then people are going to go ahead and start taking advantage of the buys. So mix in the economy news with the charts, and you guys are going to be able to make some really, really great decisions and some great choices. Use your higher time frames as well too. So you can check out the FOMC meetings on forexfactory.com, and the days the Fed announces rate decisions are historically the most volatile days of the year for crypto. So FOMC, a lot of times, is when they release a bunch of really important rate decisions and reports. And cash, understand that cash is going to be a position. You don't always got to be in the setup all the time. Cash is a position. So in a high rate environment, holding stable coins, right, the earning yield, is often better than forcing bad trades in a bear market. You just don't need to do that. Don't do that, actually. Okay, don't force trades in a bear market. Just wait for price to pull back, wait for buyers to step in, and then go ahead and catch the low. Catch the low. Once again, if you're struggling with finding the right setup, head over to stackmode.net and look for decoupling. It's the ultimate bullish signal, and it'll let us know when it's time to buy. So when tech stops drop on Fed news, but Bitcoin holds steady or rises, a lot of things are going to let us know when it's time to buy. Okay, so if you see tech stops dropping really, really hard, and then the Fed announces some certain news, you start seeing rallying, put that together with your higher time frame analysis and put it together with the charts, and you can start seeing like, okay, price is ready to buy. Or after big events like CPI and stuff like that, etc. A lot of people hold their cash until these big news events come out, and then you'll start seeing market make its move that it needs to be making. And sometimes you'll even see market, let's say, for example, trending in a downwards direction weeks or days before this news event comes out. Then when the news event comes out, price will go ahead and blast in an upwards direction. Okay, so make your decisions patient ones. Okay, make sure they're extremely patient decisions, because the more patient you are, the better setups that you plan, the more money you're going to be able to make, inshallah. All right, I'm going to catch you guys in the next one. Stay praying to God. Keep grinding. Head over to stackmode.net for all trading education. Peace.
So we're going to be covering support and resistance extensively, and how to pretty much just trade it within a logical way. Okay, so just like we know, this is a left to right chart, especially when it comes to the crypto markets and the stock markets. Price, especially if something is profitable, right? Whether people are buying a large amount of the cryptocurrency token or buying a large amount of a stock, all right? Then we know that the chart is going to increase in price, okay? For the increase in price is just showing that more people are investing into it, okay? So that's pretty much all it's going to mean whenever you see market going in an upwards direction, is that people are putting money into it and collectively putting money into something, Okay. So let's talk about support and resistance. So now that we know that everything comes from buying and selling, we can understand support and resistance easily. Okay. So first, we'll start off with resistance. Okay. So resistance. So resistance is going to be an area where price decides to top out and fall in a downwards direction. So once again, resistance is an area where price tops out and falls in a downwards direction. Why does it do that? So just like we covered, it's a left to right chart. So I can see that the price action from way left over here is lower than this area of resistance up here, okay? And that's due to the fact that price went in an upwards direction, okay? So price is not just gonna go up forever in a straight line. Occasionally it's gonna have to come down in order to make some higher highs, okay? So when price decides to make corrections and fall in a downwards direction, that's called resistance. And resistance is created from people selling. That's all it is. So it's people selling, okay? So whenever you see market going in a downwards direction, that's going to indicate that people are selling in a wave, right? So it's a bunch of people selling at once, okay? So that's resistance. So whenever you see resistance, think of selling. Now let's talk about the opposite of resistance. Buying. So if you ever see market decide to make a particular low after falling from an area of resistance, so let's say we have this area of resistance up here, where we can see price decided to top out and fall in a downwards direction, okay? So price made this top, staircase downward, okay? That's gonna let me know that this is an area of resistance, okay? And whenever I see market bouncing from a bottom or a low, I'm gonna see market pushing in an upwards direction. And that's happening because people are buying. And whenever people are buying in an area, that's going to indicate an area of support. Okay? So whenever you see buying happening and price going in an upwards direction, that's going to indicate an area of support. Okay? So support indicates buying and resistance indicates selling. Nice. So that's the logical reason between these two. Now, let's talk about time frames. So what a time frame is. Each one of these candlesticks are going to represent a specific time period, depending on the time frame that you're on. So on TradingView in the top left here, I'm going to be able to select what time frame I want to look at. The best time frames that you want to be using are going to be your higher time frames, okay? The HTs. So your higher time frames are going to consist of your weekly. Your weekly time frame is going to be a good time frame to just go on, give you a broad overview of the market, okay? Because there's going to be a couple of rules to things that we don't trade, okay? We don't really want to trade when price is at all-time highs. And we're going to get on our weekly to quickly see if something at all-time highs, or if it has resistance or support above it, which means price has something to aim towards, okay? So we're going to keep jumping into that. So after the weekly, you want to go to your daily. Your daily time frame. This is going to be your really important time frame. Just to eyeball things a little closer, okay? And it's really going to be important for like your take profits and just looking at entry levels. Then after your weekly and daily, you can go to your 4 hour. Okay? You don't really want to go lower than your 4 hour time frame when it comes to taking, especially swing trades that you're going to be holding for days, weeks, and months. Because the smaller time frames could tell you a completely different story. That's not true. That's the institutions, hedge funds, and banks aren't playing, which we want to be playing with them. Okay, so unlike business where you want to be a unique person, trading is the complete opposite. You want to be a sheep in trading. Okay, you want to do what everyone else is doing. So if everyone else is buying, you don't want to be the only one selling. If everyone else is selling, you don't want to be the only one buying. Okay, unless you're buying at a specific area that's a dip.
Okay, but in hindsight, if you see market knifing hard, you don't want to be the person trying to click buy, okay? Because you might just be catching a falling knife. So we're going to be focusing on our weekly time frame, our daily time frame, and the 4-hour time frame. The higher time frames are going to be our bread and butter. They're going to let us know, okay, this is the true price action. This is the true direction where price wants to move. This is the true story, okay? Because market's a big story. It just goes up and down, repeating levels and doing its thing over and over again. Okay, market is a story. Keep that in mind, please. So let's talk about some more logical things, okay? Before we jump into the market, okay, let's understand something. Market always wants to try and break all-time highs. So what is all-time highs? So all-time highs is the highest price available, okay? So if I get on my weekly time frame here, let's say I'm on Bank of America and I zoom all the way out, I can see that this area up here is the highest point of the area of resistance. The highest area of resistance is going to indicate all-time highs. Okay, so once again, the highest area of resistance is going to indicate all-time highs. And understand that price is always looking to break all-time highs, no matter how low something drops. Okay, if it's dropping, that just means it's not valuable. But I'm telling you, if they can make a play, have a bunch of customers come in and revive their company and make it go to all-time highs, they would do that. Okay, so price, no matter what, it's always looking to break all-time highs, no matter how low something drops. Okay, so especially when it comes to the crypto, especially crypto and stock markets. Crypto and stock markets. Okay, nice typing. So, especially the crypto and stock markets, they're always looking to break all-time highs. Always. Okay, there's people behind these companies employ people, and these tokens are coded by people who are trying hard, okay, to help the economy have a systematic, decentralized currency exchange, so we can send however much we want to anybody, to anyone in the world via cryptocurrency. Okay, so there's real people behind these things and real reasons why we want them to go up in value. Okay, it's not just, oh, it's going to go up, it's going to go up. There's real legitimate reasons why these things are going up. Okay, these are economy driving things. Okay, so let's talk about it. So price, no matter what, it's always looking to break all-time highs, no matter how low something drops, especially crypto and stock markets. So that means that price is always looking to, so no matter how low something drops, price will always look to break resistance. Okay, so it's always looking to break resistance, so we know that. Okay, so especially when it comes to crypto and stocks, I'm having a bullish mindset. If I zoom out on my weekly here, I can see that price way over here is way lower than price way up here. Okay, if I go to any other half decent stock and I click on it, okay, it'll be the same exact thing. Okay, Cisco, for example, a good network company, okay, really, really good tech stock. Same thing, if I zoom out on my weekly, I can see that price way over here is way lower than price way up here. Okay, so people just made infinite money by just buying and holding, buying and holding. That's the goal of the stock market, crypto market. People just want to make money by buying and holding something that has value. So, especially when it comes to crypto and stock market, when I'm playing support and resistance, okay, and I'm looking at levels, I want to think of it as a staircase, okay? I want to think of it as a staircase. So let's talk about the models we're going to be able to play, and then let's find the models on the chart. So, model number one, okay, this is going to be the best model that you could play, in my opinion, when it comes to trading in the market. Okay, there's going to be a couple things that you could do too, but this is going to be a dip catching model. So after market dumps down, you can buy certain dips, okay, by using this strategy. So
Once resistance is broken, if you see price come back down to it, so this is going to be resistance right here. So resistance, because we could see price fell down. And then you know what? Let me say price did this. Okay. Let's say price made a resistance there twice, right? So twice, 2 areas of resistance here. Okay. Then price decided to break out of the area of resistance. Whenever you see price break past an area of resistance or support, that's going to be called a breakout. Okay. And then let me say there was an area of resistance up here. Okay. And remember, I told you price always wants to chase an area of resistance. Okay. So let's say there's some more resistance up here. So price fell down. Okay. It created some support. Okay. Price came down, found some support. Decided to bounce, say about 3 times in the same area. Once, twice, 3 times. Okay. So we have this little range right here where you see price creating support and resistance in each other. Okay. Bouncing over and over. 1, up, down, up, down, up. And then instead of it coming down, it broke out. Okay. And what price is going to try and do after a breakout is it wants to hunt the next area of resistance. So let's say price did this. Okay. And then let's say price came all the way down, right? And let's say it came all the way down to this same area of the resistance originally broke out from. After it went up a little bit, so people who trade the breakout are like, oh man, I thought I was going to go straight to the resistance. But at the original area of resistance, okay, let's say it turned into support. And that price started closing, boom, 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 boom. Okay. So you see price turn support at an area of old resistance that was broken out from. That's going to be a really, really, really surefire entry. Okay. And the reason why this entry is going to be really, really good too is because there's going to be a lot of volume, a lot of buying pressure. A lot of people are looking for this type of setup, and it's going to fit the staircase methodology. Okay. So once you see resistance get broken, turn into support, you can take an uptrend trade. Okay. And same thing for other markets as well too. Okay. If you, let's say you take a short, for example, which I would do on like Forex, okay, because the market is way more sideways. So if I wanted to take a short, I would wait for an area of support to be broken. Okay, the opposite of it, of the long one. I would wait for support to be broken and wait for price to turn it into resistance and then take a downside trade. And if you're shorting, a lot of the time, price might want to meet with an area of, once again, resistance below current price or support below current price. Okay. So okay, so we have this area here, okay, of support. Hey, can you hear me? All right. Yeah, we have this area of support here. And then we're going to have this area of resistance. Okay, so support got broken. Support got broken. Price did the breakout right here. Okay. Once again, it's a breakout because if price breaks out of a higher time frame area of support or resistance, that's a breakout. Okay. Then price decided to turn the original area of support into resistance. Okay. And then again, okay, resistance again. Okay. Then we have 2 areas. So we have these 2 areas of resistances here mirroring each other. And due to the fact that
this area of resistance got created off of this support here. Okay, so it all works in a big sequence. So we're gonna have the original break and retest, and then we have support turning into resistance for the downside. Okay, then let's talk about Model 2. Okay, Model 2 is pretty simple. Okay, you're either gonna have price bouncing at a simple area of support, and then it's gonna go in an upwards trend. Okay, so support, and then price going up in an upwards direction. Okay, or you can have an instance where resistance just simply mirrors and falls down from each other. Okay, these are just simple reversals. And the reason why these are important is because a lot of the times these are going to be your take profit points, areas of supports and resistance. So knowing that price wants to reverse at the areas like this and mirror is important to know for take profits. Okay, because if you're taking a long expecting price to go in an upwards direction, you want to close at the resistance. You don't want to wait for a breakout, because breakout might not happen. Price might fall all the way down to Narnia before it comes back up. It'll come back up one day, inshallah, but it might fall all the way down to Narnia. We don't gamble here. Okay, we play logically. Okay, I'm never going to teach you any high risk gambling methods. Okay, I want you to be logical and win majority of your trades that you put down. So that's why we're going to be playing those two models. Okay, so let's talk about it. I'm going to go ahead and pull up my screener here, and let's just go ahead and find some setups. Okay, so this is going to be just an example here of how you would get on the charts and find your setup. So what I would do is I like to start off on my weekly time frame. Once again, my weekly time frame is going to be my eyes. I'm going to be able to see absolutely everything I need to see on one screen. I'm going to see if price is at all-time highs, how much progression needs to be made, and where I'm at. Okay, so let me go ahead and no, so I just use the weekly, daily, and the 4-hour. So yeah, weekly, daily, and 4-hour, and then I just see everything. Yeah, since to the beginning of time. Yeah. So yeah, ideally I'll look at that. Yeah, so I'll always look to see. So this is why it's important, actually, because you can have instances like this. Okay, so if I'm too tunnel visioned over here, right, it'll look like Citigroup is the best stock of all time. If I zoom out, I can see that price has highs way up here. Okay, but if I'm on the 15-minute time frame, okay, and I'm zoomed in, it's a whole different story. Okay, someone might think this is an uptrend. Okay, someone might think it's profitable, but you get on the weekly here, you can see how much the stock has declined. Okay, declined quite a bit. So this is why we're on our weekly time frame first. Lets us see absolutely everything we need to see, so we're not hiding anything. Okay, we got to see everything before we put down any type of trades. We got to make sure we see absolutely everything. Okay, so one, I ideally don't really like to play companies that, one, don't really make good money. Okay, so if a stock has declined this much within the last couple of years, that's not something I personally would be interested in. So what I'm going to do is go choose something else. Okay, so Cisco here. Okay, so I can see Cisco at all-time highs pretty much. So let me go ahead and check out something else. Okay, we have NEE here. So this trade worked out. I had this marked out a couple of weeks ago. It looks like we hit take profit today, a couple days ago. So yeah. So here's a good instance for me to go ahead and check out. Okay, so say price decided to create this area of resistance right here. Okay, so we could see price decided to break out. Okay, and what do we see here? Okay, the area of resistance over here got broken out of and turned into support, and then price went up to the next level of resistance. Okay, so once again, just like I told you, price will always try and fill in the gap of the next area of resistance. It'll always try and fill in the gap, okay? Because it's trying to make some new all-time highs. And we can see a great example of this right here. Okay, all-time highs getting made. Okay, the price all the way up here. Okay, so some new all-time highs have been put in. Okay, since we know that price wants to chase resistances, I put lines on top of these areas of resistances here. Okay, and I also had another area of break and retest right here too. So break and retest is when you see the resistance get broken, turn into support, or support get broken, turn into resistance. So check it out here. So look at this area here. Area of resistance got created, and I can even see this area here on the daily. Okay, and then I can see that turned into support. Okay, and then price decided to also meet up with this area of resistance here too, and then price broke out of this, met up with this area of resistance here, and broke and retest off of this. Resistance got broken, turned into support, and price went up to the next area of resistance. Okay, super duper simple. Okay, super duper simple. So let me go ahead and pull up another example here. So repetition is going to be just key here. Doing this over and over and over and over and over and over again. Okay, pulling up your watch list. Okay, pulling up a big watch list of stocks and just marking out setups, even stuff that you would never even buy. Just mark it out. Okay, mark it out, and just the constant repetition is really going to make you a much better trader. It's going to set you apart from a lot of people. While people are panicking when market is dipping, you're going to identify good opportunities to snipe certain lows. Check this out. So I can instantly see if something's ready to buy. Okay, and it just really comes with eyes and just being in the market for quite some time. Okay, so first thing I like to always do is mark my area of resistance above current price. Okay, why? Because I know price wants to reach there. Okay, so once I have my area of resistance marked above current price done, 99% of the work is done for me. Okay, on my daily candlesticks here, this is also going to be, there's a couple of formations you can play. Okay, break and retest, you're going to be able to play. Okay, or you can also just look at certain areas too. So we're going to have this certain low area here. And I could see price is establishing this area of support here. Okay. I also have this old area of resistance here. Okay. So it looks like price wants to hold this area here. Okay. So I can clearly see that price created this 2 wedge area. I also have this area of resistance created up here too. Okay. Go to my 4-hour. Then I have this area down here. Okay. So I have this area of support matching with this area of support. So just like we talked about, sometimes 2 areas of support will meet up with each other. Okay. And here's a perfect example of that. 2 areas of support meeting up with each other, doing their thing, trying to just bounce up. Here's another area over here. Okay. Just doing his thing, trying to bounce up. And one confirmation I like to always look for is you want to look for multiple candles in a row. So I'll be on either my daily candle, okay, my daily candle time frame, or my 4-hour time frame. So after I mark out my zones like this, I'll look at my daily here. I can see, okay, I could see price gave me a second daily candlestick in the same zone. Okay, so I see this candlestick right here, and then price went up, okay, with the second candlestick, and then price blasted up. Same thing right here. Price hit this area. I never, even if I go to my 4-hour, I never want to play the first candlestick that's in the zone. Okay. So what a wick is going to be the thin lines on the candlestick. So once I see the thin line on the candlestick in my area, that's going to just give me confirmation that price may want to bounce there. Okay. But a lot of the times I never want to play the first candlestick in my zone. I'm going to wait till price gets either above my zone if I'm longing, which means I'm waiting for price to go in an upwards direction, or below my zone if I'm shorting. Okay.
That's just what I'm going to wait for, because you don't want to buy at this wick and then price decides to continue to travel down, okay, and get destroyed. But if you start seeing multiple green candlesticks in a row afterward, okay, then you can depict, okay, you know what, price may actually want to go in an upwards direction from here, okay, or just multiple upwards candlesticks too, okay, just multiple upward candlesticks in a direction will verify like, okay, price might actually want to go up in an upwards direction here. And you already know where price wants to close at because you got your area of resistance marked out above there, okay? And we're always going to close at your resistance, okay? You know price wants to hunt it, okay? And all price is going to do, price is not about to leave all this empty space, okay? So price is going to try and fill the empty space. And this empty space is all of our money, okay? So all until up here, there's money to be made. Okay, I could see price made a support low, wants to travel up, and wants to come into this area here. Okay, so I could trade this options, shares, futures, anywhere, Forex, crypto. Once you know how to read the chart, you could trade anything that you want. So that's how I would take this setup here, focusing strictly on my higher time frames. And then, you know, if price decides to break out of this area too, and let's say you didn't even take this, right? Let's say you didn't take this fill, okay? So price made an area of support, bounced down here, thank you, and went in the upward direction, okay? Let's say price decides to create some mini resistance and then break out of it, right? If you see price break out of this area of resistance and turn it into support, you can also take that as an entry too, and then take it up to the next area of resistance up here. Okay. Keep it simple. That's all we're doing. We're just keeping it simple. Okay, not making market hard. Some people make market way too hard. And all you gotta do is sit on these plays, swing trade them, go grind business, go grind work, okay, and let our money just make money. And we just chill just by having the analytical ability to analyze some good trades. Let's analyze another good trade. Inshallah, let's jump into it. So I'm not gonna tunnel vision on my 4 hour. Okay, I'm gonna make sure once I go to a new stock, a new token, a new pair, I don't care what I'm looking at, I'm always gonna make sure I'm starting my weekly time frame. Okay, I gotta see everything. I gotta see absolutely everything. If I'm not seeing everything, then I'm gonna be lost in the sauce. Okay, I'm gonna be all the way lost in the sauce. So I can see here, price is at all-time highs. If I zoom all the way out, there's not much resistance above current price. Okay. So personally, I'm not interested in this. I like to catch big sweeps and gap fills, okay? Big sweeps is what I'm looking to play. Now, if I wanted to short this, for example, right? Let's say I wanted to short this. Personally, go to my weekly time frame, okay? I can see this area of support here already. Okay, I could kind of see the break and retest happening here. So cool, we have this area of support being reacted off of pretty much 3 times, okay? So we got one, and let me go ahead and do this over here. So we got the resistance over here, turning into support, into support, into support, okay? So if I see price come down and turn this support into resistance, then I know I'll be able to take this down. Okay, then I will go to my 4 hour time frame and I take profit. I would look for the downside. Okay, I know price wants to either, if I'm shorting, I know price wants to either look for an area of resistance below current price to bounce at, or an area of support below current price to bounce at. That's why shorting can be tricky, especially on the crypto and stock market though. Forex is a little more surefire, but crypto and stock market, it's going to be a little more tricky due to the fact that people are going to be fiending to buy every single dip that happens. So as soon as the dip happens, it's going to be getting bought right up. So shorting, you're going to have to close your trades faster. Okay. So yeah, that's just what shorting would be. So shorting though, if I were to take it down, I'd be able to take it down to like this area of support, maybe right here, okay? Because price would want to try this area again potentially, and then potentially see if it wants to bounce. So if I were to look for a short, we'll wait for price to break underneath this area of support, break, turn it into resistance, and then take it down to the next area of support. And then I'd maybe buy some calls again if the area of support starts hitting hard. Okay. But that's a lot of trading. You could also just wait for the pullback and just do that and take your one trade and keep your capital preserved. And just focusing on one setup that you're waiting for is really going to help keep your psychology in place. Mark out your one big play at a time. Okay, mark out your big play, trade, and wait for that to happen. Wait for take profit to get hit. Next big play, next big play, next big play. Okay, and just take your time like that. Let your account grow steadily. Okay, take it win by win, and really earn your position size too. Okay, so that's why it's going to be important to take it win by win. So this is why we just don't deposit, all the money we have. Let's take it win by win. We got to earn our position size. Okay. So let's go ahead in here. So I'm going to go to my weekly time frame. Start off here. Okay. I can see this area of resistance all the way up here. Okay. I can see that this stock makes money, goes up in a straightward line. Okay. Year after year after year. Upward staircase. Nice. Good stock, which means people are going to be cool to buy the dips. I'm going to go ahead and put an area at the area of resistance above current price. Why? Because I know price is going to try and make some new all-time highs. That's just how the market works. Okay. If Bitcoin breaks 100K, people want to see it at 1 million. If it breaks 1 million, people want to see it at 10. That's just how human beings are. We want to see bigger and more. Okay. God even tells us that sometimes our eyes are just never satisfied with certain things. Okay. So boom, check it out here. Okay, kind of same area. It's just extremely simple, and it's just about taking the risk. So here, I can see again, I have this strong area here of support. One area of support mixed with another strong area of support over here. Okay, and kind of another one over here too. Okay, we got 3 strong areas of support here. And guess what? Price looking to head upwards. Okay. So price bounced from the area, and now we're getting green candlesticks in an upwards direction. Okay, and we're above the zone. Okay, green candlesticks, and we're above the zone. Let me go ahead and get the ruler out, stretch it all the way up here, and we're going to take profit at this area of resistance up here. Okay, and you could take a profit at this area of resistance here too. Okay, so you could take it at this one, close here. Say you had 9 contracts, close 9 of them here, and then close the last one up here if you wanted to. Okay, taking it up to the areas of resistances. It's showing me that the support is verified. Okay, so what people have wrong psychologically is they get poopy pants like, oh man, I didn't get in all the way down here. You don't know if price wants to bounce down there. Okay, so trying to predict ultimate tops and bottoms is where people go wrong. But waiting for confirmed areas, like, okay, I see why price bounced here. Did price bounce here for a reason? Yes. Does price have a direction and a target it wants to go to? Yes. Is price trending in a certain direction that I want it to? Yes. Okay, let me go ahead and make my trade. And if people stop thinking so much, they'll make a lot more money. Okay, once again, like I say all the time, there are millionaires off the markets who've never even looked at the charts, or who barely look at it, or who don't even know what support and resistance is. So that means that this game is purely psychological. Okay, so after we know these levels, the game is purely psychological. Even these levels are psychological. Okay, so I know price wants to try and fill the resistance gaps because it's trying to make some new all-time highs. Why? Because there's people slaving behind this company, putting in 18-hour days, coding, working hard, employing people, paying taxes, etc. Of course, they want their company to go up in value so they can put more money too. Also, there's also incentive too for the stock market and etc. for stuff to go up. Okay, even Forex currency pairs. Okay, the country wants to seem like they have the most valuable currency. Okay, so that too. And stocks, they want to go up because one, the companies get paid more. Okay, the more the share value is worth, the more the CEO is going to be worth. So when we hear the term billionaire and stuff like that, a lot of the times it's not billionaire and just straight cash sitting in the bank account. Most bank accounts can't even hold that. It's billionaire status based off of the amount the share value is worth because the company is so profitable. So stocks control everything, even a lot of the big net worth statuses that we think. Okay, so just the market is extremely important in general. Crypto, Forex, futures, all of it. It's important. So there's incentives for this stuff to go in certain directions. So once again, we can see price looking to fill this area here of resistance. And we're just gonna go ahead and try and just get ahead here. Okay? So let me pull up another example. And that's all I'm doing is just looking for gap fills and verifying if price bounced at a certain decent area. So let me take Nike, for example, right? So Nike, okay, we can see Nike here. All right, you know, we had kind of a hard fall. Nike looks like it was popping up here, okay, and around the 2021 areas here. Looks like we had a little decline, okay, but looks like price decided to, you know, it found itself, you know, it found its low, and I could see price making a low based off of this low potentially, okay, and price looking to kind of recover in an upwards direction. Okay, potentially. Okay. So let me zoom in a little closer so I can see the support down here. I can see why the support down here is being created. Okay, it's not just for no reason. I have another zone over there. Okay. So I can zoom in now. And say I get on my daily here. Okay, I can see price is having a hard time trying to get past this area of resistance right now. Okay, price can't really get past right here. Okay, so I can see price made a dip down. Okay, and looks like price kind of wants to break and retest from right here. So I'm gonna go to my 4-hour time frame. Okay, and let me go ahead and put a line at this low right here. Okay, let's see why this low is being created. Okay, whenever I just see price curling in upwards direction, it lets me know that, why are we doing that? Sometimes I like to also come up to my trading view line chart too. If I'm on my daily time frame and I start seeing some curve like this, if I see a curve on my daily time frame on the line chart, I'm like, oh yeah, like I think that's that, like that's that. Okay, so I can also see this kind of hump over here too. So the line chart verification is also something I like to do sometimes too. And that's why we're going to go to our 4-hour time frame, because you can see the candle's kind of floating up here. But if I go to my 4-hour, it's on the blue line. So we go to our 4-hour time frame for extending trading hours if you're looking at the stock. Okay. So we could see, oh, simple. Price create a resistance right here, create a resistance right here. Ooh, broke out of it. And price turned resistance into support. Yep. And then I could go ahead and I can take this option right now if I wanted to. As soon as the market opens, if I wanted to, I could take a take profit up here at this resistance first. Okay. Looks like price wants to verify this low here. Come on. Okay. If I wanted to buy options, I could come on here, buy a couple months out, and just do whatever. Okay. Let me go ahead and show a crypto example. Okay, and then I will click the area of resistance up here. Okay, looking for this gap to get filled. Simple. Just playing gap fills, that's it. Okay, and the reason why I'm closing at the resistance up here is because price could fall down heavy from there. Okay, but we know price has to meet there first for it to fall heavy. Okay, price normally wants to try things out twice. Okay, so cool. Let's go and let's check out some crypto. Okay, it's going to be the same thing on every single market that we're on. I'm going to go and just pull up some Ethereum. Okay, even Ethereum, for example. I'm going to get on my weekly time frame here, and I'm going to check it out. Okay, I'm going to get on my weekly time frame, and I'm going to go ahead and zoom in. Okay, zoom out. You can see price isn't quite at all-time highs, but I can see price made a little low. Let's see why. Okay, we know price wants to try and reach back up to these all-time highs up there. Okay, but I could see price just made a major dramatic sweep right here. Okay, let's see why price made this low right here. Ooh, I think I see it. Okay, ooh, I definitely think I see it. Okay, so check it. Let me go ahead and stretch this out a little bit. Okay, move this over here. And then I'm going to stretch this out over here. Okay. So guess what? I can go ahead and see, ooh, even more price action over here. Oh yeah, loving this area. So let's check out it. Okay. So once you see price mirroring itself, that's how you really know. Okay, price is creating support on these areas here. Okay, I got some resistance a little right here too. And then I also see some support being created right here again. Okay, it got broken underneath, but I could see price try to at least bounce here for a little bit. You know, it tried. So once again, price is always going to try and repeat itself for the most part. Okay. So price decided to bounce at that low down there, and then bounce at this low down here again. And as we can see, I don't normally ever buy in the zone. I like to wait for a candlestick to be above the zone. I have above the zone and I have green candlesticks in a row. Oh yeah. If I wanted to, yep, I have some green candlesticks in a row. And just even if the colors don't matter too much, if I just see a candlestick above my zone and then more candlesticks above the zone trending in the direction that I need to, oh yeah, because it bounced from here and I see it trending in an upward direction, creating multiple candles going up, then yeah, then I can see, okay, this is the rest of the gap I'd be able to catch for the Ethereum. Okay, catching the rest of the gap. Why? Because I know price is trying to meet up with this resistance here. It already created this low, and the earlier entry is really just, yeah, I wouldn't say earlier entry is really just how much profit you're going to get, but sometimes a later entry is safer and more probable. Okay, so they're both going to have pros and cons to both. Okay, if you get a later entry, you'll make less, but you know you'll probably win most likely 99% of the time. If you get an early entry, little lower win rate, but if you play it right, like you wait for a candlestick above or below your zone, then you'll know like, okay, price could potentially do what it needs to do here. Oh, check it out here. So let's talk about a short example here too, okay? So check it. So we have this area of resistance over here, right? So we got this area of resistance being created. We could see price decided to fall in a downwards direction from here. Okay, fell completely down. Okay, and then price decided to, you know, create this little low. Okay, it created this little low down here. So with this low right here, price decided to bounce in an upwards direction. Okay, we went all the way up here to this area of resistance. Okay, so this resistance here, price decided to break above it. Then price came down, turned resistance into support. Price tried to bounce, broke below it. Okay, didn't quite hold, but it did turn resistance to support. Okay. Then, after the support was created off the resistance, we could see support turned into resistance again. Okay. Support turned into resistance again. So support got broken out. Then price came up with this candle, wicked down. Okay. And then we have another candlestick underneath the zone, letting me know that price definitely wants to travel down. Okay. And then we have price traveling in a downwards direction here. Okay. Looking to meet up with this area of support down here potentially. Okay. A good area of take profit would have been this area of resistance here too, or even this area of support down here with these. Okay, where we could see price tried to bounce here. Okay, so we could see price tried to meet up with this area of support right here, tried to bounce, didn't quite last, and decided to keep trickling down. Okay, it tried to bounce a little bit at this area of resistance. Okay, broke down. Okay, so now we might try and go down to this area of support down here. Okay. So that's how shorting works too. Okay, shorting once again is going to be when you're taking a trade within the downwards direction. Okay. So cool. So that's going to be support and resistance, and that's going to be the class.
What's going on, class? Today we're going to be talking about the number one investing mistake that all beginners make. Let's jump into it. It's not about what you buy, it's about when you sell. And stop thinking that everything is quick and instantaneous. You're not going to get rich overnight. You're going to have to hold these positions for a long
time in order to actually build your portfolio. So be ready to be in the game for decades and years. And if you think that market's a casino, or you think you're about to come in, get rich quick and get out, you're not gonna make it. I'm just gonna keep it simple like that. But if you're someone who's ready to wake up, pray, be disciplined, be consistent, and ready to get to the next level and improve each and every single day, then the sky's gonna be for you. Let's go. So 1, the emotional market timing. The belief that you can consistently buy at the lowest point and sell at the highest point. Not true, okay? Sometimes you're not always gonna catch the lowest of the lows. You're not gonna always be able to sell at the all-time highs. People obsessed with catching the ultimate tops and bottoms normally don't typically make money, okay? They'll go through a panic cycle. So buying high, for example, investing after a big market run up, say Bitcoin, for example, people like to consistently buy all-time highs. Once they start seeing Bitcoin being posted all over the internet and stuff like that, it's at all-time highs, then people want to go ahead and invest in. And then they're going to go ahead and get pulled back on due to the fact that instead of investing at a certain low and catching the sweep up, they just decided to buy all-time highs due to hype. So FOMO is going to be the biggest mistake that certain people make when it comes to investing. Okay, being emotional and FOMO. FOMO stands for fear of missing out. Okay, so thinking that, oh, I'm not going to get money in this trade if I don't hop in right now. Like, relax. Most things go down just to come back up. Okay, understand that when market decides to go down, all it is people selling. People have gotten in from way from the beginning of the stocks opening or tokens opening. So people, of course, are going to take profit eventually as it goes up. Okay, and don't sell low. Okay, out of fear. Selling everything during a market crash or just a dip because the news tells you the sky is falling. Okay, you should have your stop losses in place, which is going to be an automatic order that's going to close your trade at specific areas in case your trade goes to an area you don't want it to. But otherwise, you can't just sell based off of just certain dips and stuff like that. Have a long-term vision, have a long-term plan. And a lot of you end up negative in P&L too, profit and loss at the end of the year due to the fact that you guys close your trades too early. If you don't give your trade room to breathe and really do its thing, you're going to consistently just keep selling for a loss over and over again, causing you to be unprofitable. And if you guys have noticed that, oh man, after market dipped down, a couple of days or weeks later, you'll notice that prices even past where it dipped from where it was high at before. Okay, so you have to realize that just by holding a little bit longer and being emotionally resilient through drawdowns, you could actually make a lot of money. And lock-in losses and missing inevitable recovery. Okay, so you're locking in losses every time you just decide to sell early. Every time you sell early outside of your plan or sell early thinking, oh man, I don't want to lose money, or you just see a little bit of drawdown, you sell early, you're locking in losses. You're not locking in gains at all. You're locking in losses. And that's not what we want to be doing. Okay. And make sure we're not chasing the hype. Okay. So when it comes to stock picking or crypto token picking, believe it, you can find the next Amazon or crypto based on a tip from a friend or social media may not be the most ideal answer. Make sure you guys are doing deep financial fundamental analysis. Make sure whatever you're investing in is profitable. Okay, this way other people are going to go ahead and invest into it as well too. Make sure it's having a future and make sure it's really making a way for people to have an easier time within life. Okay, because a lot of the times those companies and those tokens, what they're going to do is go ahead and put money in people's pockets since they're advancing the future. And putting 90% of your money into one risky asset can be really, really bad too. Make sure you guys diversify a little bit. I recommend you guys do between like 1 to 3 long-term plays. Okay, so even if you're a day trader, I recommend you guys still trade between 1 to 3 long-term trades. And the reality of it all, active traders consistently underperform the broad market index over the long term. So the devastating costs, missing the best days. So when market returns from 1980 to the 2020s, for example, the average return of the S&P 500, which is just the index of the top 500 United States companies, okay, just put into one big conglomerate called the S&P 500. You can decide to invest in that. And the average annual return of the S&P 500 is 10.7%. Okay, let's say investor A, for example, they didn't close, they held due drawdowns, they knew that market was going to fluctuate up and down, but eventually they know that the whole goal of the market, cryptocurrency or stock market, is for the price to go in an upwards direction. Because why? For the stock market, when people release an IPO, you have to understand that people are releasing the stock market in order for them to gain more funding for their company. Okay, so that's why we're buying shares to be participants of that. So they want their stock to go in an upwards direction. Same thing with crypto tokens. There's people putting in tons of work behind these projects and they want their crypto token to go up because I'm sure they have large reserve as well too. So investor B, let's say investor B missed the best 10 days. Okay, and their annual return plummets to 4.9%. An investor C missed the best 30 days and their annual return drops to 1.5%. The best days usually follow the worst days, and if you're out the market, you miss the recovery. Okay, so the best days usually follow the worst days. So what that usually means is after market dips, okay, you want to go ahead and try and catch the sweep at the low and catch the sweep back up. Okay, even if you don't catch the most bottom entry, if you start seeing market make a nice sweep upwards, especially towards an area of resistance, say all-time highs, because market's goal is always going to be trying to break all-time highs. Whether it be stocks or crypto, market is always going to be trying to break all-time highs. So always know that, put that into your logic. So the fact that you know it's always going to try to break all-time highs, any low, okay, that happens, especially after that, and market starts going in an upwards direction, that'll be a great time to buy. And that's the best days. Okay, when you catch the best days and you're able to catch nice sweeps consistently, you're going to be able to make a large percentage gain back. Okay, and taxes as well too can come into play. Frequent selling means you're paying short-term capital gains tax, which is taxed at your higher ordinary income rate. Okay, so that's also why there's going to be something called long-term tax gains. So I recommend you guys have 2 portfolios. I recommend you guys have 1 account for day trading. Okay, and make sure you guys are doing your short-term capital gains tax calculations on there. And then I recommend you guys have 1 long-term portfolio. Okay, and then your long-term portfolio can go ahead and be used for holding your shares, okay, your ETF plays, exchange traded funds, or even your crypto plays, etc., for just some years. Okay, and trading fees. While many brokers are commission-free, hidden fees like fund expense ratios and bid-ask spread friction still erode small, frequent trades. So the cure: embrace automated indexing. So 1, dollar cost averaging is really going to help you out. Do your calculations, pay your rent, okay, get some groceries, pay your extra bills. After that, see what you have left over. Okay, what do you have left over? After that, I want you guys to take that dollar amount, right, and divide that by like 50%. Okay, whatever you have left over after rent, groceries, and bills, take that 50%, because the other 50% stuff might come up. You might need gas for your car, emergencies, I don't know, Uber, something like that. So you don't want to just invest everything. So take 50% of whatever you have left over, okay, or 60%, however much percent you guys are comfortable with, maybe 70, okay, and take over that percent of leftover, and then you can go ahead and invest that into the market. This way you guys took care of all your priorities. You're not going to be trading out of desperation. Okay, you have some money left over in case you want to get some food, you need an Uber, you need a bus ticket, you need some gas for your car, something happens. Okay, you guys have some money left over, and then the remainder of that you can go ahead and safely invest. So you can go ahead and buy the market as well too. You can use your funds to buy low cost stocks, or you can buy index ETFs, exchange traded funds that track broad market indexes like the S&P 500 or the total market, VTI. And diversification, it can remove single stock risks if you're wrong, especially when you're a new trader. ETFs can be a really good way, but single stocks are also going to be a fantastic way to make some profit too. To do your research and make sure you guys know what you're investing in. So patience, the compounding engine. Your primary job is to give your money time to work without interruption. So during year 1 to 10, your growth is going to be pretty slow. Okay, this is going to be when you're running up your money. Okay, you're taking it from like $100 to your first million. Okay, I say within the first 1 to 10 years, then 10 to 20 years, you should be able to take it from $1 million to 10 million, and then 20 years plus 10 million plus. Okay, but you guys can also shatter these time frame way quicker than what I'm saying here. But your growth might be slow at first. Your returns are mostly going to be from the money you personally contributed, and the discipline is going to be just compounding over time. Once year to 10 to 20 hits, okay, or even year 5, even year 3, growth is going to accelerate and returns start being driven by money and making more money, compounding. And this is when your long-term plays are really just going to be paying you guys. Even just 50K invested into certain ETFs will go ahead and pay you guys back. And years 20, it's your exponential phase. The interest earned vastly outweighs your new contributions, and time is going to be your largest contributor when it comes to investing in the market over the time like this. And the goal is not maximum return, but the maximum time in the market. Keep your account alive. The more you guys keep your account alive, and the more you guys focus on the trades that are key to keep your account alive, instead of focusing on the trades that are just going to make you profit all the time, the better you guys will be at keeping your account. And the better that you are at keeping your account, the more consistently you can make some profits, inshallah. Because as long as your account's alive, you can make some profits. So the winning mindset. Boring trading is beautiful trading. There's no such thing as boring trading, in my opinion. Did you stick to your logistical plan? Okay, I know when I stick to my break and retest strategy, I'm happy. Okay, I love withdrawing. Okay, I'm excited. I'm ready to come into the next trade, and I'm really just coming into the mindset of, okay, I'm ready to dominate. And automate everything. Set up automatic deposits if you can too, so you guys don't even have to think, or put yourself on an automatic schedule. Be like, you know what, every 2 weeks I'm gonna invest this. Every week I'm gonna invest this. Every percentage of my income I'm gonna invest this. And set up automatic deposits and investments, and make saving the path of the least resistance. Okay. And diversify. Buy the market using low cost index funds. You can go ahead and own stocks as well too, and just do what you would like to do to go ahead and invest. Okay, make sure you guys are doing your research though, and think decades into the market. Even my day traders, think about reinvesting that profit into long-term plays. This way your money is going to always be making you guys money, because there's going to be a time where our brains aren't going to work the way we need them to all the time. Our bodies aren't going to work the way we need them to all the time. So let's grind now. Let's stay down now. Let's invest into the markets, and our money will be making us money for the rest of our life, inshallah. And you can ignore daily market movements. Your money is planted for the long term, and don't dig up the seeds. And the best investment strategy is the one you can stick to. All right, stay prayed to God. Keep grinding. I love you guys so much. You can head over to stackmode.net for all trading education. Catch you guys in the next one. Peace.
Yeah, let's go and let's talk about impermanent loss and DeFi. Let's talk about it, let's explain it, and let's jump straight into it. So what's DeFi in the first place? DeFi stands for decentralized finance. Decentralized is going to be a network to where there's going to be no middleman involved. So say you're trying to send $3,000 through a bank, for example. Okay, you, the person, would then go ahead and send the transaction, but the transaction would have to go through the bank first. The bank can go ahead and determine whether or not they want to decline it or put the transaction through. If they say no, then the transaction will be sent back to your account. But using decentralized network, or also known as the blockchain network, transactions can get sent from one person to the other quickly and automatically using smart contracts, which also provides security in order to make sure everything is decentralized. There's no centralized control, and everything can automatically be done, so everyone can just get their bread from one person to the other extremely easily and efficiently. And some key components include lending, borrowing, trading, and liquidity provision. And anyone with an internet connection can participate, promoting financial inclusion. So anyone around the world can go ahead and hop into these crypto markets and start trading. And some risks include that smart contract vulnerabilities can go ahead and be in place, and market volatility. So make sure you have your risk parameters in place so you don't just lose money that you aren't prepared to lose. Okay, make sure you know what your stop loss is, you know where you want to close as far as your take profits, and understand the chart before you start throwing any type of money into the markets. And in DeFi, decentralized finance, users maintain control over their assets through non-custodial wallets. Unlike traditional finances, where banks hold your money, okay, this shift powers to individuals, but requires personal responsibility for security. So cryptocurrency pretty much gives you the ability to be your own bank. You can go ahead and send your currency whenever you want, pretty much almost instantaneously, and go ahead and receive your codes. Okay, and it's going to do this by a long code that you guys can copy and paste, send it to people, or receive someone else's code in order to send money to them. Okay, and if you mistype the code, though, the money can be sent to somebody else or be lost in the void. Okay, so make sure all codes that you do within cryptocurrency as far as sending money, make sure that everything is exact, make sure it's everything that you need it to be, and pay attention. In traditional finance, you deposit money in a bank, which lends it out and pays you interest. And in decentralized finance, you supply assets to a protocol like Aave. And this is where borrowers pay interest directly to the suppliers, okay, via smart contracts. And what are liquidity pools in the first place? Liquidity pools are the backbone of decentralized exchanges, also known as DEXs. And they're smart contracts that hold reserves of 2 or more tokens, allowing users to trade without order books. And a pool might contain equal values of Ethereum and USDC. And liquidity providers, also known as LPs, they deposit tokens to earn fees from trades. And trades adjust the pool's ratio based on constant product formulas. The liquidity pools ensure that continuous liquidity is being added into it. Okay, so continuous money is always being flown within the decentralized and crypto markets, unlike centralized exchanges. And popular platforms like Uniswap, SushiSwap, and Balancer are all included too. And the security relies on audited smart contracts, which are the autonomous contracts that make the cryptocurrency space run automatically to prevent exploits. And liquidity pools can be permissionless, which allows anyone to add liquidity. And the concept originated with Uniswap's automated market maker, also known as the AMM model, where the product of tokens quantities remain consistent
Okay, so say for example, a value of X times Y equals K. So for example, creating a liquidity pool. Suppose you deposit 1 ETH. Okay, let's say 1 ETH at the moment is just worth 2K for this example. Okay, and let's say you do 2K of USDC. That's a stable coin that goes off of the fiat currency US dollar. Okay, so what a stable coin is pretty much a cryptocurrency version of fiat currency. What fiat currency is a country's natural currency. So USD is going to relate to USDC, for example. Okay. And the pool now is a constant product of 1 times 2,000, which equals 2,000. And if someone buys 0.5 worth of Ethereum, they must add enough USDC to maintain the K equals 2,000 value. So how automated market makers work in the first place? AMMs are protocols that use mathematical protocols or mathematical formulas to price assets in liquidity pools, enabling decentralized trading. There's some constant product models. It's going to be X times Y equals K. Okay, so X times Y equals K. And that can be calculated via the Uniswap V2. And there's a constant mean model for multi-asset pools. Okay, and Balancer does that. And trade shift reserves, which change the prices. Okay. And slippage occurs on large trades due to the pool size. And LPs receive LP tokens representing their shares. And arbitrars keep the prices aligned with the external markets. And Uniswap V3 introduced concentrated liquidity to promote market efficiency. And flash loans also integrate with AMMs for complex strategies. So going in depth, the constant product ensures that one asset's quantity decreases and its price increases relative to the other, mimicking supply and demand dynamics. And trading in an AMM. So 10 Ethereum and 20,000 USDC. So let's say K equals 200,000. Okay. The price, $2,000 for USDC / Ethereum. Okay. So you'll buy 1 Ethereum and add 2,222.22 USDC. Okay. That's going to give you a new X value of 9. Okay. A new Y value of 22,222.22 and a new K value of 200,000. And the price rises due to the fact that the amount of Ethereum was reduced. And arbitrage, an example of it. If the external price is 2,100 USDC, traders buy from a pool until aligned, profiting and rebalancing. So let's talk about impermanent loss and permanent loss, also known as IL. Impermanent loss is the temporary loss of value experienced by liquidity providers due to price divergence of pooled assets compared to holding them outside the pool. And impermanent loss occurs when asset prices change after depositing. And impermanent is because it's unrealized until the final withdrawal occurs. And it mainly affects volatile pairs more than stable ones. It's calculated as value in pool versus the value of held. And it's not a bug, but it's a feature of the AMM design. So it's supposed to occur. And impermanent loss can be offset by trading fees earned. And it's a lot worse than one-sided price movement. Okay. And in detail, when prices diverge, the pool rebalances automatically. But LPs end up with one of their more depreciating assets and less of the appreciating one. And here's a simple analogy. Imagine sharing apples and oranges. If apples become more valuable, the pool is going to give you more oranges for cheaper and fewer apples if they're valuable, leading to loss versus just holding them both equally in the first place. And impermanent, also for IL, okay, permanent as prices returning to original ratios eliminate the loss, but the fees accumulate regardless. So here's a simple example of a permanent loss. So let's say you deposit 1 ETH for 2K. Okay, so 2 bands worth of Ethereum plus 2 bands of USDC. Okay, that's going to give us a total value of cryptocurrency of 4K. Okay, let's say the Ethereum price then decides to go upwards to 4K. Okay, so remember, we bought it at 2K though. So let's say Ethereum goes to 4K. The pool is now going to rebalance. So now 0.707 ETH. Okay, we're going to add that plus the 2,828 USDC value, which is going to give us a value of 5,656. And if held, then that 4K Ethereum plus $2,000 of USDC is going to give us 6K. And the impermanent loss, okay, we're going to calculate that by grabbing the 6K and minusing that by the 5,656, okay, which we got from getting the 0.707 ETH plus the 2,828 USDC, which gives us the value of 5,656. Okay, then the original 4,000 plus 2,000 gives us the $6,000 value of USDC. Minus those, and it's going to give us an impermanent loss of $344. Okay, and the STI is going to be 5.73% loss. And the AMM sells some Ethereum for USDC as the price rises, leaving you with less Ethereum when it's more valuable. So the K value is going to equal 1 times 2,000, and that's going to still equal 2,000. Okay, 1 times anything is going to equal the original value. And the new price would be $4,000 for USDC / Ethereum in the pool. Okay, so it's going to be your K value divided by your new price ratio, okay, but simplified, and the loss is going to increase with price deviation. So detailed mathematical calculation of impermanent loss. For a deeper understanding, let's derive the impermanent loss formula. So let's assume there's a 50-50 pool. So we'll do 1/2, okay, 50-50. And let's talk about asset A and asset B, okay. That's going to give us a price ratio of 1, okay. And the new price ratio is going to be P, okay, times value B divided by value A. And the whole value is going to be the initial A times value B plus initial B divided by value P. Okay, and the pool value would be 2 times the initial A times the initial B times the P. And a permanent loss, okay, would equal 1 minus 2 times value P. And then we would divide it 1 plus the initial value of P. Okay. And for P equals 2, that'd be 100% increase. So the permanent loss would be 5.72%. And for P equals 4, the impermanent loss would be 17.16%. And as P approaches infinity, then the impermanent loss is going to go ahead and approach 100%. And the formula shows impermanent loss is symmetric for price increases or decreases, and it depends only on the ratio change. And here's an advanced example. For a 10% price change, P equals 1.1. The impermanent loss would equal 1 minus 2 times the square root times 1.1. Okay, divided by 1 plus 1.1, which is going to equal 0.045%. Okay, and for 400% change, the P will equal 5, and the permanent loss would be 21.8%. Okay, and once again, as P approaches infinity, as the number increases, the impermanent loss would increase, and it could approach 100%. And some factors affecting the impermanent loss. So volatility. So once again, volatile pairs such as the Ethereum, Bitcoin have a higher impermanent loss risk in the first place. And correlated assets such as stable coins have minimized IL. So like USDC / USDT, something like that. Okay, they have nearly zero impermanent loss due to the fact that there's pegs. Okay, not a lot of fluctuations in between them. And the time of the pool, the longer exposure increases the impermanent loss probability. And there can be higher pool fees. Higher fees can also offset the impermanent loss and price deviation. Larger changes cause exponential impermanent loss. And pool weights, non-50-50 pools alter IL dynamics. And larger pools have less slippage but similar IL. And market events as well too. Black swan events amplify IL. So news, be on the lookout for that. And in practice, choose pairs wisely. Okay, determine what you want to play and make sure you're not going to go and be taking losses, trading something that's too volatile, hurting your account in the long run. We're here to make some money at the end of the year, not just get some instant bread in our hands right now. Stablecoin pairs like USDC, USDT, once again, have near zero IL due to pegs. Okay, and they have a real factor impact. During the 2022 crypto crash, LPs and volatile pairs like ETH / altcoins, for example, suffered a massive impermanent loss and prices plummeted unevenly. Okay, so make sure you're monitoring on-chain data for volatility predictions. Keep checking your charts. And here's some strategies to mitigate permanent loss. Okay, provide liquidity for correlated assets. Okay, and Uniswap v3 allows range-bound positions. And impermanent loss insurance. Protocols like Bancor offer protection. And you can also hedge too. You can use options and futures to offset losses, okay? And short-term provision, enter/exit during low volatility. And automated managers, you can use vaults like Yearn for optimized LP, and diversified pools means that it's spreading across multiple pairs. And you can calculate break even by ensuring your fees is larger than your expected IO. In Uniswap V3's ranges lets LPs act like limit orders, reducing apparent loss exposure outside of the ranges in general. And here's a mitigation example. In Bancor, single-sided staking, okay, which is going to be used to create like Ethereum, for example, instead of POW, which is used to create Bitcoin when power is exchanged, okay? So single-sided staking with apparent loss protection. And after a vesting period, the protocol compensates for losses via token emissions. Always do your own research. No strategy is going to be risk-free, okay? And here's some pros and cons of providing liquidity. So pros, you can earn trading fees. So you can get like a 0.3% on Uniswap, for example, and it can help you earn passive income. So you can get a lot of rewards from farming, okay, if you're staking or through LP tokens. There's a lot of support ecosystem too. It boosts DeFi's liquidity, and the more people trading is going to be the better. And compounding. Okay, you can reinvest fees for growth as well too. Okay, and opportunity cost. Locked funds miss other gains, and gas fees can be high on Ethereum sometimes. Okay, and sometimes smart contracts can be susceptible to hacks or bugs, but as laws and regulations decide to come on through, then things start to get more secure. And net outcome is going to depend on the volume, okay, the fees versus the volatility, okay, the apparent loss. So net outcome, okay, it's going to be the fees versus implied or apparent loss. Okay, and during bull markets, high volume offsets apparent loss, and in bear markets, apparent loss dominates. Okay, and tools like APY.vision help track your apparent loss versus your fees. Okay, so stay prayed to God, keep grinding, and apparent loss is a risk in AMM liquidity provision due to the price changes. Okay, balances with fees and rewards are a possibility, and you can use mitigation strategies like concentrated liquidity in order to help yourself out. Throw your trades and calculate and monitor your apparent loss in your positions. And the decentralized finance community is always evolving, and you can stay informed at Stackmode Network to learn how to trade. Okay, I'm gonna keep dropping for you guys. Keep grinding. Stay prayed to God. Keep grinding, and don't ever give up. Catch you in the next one. Peace.
All right, let's go and let's talk about how to catch big moves, right? This is gonna work for crypto, stocks, forex, whatever. All right, it's how to catch big moves. So what is a big move? A big move is gonna be pretty much a move that involves catching a lot of points and potentially can make you a lot of money. And the reason why we want to be focusing on big moves is because big moves help you turn a little amount of money, okay? So if you have a small account, for example, and the whole goal of trading is to turn a little bit of money into a lot of money, okay? We don't want to be trying to turn, risking a lot of money to make break even or the same thing, okay? Want to be using a little bit of money to try to make a lot of money, okay? And that's going to be scaling with the amount of figures that you have. So 5, 6, 7, 8 figures, etc. You're still going to have the same mental perspective, using a little bit of money to get a large return. Okay. So, and that's going to mean a little bit of your portfolio, once again, relative to your scaling. So if you have a $10,000 account, then ideally you want to be using max 10% of your account per trade. Okay. So max $1,000. That's what you want to be using. Okay. Don't want to go over that because then you could potentially just be out of your risk management parameters, throwing you off. Okay. So you want to be using, once again, 1 to 10% of your account per trade. So if you want to catch a big move, focus on the chart too. Okay. Forget about P&L. Forget about the dollar sign. Okay? We got to learn how to read the chart, learn what we're looking for if we want to catch a big move in the first place. Okay, so when catching big moves, once again, don't focus on the profit. We got to be focusing on the process. Okay, let's go ahead and let's jump into it. How to catch big moves. So if you're on the crypto stock market, you're most likely trading an upwards trending market. Okay, so I can pull up most stocks and I could see that most stocks from left to right goes in an upward staircase direction. Okay, so that's going to be the same for stocks. And let me go and pull up Bitcoin here. Even if I zoom out on Bitcoin, I can see the same thing here. Price started below down here, and I can see price made its way all the way up here to this day. Yeah, so that's going to let me know that price makes upwards direction. Why is price making upwards direction? Okay. So price is making upwards direction movement due to the fact that, one, for stocks, these companies aren't just moving for no reason. Okay, these companies employ people. Okay, so these companies help the economy. Okay, the more people working, the more people paying taxes. Okay, the more people paying taxes, the better the economy can be, because the less debt the United States will suffer. So these stocks aren't just stocks for no reason. Okay, they're not just going up in value as well for no reason. They're helping people, they employ people, they feed families. Okay, and as far as the cryptocurrency tokens, right? So the crypto tokens, a lot of crypto tokens are created by humanitarians. Okay, like Ethereum, for example, created to counter Bitcoin's power wattage mining system. Okay, so a lot of humanitarians create crypto. Okay, people who care. Okay, it's people coding these networks. Okay, coding the blockchain network, coding the hash, etc. Okay, lots of coding involved within the cryptocurrency network. So there's people behind these projects. Okay, they want to see these projects succeed. Okay, they want to see it go up in value. And not only that, a lot of these CEOs of these stocks and owners of the token currencies own shares or a percentage of the crypto token. Okay, so they also want to see it go in an upwards direction. So once again, why else do things go in an upwards direction? Let's talk about safety. Okay, when people feel safe to invest into something or keep their money into a certain place, everyone's going to do it. And the benefit of that on the stock market and the cryptocurrency market, etc., is that the more people are doing one thing within the trading world, so if a bunch of people are doing some buying, then inshallah, you can go and put into place and assume theoretically that price wants to go in an upwards direction. Okay, if you start seeing a bunch of buying on the order flow on your tape, you start seeing whales buy in, etc., okay, you can assume that price wants to go in an upwards direction. Everyone's doing it. Everyone's putting big money at it, and everyone's betting on it going in an upwards direction. Okay, so keep that in mind. Things that are safe, people are going to feel comfortable investing in. Okay, that's why Bitcoin's been going up exponentially past couple of years, especially once the SEC, okay, government body, decided to gain regulation over the Bitcoin. Okay, and regulation then leads it to a whole new masses. Okay, people who watch the news and stuff like that, etc., then they're going to feel safe to invest. Hence why Bitcoin rose to 112,000 as of right now. Okay, fairly quickly as well too. So let me know if you guys were an early investor as well. So that's going to be a reason why price goes in an upwards direction. Now let's talk about them. Two things. We'll break down resistance and support. So the market can only move one or two ways. Okay, one or two. It's simple. That's it. Okay, it can either move down or up. When market is moving in a downwards direction, right? All it is people selling. So I like to do everything on my higher time frames too. Personally, I like to use the daily and 4-hour time frames. And those are going to be the 2 time frames I scan everything with. So I'm going to start off with my daily here. And I could see, once again, this is a left to right chart. But I could see that even from all the way back here in 2017, why did price make this spike right here and then dip down? Why didn't it just go up to infinity? Okay, let me go ahead and answer this question for you guys. This is why stuff just doesn't go up in a straight line. And this is why you shouldn't panic when stuff dumps as well too. Because anything that
goes down, will try to come up within the market. So check it out. Price created this area of resistance right here. Okay. And resistance is going to be an area where sellers are present. Resistance means people sold heavily on this or at this level. Okay. And it's going to be best to see resistance on things like the higher time frames. Okay. You want to see resistance on the weekly, on the daily, on the 4 hour. Okay. You want to see support on those time frames as well too. But resistance means that people sold heavily. So why would people sell? Okay. If they're already up so much profit, why would they not think that's going to go to 1 million? Okay. Let's put in a logical perspective here. So this is why it's kind of difficult to trade at all-time highs. So people got in way over here to the left, okay? And then price just starts pumping in an upwards direction, okay? They have no take profit above them. They don't know how high it wants to go up in this one cycle, okay? So the market's going to start collectively selling, okay, creating a massive sell-off. Okay. But once again, anything in the cryptocurrency or market world, as long as it finds its value within the world, it will make its mark. And we could see here, once certain things started to change, when people started investing into it, you can see this area of resistance here, where price fell down heavily at, decided to be passed. Okay. When market decides to pass a heavy area of resistance or support, we know it's going to be called a breakout. So price broke out right there easily, okay? And a breakout couldn't be a good move here because why? You don't know how high price wanted to run up to. Price ran up all the way to here, okay? And there was no previous highs. So this is why when they're structured, it's a lot easier to trade, okay? And there's gonna be some things that you buy and hold and sit in a long-term position, but as far as catching the trend and catching a big move, you want to make sure you know where price wants to exit, where it started at, okay? And what type of trade it is, okay? Is it a bullish trade or is it a bearish trade? So let's take this example here, right? I have Amazon here. So one thing I know about the market too, I know market's always trying to break all-time highs, okay? Because everything's trying to be the best, okay? Companies want the highest rated currency, stocks want the highest rated value as far as numbers. Okay, tokens want to be the most popular and most used. Okay, so it's very, very competitive. So in order to compete, let's analyze. So you can see here, this area of resistance up here, and this area of resistance up here. Okay, why is that important, Chris? So areas of resistance are going to be extremely important due to the fact that price is always going to hunt them. No matter if price is at $0, if all-time highs is at 200, it's going to try and break that one day and show up. Okay, if an investor gives them $2 billion to revive the company from the ground and people start buying into it, it's aiming right for that previous all-time highs, looking to break it. Okay, because it's looking to be the best. Okay, it's looking to break its future records, break its future numbers. Okay, and a company is trying to get better. Okay, just like human beings, we're trying to get better every day. Companies are trying to be the biggest, okay, and be in new levels, have a new stock share value, so they can pay out their workers and shareholders more if they give dividends, okay? So, Amazon, for example. So I could see this area of resistance is up here, and I have another area of resistance up here, okay? Price pause. I just think of resistances as areas where price paused, okay? Check out this area here. Price decided to create this V area here and bounce in an upwards direction. Okay, so the opposite of resistance, we're gonna have support here. Support's gonna be an area where price decides to bounce from a downwards demand area. Okay, so price is gonna come down, make a low, okay, and then bounce up from that low, okay, and that's gonna mean it's in demand at that place, okay? So demand is going to mean support, and resistance is going to mean supply,
Okay, so if you ever heard the two terms, that's how you break it down. So when market is shorting, okay, and shorting means selling off, okay, going in a downwards direction, market is always trying to meet with a area of support below current price or an area of resistance below current price. So resistance can be broken and turn into support. And when price is going in a downwards direction, especially on the stock and crypto market, it's not crashing. What it's doing is looking for a new low. Okay, it's looking for an area where people demand it, and then they're going to go ahead and get it. Okay. So the area of resistance is always where we're going to know where we want to exit at. So if I have this strong area of resistance up here, I know I'm going to go ahead and close and take my profit up here. Okay. And this is how you can catch big moves, especially on things like options. Okay, it's just closing at the right time and one buying at the right time as well too. Okay, so if price starts showing me price action down here from this area of support, and then breaks all-time highs, etc. Okay, then you can keep studying that congruency. Okay. So we got Google here. Okay. Create an area of resistance all the way up here at 257. Okay, we're dumping down to 237. Let me go to my 4-hour here and check it out. Okay. So price kind of met up with this area of support over here. Okay. And I don't like to just get in on the first week once again. I like to wait for that daily close. Okay. Once it's at the daily close, I'm gonna wait and then go. So we'll jump into another example here, some Tesla. So I can see area of resistance above current price. Okay, price is falling in a downward direction. Okay. Once I start seeing price curve and give me some bullish momentum, I know price is going to try to reach this area of resistance. Okay. Trying to beat its competitor. Okay. So take this example here. Okay, amazing example. So we have this area of resistance all the way up here. And you can see price decides to create its own area of support system here. Okay, and then looking to curl and fill in these areas of resistance. Okay. That's 50 points here of Oracle. And finding a trade just comes down to really just taking your time. So Visa here. Price has this area of resistance up here. My daily, let me zoom all the way out. I can see we're making higher lows. Ultimate low, higher low. Low, low, and then higher low. Okay, so let's start seeing higher lows, price going in an upwards direction. That's definitely gonna let me know we're trending hard. Yeah. So I'm gonna go ahead and mark out this other area of resistance over here. Got resistance right here too. Cool. Price falling down in the same exact area. Okay. So A, wait for price to curl, or wait for price to blast past this area, turn it into some support, and then take it up to the next area of resistance. Okay. And then a ruler, And you always know price is trying to hunt resistances. Okay? So don't think that these gaps won't try and fill itself, okay? Because inshallah, they really will. So boom, and that's about 20 points here. And it's definitely a neck out flipper. So I'm going to pull up some crypto examples here. Okay, same thing on the crypto market. Okay, we're not going to make it hard. Just keep it simple. So I'm going to pull up Ethereum here. Okay, market's making that big red dip on the daily. Okay, let me delete all the drawings here. All-time highs is going to be all the way up here. So price is looking to make a low. Okay, so we do have a strong area of resistance right here. Right here. Right here as well too. Okay, two very strong areas of resistance. And I believe way over here as well too. Okay. So then price came down, broke the area of resistance, and then turned it into support. Now price is heading within an upwards formation. Okay, and everything remaining till the area of resistance is going to be a move you can catch. You can just enter in the middle of it. Okay, don't stress over perfect entries. Our only God's perfect. Yeah, we're going to slow down, see what the price action is talking about. If we can catch our take profit still, we're going to catch it. Okay, if price made a low, it made a low. You start seeing daily closes and curves, you know what time it is. Okay. It's about having the risk appetite too. So even right here, have this area of support right here. Area of support right here. And then area of support right here. Or resistance right here. So support got broken, turned into resistance. The resistance got broken, turned into support. And now price is trying to sweep with an upwards direction. Okay. So if this is successful, I see price wants to sweep here. And I'm going to go ahead and catch the whole rest of the move up to this level up here. Then you catch the rest of the upper up here. Okay. And then the whole remainder of the move is pretty much going to be in your pockets. Okay. So that's going to be 1, take profit, and then 2. So extremely supporter. That's just making it easy for ourselves. Knowing what we're investing into, knowing what we're buying, knowing what we're going to exit. It's really going to be imperative to just making good decisions, okay, and just making sure we're profitable at the end of the day, which is really, really, really what matters. So I'm going to go and pull up another example here. Let's do some XRP. XRP just took a massive, massive dip. The price might be trying to bounce here. We'll see. It bounced really, really quickly. There's also an area of resistance over here too. Yeah, we have this area of resistance here. Looks like price is reflecting off of that here. And may potentially be going to go in an upwards direction. Okay, so let's go and let's check out this area of resistance up here. Okay, you know we're trying to break all-time highs, so we can keep making new highs. Inshallah. Okay. So think of market logically like that. Solana, for example. Yeah, Solana is super duper useful. Can't trade Bitcoin without it. Can't trade not Bitcoin, like Pepe the Frog coin with etc. Can't trade with Tesla. Okay, so meme coins. So even the same layout here, have support, turn into resistance, turn into support. Okay, so the same thing as Solana. Okay, so this is why it's important to have a just certain strong mindset too. Don't panic sell the same place everyone else is doing it. Okay, be calm. Okay, and you got it. Okay, really sit on your trade, let take profit get hit, and yeah, and doing that really can help your flow up. So let me pull up TRX here. It's the same thing. One thing you're gonna notice too about me pulling up all these crypto pairs, they're all very similar. Each and every single one of them are really similar. So they all do the dip. Okay. And price action was just a little different here. So it looks like we had a dip here. We had a heavy dip on September 6th too. And that's also another thing too when it comes to catching big moves. Be aware of like news too. Be aware of news, the most volatile times, etc. too. Okay. So cool. So yeah, that's gonna be how to catch the big move. So pray to God, keep grinding, and head up to Stackmode.net.
After you've been grinding for years, really busting your tail, you want your money to work harder than you do. And dividend investing might be the easiest way to build passive income, but most beginners overthink it. But dividend investing is really simple. You just buy shares of strong, established companies, and they pay you cash just for holding them. And that's it. So imagine waking up to deposits, monthly, weekly, and certain dividends pay out in different ratios and frequencies, and they hit your account while you sleep. That's the power of dividends. Let's go and let's jump into it. Let's understand what dividend investing is and how you guys can start building some passive income for you and your families. Inshallah.
Let's talk about dividend investing. Making our money work for us is going to be the most ample way to, one, get our mental health back. Okay, I understand we're grinding hard, working year after year after year after year, but let's at least make our money make us some money. Okay, we're not just grinding. Okay, no more exchanging time for money. Okay, it's time to start exchanging money for money. Okay, this way you guys are going to be a lot mentally healthier. You guys are going to have time to get closer to God, work on your family relationships, work on yourself, work on your business, and understand that when you have your money flowing within that asset river constantly, you're using your cash and buying more assets with it, and it's flowing in the river, flowing in the river, you could pretty much never work again. Okay, so when people talk about passive income retiring, it's about putting your money within that income river. Let's go and let's talk about how to make our money work for us. Inshallah. So what is a dividend in the first place? A dividend is going to pretty much be a thank you payment. Okay, and they pretty much just tell you, hey, you've been investing in us for a long time. You've been believing in us, and I'm going to go ahead and give you some money back because we've been crushing it on the company side. So a dividend is a thank you payment. Okay, so whenever you invest into a company that pays out dividends, or you're invested into an exchange trader fund, okay, which is a compilation of companies just put into one big giant fund, then you could also get dividend payments from there if the fund pays it out. Okay, so let's say imagine you lend money to a friend, right, to start their lemonade stand. Okay, you believe in them, you think it's going to turn up, and every month they start giving you $10 from the profits as a thank you because he started turning up, started making tons of money. Okay, so that friend who started the lemonade stand decided to give you a portion of the income because since you gave him that initial investment to believe in him, okay, and you funded his company, he did the right thing and gave you some profits back because you had his back and you believed in him. And that's what a dividend payment is. When you believe in these companies, when you believe in these ETFs, then we're able to get some profit back, inshallah. And that's a dividend. It's real cash paid to you just for owning a piece of the company, okay? And it's passive, okay? You don't got to do no work for this money. All you got to do is buy, okay? All you're doing is turning money into more money, okay? Dividends is going to be one of the most extreme forms of passive income, especially after you guys have grinded out 6 to 7 figures, okay? Being able to plant that 6 to 7 figures into some dividends and get paid $5,000 to $25,000 a month just for having your money parked is going to be a really, really good way to just chill in life, okay? And it could be regularly, okay? It's usually paid every 3 months, okay? So quarterly, and it's very, very safe. So usually only strong, profitable companies pay them, okay?
It's not a lot of broke companies paying out dividends because they can't afford it. Okay. A lot of companies paying out dividends are companies that have it all based out. They know that you investing into the stock market, okay, is going to go ahead and give them more income. They're then going to be able to turn that income into bigger buildings, hire better and more employees, okay, which should lead to them making more income, okay, better products, faster products being made, etc. So that way their income can skyrocket, okay, and when that happens, we benefit from it too. And a lot of the times too, dividend payments, okay, have certain dates set to them. Okay, sometimes you get dividend payments monthly, sometimes you get dividend payments quarterly, a few times a year. Okay, and every single company and ETF is going to have its own different dividend payment cycle. So before you invest into something, make sure you're doing your research. So here's an example, okay, just one more time to make sure we understand it. Let's say you own 1 share of Apple, okay. For 1 share of Apple, Apple pays you 24 cents, okay. You can check your phone, okay, and that money is sitting in your account, chilling, okay. You didn't have to sell the stock to get it, okay. All you have to do is just have your money chilling in stocks. So you get paid for turning your assets into more assets, okay? So after all the day trading is done, after grinding your business hard for years, after grinding corporate hard for years, take that money and you guys can easily park it into some dividends and start getting yourself some monthly cash flow, okay? Put some mental health back into yourself and take some of your money and let's try and get some passive income from the money we already have and we've been working hard for. Let's go to the next slide. So let's go and let's talk about the dividend yield. So the dividend yield tells you the return on your money right now, okay? And it's kind of like the interest rate number on your savings account, okay? So as you know, for APY accounts, okay, interest though, you know, is a reason why God says not to do it. It's not something that'll leave you profitable in the end anyways, okay? So focus on things outside of interest. But let's say annual percentage yield, let's say there's an account that'll give you like 3% per year, okay? With inflation and taxes though, that's not anything. Okay, so when you're focusing on dividends though, something like that, okay, then you're going to be able to get a lot better bang for your buck and for your value. Okay, so average yield, right, around a 2 to 5% average yield is going to be healthy. Okay, and a red flag, if the average yield is over 8%, okay, be careful. Okay, it might be a trap and the company could fall off later, even if they're paying out big dividend payments right now. Okay, you want to try and have your dividend payments be as consistent as possible. Okay, you don't want your dividend payments to go down. Okay, if you're getting 5K a month for the money you have invested, that's how much you want to be getting. Okay, you don't want it to go down to 3K one month and then your bills and calculations are all thrown off. You don't want it to happen. It can be really, really frustrating. Okay, so let's do the math. So let's say the stock price of something is going to be $100. Okay, and then they pay you $4 per year. Okay, so the yield, okay, is 4. Since they're paying you $4 a year, divided by 100, okay, and that's the stock price, and that's going to equal a 4% return, okay, and that's how the dividend yield is going to go ahead and be broken down. Let's go over to the next slide. So, is it safe, right? The payout ratio. So let's talk about the pizza analogy. So think of a company's total profits as a whole pizza, okay, and the payout ratio. It's how many slices they decide to give you, okay, and that's going to go ahead and be exemplary for the shareholders versus how many they keep to grow the business, okay? So how many slices of pizza are they going to give to you, and then how many slices of pizza are they going to try and hold on to, okay? And safe, okay? So under 60%, okay? If they give you 6 slices and they keep 4, okay, that's safe, okay? That's safe. Why? Because they were able to pay you a little piece of the pie, okay? Make sure you eat and make sure they eat too. Okay, because they got to be logical. They can't feed you if they're not feeding themselves. Okay, so they be logical. So, but it can be dangerous if they're giving away over 90% of their pizza. If they're giving away their whole pizza every single time, then they're going to have no food left over for tomorrow. Okay, so you have to watch and look at the payout ratio percentages. Okay, so let's say company A, right? Let's say earn $10. Okay, and then they give you $2. Okay, they would have $8 left. Okay. And that's going to be pretty safe. Now, let's say company B, right? Let's say they also earn $10. Okay. And let's say company B paid you $9.99. Okay. They paid you $9.99. Okay. They would be left with 1 penny left. Okay. What type of investments or growth can they do then? Okay, so focusing on the payout ratio of the dividend you're looking at is going to be extremely imperative to making sure that you're not making any random decisions unnecessarily. Okay, focus on companies with safe payout ratios, because that way you can see that they have their math baked in for consistent scaling year after year after year after year, not just random sporadic payments being sent out and then they have a possibility of going broke and then there's really going to be no more dividend payments. Okay, so in order to avoid all of that, avoid the hardships, try and focus on dividends and companies and ETFs that pay out very safe ratios so that they don't go broke, so then they can continue to pay out dividends so you can continue to feed your family and yourself, inshallah. Let's go to the next slide. So let's go and let's break down the snowball effect, okay? The compounding effect, stacking dollars, okay? Get into stack mode, okay? Stay down. I don't care if you got to wear the same clothes every single day, okay? Keep driving that old car, okay? It's not time to get a new car right now. Stack it up, okay? Set some parameters. Tell yourself, you know what? Until I have 100,000 stacked up, I'm not going to get X, Y, and Z. Until I have 1,000,000 stacked up, I'm not going to get X, Y, and Z. All this just takes a couple months and a couple years, okay? You guys got it. Go hard. Go hard. Go hard, because it's really time to automate your wealth, okay? And it's going to be the secret sauce. Instead of spending your dividend cash on coffee or random other things, okay, you can press a button called drip, okay? So what drip is going to do is take your dividend income, okay? So say you're making $100 a month from dividend income, okay? You could take that $100 a month and buy some more dividend shares with that, okay? So that way that $100 a month will turn into $150 a month. You keep doing that, it'll turn into $200 a month, okay? And then it keeps stacking up over time. As long as you're in stack mode, your account will be in stack mode right with you. Just know that, okay? So drip equals dividend reinvestment plan. A lot of brokers have it to where you can automatically just reinvest your dividend income back into more shares, okay? So the computer or whatever broker you're using uses your dividend cash to buy more shares automatically, okay? And next time you'll have more shares, so you get a bigger bag, bigger check. Then that bigger check buys even more shares and it spirals upwards, okay? So trying to have your life together outside of the market, okay? The more you have your life together outside of the market, the more money you'll be able to generate from the market, okay? Just keep cycling your money back into shares, back into more shares, back into more shares, and keep upping that income. So let's say year one, you own 100 shares, okay? You invested super duper heavy. Then by year 10, okay, you own 150 shares, okay? And let's say you didn't even pay for the extra 50 shares. It was just stacking up over time, okay? So once you start planting that seed of ownership, your tree can do nothing but sprout and grow, inshallah. So plant your seed today so you can start sprouting. You guys can start dropping fruit everywhere, okay? But you gotta plant your seed. You cannot start dropping fruit everywhere until you plant your seed, okay? So then from year 30, 20, then from there you're earning a full salary from dividends alone. And then you could chill out, okay? You still have your money parked away in the dividend and you're getting paid for having your money parked away. It's crazy, okay? If you make the right financial decisions, you stay focused on God and you don't feed your flesh, you guys can get out of poverty, okay? You guys can be rich forever. You can never go broke again as long as you maneuver your wealth into that constant asset river. You have to continue to flow your money in that asset river. Otherwise, things can get hard, okay? So throw your money to the river and start flowing so you guys can grow like the big oak tree. Plant all your seeds today. Let's head over to the next slide. So let's jump into royalty stocks, right? Dividend aristocrats. So these are going to be the MVPs of the stock market, okay? And to be on the list, a company must have been in the S&P 500, okay, which is accumulation of like the most powerful stocks, okay, put into one index, okay, known as the S&P 500. And two, okay, they must increase their dividend every year for 25 plus years straight. So if a company is paying, right, 20 cents per share, okay, in 2010, okay, and then in 2011, let's say they're paying 25 cents per share, okay, that's going to be a 5-cent increase, okay? So if they're increasing their dividend amount every year for 25 years straight, then that's going to be a big MVP. And that means that these companies have survived recessions, wars, bubbles, and still paid their investors more money, which means that a lot of these companies are going to be constant investments due to the fact that it seems like that these companies have become a staple in human lifestyle, okay? Companies such as Coca-Cola, okay, or Johnson & Johnson, the Band-Aid company, for example, Okay. So companies that incorporate into lifestyle, okay, really, really are going to be the ones that will survive year after year after year. So let's go and let's talk about the risk with everything. Okay. Pay attention to that yield trap. Just like we talked about on the previous slides. The yield trap is going to be really, really important to pay attention to. Sometimes you see a stock paying 15%. Okay. You think you're about to be making bands every single month just by investing into a simple dividend. Okay. And they might pay you out for a couple of months. Okay. You might be getting 5K a month payments, for example. Okay. For 3 months. And the next thing you know, they start losing profit. Things start getting shambles. And then boom. And then the high yield decides to stop paying you out what you're used to getting paid out. And if a company runs out of cash, I'm telling you, they're going to cut that dividend to zero. Okay, so just with the pizza analogy, okay, you can't help anybody in the world if you're not helping yourself first. Okay, so if you have a box of pizza, right, there's 10 slices of pizza. Okay, if you give away 6 slices of pizza, okay, you'll still have 4 slices of pizza for yourself. Okay, you can still eat. You're not going to be starving, and you're going to be chilling. Okay, but then take person B. Okay, if person B gives away all their pizza, they're going to have no pizza left over. Okay, and that might seem like a good thing instantly. Okay, because they fed everybody and ignored themselves, but that's not. Okay, that'll turn into later frustration, later hunger on that person, regret on that person. Okay, and they're going to be like, well, you know, people might not have fed me a certain type of ways. Okay, leading into certain type of mindsets. Okay, so even in dividends, it tells us it's really important, okay, to keep our bag right. Before we can help anybody else, our bag has to be right. Okay, and dividends show us this. If a company is giving away all their money, they're not going to have enough money to reinvest into more ads, into more workers, into better factories, etc. And they're not going to be able to scale at the way that they would like to, if at all. Okay. So if a company runs out of cash, they're going to cut the dividend to zero. So be wary of new companies, especially paying out big dividends, because it might not be consistently for long. And that's when the crash comes. Okay, and when they cut the dividend, the stock price drops even more because it's going to go ahead and lose value, which means you lose twice. So not only would you lose money on your base, money that's parked in there, your dividend payments are going to go ahead and get cut as well. So a golden rule, right? So a safe 3% return is better than a 15% risky return that has a chance of going to zero. Okay, don't be greedy. Focus on consistency. The name of the game in trading, investing in general, is consistency. Treat yourself like an oak tree, and you got to plant yourself in the ground. You got to give yourself water and sun. Okay, if you're not planting your seeds and you're just trying to hit the big 0 to 100, you're just trying to go buy an oak tree and plant it in the ground, it might not be stable. Okay, it didn't get time to connect to the roots, to the soil, and it might topple over. Okay, but when you're the tree and you grow it day by day, limb by limb, okay, root by root, okay, you're going to know the field, and your money is going to be planted within the soil. It's going to have a lot better baseline to it. Okay, even if stock prices were to start dipping down, since you have so much baseline planted, okay, stuff isn't really going to affect you. Okay, your dividend payments are still going to be pretty consistent, and your profit fluctuation isn't going to be as bad because you planted your seeds. So focus on planting your seeds over a quick win. So how do you start today? Okay, I'm going to give you guys a 3-step plan. So the account, open up your broker. Okay, you guys can do Webull, Robinhood, Fidelity, Schwab, Vanguard, so many different options. Okay, open a brokerage account. Okay, then from there, okay, you can buy ETFs. ETF stands for Exchange Traded Fund, and they're pretty much going to be a bunch of companies put into one big giant company, for example. Okay, so you could buy really, really consistent ETFs like SCHD that pay out really, really good dividends, or VIWM, for example. Okay, and it's a basket of 100+ dividend stocks that give instant safety. Okay, or you could pick individual stocks as well too. Okay, and then the button. So find settings for your dividend reinvestment and turn it on. This way, all your dividends are going to go back into shares consistently instead of you guys just having random cash, and then you're going to have to go buy dividends instead of you just having it all in that DCA consistent flow mode. Okay, so don't forget, diversify. Okay, and a good way to diversify is to really invest into ETFs as well too. Okay, let's head over to the next slide. So dividend investing is really like going to be the ending to everything. Okay, it's the furthest thing from a get rich quick scheme. But after you run up 5 figures, 6 figures, 7 figures, you've been grinding, You've been putting in the work. You've been praying to God, really staying down. Once you have some money stacked up, dividends is going to be a good place to park your money in, and you guys are still going to get that monthly income and that monthly reward from it. But make sure you guys are choosing to invest into things that pay you out consistently, and be patient, be consistent, and start now. Okay, start now. That's going to be the most important thing. Start generating your business now. Start generating income now. Start doing whatever you need to do now. If you say you want to invest into certain assets, if you have $5 in your account right now, take that $5 and invest. Okay, start planting your seeds today, and that's going to be the most important thing. It's not really about the money. It's about your lifestyle, your consistency, okay, and how disciplined and focused you are when it comes to stacking your assets. All right, if you want help with it, head over to Stackmode.net. Stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. Peace. Keep going hard. Don't ever give up.
Hey class, today we're going to be talking about exactly what a hard fork is within the decentralized finance space. Let's go and let's jump into it. So, code, consensus, and chains. And at its simplest, a fork in the blockchain technology refers to a change in the network protocol. This change usually involves updating the software used by nodes to validate transactions and blocks. A key distinction must be made between a simple software fork, and that's copying open source code, and a protocol fork, which changes the consensus rules. So, a software fork, code-based copy. So the definition of a software fork is it copies an open source code base, for example, Bitcoin Core, to start a new, often compatible project. And the impact of it does not affect the original blockchain's history or consensus rules. It creates a new independent project. And for an example, Litecoin. It was originally a fork of the Bitcoin code base, but now it operates on its own chain. Let's talk about a protocol fork. Consensus change. And the definitions of a protocol fork is it modifies the rules that govern which blocks and transactions are considered valid on a single blockchain. And the impact of it directly affects the chain's integrity, leading to a split in the network's block history. And the outcome of it is it requires all participating nodes to update their software to maintain network harmony. And the core difference lies in the shared history. A protocol fork shares the entire history up to the point of divergence. So, the critical distinction. Let's talk about soft forks versus hard forks. So, understanding the difference in compatibility is paramount to grasping blockchain evolution. And this dictates whether the upgrade creates one chain or two chains. So, a hard fork, non-backward compatible. So, as far as a rule change, it introduces new rules that are incompatible with the old software. And the mandate of it: all nodes must upgrade, and old nodes will reject blocks created by new nodes. Okay, so all nodes must upgrade. The old nodes will reject blocks created by any new nodes. And the outcome: if the community is divided, which is going to be caused by lack of 100% adoption, the chain will then split permanently into two separate blockchain, A and B, each with its own currency. And as far as the hard fork, the non-backward compatible system, both chains share the same history up until the block of the fork. And let's talk about soft fork. Soft forks are going to be backwards compatible. And the rule change implemented into it is that it tightens existing rules, making a previously valid block invalid under the new rules. And mandate: only a majority of nodes need to upgrade, and old nodes will still accept blocks from new nodes because the new blocks satisfy the old and stricter new rules. And the outcome of it: the network effectively remains one chain, and the old chain slowly dies out as the new blocks are not recognized by the majority, forcing compliance into it. For an example, Bitcoin SegWit, and SegWit stands for Segregated Witness, and that was a classic soft fork implementation. So a lot of these things that we do know were actually fork implementations that just stuck around. So let's talk about this case study here. Bitcoin Cash, for example. Bitcoin Cash, also known as BCH, okay, the scaling schism. So the split that created Bitcoin Cash, BCH, on August 1st, 2017, it's the most famous example of a contentious hard fork, rooted entirely in a debate over scalability. And the problem is Bitcoin block size The original Bitcoin protocol restricted the block size to 1 megabyte, limiting transaction throughput to about 7 transactions per second. Okay, transaction per second can also be abbreviated as TPS, which led to high fees, also known as gas. So the term gas equals fees, leading to high fees and slow confirmation times. So that was way too slow. Okay, it wasn't quick enough, and it had to get quicker. So the division, the two scaling facilities, so core devs at Bitcoin, preferred off-chain solutions like SegWit, also known as the soft fork system, and Lightning Network. Okay, BCH proponents preferred on-chain scaling via an immediate increase in the block size limit. And the outcome, a permanent split occurred. Since changing the 1 megabyte limit was non-backwards compatible, the minority group implemented a hard fork to increase the limit to 8 megabytes. Later to 32 megabytes. Okay, so as technology increases and technology gets more powerful, the whole decentralized space changes. And it results in two chains, Bitcoin, also known as BTC, and Bitcoin Cash, which is going to stand for BCH, and the technical impact between the two. The hard fork ensured that any node running old Bitcoin software would consider BCH blocks, which were greater than 1 megabyte and invalid, physically separating the two chains and their histories post-fork. So let's talk about case study number 2, the Ethereum Classic, the ETC, the ethical split. So the Ethereum fork that created Ethereum Classic, ETC, on July 20th, that occurred in 2016, it was not about scaling, but about philosophy and dealing with an economic exploit. So let's talk about the DAO incident here. So the DAO incident, which occurred in June 2016, and a decentralized autonomous organization, also known as a DAO, is built on Ethereum, and it suffered a hack/exploit. So people got into it, breached the database, and it drained roughly $50 million worth of Ethereum at the time, okay, worth of Ether, due to a vulnerability in its smart contract code. So the smart contracts are going to be the autonomous system that controls the whole decentralized system. So in a centralized system, banks control everything. They can confirm whether or not transactions go through or not, and they control the reserves. Within the whole smart contract decentralized blockchain system, everything is done autonomously on a smart contract system, kind of like a vending machine. So, but hackers were able to get into that due to the fact that the security system was a lot weaker about 10 years ago from this video dropping, and it's only increasing as developers, AI, and coders notice more exploits and prevent them. Alhamdulillah, God is good. So, proposed solutions. The Ethereum community largely voted to implement a hard fork to roll back the chain history and return the stolen funds to their original owners. Okay, so they were able to roll back the history and roll back people's funds back to them. So extremely nice. God is good. So the principle of it, code is law. A minority group of community members rejected the fork on the basis of immutability and the code is law principle, arguing that interfering with the chain, even due to undo a theft, set a dangerous precedent. And we'll talk about the split. The majority moved to the chain, called Ethereum, ETH, and the minority remained on the original unforked chain, which was renamed Ethereum Classic, also known as ETC, preserving the hack history. So, this case illustrates that hard forks are not just technical. They often involve deep ethical and philosophical debates about decentralized governance and immutability. And once again, the decentralized space is going to involve no superpowers. Everything's going to be done by pretty much AI, computers, and smart contracts. So why hard fork? Let's talk about the rationale and objectives of it. So while often continuous, hard forks are sometimes necessary for the survival or significant evolution of a decentralized protocol. They're generally triggered by 3 main factors. Let's talk about the first one. So they introduce new incompatible features, okay? And when major changes are needed that fundamentally alter the way transactions, introducing a new scripting language or integrating privacy features, the old software simply cannot interpret the new data structure. So number 2, fixing critical security bugs, extremely important to keep our money safe, okay? Inshallah. So if a critical vulnerability is found that could compromise the entire network, causing a catastrophic bug, a scheduled hard fork might be the fastest way to implement a necessary fix that prevents further exploitation often involving a protocol reset so people can get their money back if anything was lost in the first place. And they reverse malicious transactions. Controversial, okay, but could be necessary in certain cases where, once again, people are trying to take people's money unfairly. And as seen with the Ethereum ETC, Ethereum Classic, a fork can be used to bail out a network after a significant loss of funds, effectively rewriting the history of the chain to reverse the malicious transfer. And this always raises governance questions because, people can just reset and roll back transactions. But if it's used in a responsible way, I can see how it could be safe. But then again, would this be centralized? Let me know in the comments below. So hard forks that are planned and implemented with full community backing, like Monaro's regular updates, are often called non-contentious hard forks. So implications for users, exchanges, and developers. A contentious hard fork like Bitcoin or Bitcoin Cash, it has massive downstream effects on the ecosystem, requiring coordination across various entities. And the user impact of it: free coins and confusion. So coin duplication. Holders of the original coin automatically receive an equal amount of the new coin on the new chain. So for example, Bitcoin holders got BCH. And wallet management. Users must ensure their wallets support coin splitting and replay protection to safely access the new coins without losing the old ones. And market volatility can also be a factor. The value of both coins often experiences extreme volatility immediately post-fork as markets decide which chain to support. And the impact of the ecosystem, let's talk about the exchanges and developers. So exchange listing. Exchanges, which is pretty much places where crypto tokens and stocks can be listed, exchanges must decide whether to list a new coin, requiring significant technical work to ensure stability and implement deposit, also known as withdrawal infrastructure, okay? And replay protection. Developers must implement measures to prevent a transaction valid on one chain from being replayed and validated on the other, and that's crucial for security purposes. And development resources. The talent pool is going to be split, potentially weakening the development resources and future progress of the original chain in the first place. So, hard forks, while disruptive, they represent the ultimate form of decentralized governance, and they're the mechanism by which communities can execute fundamental disagreement, allowing different ideological and technical visions to coexist. So, some key takeaways. A hard fork is a non-backwards compatible protocol that change based on the results, and it results in a permanent chain split unless 100% of the community upgrades. And they're often driven by three factors. 1, feature upgrades. 2, security fixes. And philosophical disagreements. Okay, for example, scaling or immutability. And some key examples of a hard fork are Bitcoin Cash, okay, over scalability, and Ethereum Classic over immutability, following the decentralized autonomous organizational hack. And they forced the entire ecosystem, users, developers, miners, exchanges, to make a binary choice and adapt to a new reality and choose what's best for them. Stay prayed up to God, keep grinding, head over to stackmode.net for all trading education. I'll teach you how to trade cryptocurrency. Peace.
Future trading can be a little tricky if you let it be. You only want to buy when buyers are buying. Try not to ever buy when sellers are selling. In this video, I'm going to teach you guys exactly how to trade pullbacks and how to buy when the buyers are buying and what to identify and look for. Let's go and let's jump into it, inshallah. All right, so here's going to be buying at the right time. You want to buy after sellers are done selling. So sellers need to sell first, and you want to buy when buyers are buying. If you buy when sellers are selling, you're going to go ahead and just get destroyed. Okay, if you're looking to buy at the right time, we have to wait for pullback. We have to wait for price to form an area of support. Okay, so playing pullbacks is going to be really, really important. And here's going to be the things we have to look at. Okay, 1, you need to make sure that you're trading in a trending market. So if we're going to trade pullbacks, which is just price coming down, lower, and then going back up. That's all it is. So if price goes up, comes down, and then goes back up, that's a pullback. So you want to get on your weekly time frame ideally, or be on your higher time frames, such as your weekly, daily, or your monthly.
And then we need to analyze the full chart. So I'm going to start off on my weekly here and get the full bird's eye view of absolutely everything. So I can see here on my weekly that price decides to trend upwards year after year after year after year, no matter what. Okay. We're still ending up at new all-time highs, regardless of how many dips that it's made. Now, the way that price works within a staircase manner. And in order for price to progress, it has to make higher lows. So that means that the new low that price just made is going to go ahead and be higher than the previous low that it made. If that's happening, then that means price is trending within an upwards direction. Okay. And you need to buy when price makes these areas of supports, also known as the higher lows. Okay. So I'm going to break down how we can time and what we're looking for. So you want to buy when market is down, so then you can profit on the sweep up. Once again, buy when market is down, so you can profit on the sweep up. So in order to do that, you have to be trading something that's trending in an upwards direction anyways. Okay, so get on your higher time frame, start off on your weekly, and look at absolutely everything. So on my weekly here, I can peep. We have this low starting from 2020. Okay, and I could see here, we have not stepped back here since. And I'm on my weekly here. So I can start marking from the bottom of this low. And I'm going to go through and mark all the higher lows up until current price, just to show you that price is trending. So I can start seeing price trending in the upwards direction after it hit this 21,000 area here. Then price bounced super duper heavy. Okay, made another higher low here near this 26,000 area. Price came up, topped out right here. Okay, when price tops out, all it is making the left side of the V. Then once price makes support, it's making the bottom of the V. Our job is to catch the right side of the V. So even right here, you could see price come up, top out at this area, and then come down. After it come down, stopped right here, then bottomed up. Okay, price stopped up here. Price came down, and then bounced up, stopped right here, came down. Okay, so this is going to be a whole area in itself. Got price coming up here. Looks like price stopped towards this top, bottomed out right here, and then kept going. Right here, came up, stopped at this red candlestick, pulled down, made a low right here. Stopped up here, pulled down, made a new low right here. Okay, then over here, price decided to get underneath the lows. Okay, made a higher low right here. So even though we fell all the way down right here, it's still higher than this low right here. Okay, so that's good. So this higher low is still valid. Price was deciding to come in the cut here. Decided to bounce at the same area twice. We just still see price just trending, doing its thing. Trying to make a low here. Kept trending up, kept trending up. Price came down. Okay. And this low is still higher than this low here. So we're still in an uptrend, regardless of how hard we're dipping. We're still in an overall uptrend. I have this low right here. This low right here. Low right here. We can see price heading in an upwards direction. Okay. Now, what is price hunting? Price is hunting these areas here. These areas of resistance. These are going to be the areas that price are hunting. Price can't make new all-time highs unless price breaks previous areas of resistances. So after market decides to pull back, okay, your take profit, ideally a lot of the times, is going to be an area of resistance above current price or an area of support above current price. So you want to wait for price to pull back, wait for sellers to stop selling. And once you've identified sellers have stopped selling, which you'll see, and a good indicator to know that sellers have stopped selling is going to be on either your daily or your 4-hour candlestick. After you see a candlestick make an abrupt stop on your daily and 4-hour, pay attention to the next candlesticks. If you're looking for a long trade, if price action decides to randomly stop in the bottom, and then you start seeing multiple green candlesticks going in upwards direction, then you know buyers are going to be buying. And ideally, you're going to be looking for around 2 to 6 daily or 4-hour candlesticks after an area of support was created. If you see 2 to 6 daily or 4-hour candlesticks going in an upwards direction after it makes an area of support, then that's how you know it's going to be true. Okay, and you want to be looking on your daily or your 4-hour. And you're going to be looking for 2 to 6. So even take this low right here, for example. Price decided to make this super low right here. Okay, and so here's the super cool thing. Market does all the work for you. You don't got to do too much. You just got to chill. Be patient. Okay. Pray to God and just live your life. So boom. Market made the left side of the V for us right here. Market came down. Sellers were selling. Boom. Made an abrupt stop. Okay. And here's how you know if it's true. The candlesticks afterward were multiple green candlesticks. So after that abrupt stop, I have 1, 2, 3, 4. Okay, so that went 4 green candlesticks on my 4-hour here. Okay, and then even on my daily, I would have had 2 green candlesticks. So at the bottom, and then I had 1, and then I could have entered on this candlestick here and caught the rest of the resistance fill. So let market make the left side of the V. Let market make the bottom of the V. And you can see if the bottom of the V is real, knowing and seeing what candlestick come afterward. Okay, take this example. You see price trending in a higher low scenario here. You see this low right here. Okay, price bottomed out. I'm on my daily candlestick right here. Okay, I'm on my daily. After it bottomed out right here, I'm looking for 2 to 6 candlesticks, either on my daily or my 4-hour. So I can see price made the left side of the V up here. It's about patience. It's really about patience. Market decided to come up, top out right here, and then fell all the way down right here. This is how I know that the bottom is real. Okay, I paid attention to the candlesticks afterward. Okay, so after this bottom got created here, and sellers were done selling, you could see 1, 2, 3, 4. Okay, 4 candlesticks. And as soon as we got to like this upwards direction, I would have liked that. So I probably would have entered around like right here. Stop loss below the daily candlestick supports. And then take profit at previous resistance from where price decided to fall down from. Okay. Because I could see price already made the ultimate support, and all I did was catch the higher low entry. So let's go and let's do a fresh example here and see if I can find the setup. So I'm going to pull up the micro Bitcoin. Let me analyze from start to finish. So I'm going to get on my weekly time frame here. Okay, great looking thing I'm looking at here, because we're not at all-time highs. So that's why it's a great looking thing. If you're at all-time highs, you can't long. Okay, you cannot long at all-time highs. Don't do it. Okay, because price always wants to be chasing an area of resistance above current price. That's going to give a reason for buyers to step in. If there's no resistance above current price, there's no reasons for buyers to step in. So only play pullbacks, okay? Because then you're going to be buying when buyers step in. It's going to be extremely, extremely simple. So buy after sellers have sold. So I can see here from all-time highs, heavy aggressive selling has been coming into place these last couple of weeks. Okay, extreme selling to the downside. We met up near this area of support here. Okay, met up near this area of support here, and we're going to go ahead and see what this is going to entail. So on my weekly here, we have a red candlestick. Get on my daily here. So on my daily here, start seeing price try to curl up, but it's a lot of mixed match candlesticks. A lot of green, red, green, red, green, red, not the same color. Okay, if these were just straight green candlesticks for the most part, heading in upwards direction, then it'd be a lot more definitive. But in this case here, it's very, very spotty, not direct big candles. Right after like this low, for example, okay, heavy green candles, 1, 2, 3, 4 heavy green candles. Even after this one, kind of, we had a heavy green candle here, had to run one. But then after this higher low, straight green candles. This one here, we hit this low, and then a green candle, then a red candle, a green candle, and then kind of a doji, and then a red candle. So this one, I don't believe is fully ready yet. We could see this could be a higher low in the formation, and then we could see if maybe this low wants to hold or something. This low right here. Price seems to be trying to find itself some support here. Okay. So this is why we scale down to our smaller time frames, just to see things a little closer. So we're gonna go ahead and have this. We have this super low here. We got a higher low than that. So as you can see from this higher low, the V did get filled in from right here. So that's really good. So we'll see about this V. All right, because we're looking for a setup right now. So on the 4 hour here, I see price. I actually like this a lot, honestly. Even if I don't take it to all the way up there, this area of resistance will be fine. Same thing with this area here. Okay. Even if I wanted to just take it to this one up here, that'd be fine. So I like this a lot, actually. This is what I've analyzed. Is price making higher lows recently? Yes. Bottom, up, pause, down. Okay, and the pause that it made down is higher than the previous pause. So this high is higher than this low. Higher lows mean staircase trending in upwards direction. Okay, and we're buying after sellers sold. We're buying after all-time highs dump. So I like this a lot. Okay, I see higher lows being in place, and I think this is a new low being in place. Why? Because I have one area of support here. And guess what? I also have a whole nother candlestick. It has me so excited right now. Boom. Whole nother candlestick. Boom. And I'm on my 4 hour here. Here we have 1, 2, 3, 4. 4 green candles headed in an upwards direction. So get on my daily here. I could wait for one more daily candlestick to be green. Like if this daily candlestick closes green, then I would feel comfortable for sure taking it up to maybe like at least this resistance up here. Honestly, I won't be scary. Play big, take profits. I would at least take it up to this resistance up here for sure. So I need at least one more. I'm gonna be patient though. Patience is everything. Don't just get in and be like, oh, higher lows, because sometimes your lower time frames could be your worst enemy. So on my 4 hour, do I like it? Yes, but we don't tunnel vision. You know what I'm saying? We need the real thing in life. So boom, have this super low being made, higher low being made, and then another higher low being made. Okay, so I have 4 green candlesticks on the 4 hour. I like it a lot. Okay, I'm gonna decide I'm gonna close all the way up here at these 2 areas of resistances. Right here. This is where I want to close. Okay, this is the strong area of resistance. You see how price marked it and hit it twice? Definitely not for no reason. So strong area of resistance, price has beef with. So what I'm gonna go ahead and do is, you can either do this too, but yeah, you can analyze your higher lows, and I can get on my 15-minute here. Four hour. Okay, so either going to be looking for like a tiny little 4 hour wick. Okay, because right now the 4 hour candlestick is red. So right now selling is in place. Okay, so I only want to buy when it's buying. Okay, so right now it's making a little mini V. So I believe this is the top of the V right here that it's making with these 2 resistances. Let's get on to the 15-minute. You see these 2? Okay. So you want to remember, you do not want to buy when price is selling. So you would not buy right now on the 15-minute and the 4 hour. Price is heading in a downwards direction. But overall, we're in an uptrend. Okay, but you want to be buying at the right time, though, is the thing. You want to be buying at the right time. So right now, sellers are in place, but overall, buyers are in place. Okay, so to get that specific entry, you can scale down to your 15-minute, be like, okay, I could see these two areas of resistances. That's why price is falling down. Once you start seeing green candlesticks, or once you start seeing a green candlestick on your 4-hour or your 15-minute, then a lot of times that's how you know buying will be ready. But right now it's falling down from an area of resistance. I need to wait for this candlestick to go from red to green to show me that buying is real again. Okay. I do not want to buy when selling is occurring if I'm trying to buy a pullback. That's just not what I want to do. It's not what you're going to be looking for. It's called a pullback for a reason, because you're expecting it to go back up and it's just pulling down for a second. So right here, sellers are in place. Red candlestick, price is heading down even on the 15-minute. Okay, now if I'm on my 4-hour and I get a red to green candlestick, then I would feel a lot more comfortable with going ahead and to enter. Because price might want to honestly fall down a little bit lower. I could get a little bit lower entry and save myself on some drawdown. But if this red candlestick were to go from red to green, that means buyers were to go ahead and be in place. And then from there, I should be able to go ahead and you can have your target all the way up there, for example. And then, you could do your stop loss under here. And this would be, give me about a 1 to 3. Okay. So this would be about a 1 to 3 here. Extremely profitable trade. Really nice trade. So catching your setups is about taking your time, really. It's about just seeing what you need to see. So I'll do one more setup here. So I hit on my weekly. Not mark out all-time highs, because this is going to be the most obvious place that we've recently fell from. So I'm on my weekly. Okay, not quite all-time highs. It's going to be over here. It's exactly what we get on the weekly. You want to zoom all the way out, see all the price action you can. That's going to be all-time highs. Then from there, I'm going to go ahead and put a line down at this new area of resistance here. Okay, the area of resistance where we're recently falling down from. I could see price making higher lows. Price has a super low here. And I could see higher lows being put in over time, which means that we are headed in a upwards direction. Okay, we're trying to get up here to all-time highs. So this is what I analyze here on my weekly. So on my weekly right here, the current candlestick is red. So we would not be buying right now. Okay, we would not be buying right now because we're currently selling at the moment. So we want to see if there's any reason why. Yep, I can see exactly why we are selling. So try and analyze why price is doing it, what it's doing. It's price doesn't just do stuff randomly a lot of the times. As you can see on the weekly, I have this area of resistance here. You'll be able to see it a little clearly on the daily. This area of resistance is linked to this new area of resistance that just got created. So that's why price is falling in a downwards direction, logically. Now let me head over to my daily here. You're going to be able to see the curl a little bit closer here on the daily. Okay, price at the area of resistance that it matched with over here. Okay, price did some break and retest. Price came down and then wicked back up to the specific black line and then tanked down. Okay, so this is a very nice area of resistance that price likes. So we need to get back to this area though. So now this is so simple. It's the easiest way to play pullbacks. Just wait for sellers to sell first. So you can see that's why sellers are selling. Price at an area of resistance. So right now sellers are selling straight red candlesticks on my daily time frame with it right now. I'm waiting for price to bottom out. Okay, and this is the easiest way to not get faked out. So people got faked out on this candlestick, for example. And let me head over my 4-hour. Okay, so this candlestick right here, people bought this. The price decided to wake up and people probably thought they caught the ultimate bottom. You never want to try and catch the ultimate. Okay, you want to catch the higher low entry. So check it out by staircase. You see how this low is here? And then you have this low. Then you have this low. If I zoom in, I have this low. This low. This low. This one. Okay. So we could see price dumping in and making each of the higher lows. We'll go ahead and start it from all the way over here. Got price all the way down here. Support. Higher low. Another higher low. Price continues to just go in an upwards direction. Okay, we got these areas of support here. Mixed with this one. Mixed with this. Trending. All we're doing is buying the bottom, higher, low entry. Exactly, yes sir. That's all we got to do. Just buy the bottom entry. You see how these two supports over here are correlated with each other? Very, very cool. Let's check this out. Check out this higher low right here with the recent higher low that we just did. And then we're still trending in the upwards direction here. I'm on my 4 hour right now with it. You can see we came down a little bit. Still, this low is higher than this low. And then we decided to trend up again and continue the higher lows. As you can see, we're filling in multiple of these. Each one of these pullbacks are a trade. Each one of these pullbacks are a trade. Boom. Pullback. Pullback. And it's the same parameters every time too. No. So boom, pullback. So now we just need price to bottom out at an area. And we need 2 to 6 green candlesticks. And once I start seeing that and price filling in the right side with some green candlesticks going up, I'll catch the right bottom. Okay. But right now, I'm going to wait. I'm going to wait. People probably got burned right here with these candlesticks. Yep. But if you get on your daily here, we only have 1 candlestick. So this is why you need your daily. This is why I say 2 to 6. So that's why your daily and your 4 hour is really important. You can't just tunnel vision on your 4 hour. You need 2 to 6 candlesticks on your daily and or your 4 hour. Okay, so right here, it was only what, 1 green candlestick on the daily probably, and then another one open red. So if we have 1 green candlestick on the daily and another one open green and we're heading in an upwards direction, I'm taking that. Stop loss below the lows, taking it to the highs. Gotcha. So a lot of the times I'm overnighting. So I'm always overnighting actually. So each one of the setups I'm overnighting because I can just focus on my higher time frames, which is the real bread and butter. And yeah, and that makes it really, really easy. And that's going to be how you can play pullbacks.
Let's go ahead and let's talk about what a stock is. So don't go buy at nonsense and invest. This is probably why you're broke in the first place right now. Invest your money into things that are going to go ahead and turn your money into more money. If you want to stop being broke, if you want to stop being poor, if you want to stop having low bills and debt, start using your money to turn it into more money. If you want to be foolish and be a consumer, that's fine. Choose your pick. But life is only getting more expensive, so choose what you want to be on. Okay? Do you want to be someone who's providing, who's succeeding, and is going to be self-sustainable? Or if you want to be someone who's just not self-sustainable, no money in your bank account, and no wealth built or left for anybody around you, it's your choice. So invest. If not, up to you. But here's what a stock is in the first place. So a stock is owning a piece of the company. Okay. So instead of buying the actual product itself, buy the stock. Okay. A stock is going to go ahead and give you a part ownership of that corporation. And that money is going to go ahead and make you more money by buying and holding. So the reason why people even start the stock market in the first place is due to the fact that, or put their company on the stock market, is due to the fact that they want to raise funds for their company. Okay, more funds raised, which means more parts, materials, etc., can be put into the business. Okay, and when that happens, that means the business could potentially get bigger. Okay, and make more money, grow potential wealth. Okay, and the bigger the company gets, the more you'll get rewarded for that. Because since you're a part holder, the share price will go up. Okay, so the share price is going to be the price that pretty much just depicts its number value. And as the share price increases, let's say you bought in at a $39 share price, for example. If it went up to $100, okay, you would make a certain percentage gain depending on how many shares that you have. Okay, so a stock is formally called a share.
And each share represents a tiny fraction of the company's assets and earnings. And the company divides its total value into millions of these individual shares. And why the price moves in the first place. So the stock price change based on supply and demand. And when more people want to buy, okay, that means demand is higher than the supply. Then the price goes in an upwards direction, okay? And this demand is driven by expectations of the company's future profits. So the reason why it's going up is becoming more scarce. Okay, so people who already have it or people who are buying into it are either going to be buying at the highs, or if you got into it at the lows, you're going to be holding onto it. And since the company is getting value, you're going to go ahead and be able to make some money based off of that. So why do companies go for public in the first place? Okay, the IPO. So first of all, companies go public due to the fact that it helps raise capital. Okay, once again, more research development funds, more material funds, etc., can be garnered by just putting your company on the stock market. So the primary reason is to generate large amounts of cash for company growth. So it helps you fund research and development, pay off existing company debt, and to expand operations globally. And the money raised does not have to be paid back, unlike a loan. And the initial public offering, the first time a private company sells shares to the public. So before a stock market company can be available to the public, it has to first go through a private investor. Okay, so someone on the back end has to purchase all the shares. Okay, they have to purchase all of it, and then it can go ahead and be available into the company. And after the IPO, the shares trade on an exchange, okay, also known as the New York Stock Exchange, the NASDAQ, S&P 500, etc. And the secondary market is where everyday investors buy and sell to each other. Okay, and this is going to be available on your brokers like Webull, Robinhood, and just the stocks you're going to be able to purchase on your phone. So reason why investing is going to be so powerful is when it gives you your time back. Okay, you can go and put your time into working harder at your business, working harder to developing yourself. Okay, stop being a consumer. Stop spending all this unnecessary money on shoes you can't even afford right now. Okay, some of y'all can't even buy the items that you own twice. If you own items that you can't buy twice, okay, that's not a good look. Okay, it's time to either A, run it up again, or you just have more stuff in like liabilities than assets. And the liability is something that's not making you any capital. It's just something you just spent money on. Okay, so don't make foolish decisions. Okay, stay down. Some people don't know how to stay down, and then people wonder why they're broke. They wonder why they're poor. They wonder why they don't get anywhere. And it's because people don't know how to stay down. Once people start learning how to stay down, they'll stop being broke. Okay, once they realize, okay, my money's a tool. Instead of me being a pansy animal and investing in somebody else's company who just dropped the product to me, instead of me putting money in their pocket, let me put money in my own pocket. Let me invest. Let me build myself up. But some people aren't ready for that. Okay, some people are just always going to be slaves. Okay, they're going to be broke slaves. But if you don't want to be a broke slave, you need to start investing. Okay, if you don't want to be someone who's controlled by just wages and everything, let your money make some money. Okay, God gives us a really beautiful opportunity in order to do that. But if you want to spend your money on nonsense and then not invest, that's going to be fine, because the people who are investing are making substantial income. Okay, I don't want you guys to be broke anymore. So keep investing, keep going, keep building that stash. So, stock terminologies, ticker symbol. The short, unique abbreviation used to identify a stock on an exchange. Okay, that's going to be the ticker symbol. You're going to have Apple, okay, AAPL. You got Tesla, TSLA, Google, GOOG, also known as GOOGL. Okay, you're gonna have certain other companies as well too. They're gonna be tradable on the stock market. Okay, and when you're gonna be able to invest in them, you can trade a couple of things. Either A, you can buy shares, which pretty much just give you a piece of the pie. Okay, depending on how many shares that you do own. Okay, so shares equal ownership. The reason why I like shares too, I recommend you guys have 2 accounts, okay, or 2 portfolios. One for day trading, okay? Whether you're day trading penny stocks or trading stock options, which is where you get paid based off of just directional bias, where you can trade in upwards direction or downwards direction, okay? So instead of having ownership, you're getting paid based off of your correct analysis pretty much with options. So you can either trade stock options or buy shares, or I like to personally do both. Okay, I like to take my options profit and reinvest it back into shares. Okay. So reinvesting your money, it's a cycle. Your money should be a wheel. It should be a wheel. I'm starting to really understand how everything comes into place. It should be a wheel. The reason why people are broke, the reason why people go down bad is because they don't put their money in a wheel. They don't put it in any type of water. They don't let it flow, and they're not letting their money do anything. Okay. So if you don't invest, you're going to be broke. So voting rights. Owners of common stock typically get 1 vote per share on a major company decisions. Okay. So the more shares that you have too, and especially people who own a large amount of shares, have a lot of jurisdiction when it comes to the company heads and as well as the votes. So and the votes go towards who's going to run the company. Okay. And this is going to be a really big thing. Okay. When it comes to certain stock ETFs, exchange traded funds, say you invested like $2 million, right, into an ETF, and you could easily make $70,000 a year just based off investing that $2 million, which you could still withdraw at any time, right? But since you have $2 million in there, you could easily make $70K a year. Okay, you're gonna be able to make $70,000 a year, okay, just by having $2 million invested, okay? And you could live off that for the rest of your life, pretty much. So even if you touch $2 million, you could pretty much never go broke. Okay, going broke is really how you maneuver your money. Okay, I've really been staying down these past few months and just been running up a big bag. Alhamdulillah. Okay, so stay down. When you stay down, you don't buy what you don't need to be buying. When you should start investing, stacking up that money, it runs up quick. Okay, everyone should have at least $10,000. Okay, and if not, it's time to grind. It's time to pray and grind. Okay, but try to get to at least $10,000 in your bank account, in your brokerage account, and in your crypto account if possible. Okay, just spread across. So 2 ways to invest your profits. Okay, you're going to get paid based off of capital gains, and that's when you're pretty much just right. Okay, if you know that something's going to go ahead and go in an upwards direction, let's say you found a really good company that you just believe in, let's say Stackmode, right? Let's say the Stackmode company, let's say I opened it, boom, for example, okay? And let's say it went up, okay? If I got in at the lows at $2 a share, and then price went up to $100 a share, boom, I would go ahead and make some profit based off of that. Okay, so whatever the profit is, you can throw it into a stock calculator, okay, which will go ahead and show you how much profit you're going to go ahead and make too. So this is just getting paid based off of appreciation, okay, which pretty much just means you're getting paid as the stock goes in an upwards direction, as the share price increases, and as the future value increases. And it's making money when you sell a stock for a higher price than you paid for it. So if you bought it at 40 and then you sell it at 100, that's profit. If you bought it at 20, you sell it at 80, that's profit. If you bought it at 10, you sell it at 25, that's profit. Okay. And this is the most common and largest source of return for high growth stocks. And then you can also get paid in something called dividends. Okay. Dividends are going to be a really, really solid way to go ahead and generate income, especially once you have enough money invested into it, where you can receive regular cash payments from the company's profits. Okay. So if you, once again, if you have like $2 million invested into an ETF, okay, you can easily make $70K a year in returns. Okay. For example. So if you invest your money into the right places, you can never go broke. Okay. And they're often reinvested to buy more shares, utilizing compound growth. So you get paid based off of the shares and you're getting paid based off of the dividends. So if you invest in certain things, you're going to be in an extremely good position, inshallah. And the goal is to find companies whose value will grow over time. So some takeaways. So when you own shares, understand that you're going to be the owner. Okay. You can hold shares for 30 years if that's what you want to do. And I actually encourage you guys to hold shares for over 1 year if possible. Okay, when you hold shares for over 1 year, you're actually subject to a lot of long-term tax benefits. And it's going to be really, really good for your portfolio. And you guys are going to get, once again, a lot of benefits for just holding a trade for over a year. Now, when it comes to day trading, okay, the short-term capital gains tax is going to be a little more intense, but this is why you're taking that profit and reinvesting it into something that's going to make you more money, because that way taxes, inshallah, especially when you're making good trades, it should go ahead and all cycle out with each other as long as your money is always being thrown in the hamster wheel. And the secondary market, okay, secondary market is where you trade with other investors, not directly with the company after the IPO. Okay. And the secondary market is going to be the market that we normally trade, that we're able to go ahead and buy shares, buy options, etc. on. And take a look at the business. The stock price follows the success of the company right behind it. And investing is owning a slice of the company's growth and the economy's growth. Okay. Make wise decisions, spend your money wisely, invest, 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 invest. Okay. If you're noticing yourself, you can never afford your bills, Okay, you're spending too much money. Take a look at your bank statements. What are you buying? Okay, take a look at everything that you're wasting your money on. What can be reduced? Are you eating out too much? Okay, if you're eating out too much, it's time to start buying groceries. Okay, the technology that you have, dumb it down. You can't afford it right now. Okay, some of you guys have just things that you just shouldn't have, you know, priorities. And priorities are the reason why people don't get rich, you know. And not everyone is meant to get rich. I'm starting to realize that. Some people are meant to stay exactly where they are. Not everyone is meant to get wealthy, but if you're interested in getting wealthy, you got to learn to sacrifice. That's going to be one of the main things I can go ahead and tell you. If you're anyone interested in getting wealthy, putting yourself in a better position, putting your family in a better position, you got to sacrifice. Okay. Once again, not everyone is meant to be rich and wealthy. Okay. Not everyone is going to get there, and that's fine. But if you want to get there, sacrifice, stay down while everyone else is out doing nonsense. You have that fun later on. Okay. When you're secure, you're going to be balling, hooping, not stressing. Bills overly paid, stash overly healthy, in stack mode. Okay. While people are out and then they come back home and then they start stressing about bills and stuff like that, letting that real life hit them. And then that's why people go run to things like alcohol, drugs, etc. and stuff like that, because their life just isn't together. So just get your life together. Get your life together. Let your money make some more money and just start living a way better life. All right. Love you guys so much. Head over to stackmode.net for all trading education. I'll catch you in the next one. Stay prayed up to God. Keep grinding.
Hey class, so I want you guys to turn off indicators, okay? So we got a candlestick chart here, all right? Let me just go ahead and draw it in a line format, okay? If you have squiggly lines going through a vertical chart, you have to understand that it was not designed that way. And if you continue to rely on said squiggly lines, such as EMAs, MACD, SMA, if you continue to rely on these things, you will not be successful. You will not be successful on the charts. You have to understand that the charts can only go one of two ways: up or down. Okay? The candlestick. I want you guys to understand that these candlesticks can only move in two directions: up or down. And everything is based off of levels. Why do you think you see price reacting at the same area? For example, say you have market going in an uptrend, okay? And market found an area of resistance, okay? So an area of resistance is going to be an area where people decide to sell at, okay? So you're going to have sellers here. If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors. Okay. So you might see a setup that looks similar to price might come up. It might rally past the resistance, you know, come back down, and then mirror the resistance, you know? Very common. You have setups like this for a downtrend type of setup. And then for an uptrend type of setup, could definitely look like this. Price might bounce here. And then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart.
That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. Yeah, price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again, boom. This area of support made this area of resistance created here. Okay, so I make it simple for you guys, man. I do not want you guys to be struggling. Okay, there's going to be times life is going to be hard. The charts are going to be hard. People are going to be doubting you. People are going to be hating you. And there's going to be times you might not even believe in yourself. And all that doubt has to be killed. Okay, and indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year, no indicators. Okay, no indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay, that's what I need you guys to do. So 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level, and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God, and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart,
You got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay. Follow your heart and follow your setup. Okay. You tell yourself, I'm only going to play break and retest. Okay. If you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. I'm very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, should see you at stackmode.net. Stay prayed up to God, keep grinding. Catch you in the next one. Peace.
All right, guys, this is going to be the easiest way on how to read the crypto chart. So it's going to be really imperative to know how to read the chart. It's going to tell you when to exit a lot of times. So sometimes when you come into the cryptocurrency market, buying when there's a lot of hype could mean that you're buying relatively at a high price. Okay. So when we show you guys when to buy at the dips, how to know when to trim some contracts off or trim a percentage of your tokens off, and how to know when it's a good time to buy in general. Okay. So one, let's talk about support and resistance in the first place. So understanding the logic, this is a left to right chart. So price started way over here and it's way over here today. Okay. So we can clearly see from a logical perspective, the goal of the chart is to go in an upwards direction. Okay. Price year after year, month after month, even with dips, incrementally decided to keep going within a higher direction. Okay. So we can already logically put into perspective that, all right, the ultimate goal of cryptocurrencies are to keep breaking new all-time highs. Okay. Because people want to invest their money and make their money by buying and holding it as something that has future value. Okay. And in order to do that, price has to keep breaking new all-time highs. So let's say current price right now, as of this video, Bitcoin, it's 122,000, right? All-time highs, which is going to be the highest area of resistance, and resistance is going to be an area where price decides to fall within a downwards direction. So your highest area of resistance needs to go ahead and be broken over and over and over and over and over and over again. And that's how price progresses. Okay. So if I come over here, I can see at one point in time, the highest price for Bitcoin was 109,000. But then I can see over here to the right, price decided to get above the area of resistance here. And once again, resistance is going to be the area where price decides to fall in a downwards direction. So we can see price getting above the area of resistance here, tried to hold it, and then over here, it definitely held it. Okay, and what happened? Price decided to stop falling around this 109,000 area, and it progressed to a new area, to 122,000. And it's going to try and progress again to maybe 150,000, and so on. It's going to just keep going, maybe to 1 million. Okay, so that's how things work. So as far as the cryptocurrency market, understand that people are investing their money to make more money. So the goal of this is for it to go in an upwards direction. Okay, people are trying to get paid based off of just growth and capital gains. Okay, which means you're getting paid as something moves within a upwards direction. So resistance is going to be a really important thing to understand, especially when just coming onto the charts and just putting on certain trades, because it's going to tell you when to close too. So say you wanted to close a certain percentage of your position
then you'd be able to do that as well too at areas of resistance. Okay, so you know it's an upward chart. So you know areas of resistances are looking to be met with each other. Okay, so prices, as you can see, like this area right here, could mirror each other and do the same thing. So price came into this area once, twice, okay, and mirrored each other. Okay, once, twice. Price hit that blue line and decided to fall within a downwards direction. Okay, so that's why knowing when price is about to hit an area of resistance is going to be extremely imperative. Okay, because it's going to let you know when it's time to close, when it's time to trim some profits or anything like that. Okay, so resistance. That's going to be when market decides to make a top and fall in a downwards direction. And the opposite of resistance is going to be support. So the opposite of resistance is going to be support. And support is going to be when price makes a bottom and decides to bounce within an upwards direction. So after resistance gets made, and the whole logical reason resistance gets made in the first place is because price can't just keep going in an upwards direction. People are eventually going to want to take profit and take their money. Okay, so they're going to want to take their money off the table. And when that happens, resistance is going to get made. So that's why price goes in a downwards direction. Okay, because it's too much supply. It's more supply than demand. Okay, and then when price decides to go in an upwards direction, there's a lot of demand. Okay, there's more demand than supply. Okay, make it scarce, which is why people make money when stuff goes in an upwards direction. So that's a logical reason why support and resistance work with each other, why they correlate with each other. Okay, so support is going to be when price goes in an upwards direction. Resistance is when sellers come in after holding from a while, and then they want to go ahead and sell, take some profit, and then price is going to go in a downwards direction. Okay, so we know that one, price is always trying to hunt areas of resistance. You can see on the Bitcoin chart here, we know that price is trying to hunt all-time highs here. Okay, even no matter if price makes the most vicious dump to zero, it's still one day, inshallah, going to try and reach all-time highs. That's just how it works. That's just how it works. Okay, price is going to try and break this 124,000 level here. Okay, it's going to try and just continue to go up. Okay, and what can also happen here, so we see, okay, price is trying to meet up with the highest area of resistance to try to break it, or price might reverse here. Okay, it might reverse here, and even if it reverses all the way down there, okay, finds a low right here. Let's say support gets made right here. So even if support gets made down here, it's fine. Okay, because price is still going to try and sweep back up. That's just a better point to buy. Okay, so you know that price is always going to try and break areas of resistances. Now, due to that fact, you know that, okay, if price makes a good dip down, either if price mirrors an area of support and then bounces up, okay, I'm going to know, okay, that's going to be a good place for me to buy. Or if I see an area of resistance, right, get broken and turn into support, then I'm going to also know it's a good area too to buy. Okay, check out this area right here. So I can see right here, this area of resistance got created. Price decided to fall in a downwards direction. Okay, and you can go ahead and see to the right, price decided to break out of this areas of resistance right here. Okay, and guess what? Price decided to break this area of resistance right here and turn it into support. So resistance got formed, broken, okay, and when an area of resistance or support gets broken, we know that's called a breakout. Okay, and resistance, okay, an area where price fell down at, got broken through because price is trying to make some progress and keep making new highs so people keep making money, inshallah. Okay, and support gets made right here. So support is going to be that area where price decided to bounce in the upwards direction. So support can be formed after an area of resistance gets broken sometimes. So sometimes resistance can be broken, but it's a support. Okay, it's going to be my favorite model. Okay, and this model is going to be called break and retest. Okay, so whenever you see resistance get broken, turn into support,
That's going to be called break and retest. Break and retest is going to be just one of the surefire ways in order to take safe trades, especially when you're taking dip downs. Okay, so if market makes a dip and you're like, okay, is it going to be a safe place? Then you can go ahead and look for break and retest to go ahead and define that. And another way, you're going to go ahead and decide to see if price is going to be a good place to buy at this area, is you can go ahead and look for what I like to call support mirror. Okay. So sometimes you're going to see an area make an area of support. Okay. And then no matter what happens, even if price goes below that area of support, one day it might come above it and then bounce at the same area of support again. Okay. So if you see the same area of support get reacted off of, okay, I like to call that support mirror. Okay. Support mirror. So let me go ahead and show you an example of a support mirror. Okay. This is how you know that, okay, price wants to go ahead and do the same thing over and over again. Okay. Because essentially that's what price is doing. Okay. It just does the same thing over and over again. So let's check it out. So I can see this area of support was created right here. Okay, again, area of support is going to be an area where price decides to bounce in the upwards direction. All right, so just keeping it simple, we know that. Okay, price bounces in an upwards direction once it hits support. Okay. So I can go ahead and see over here to the left, price decided to create some support right here. Okay, so right here, price decided to create some support, okay, and then blasted up. Okay, price made this area of resistance, and we're trying to make another one right here and break through it. Okay, all of these up here where price is falling within a downwards direction are going to be classified as areas of resistance. Okay, area of resistance, resistance. And we can go ahead and see down here, price is going in an upwards direction. Okay, support. Okay, down here, price going up. Right here, price going up. Okay, support. But we can see up here, price going down. Price going down. Resistance, price going down. Okay, resistance. Okay, so this is how support and resistance correlates with each other. And whenever you see support and resistance bouncing in between each other like this is what I like to call a range. Okay, so this area of support got created over here. The price did the same exact thing and created support over here again. That's how I would have known, okay, that would have been a simple or a good place for me to go ahead and purchase some Bitcoin, for example. Okay, I saw support mirror, or if I ever see resistance get broken, okay, and turn into support, then I'm also going to know, okay, that was a really good area for me to go ahead and purchase too. Okay, so I'm also going to have this area here of resistance that got broken and turned into this area of support right here. Okay, resistance, support, resistance broken, turned into support, or support bouncing at the same place. Okay, even if it's not immediately, even if price breaks the support, but if it comes back up, bounces again at the same place, that's going to be a support mirror. Okay, so let me go ahead and cover another example here. So when we're looking at support and resistance, it's understanding the range, putting everything in the big perspective. Okay, putting everything in a logical staircase mindset. Okay, so essentially that's what we're playing when we're looking at the charts. It's a staircase, and it's just about who can read the staircase ideally the best. Okay, so take this area right here. Okay, so I marked this out a couple of days ago, and we can see it's working out now. Okay, so I can see this area of support right here wasn't just created for a reason. Okay, so I personally like to look at everything on my higher time frames too. So we're always going to be making sure we're doing everything on the 4-hour time frame, and we're going to be doing things on the daily time frame. Okay, so what I'm going to go ahead and do, get the black line here. Let me just put it down. Okay, so I like to look at my daily first, zoom out. I know I'm playing a left to right chart. The goal of it is to go in the upwards direction. So I know that price is always trying to break resistances. Okay, so my take profit is going to be all-time highs. Okay, especially when I'm trading crypto. That's what I'm going to be wanting to take some profit off or close some of the position personally, is all-time highs. Okay, so boom,
Let me go ahead and go to my 4-hour here. And we can see price created this area of resistance all the way over here to the left. Okay. Price decided to break this area of resistance. Could see price went up, went up, went up. Made all-time highs right here. All-time highs is the highest point price has ever been. Okay, and price is going to be always trying to aim to break that. So always know that within a logical perspective. So all-time highs, ATH. Okay. So ATH stands for all-time highs. So price is always going to be trying to hunt this area, no matter what. No matter how much we dump down, it's always going to try and sweep back up. And ideally, we're going to be hunting this area. Okay. Because the point of these cryptocurrency tokens, the point of these investors and coders and people working so hard to get these laws passed is so it can go in an upwards direction. So not only people can make some more money by investing their money, they're going to be able to have the freedom to send money and transfer money however they would like via the blockchain system. Okay. So it has value. It's not just going up for no reason. This is something that's bringing value to the world. So understand that that's why it's trying to go up. It's not just trying to go up for no reason. Okay. Now, you can go ahead and see this area of resistance that I created right here. And we can see resistance got broken once again and turned into support. Okay. Resistance got broken, turned into support, and then price is heading into an upward direction, looking to break the all-time highs in order to try and break that. And it might even retest off of that. It might break the all-time highs. It's a common scenario. All-time highs gets broken and turns into support for a little bit. It might burst a little bit and then fall down. Maybe try the support again. Okay. And then it might want to even go lower. Okay. It might want to even fall down to an area of support like down here. Okay. So then I might try this area here. This is why it's amazing to have all your levels marked, because then you're going to see, okay, if price wants to go down to this support and then it holds it, okay, you start seeing multiple candles on the daily. You're like, okay, cool. And then you'll catch the whole sweep up. Okay. Even right here, price created the resistance right here, decided to fall down, broke above it. Okay. Created all-time highs, and then price fell all the way down where the original resistance was, decided to turn into support, and it's heading up in a sweep. Okay, looking to break the all-time highs. So let's go over another example here. So when we're putting in the repetition, we're putting in the hours, we're putting in the work, just staring at the charts. Okay, marking out setup after setup after setup, and just having that repetition and understanding that reading dips is pretty much going to be just understanding the logic behind the market. Okay, you know why market is dipping. Okay, when market dips, it's just creating more ammo, collecting more money, just so stuff can go in a more upwards direction with more volume and volatility. Okay, because if it's a left to right chart, so if someone got in here and they sold up here, okay, they're not going to keep buying. Okay, they're not going to just keep buying over and over and over again. They're going to go spend their profits. They're going to go reinvest it into something else, and they're going to just take their money. Okay. So that's just how that works. So we have two examples here, right? Two very, very, very simple examples here. So support mirror, okay? So we have this triple area of, we'll say quadruple area of support right here being reacted off of, all right? So we got 1, 2, 3, 4. We got 4 areas of support here, going within an upwards direction. Support, support, support. Okay, bounce at the same place 3 times. Okay, and we already know where it's trying to head to. We're trying to break through all-time highs, and we can even see all-time highs got tapped twice. Okay, price came up here and made all-time highs. And guess what? Price created resistance at the same area twice. So we know that this area of resistance is definitely special. The more taps that you have of an area of resistance or support is going to be really solid. Okay. Once again, the more taps that we have of areas of support or resistance is going to be really solid. So let's make sure we always have that in the perspective. Okay. Resistance, resistance. Then we have support, support, support. Okay. And we know price is trying to head in the upwards direction. Okay. Price wouldn't just be making support for no reason. It's trying to keep going higher.
Okay. So just understanding market within a simple logical perspective can really help. Price is always trying to chase and break areas of resistances, okay, in order to make price go in a higher direction. The higher the direction goes, the more something's going to be worth. The more something's going to be worth, whoever the creators are and the large investors are going to get wealthier. So they want it to go in an upwards direction. Okay. And if you're a large investor, you want it to go in an upwards direction too. Okay. So people are going to buy the dips because everything is not always going to fall down to zero every time. It's not how things work. And it's just not probable. Things build value and things are not going to always fall to zero. Okay. That's just fear. And just having fear in the market is just not something that's going to be tolerable. Okay. This is why we only fear God. Okay. And we take all the risk that we need to. Okay. So boom. Catching this support mirror would have been quite simple. Okay. And let's say you missed the support mirror. Fine. All fine. This is just confirmation that price wants to go bullish down there. But even if you wanted to wait for a dip down, you can see right here. Price created this area of resistance right here. Okay. Price broke above it on the 4-hour time frame here and turned it into some support. Okay. So even right here is a dip down too. Okay. And then price looks like it wants to continue to go in an upward direction still. Okay. So you can still see as you scale down to where it's going to be a solid place for you to go ahead and purchase your contracts. Okay. So buying the crypto lows, buying crypto dips and stuff like that is not going to be difficult. Okay. It's just about being patient. And even if sometimes you don't get the most perfect entry, okay, because only God is perfect. Okay, so we can't destroy our investment portfolio bring about the best entries of all time too. You see the support here got tapped 1, 2, 3, 4 times. Okay, so price most likely will not come down here a 5th time anytime soon again, I don't believe. Okay, if it just held this area for over 2 months, okay, bouncing in the same place, then I don't think it's going to go down and break it anytime soon. Okay, I would go ahead and just buy. Okay, you know price wants to go ahead and go in an upwards direction. It's holding stable support. And especially when you see tiny dips like this, okay, you're buying on red candles that made some retest. You could be like, oh yeah, and go ahead and take it up to the next leg. Okay, and just go ahead and buy and invest. Okay, you see all this space that's left. Okay, all-time highs. The goal of the market is to break all-time highs. You still have all of this space to go ahead and enter. Okay, there's still all this space left. So much space left, so much crypto to still purchase. Okay, and we're trying to catch the rest of this gap fill from where current price is at right now. Okay, catching the rest of this gap fill. And this gap is going to be bigger than the stop loss gap. And even it's like you're not even playing with stop loss, but if you wanted to, you know, you could go ahead and play there. But I recommend just investing an amount that you are comfortable to lose with certain things. Okay. So if you're going to say you're going to invest in Bitcoin, then you should be comfortable with all the funds that you're going to lose. Okay. Because trying to micromanage your crypto trades can just make you lose money in the end. Because don't forget, this is a left to right chart. So the goal of it is to go up, and one day it could just burst and sweep way back up. So this is why it's really going to be nice to buy at dips too, instead of buying at all-time highs. Because when you buy all-time highs, it can do nothing but go in a downward direction, and then you're going to be upset. And then you might close early, and then you might close for a loss just to buy the dip, and then, yeah, it's all over the place. So this is why we just buy the dip. We buy the gap fills. Okay, I can see all-time highs is up here. This area of support is holding down here, and I can see price wants to try and fill the rest of this gap right here. Okay, right here. Price is going to be trying to fill all the rest of this gap. Okay. So just focus on how a market logically works, and it's going to be pretty easy to make some profitable trades. For real. And so let's check out Solana here. Okay. So let's say here. We can see up here, price decided to create this area of resistance all up here. Okay, resistance all the way up here. So we know price is trying to hunt that. Okay,
We got this much left in the gap. Okay. And let's go and let's check out something here. So I'm gonna check out this area of support down here, right? We black line it. Boom. Okay, I'm gonna see if I see anything. Let me zoom in. Okay, I do. I see a heavy area of resistance right here on this line. Okay, so price created this area of resistance right here. This is why I like to just immediately look at the lows. Okay, I can see price create a resistance right there. Okay. Let me zoom it up here. So price did make resistance there. Let me see, where does price want to retest off of? Price also made resistance off of here. And let's see if we see any support mirrors or anything to the left here. Gotcha, strong areas of resistance here too. All right. Kind of some resistance right here too. So let me go ahead and go to new time. Okay, so we can see why that support got created. There's some heavy areas of resistance that get created at that black line right here. Okay, so you see, okay, price wants to go ahead and still try and head up in the upwards direction. And then we can see here too, price decided to retest off of this area here. Okay, price created this area of resistance like right here. Okay, and then price turned into support right here. So if price were to come down and try this area of support again, okay, that'd be a good place to go ahead and buy. Okay. Or even if price pulled back to like this area of support down here, okay, or resistance. So price is either going to try and come down to bounce at an area of resistance or a previous area of support. So it's going to try and turn previous areas of resistances that it already broke below it into support, or it's going to try and just mirror areas of support. And areas of support are most likely already in areas of break and retest that has happened to the left. A lot of the times that's going to be like what it is too. Okay. So let's go over another example here. So we always know that price is trying to hunt all-time highs. Price is always trying to hunt all-time highs when it comes to the cryptocurrency market. Check out Doge, for example. Up on my daily time frame here, I can zoom out. Okay. Oops, it looks like I marked this out here. So let's check it out. So we have this area of resistance that was created all the way up here. And then we have this area of support down here. Okay, and this support didn't come from no reason. It came from this area of resistance right here. Okay, support, and then price already had an area of support get created off the resistance too. Okay, boom, resistance, broken, turned into support the first time right here. Okay, you can see it on the first candle right here, and then price went upwards direction. So this is what I like to call the pro tap. When you see break and retest instantly happen, okay, that's what I like to call the pro tap, because you got to be watching the chart there, waiting for that resistance to be broken and turn into support, okay, to see if that's going to happen. But then when you see an area of support from the original retest get mirrored again into an area of support again, you know price wants to go ahead and probably hold that area, especially if it doesn't break and you start seeing what's called closes. Okay, so if you start seeing price tap the blue line and give you a wick, okay, I never like to enter on the candles that are wicking off the blue line. I like to personally enter on the candles that are above the blue line, because once it's well above the blue line, I know, okay, price probably wants to go in an upwards direction. I don't like to buy ultimate lows and ultimate highs. I like to sell at ultimate highs. I like to wait for ultimate lows to be created in order for me to catch it into ultimate highs. Okay, so I like to trade just safe. Okay, trading safe is going to be a lot better than trying to be overly precise with the best entry, the best this, the best. It's great to have it, but knowing where you need to close and knowing if it's a good dip area is going to be more than enough to make profit. Okay, take this example. You could see this area of resistance got formed right here. Okay, resistance turned into support. Resistance right here turned into support. Okay. So resistance gets broken and turned into support. Okay. Resistance formed, price fell down, broke, retest, turned into support, turned into support again, price going up, resistance here, formed. Resistance formed and then turned into support. And then, you know, okay, I believe price is going to be a good place to go ahead and buy right here. Let me go ahead and take it here, and you take it up, and you still have this whole gap to go ahead and catch. Okay, you still have all of this money to make. Okay, this whole giant gap. Okay. So once you see price confirming itself, making higher lows, okay, heading in upwards direction, here's the ultimate low. Okay, here's an even higher low. So this low right here is higher than this low. And this low right here is higher than this low. Okay, so when you see price making higher lows, heading in a staircase direction, you know, okay, price is most likely ready, inshallah. Okay, so just play logically and just take your time. Take your time and play logically. Understand like how much progress price is trying to make. Okay. It's trying to sweep into all-time highs. No matter what cryptocurrency, no matter how devalued it is, the goal of it is to go up. Okay, it wants to go up. Even if it's not going up, it wants to go up. I'll take this coin for example. So we have this highs area up here, then we have super all-time highs up here. Okay, so I can see that here. So I can see here. Price decided to created a support mirror. Support area right here. Support area right here. Okay. So, and we can go ahead and see over here too. Support right here. Okay. And the area of support didn't just come from nowhere. Okay. So, resistance. So, area of resistance here, broken. Turn it into support. Okay. Price went in the upward direction. Create an area of resistance up here, also known as the high. Okay, so resistance is just going to be a high area that price is trying to get back to. Okay, so price created all-time highs up there. Okay, so it's not quite all-time highs, but this is just a good area of resistance. How price is trying to get up to. Okay, so you can see price created the area of support here, create a support area here. Okay, and then try to mirror again right here. And the price is trying to bounce it in the upwards direction. Okay, and you can clearly see here, especially once you start looking at your daily. When you start seeing multiple daily candles past where the blue line is supposed to wick from, then you know a lot of the times, okay, inshallah, price is just incrementally trying to make its progress up to the highs here. Okay, trying to fill the rest of this gap here so people can go ahead and make some money, inshallah. So sometimes it's just about the way you're looking at the market. Okay. And then if you want to go ahead and close it there, you can completely just close it there. Okay. Oh. Let's go ahead and check out something else here. So let's say AVAX, right? If I zoom out. Yeah. You can see price is definitely trying to make some progress here. Okay, so before we even get to all-time highs, I can see for just one, we're trying to get up here. Okay, it's a major area right here. Gonna have some more major areas too. Major area right here. Major area right here. And we can see the area of resistance got created once. And it's tapping again. Okay, so one, and guess what? Price created a low. So I would already know here, price is a good area for me to buy right here. I could see price created the area of resistance. Check all the way over here to the left. Broken. Okay. And right here. Okay. Resistance. Exciting. One area right here. 1, 2. Broken. Turn into support. It's going to be a good area to go ahead and buy. Okay. And then you can go ahead and try and catch the sweep all the way in the upwards direction. Okay. So once again, this is classified as resistance over here. Check out how price is falling in a downwards direction. Okay. Resistance. Price falling in a downwards direction here. Downwards direction. Price is always going to try and chase resistances. Okay. Even though it mirrored right here. Okay. Create a resistance again at the same line. Doesn't matter though. Got broken. Okay. No matter how many times things fall down, it's always going to break through. Okay. It broke through right here. Boom. Price made some progress. After that, price created resistance right here at this area right here. So this is why it's important to be closing at certain areas of resistance, because you can see price hit that area of resistance and decided to fall down again. Now price might try and break this area, but it depends. If you're just scalping or in a swing trade for a couple of weeks or days, it's not something you want to hold infinitely, then I advise you close at areas of resistance above current price. Okay, if you buy a dip, or you close at an area of support above current price. Okay, and this is because support above current price can turn into resistance, causing price to dip. Okay, so support can be broken sometimes and turn into resistance, just like resistance can be broken and turn into support. Okay, so check out. Once again, I'm gonna put down this area right here. Boom, check out this line. It's extremely simple. We got resistance right here. Some more resistance right here. Some more resistance right here. And price is going in a sweep upwards direction. Okay, so I can assume that price might want to try and break this height right here. Okay, but even for that, we got this resistance up here. Okay, we got this resistance up here. This one here. And this one here. That it just mirrored at. Okay. So price is going to keep trying to get past these blue lines above, as these are all going to be areas of resistance. Area right here. Area right here. Right here. And right here. So it's exciting. Okay. Market starts becoming extremely fun when you start knowing how to read the flow. It's, you know, it works in clockwork. And you can see even down here, see price created this area of support right here once, twice, 3 times. Okay. And price is constantly making, so here's a low. Okay. But this low is higher than this low. Okay. So when you see price making higher lows constantly, you know we're heading in an upwards direction, inshallah. Okay. So it's super duper fun and exciting when you see, okay, this is how everything works in correlation. It's like art. Okay. It's like a puzzle piece. That's how everything it comes together and all clicks. Okay. So the resistance got created there. The support floor got created here. Resistance got broken, turned into support. And you start seeing the staircase in a whole perspective. Okay. It's very, very, very interesting once you start putting everything into logical reasoning. So you can see price is trying to break the resistance up here. Okay. It created it, but we know price is trying to hunt it, bring it, so we can end up to this resistance up here. Okay. So AVAX, whoever the creator of it, can claim that they have the best coin. Okay, that's the whole point of people creating stuff, is so they can try and be the best or try and help people. Okay, so it's wanting to go up in an upwards direction. Okay, the developers of AVAX, whoever's took time coding the token, thinking of the idea, I'm sure they want their idea to be worth some value. So that's why things go in an upwards direction. Okay, so we can see how much confirmation here that price is bullish. So much confirmation. We have a support floor, strong floor. We have strong floor theory supporting that we want to go in the upwards direction. And we have break and retest. And we have resistance getting broken and turned into support. It's crazy. Okay. So we're good. We can go ahead and get into something like this if we wanted to and close at any of these areas of resistances above current price, because we can see, just like these areas of resistances can mirror each other, just like supports can. But if we're buying at the bottom, we want to be closing before we get reversed on. Okay, this way we're going to be keeping all of our profit, or as much profit as we can, inshallah. Yeah. So just don't panic too. When you see your close, you know what a good setup looks like. You got to really trust God. You can't have any fear. and you're good. Once you get in your setup, you got to trust that. You got to be like, all right, I'm good. I'm good. I'm good. Don't think about drawdown. Don't think about losing. Okay. You got to be comfortable with whatever you put into. Okay. If you put in an amount of money into a trade, you got to be cool with it going to zero. I promise you, it's going to help your psychology a lot. Okay. Be comfortable with just losing whatever you put in. And I promise you, your trades are going to work out a lot better. Okay. The goal of these are to go up. And the reason why a lot of people are unprofitable is because they self-sabotage. Okay. They jump in the middle of their trades and they cut it early. Instead of seeing the plan all the way through, you got to see the plan all the way through. Okay. We never know what God has planned. You got to see all the way through. If it's even in your heart to get it in the trade, you got to see all the way through. Okay. If it's working out, if you're up some profit, don't just close it and see it all the way through. You could see 10x for that profit. Okay. You got to see it all the way through. Don't self-sabotage your trade. Don't destroy anything just based off of thinking too much. Okay. That's something I've been having to check myself on with certain things. Okay. So if price creates this area of resistance right here, and then price comes all the way back down to it in terms of support, don't mentally self-sabotage. Get in that trade, okay? And you can confidently take that to this area of resistance here. I'm gonna bust out the ruler, and you can see how many units of price action are left. It's a whole gap, still around 5.4 thousand, right, areas of price to go ahead and make on this token here, okay? So you can make a lot of profit here. Still a very, very, very large profit window. Even if you wanted your stop loss underneath this low, right? Say you set alerts down here if you wanted to, okay? The risk to reward, it'd still be positive, okay? Even if you entered right here. So let me pull out the risk to reward tool, and the risk to reward tool is pretty much gonna show you how much you're gonna make versus how much your risk is. So say the risk is down here and the target's all the way up here. So your risk reward would be a 1 to 2. So no matter what, if you hit take profit, right, you would double your money. Okay, so you would double your money. So just focus on certain things. Okay, put it into perspective. Okay, like, okay, is this the type of trade that I want to get into? Does it match up my parameters here? Okay, and even you could see the ultimate entry is all the way over there, right? Check it out. Here's another confirmation that price wants to go bullish. Inshallah, check it. Boom. Price created an area of support here. And guess what? We have some more resistance right here. Break and retest. It's spamming it over and over and over again. It's actually almost impossible to not make money in the market. It's genuinely difficult. Okay. You could be the least technically gifted person of all time. You could be blind and you can make money. Okay. Like if someone told a blind person where all-time highs was and someone set alerts there, okay, and something called out when all-time highs was hit, they would be able to make money. Okay, if anything, that might be better. Okay, because you wouldn't be staring at the charts. You wouldn't even know to self-sabotage your trade. You're just going to be in, just expecting take profit to get hit. And then when your alert goes off, you're going to be good. Because how many times have you been in a trade and then your alerts go off and take profit gets hit? A couple days or weeks later, you're like, dang, I wish I got on that. Okay, so in order to stop that, just don't look at it. Don't stare at the charts all day long. Okay, and don't self-sabotage. It's really easy to self-sabotage by overthinking. Okay, sometimes you gotta just leave it with God and just keep it trim. Keep it trim and just let it do its thing. Okay, let the trade work out. That's the reason why you got into it. You analyzed something. Okay, you saw something good in it. So just play it out. Play it out. So this would be a really good sweep to go ahead and catch too. And you're gonna notice too, all the crypto pairs that we just looked at, they have a very, very similar kind of price action formation. So they all had a very similar gap. Okay. And that's because a lot of the cryptocurrencies, some of them do move like relatively like the other ones, but sometimes like Bitcoin, for example, are just so powerful and just do their own thing. So yeah, depending on what you're looking at. Yeah, but say Hype, for example, Hype could have a very similar looking setup to Link. Okay, with that large gap with the resistance way above. Okay, but then something like Bitcoin, okay, could literally be at all-time highs. Okay. So it just depends on what you're looking at, depending on how many people are investing into what you're playing to. It's going to depict on how quick it moves. So if you just see something else at all-time highs and one crypto just isn't, then one is going to tell you how valuable something is in the long run, honestly. And yeah, so you can see this came out in 2021. And price is trying to make some progress and sweep back up, but let's analyze this here. So let me go ahead and instantly put this area of resistance as my take profit up here. Okay. It's going to be the highest point I can currently see with my eyes that I know price wants to try and sweep. Okay, so even right here, price created this area of support. I can see why. Support got created because of this area of resistance up here to the left. Okay. So that's going to be one thing I like to do, is just put a line down at the lowest area of support and be like, why? Why is this support created? So breaking everything down logically is going to really help you. Okay. So check it out. Even ask yourself why right here. Okay. Why is this support created? You can see this area of support all the way over here to the left got created. Price went in the upwards direction, and price mirrored that over here to the right. Okay. And then went in the upwards direction. So that's going to be another confirmation that, okay, I think price wants to go in the upwards direction. Okay. And check this out. This is definitely going to be like, okay, let's see. Price created resistance right here. Resistance decided to get broken right here. And just like our bread and butter, we always talk about, turn into support. Extremely, extremely simple. And we can see price wants to try and fill in this wedge to this resistance up here. Fill the resistance up here. Okay. And then fill the resistances up there. And we still have around this much area of price action left. Okay. Simple. It's simple. It's not hard. It's not difficult. And it's just taking our time. Really taking our time and knowing when we're investing and why we're investing and what we're going to be getting invested to. Okay. And it's taking your time. Straight up just taking your time. Okay. When you're waiting for these trades to work out, when you're waiting for areas of take profits, you're like, okay, let me go ahead and take my profit, cycle it back into whatever I want to, and just keep going, keep going, keep going, keep going. Okay, take it trade by trade. And this is going to be a really, really surefire way to keep growing your account. Okay, just analyze each setup, and the patience factor is really what's going to determine how quickly you're going to grow your account. Okay. Because if you run up a bag, you don't wait for a setup that you should be waiting for, and then you blow it. That's on you. Yeah, we take that to the chest, we pray on it, we move on, we come back stronger. Okay. But when you're marking these setups out constantly, we just did like 10 setups in a row. You have everything hawk-eyed down, just gonna be constantly raking in money, raking in money, raking in money, raking in money. Okay, so it's important to be humble and really disciplined and know what to do with the profits. Have a strategy, know what you're gonna do, whether investing into business outside of trading or just doing whatever. Okay, just know what you're gonna do with profits. Okay, because once you know how to read the market, it becomes it's really simple. Okay, it's very, very simple. You know the gap fills, you know how things work, and you can break it down within logical perspectives. Okay, you can say, okay, this works because of X, Y, and Z. This works because of ABC. Okay, and all of these things are going to be like, okay, well, we know why this is occurring, so let me go ahead and do this. Okay, and the logic behind everything really, really helps a lot. Okay, helps a lot. So let's go and let's do one more example here. And going through a bunch of different crypto coins and constantly marking out setups is going to be a really good way to get profitable too, because you're just going to be living on the charts, understanding how things work, and you're going to be like, yeah, this is definitely how market's supposed to be played. So check this out here. I can already see this area here. So I'm going to my daily. I can zoom out. Okay, so I have this area right here. Okay, so I got this area of support right here. So support got created based off of this area of resistance right here. Resistance right here got broken. Resistance got broken. Turned into support. Okay. So resistance got broken, turned into support, and I could see again within the distinction. I could see resistance right here got broken and turned into support. Okay. And then price decided to make a new high all the way up here. So I can see that price wants to try and at least tap this area of resistance right here. Okay. And if I wanted to, okay, would be able to go ahead and invest into this, catch the rest of this gap fill. Okay, close up this area of resistance here. Trim there, you can trim there. Okay, and trim there. Okay. You can see price is trying to make a sweep, and if I bust on my ruler here, could see all the room that's left. Okay, all the room that's left to go ahead and attempt this to make some money here. Okay, so take your time, take your time, take your time. When just reading your setups, keep paying attention to resistance and to support. Resistance and support is going to be your best friends, okay, within the market, and just trust. Okay, trust. Okay, you got to really believe in your setup. Okay, trust God. There's a reason why you're thinking about getting these setups. You're good. Don't blow it. Don't blow it. And you can constantly keep getting in these setups, making your money, putting into other long-term positions that you just don't have to close, that you could have open forever if you wanted to. Okay, so it's going to be up to you how you want to play it and how you want to grow your account. All right. So head over to stackmode.net, tell them how to trade cryptocurrency. Say prayer to God. Keep grinding. Peace. All right, class, we've all heard about passive investing, how we can live off our money, just making this money infinitely and forever. Let's talk about one of the most popular ways of how to invest and how to live off passive income through what's called dividend investing. Let's jump into it. So let's understand what the core is and what are dividends in the first place. So let's break down the definition and the mechanics of a dividend. So a dividend represents a distribution of a portion of a company's earnings decided upon by the board of directors to its shareholders. And it's essentially a reward for owning a piece of the business. So shareholders pretty much get rewarded for investing into whatever ETF they invested to, whether it be SCHD, BTIC, QQQI, any dividend that you invest to, which is going to be a bundle of stocks essentially. And instead of just investing into one stock individually, you could buy a ETF, which pays out dividends, and certain stocks pay out dividends as well too. And they pretty much give you your money back for investing it. They say, hey, thank you so much for investing into us. Here's some money back. Okay, so you can use that into an infinite loop and invest into that and live off of passive income. Okay, so it's essentially your reward for owning a piece of the business and the investment. So it's a source of income. So unlike capital gains, which is required when you're selling a stock or when you sell at the highs, dividends are going to be more of a direct cash flow, and they're often paid quarterly. And this creates an immediate tangible return on your investment. And they're on a fixed payment schedule. There's some dividends that pay annually, once a year, quarterly payments, which are going to be between January, April, July, and October. Okay. Some companies and ETFs pay monthly, and some pay semi-annually or annually. And the key is going to be consistency, depending on the type of income that you're looking for. Do your research before you invest in any type of dividend, ETF, or stock to see what type of cash flow you're going to be getting. Okay, you don't want to be investing in something and see one ETF or dividend pays out every month, and then you invest into something that pays out once a year, and you're not getting the cash flow you expected. All right, don't just ride somebody else's wave. Make sure you guys are doing your educated research. There's so much free information out there. Head over to Stackmode.net if you need some more investment education. So let's talk about some tax implications, right? So even though dividends can be reinvested, right? So let's say you are getting $5,000 a month from a dividend, right? That dividend money is still taxed. So even if you reinvest all $5,000 of it back into whatever stock or ETF you invested into to get the money in the first place, it's still going to be taxable. Okay, so keep that in mind. Break down your income. Make sure you guys are putting a percentage away of your dividend income away so you don't get taxed on Uncle Sam. You pay your taxes by the year. So let's talk about some declaring dividend dates, right? So the crucial dates include: one, the declaration date. The declaration date is going to be when the board announces it, and the ex-dividend date. Okay, the cutoff to buy and receive the dividend. That's what that date is. And the record date. That's the shareholder list check. And then we're going to have the payment date, which we're all looking for. Okay, the payment date is going to be when the funds hit your account, and you can go pay your bills, pay your debt, or go ball out, take your family on the trip, do what you need to do. Okay. And you must own the stock or dividend ETF before the ex-dividend date to qualify for the payment in the first place. So the power of compounding, right? Your wealth engine. All right, so look, if you're in your bag for say a couple of years, you're grinding hard, okay, you're waking up, you're praying, you're working out, you're grinding your business. Say you run up a couple of M's within, I'll say 5 years, 1 to 5 years, you run up around 1 to 5 M's. You could put 2 of those M's into an ETF, stock, etc., and potentially live off of that passive income forever. You'll be getting around $5,000 to $10,000 a month. There's no reason to ball out, start spending $100K a month. There's no reason to live that, that crazy. Stay down, you can still take your nice trips, and you could pay all your bills and live in a pretty nice house for $10,000 a month. And that's just that income alone. Okay, so you can leave your business income alone, leave it for your kids, leave it for your family, your husband, wife, family, grandma, whatever. Okay, and then stay down, pay your bills, make sure you put in money away for taxes though. Pay your bills, do what you need to do, pay your mortgage, rent, whatever, with that dividend income, okay? Because we're only getting older day by day. Tomorrow's not always promised, God forbid, there's gonna be things like sometimes people go disabled, So we wanna be making sure we can still feed our family if any situation occurs. So what we're gonna do is plant these seeds now, today, okay? So even if you go disabled, even if you die, your family can still be eating, because of the fact that you planted your seeds. Okay, so stay down, you don't gotta pop it. Save a little bit. Sometimes it's not time to pop it. It's not time to be outside. Okay, if you work outside, eat at your job. Okay, if you can, any type of food court, try not to spend any type of external money. Okay, try and get what you can, any type of discounts, go back in the house. Okay, if you work in the house, no DoorDash, no Instacart, no none of that right now. Okay, let's try and stay down. And if you are gonna DoorDash, don't DoorDash individual meals. It's something my wife really helped me out with, okay? I was realizing how much money I was spending on individual meals, wasting my time, wasting my money, when that could have been going into some Bitcoin, going into some dividends, etc. Okay, making that income grow. Okay, get some groceries, buy 1 bundle of groceries, okay, a couple times a month, and your income's gonna be spread out a lot more strategically, I promise you. All right, so think about it. Reinvest your dividends as well too. Okay, so once you start stacking up some cash flow, don't get fancy in life right away. Okay, that's something that could really hold you back. Okay, once you start getting financially free, once you clear that debt that's been haunting you down, as you guys been waking up praying to God to just go away so you can increase your income. All right, once you pay off that car, okay, once you get the debt off your back, please don't immediately go get fancy with your life and put yourself right back in the hole. Okay, use the dividend income and stack up. Okay, stack up, get some reserve for yourself. Okay, and take that dividend income and replace the bills, even if that's the case. Okay, even if you guys are getting $400, $300 a month from dividend income, that's your car note now taken off. Now you have $400 extra to either A, put it into some business. Okay, you can go donate, do what you need to do, take care of your mom, take care of your family. That's some more grocery money, or put it into some Bitcoin options, futures, Forex, whatever you want to do. Okay, just the fact that you have that money stacked away though into something paying you out a consistent dividend, you're not going to get bills chopped off. The more bills you have chopped off, the more free cash you're going to have to play with. Okay, the more you can help your family out, do what you need to do, and just stand on business. Okay, if you want to go put some money into your business, do that. Okay, get some more income flowing, then take that income, increase your dividend income, and that way you guys can pretty much live off of doing nothing. Okay, if you have a month where you know what, say be like, I've been hustling hard, I just want to focus on myself, I just want to get closer to God, I want to work out, okay, I want to start just working on myself. Okay, you guys can do that. Okay, you could take 3 months off because you're going to be good. You planted your seeds in the dividend income. Okay, you're getting that money every single month. Okay, you could take time, get closer with your family if any situation happened. Okay, you guys are feeling like you're not as close as you need to be. You could take a break. Okay, you could pause, and rent's still going to be paid, mortgage is still going to be paid, and you're still going to be putting money in the stash because of the fact that you had that money planted in the dividends. All right, so make your decisions. Okay, you guys want to go ball at the mall, okay, or put that money into some dividends. Okay, I'm telling you, if the more you invest today, the more you stay down today, your future self is going to thank you. Okay, because sometimes life's. Okay, God definitely throws some curveballs. Okay, there's going to be times where, God forbid, people lose jobs. Okay, things like that, stuff happens. Okay, sometimes businesses crash, websites shut down, etc. Okay, certain TikTok bans, certain creators couldn't post then, and that was a big major source of income. So what we want to do is prepare for any type of situation so our family and ourselves are not in jeopardy if things hit the fan. Okay, so saving money and investing, it's not just trying to make money, it's survival. Okay, it's survival. because not everyone has family they can depend on. Not everyone has people they can depend on to go to their house if something hits the fan, or if they happen to not have a place to stay. Okay, so what we want to do is always protect ourselves. All right, so money is going to be survival. Okay, don't just think of it as luxury and leisure items. Okay, protect yourself and protect your family. You don't want to have them starving or have them getting fed by somebody else's accord because you're not hustling, because you're not staying down. So be the one who stands on business. So dividends are also going to be extremely effective during flat or declining markets. And dividends provide a consistent positive return, and they help mitigate overall portfolio losses. And they offer psychological and financial cushion to keep you invested. So you guys can honestly just stay down, invest in the dividends, stack up your cash flow. Okay, if you feel like market's at all-time highs, you can buy some dividends. Okay, you can buy some dividends, and you're still going to be stacking some type of cash flow, essentially. Okay, and with the power of compounding, guys, I'm telling you, okay, the power of compounding is going to be extremely, extremely essential. Do something every single day. Stack up those wins, okay? And we're going to talk about drips, right? Drips are going to be extremely important, and that's pretty much just taking the dividends and reinvesting it back into the dividends. And they just automate the process of buying low, fostering consistent investments, and taking those dividends and reinvesting it back into those stocks, ETFs, whatever you bought. Okay. And the inflation hedge, right? So investing in companies that constantly raise their dividends, which means they're getting paid. Okay, if a company's raising their dividends, that means one, they're putting smiles on people's faces because one, people are using their products. So the more people that companies using their products, one, the more taxes that go to the government, the more the United States government benefits, the better. Okay, so everyone wins when these stocks go up in an upwards direction. Okay, don't just think, oh, stocks are just going up to go up. No. Okay, a lot of these companies, Amazon, for et cetera, okay, that you can go trade right now, employ hundreds of thousands of people, Microsoft, Google, et cetera. Okay, so these are really, really important companies that put food inside of people's stomachs. Okay, these companies pay people salaries, help them live. So think about that. Okay, that's also why we don't really want to ideally short the stock market in a lot of times. A lot of ETFs you'll see will be very, very consistent, especially if they pay out consistent dividends. Okay, they're going to consistently go up in an uptrend due to the fact that the economy is just a lot more beneficial as long as stocks are going in an upwards direction. That means more jobs for people, less homelessness, less government downfalls due to the fact that we don't have enough money to pay certain funding, things that need to be paid, such as government branches like the CDC, et cetera, okay, which would mean less jobs. Okay, so the more money the government has, the better, okay, because the less scientists we have, the worse for the world in general. Okay, we got to figure out what's going on. So understand that stocks, the higher they go up, the more it literally affects how the world functions. Okay, so thinking of things logically and extremely literally is really going to change your perspective. So evaluating stocks, right? The essential dividend metrics. So how to determine health and sustainability beyond the yield. So before investing, you got to assess a company's ability and commitment to pay and grow its dividends. And these metrics are fundamental screening tools to avoid yield traps. All right. So dividend yield percentages, annual dividend per share / the current share price. So while it's tempting, never let your yield be your only factor. Don't just be only looking at it. Okay. You got to focus on, is it consistent? Okay. You can't just focus on how much it's paying out because it could pay you out a lot in a 3-month span, and the next thing you know, it's gone. Okay. And then your reliable source of income is not dependable anymore. Okay, so high yields are often a warning signs. Careful. Focus on the payout ratio. That's going to be a big safety check. So automating growth, right? Dividend reinvestment plans. Let's talk about drips again. So leveraging the power of zero cost reinvestment. A drip is a service offered by companies or brokerages that allow you to automatically reinvest your cash dividends back into the same stock. So you don't got to worry about nothing. Okay, money's going to go right back into the dividends, making your cash flow infinite. And it's often commission free, including fractional shares. And let's talk about fractional shares, right? Maximize. So drips ensure that every penny of your dividend is put to work immediately, maximizing compounding efficiency by buying tiny portions of shares you normally couldn't afford. And automated dollar cost averaging, right? DCA, dollar cost averaging, is really going to be just a good way to stack cash, guys. Okay, put a good amount away that you have after your bills, groceries, etc. Okay, just keep stacking cash, keep dollar cost averaging, keep stacking up, get into stack mode. So since shares are bought at regular intervals, right, that's the payment date, regardless of the price, drips are automatically implemented into the dollar cost average, okay, reducing the emotional risk of time in the market. So you know how much you're going to invest, okay, just put yourself on a consistent plan, because I promise you a lot of the times within like a 5-year span, okay, you'll see positive returns. Okay, now buying at all-time highs though can be a little bit different, but if your goal is just dividend incomes, then just keep reinvesting. So exponential share growth. The number of shares that you own grow exponentially over time, which in turn accelerate the growth of your dividend income stream. And you literally get paid to increase your ownership stake. Okay, so think about that. So most brokerages allow drip commissions fee. Go into the settings. They can be a little hidden sometimes, but you can find it, I believe in. And they make it a highly cost-effective way to build with over time compared to manual purchases. Okay, so instead of going back, depositing over and over and over, it'll just automatically put everything on cycle. So imagine you receive $50 in dividends instead of taking the cash, right? Instead of having to have it settle, okay? Or if it goes automatically to a bank account and then deposit back into the broker, okay? Either way, the drip is just going to go ahead and buy some more shares. And next quarter, you're going to earn dividends on your original shares plus the new 0.5 shares, making your next payout slightly larger. And so the cycle repeats, and investing and increasing your base constantly. But please make sure you guys are looking out for your taxes. Okay, take care of that. Put some money away. Don't spend everything. So mitigate the risk, right? The downsides of dividend investing. Okay, so there can be dividend cuts sometimes. Okay, no investments can be without risk. And high dividend yields can be trapped sometimes. The tax implications must be understood to maximize the after-tax returns. We must be cautious investors, right? So the dividend cut is the ultimate risk. A dividend cut signals financial distress or a major strategy shift, often leading to a sharp decline in share price. Okay, that's why checking the payout ratio against the free cash flow is going to be essential, making sure it's profitable. And the yield, right? A very high yield, which is often above 8 to 10%. It's a pretty good range to check out. And it's frequently a sign that the stock price has collapsed and that the market expects a dividend cut. And when you buy the stock, the dividend is cut and you lose money on the stock price and the income stream, okay? And that could really hurt, okay? So keep that in mind. So opportunity costs. By focusing on only mature dividend payers, you might miss out on certain high growth companies, like many in tech, that reinvest all their earnings back into the business, leading to higher capital appreciation and cat of income, okay? So they're focused on like the super end game plan, okay, which is ultimately the smarter plan. And there's gonna be sometimes some new ETFs that are dividends that you can invest to, instead of just focusing on the super old ones. So do your research, okay? Depending on any time period that you're watching this, okay? Some things are going to be more popular than others during certain time periods, and focus on whatever sector that's pushing the future forward is my best recommendation. So taxation, all right, understand the difference between the qualified low tax rate and the non-qualified ordinary income tax rate dividends. So use tax advantage accounts if you want to, like an IRA or 401k. Downsides of those though, they're capped out. So I believe 401k only holds around like $23,000 a year, and you could put way more money than that away, okay, in the stash, especially if you're in stack mode. And a Roth IRA, if I'm not mistaken, I believe it's $7,000, and then when you're 50, it goes up to $8,000. So that's not nearly enough money. You could put that money away in a single month. Okay, it's people who spend $50,000 a day on ads. Okay, so it really just depends. That's not enough money. Those can be traps, so don't really focus on those. Get in your bag and believe yourself. You can run up M's, I promise you, inshallah. So geographic risk. So international dividends often carry foreign withholding taxes, which can be partially or fully recovered, but add complexity and potential cost to tax filing. And they always investigate the specific tax treaties for international holdings, making sure that everything is proper before you just buy into something, okay? And you can construct your income portfolio, okay? So successful dividend portfolios, not just a collection of high yield stocks, but a balanced machine designed for stability and growth across various sectors and time horizons. So sector diversification, okay? Get some different sectors in there. If it's tech, maybe power, maybe it's healthcare, okay? Whatever is important within the time period you're watching this video, do your research first, okay? And go ahead and invest, take your time. So spread your investments across stable sectors like utilities, consumer staples, healthcare, crypto, etc. Okay, there's going to be a lot of different sectors you could check out. Okay, and strong industrial companies, etc. This ensures that if one sector struggles, another could be doing extremely well. Okay, or if the U.S. does a deal restructuring the power grids or something, then maybe power sectors might be doing well. Okay, things like that are going to be put into play depending on what's happening in the economy today. So apply what's happening in your current society and just go to the stock market and make the right decisions. And inshallah, you'll make some good money. So look for companies with high cash flow, low debt, consistent earnings growth, and a history of raising the dividend, not just paying it. And consistent growth is going to be your key to beating inflation. So the ETF, right, and mutual fund usage. So use dividend-focused exchange-traded funds like those tracking the dividend aristocrats. For example, Noble or high-yield funds. For example, VYM, to gain immediate diversification with minimal effort. And this can form the stable, low-maintenance core of your portfolio and your income calendar strategy. Okay. Strategically select companies with different payment months. Some pay in March, June, September, December, others in January, April, July, October. And this can smooth out your monthly income stream, giving you a more consistent passive income flow in general. So do your research, invest in the sector that's going to pay you out consistently and make you some good income. Okay. And cultivate passive wealth. So key takeaways. So dividend investment, it's not about getting rich overnight. It's about building, once again, passive income. But what people don't know about what's called passive income is you got to hustle for the income in the first place. Okay, so you got to be hustling for as much active income as possible. Then once you invest, then you earn passive income. Okay, everything in life has to be earned. Okay, you have to understand that. There's no such thing as just chilling. No, you got to earn it and then you could chill. All right, so go hustle, go get some money on, then invest and you could chill, live off your passive income. Okay, but right now, if you're in stack mode, you're staying down, you're grinding, get to it. So focus on safety and growth. So prioritize dividend growth and safety. Okay. So look for a low payout ratio and low debt. Okay. Especially after you just got in the stack mode for years, however long you just took grinding your company. Okay. Scaling up your job, doing whatever. Okay. Putting money away. You don't want to invest into a dividend that you expect to pay you out stably to just crash. Okay, so do your research, make sure they don't have a lot of debt. Okay, even God talks about debt for a reason. Okay, debt can really be a sinkhole. Okay, if you get into debt, it's like your money pretty much gets negated for no reason. You make money, but then it has to go to debt. So it's like you get nothing in your pockets, you can't put it into investments, and you're just in debt. Okay, so debt is extremely trash and it pretty much cancels out your money. Okay, so focus and see, okay, did the company pay it off yet? Okay, is the company drowning? Is it a fresh new company that just took a big loan from someone? Okay, and if they fail, then they're going to be drowning. Okay, that might not want to be something where you want to invest your hard-earned active income into. Okay, so take your time, do your research, and then hop into something. Okay, avoid yield traps. Don't just focus on that. Okay, sometimes there's things way bigger than the direct active income. Focus on the stability. And you can use drips and monthly contributions to take advantage of compounding and other cost averaging automatically. Okay, pay your rent, groceries, do what you need to do, give your money to whoever you need to give. Okay, and then put some money away into your dividend investments. Okay, keep stacking cash and watch it grow quickly. And utilize tax advantage accounts if you want. If you have a job, then do a 401k. I don't recommend a Roth IRA. Just do a normal tax account. Okay, once again, believe in yourself. You can do way more than $8,000 a year. Okay, putting away that money is something that everyone could do. And $8,000 a year, you can definitely put way more than that a year away. So do a normal account, individual, taxable, and just take care of your taxes. Not that bad. Okay, and your growth isn't going to be stopped. But if you have a job though, and they pay out 401ks, I would take advantage of that. Just put a piece of your check away, and then if you want, as soon as you're older, you have that money there, and then you can pull it out tax-free if you even want it. So you can maintain diversification like this too. Okay, you can invest into certain ETFs that have a bundle of stocks, so you don't have to just rely on single stocks. Okay, and you could use, once again, different ETFs to build a robust, diversified foundation. Okay, so that's how passive income is going to be formed. Stay prayed for God, keep grinding. Head over to Stackmode.net for all trading education. mentorship slots, they're getting filled up. Class has been getting booked up. So yeah, if you want to book the next call, go ahead and book before all the slots are filled up. Peace. Hey class, this is going to be the full masterclass on how you can turn your money into more money by just investing virtually. Let's go and let's jump straight into it. So, building the financial foundation. So before committing any capital to the market, okay, make sure you guys are humble, okay? Humble yourselves. Before you invest even $1 into the market, understand that the market is not a place where you can have ego, okay? If you don't accept your loss into the market, if you don't accept the fact when you're just not correct, you can destroy all of your capital that you've been working hard for. Okay, I don't care how much capital you're investing into, 4 figures, 5 figures, 6 figures, doesn't matter. Okay, the more capital you're investing into is not going to make you a better trader. Okay, so also try and have a steady income. Okay, so don't think you're just going to come into the market and just turn nothing into something and professionally just trade forever. It can happen for some people, but it's really stressful, really anxiety driven. So try and have a steady income. Okay, work on your business. Okay, and then come into the market and invest. Okay, so stay prayed up to God. Make sure you guys are worshiping God and be humble. Okay, have some humility before you come into the market and have a steady income. Now let's jump straight into it. So before committing any capital to the market, a successful investor must ensure their personal financial structure is stable. And this initial phase dictates your risk tolerance and emotional resilience. Okay, there's going to be times where the market's going to be trying to break you down. Okay, it's going to be trying to beat you up. It's going to make you think that you're not meant for this. Okay, especially on certain things like options, which we're going to talk about in this, for example. But you guys got this. Okay, invest your money, take your time, and buy at the right times. Okay, if you want to learn how to buy at the right times, head over to stackmode.net and I'll teach you how to read the charts. I also have tons of free videos on my channel. So establish a solid budget and have a roadmap. So detail your income and your expenses. Okay, know how much you make and know how much you are going to lose in bills, and then go ahead and have a leftover amount of that, whatever that is. Okay, because you want to have some spending money just in case, because you know life happens. Put some of that away, and then whatever's left of that you could go ahead and invest. Okay, and only invest money that you genuinely do not need for daily life or near long-term goals. So pay your bills, get your groceries. Okay, take care of whoever needs to be taken care of, wife, kids, whatever, do your thing. Okay, and then you can go ahead and invest. And this way you can invest stress-free. Okay, if you lose money, you're not going to be tripping. That's not money that you completely need entirely. You're going to be fine. Okay, and try and have a safety net too. This is going to be paramount. Try and have 3 to 6 months or 6 to 12 months for higher job instability, as certain recessions and stuff like that come into play as the economy just becomes unstable in certain time periods. And you can have a bunch of living expenses saved up in a high yield savings account, or you can have it put in the stock market. Okay, stock market. I don't really recommend a high yield savings account though, because it's interest. Interest is wrong, so I don't really recommend a high yield savings account. But you guys can put it in a stock, put it in an ETF, and that's going to go ahead and make you guys some money. Okay, and this prevents you from being forced to sell investments during a market downturn just to pay your rent. So, and eliminate high interest debt. Okay, high interest credit card or personal loan debt often carries an effective return of 20% or more. Mathematically paying off this debt is usually the best guaranteed return and you can achieve before investing. Attack and eliminate consumer debt first. Okay, so try and eliminate your debt before you guys invest too. It's also just going to give you guys a bunch of mental health back. Okay, so if you have a credit card balance of $5,000 at 22% APR, then you must generate a new 22% return, okay, just to break even. And paying off the debt is a guaranteed 22%, okay, which significantly de-risk your financial future. So just pay off the debt so then you guys don't gain any interest, which is going to lead you to have to make more income in the future just eating into your investing profit. So pay off your debt. It's logical. And core investor principles and account types. Successful investing is less about timing the market and it's more about time in the market and adopting disciplined habits. So timeless principles. Be patient, okay? Don't think you're going to be getting rich overnight. And in certain cases where you do make a lot of currency overnight, okay, that doesn't mean you just blow it, okay? Don't go blow it. You need to go ahead and put yourself on a withdrawal schedule, okay? Before I start telling you guys how to make money, this is what to do with the money. Once you make the money, okay, let's say you make $500, take 50% of that and put it away. So 50% is 500, is going to be 250, okay? Once you have that, this is going to be the amount that you can go ahead and put into your bank account, or you can go ahead and reinvest that into certain things like dividend ETFs we're going to talk about, okay? Or you can use it to pay off debt or pay your bills, etc. And diversification. Never put all of your capital into a single stock, sector, or asset class, and do not keep all of your eggs in one basket, okay? So try and have a diversified portfolio, okay? We're going to talk about the different types of diversification, but don't just put all your eggs in one basket. And DCA, dollar cost averaging. Invest a fixed amount of money at regular intervals, okay? So for example, $500 every month, okay? And this smooths out the entry price and removes emotional buying from just buying huge leaps at one time or another, okay? You're going to set yourself on a consistent schedule, take care of your bills, and keep stacking up, okay? It's going to be in stack mode. It's going to require sacrifice. If you want to get to where you want to be, it's going to require sacrifice. Stay down. Don't buy anything you don't need to be buying. Pay your bills, get some groceries, and that's it. No extras, okay? And your brokerage account, okay? This is what is going to be used for really just playing options, okay? Playing options, futures, or Forex. Any type of short-term trading, okay? I would recommend a taxable account. And it offers maximum flexibility. You can have an infinite amount of money invested into it. And after tax and profits are taxed as capital gains when you sell, okay? There's also going to be some benefits though for long-term benefits if you hold for over a year. And retirement accounts, okay? They're tax advantage. So 401ks or Roth IRAs, they're incredible tools for retirement savings, and the tax benefits, either upfront tax reduction or tax-free growth, are critical to maximize long-term returns. And as far as Roth IRA, contributions are after tax, but all growth and withdrawals in retirement are 100% tax-free. So that's going to be the difference between that. And you can go ahead and use, once again, brokerage taxable accounts in order to invest into certain amounts. Okay, so you can go ahead and use that into just invest into your day trade or swing traders. But if you want a retirement account, then you can put that into your IRA. But you think about the IRA though, is that you can only invest a certain amount. It's going to be capped for a lot of the time. So I think it's around like $7,000 and $8,000 as 2025 this year. So yeah, it really depends. But taxable accounts, you can deposit an unlimited amount, make unlimited income. So depends up to you. So strategy 1, investing in shares in good companies. So the essence of value investing and buying a piece of a profitable business at a fair price and holding it for a long term. This is arguably the most stable path for beginners after index funds. Okay, so shares give you a piece of the pie. Okay, so say company is the pie, say I open Stackmode, okay, on the stock market, and you want to own a piece of the pie, okay, you're going to be able to have jurisdiction and a vote in who runs Stackmode company, okay, and as Stackmode company increases on the stock market, you make money too, okay. So that's going to be the point of people investing into shares. As the share price increases within an upward direction, people make money. Okay, so let's go and let's talk about the economic moat concept. So what is a moat? It's a sustainable competitive advantage that protects a company's long-term profit and market share from competing firms. And the wider the moat, the safer the investment. Okay. And the value of service increases as more people use it. Okay, so the value of a service increases as more people use it. So the more companies putting a smile on people's faces, more people are going to use it. More people using a company's service or buying products equals more money. More money, a lot of the time, equals a higher value share price on the stock market. Because since this generates so much money, it's going to be a valuable company. And valuable companies are normally highly priced on the stock market. And this makes it extremely incredible hard for competitors to challenge, especially once they have a high stock price compared to the other ones. And intangible assets. brands, patents, and regulatory licenses. And think of pharmaceutical patents or university recognized global brand names, and these cannot easily be replicated. So, analyzing growth versus value. Companies are often categorized by their investment profile, and beginners should be aware of the trade-offs involved in each style. So, growth investing, right? The focus. So, rapid revenue and earnings expansion. And these companies often reinvest all profits back into the business to fuel future growth, okay, making it a money powerhouse. And valuation. They typically have high price to earnings ratios, which means that the company is making good profit year after year and being able to most likely pay their employees good money. And they typically have high price to earnings ratios because investors are paying a premium for expected future cash flows, but they carry higher risk. And let's talk about value investing. Value investing is buying mature, established companies that appear to be trading below their intrinsic value, often found in older, slower growing sectors. And they lower price to earning ratios and often pay dividends, okay? And the expectation is that the stock market will eventually recognize the company's true value, leading to stock appreciation, okay? Just like the dividend, for example, SCHD, okay? For Schwab, for example. And you can go ahead and start with broad market ETFs, food, you could do SCHD, okay? And as you learn the market, okay, it's going to be a good way to just grow your profit over time and chill on, okay? But come on with a full plan and know what you're going to do before you just start investing. So, to build passive income with dividend ETFs, okay? A dividend is a portion of a company's earnings that get paid out to its shareholders. So after the company decides to go live on the stock market, okay, or the New York Stock Exchange, okay, it decides to go ahead and pay money to whoever owns the shares, okay? And due to the fact that it's supporting the people who supported them, okay? So it's pretty much putting the money back in the cycle. And dividend-focused exchange-traded funds offer a powerful, diversified way to generate income. So what are dividend ETFs in the first place? So dividend ETFs provide diversification and stability. An ETF holds a basket of multiple stocks, let's say for example 50 to 100 plus. The dividend ETF specifically targets companies with a history of paying and increased dividends, reducing the risk of relying on a single company. And dividends are typically paid quarterly. The ETF collects the dividends from all underlying stocks and distributes them to the ETF shareholders. And as far as dividend reinvestment plans, this is the key to compounding. So having a plan with it automatically uses the cash dividend to buy more shares of the ETF, and this increases your share count, leading to larger dividends next time, creating a powerful compounding effect. So you could look for ETFs focused on dividend aristocrats and companies that have increased dividends for 25 or consecutive years, right? Focus on high yield, stable sectors like utilities or consumer staples that pay out dividends, and make sure you don't see too many splits. Okay, split is when they're going to be paying out less dividends. Okay, so we're going to be wanting to look for an increase of dividend payouts, not a split to where they're going to be paying less dividends. That means that they can't afford to keep up with the amount that they're paying. So you could buy Bitcoin as well too. So Bitcoin, until it expires, until it's all fully mined up, it's pretty much going to be virtual diamonds and virtual gold. Okay. It does have a limited resource. It's going to go away at some point in time. And Bitcoin is introduced to the world to the decentralized digital scarcity. So a decentralized world is a world where no middlemen are involved, like the banks we were talking about. It's peer-to-peer transactions, and everything's done via autonomous contracts called the smart contracts. Okay, and the whole Web3 decentralized space has been broken down on my channel multiple times. So if you want to learn more about that, you can check it out. So buying Bitcoin is also going to be a really, really good solid way to make some currency due to the fact that one, has some value behind it. It's virtual diamond and gold. And two, it really helps society. People are able to trade money within a quick way all across the world, okay, due to the fact that Bitcoin exists and they get something out of it. So it's while a potential long-term asset, it carries significantly higher volatility. Sometimes it can go downwards in the downwards direction, okay, causing you to lose your money, but no risk, no. and different risk factors compared to equities. So the HODL mentality. Okay, HODL stands up for hold on for dear life. This reflects the need for extreme patience. Okay, so you cannot sell early. If you put yourself in a trade, okay, and if you marked it out and the trade's working out, don't just sell early taking your profit. Okay, let it ride out. Try and hold the trade for some years, okay, and see how much progress it's gonna make. Okay? Especially something on Bitcoin, like it's not something ideally that you want to be scalped. And given the volatility, most the time I would say try and keep your account with like the remaining amount of money that you have. So even after you bought your stocks and stuff like that, your crypto should be your final portfolio that you invest in. And unlike stocks and a brokerage, you're responsible for the security of your crypto assets. Okay, so use good brokers and use brokers that are going to be safe and keep your money secure. And you could directly buy cryptocurrency with your card, okay, like Coinbase, Kraken, or whatever. Okay, and then you can go ahead and send it to another wallet if you would like. So stock options, okay, it's going to be a great place to make some income, but it's also going to be a great place to lose some income. Okay, so you have to really be technically advanced. Make sure you're studying. So stock options are advanced. They're leveraged financial derivatives, and as a beginner, make sure you guys are mastering and studying the charts before you even touch options. Okay, if you're struggling with options, head over to Stackmode.net. I'll teach you guys how to trade it. Okay, options is not something that you want to be playing around with without the information first. Take your time. So the contract. Okay, an option is a contract giving the buyer the right, but not the obligation to buy or sell an asset at a specific price, also known as the strike price, on or a specific date. Okay, so if you think price is going to go in an upwards direction, then you would buy what's called a calls contract. If you think price is going to go in a downwards direction, okay, then you go ahead and buy a puts contract. Okay, so if price went from $32 a share and you think it's going to go to $40 a share, and it did, and you have the right contract, you would make a lot of money. Okay, if you think price is going to go down to $20 a share, and price is at $25 a share and it goes down, and you're in a $20 a share contract, or $21 a share, $22 a share, anything, anything under that, and take profit's going to be 20. Okay, so anything under 25 would go ahead and be an ideal contract, and that would go ahead and work. And it gives you the right to pretty much get paid based off directional bias. And options allow you to control $100 worth of shares for a small fraction of the cost, and this magnifies profits, but critically it magnifies losses just as quickly. And the intrinsic value of the option decays over time. Okay, meaning the contract is constantly losing value as it approaches expiration. So, eighth wonder. So compounding is going to be the process of generating earnings on both your initial investment and on the accumulated earnings from previous periods. And it's the engine of long-term wealth creation. Put your money in a loop. Okay, when you get some money from your business, invest it. And then when you make money from that, invest that. Okay, put your money in a loop. Your money should be like a tornado, a big whirlwind. Okay, and that's going to cause exponential growth, inshallah. And the returns generated in the last years of an investment journey are vastly larger than the returns in the early years. Even if the dollar amount invested remains the same, the accumulated interest is doing the heavy lifting. And time is the key multiplier. Time is going to go on anyways, as long as you're on Earth. So just let your money make some money. A person who invests $5,000 per year per 10 years, okay, so let's say they have 50K, starting at the age of 25, will have significantly more money at 65 than a person who invests $5,000 a year for 30 years, okay? For a total investment, it's going to go ahead and be $150,000, okay? So, invest, okay? Get into stack mode, take your time, put money away, and just keep grinding, okay? You guys got it, okay? And don't let your emotions get to you, okay? This is why God's gonna be really important, staying humble, okay? Because sometimes you can have a lot of fear, especially as a beginner trader, and don't panic. Don't sell when it's not time to sell, okay? And don't buy when it's not time to buy. Okay, that's being greedy and being fearful. Once again, being emotional can destroy it all within your trading assets. And buying into an asset just because everyone else is making money, okay, during a speculative bubble, for example, this usually results in buying at the peak at all-time highs. Make sure you please know how to read the charts. It's a left to right charts, and it's called trading for a reason. When you're losing, somebody's winning. When you're winning, somebody's losing. Stick to your fundamental analysis and plan allocation. Okay, and as far as the IPS, the investment policy statement, write down what your goals, okay? Write down what you want to achieve, write down how you're going to achieve it, okay? And write down how you're going to break it down. I reckon even you guys have 2 accounts, okay? 1 account for your long term, and then another account if you want to go ahead and day trade, swing trade, whatever, okay? Up to you. Okay, they have 2 different types of tax benefits. Your long-term account, I recommend you guys holding a trade for over a year, okay? So you get the long-term tax benefits. And then if you're going to have a day trade account, just use that and then pay your short-term tax. Okay. So get ready, okay? Fund your emergencies, pay your bills, clear your debt, and then you're going to be ready to trade, okay? And then you can go ahead and do a Roth IRA and a brokerage account if you want, okay? And go ahead and set up your initial long-term investments and start saving money through there. And stay the course, okay? Check your portfolio quarterly, not daily. Ignore the market noise and volatility, and let compounding work as magic over decades, over time. And the biggest risk is the risk of not investing at all. So start today, okay? Stay praying to God, keep grinding. I'll catch you guys in the next one. Peace. Thank God. Let's go and let's talk about what this means for the future of trading and how new traders can go ahead and jump into the market a lot easier now. So let's understand what the PD2 rule even is. The pattern day trading rule, as defined by the Financial Industry Regulatory Authority, the FINRA, it was a crucial regulation that governed day trading in the United States. Instituted in 2001, it was created to protect inexperienced investors from the substantial risk of frequent leverage trading during the dot-com bubble. So they didn't want people just throwing in all their bread and losing it all for no reason. Okay, when a bunch of new companies were hitting the stock market. Okay, so the pattern day trading rule was pretty much created in order to protect people. So the $25,000 equity requirement. So to be classified as a pattern day trader, okay, PDT, you need to execute 4 or more day trades in a margin account within a 5 business day period. Nowadays, there's 2 types of accounts. You have cash accounts, okay, which lets you trade strictly with your own money. And then there's margin accounts, okay, which lets you trade with some borrowed funds when it comes to the broker, okay. And once flagged, your account was required to maintain a minimum equity of at least $25,000. And if the balance dropped below this, day trading was then restricted. And what's a day trade in the first place? A day trade was defined as the purchase and sale, or sale and purchase, of the same security within the same trading day. So let's say, for instance, I purchased Stackmode stock for $30 a share, and I sold it for $34 a share within the same day. Let's say I did that all on Monday, okay? That is a day trade. If I bought Stackmode stock for $60 a share and sold it for $80 a share, okay, and I bought $60 a share on Monday and I sold $80 a share on Friday, okay, then that's not going to be a day trade, because that was days later I sold. I bought on Monday, sold on Friday, not a day trade. But if I buy on Monday, sell on Monday, that's a day trade, okay? So if you buy and sell within the same trading day, that's a day trade. And this rule applies to stocks, options, and ETFs. And the purpose of this rule: the primary goal was investor protection, and the rule ensured that traders engaging in high-risk strategies had sufficient capital to absorb potential losses, thereby protecting both the individual and their brokerage firm from financial instability. So the historic regulatory shift of 2025. So as of September 2025, FINRA's Board of Governors has officially approved amendments to replace the pattern day trading rule. Exciting. This is one of the most significant changes to day trading regulations in over 2 decades. And the move comes as a response to the rapid advancements in trading technology and real-time risk management capabilities of modern brokerage firms. So the fixed threshold is now gone. The rigid $25,000 equity requirement for day traders has been completely eliminated. This removes a major barrier for entry for retail traders. And retail traders, if you ever hear that term, it's just people who just want to get into the market. Okay, not like hedge funds, banks, or anything like that. Just individual investors a lot of the time is what retail means. So individual investors and individual traders with smaller accounts who were previously unable to engage in frequent trading can now do it. So replaced by intraday margin framework. So the old rule is replaced by a more dynamic and flexible intraday margin framework. This new system applies existing maintenance margin rules to a trader's real-time intraday exposure, making it a risk-based approach rather than a capital-based one. And pending SEC approval. While FINRA has approved the change and must still be filed with and formally approved by the U.S. Securities and Exchange Commission, SEC, before it can fully be implemented. So traders should continue to operate under the existing PDT rule until a final effective date is announced. Okay. So FINRA approved the change, and we're still waiting for it to get approved. Implications for traders, a new era. The removal of the PDT rule represents a seismic shift for retail traders, particularly those with smaller capital bases. It promises a more accessible, albeit more complex trading environment. So lower barriers for new traders. So the most immediate and profound impact is the ability for new traders with accounts under $25,000 to execute frequent day trades without restrictions. This democratizes active day trading and opens the door for a new generation of market participants. More dynamic buying power. Under the new framework, buying power will be directly tied to the risk of positions a trader takes, and highly volatile securities or concentrated positions will consume more margin quickly, while stable assets will allow for more leverage. This requires traders to have a better understanding of margin mechanics before you lose all your money and blow your account. An increased importance of risk management. Since the fixed capital floor is now removed, risk management becomes paramount. If you don't follow your rules, if you're not disciplined, if you don't humble yourself, okay, if you don't wake up, pray to God, study the charts, work out, have a strict routine, journal all your trades, you won't be successful. Okay, you have to be extremely, extremely disciplined when it comes to this game. And it's about keeping up this bread, keeping up getting this money year after year after year. It's not about just making 7 figures in 1 year. It's about doing it again the next year, maybe scaling to 8 figures, 9 figures, and pushing yourself further based off the discipline consistency. Risk management is going to become paramount. Okay, the more power that you have, the more power you're going to have to control. And traders need to be vigilant about their intraday exposure to avoid margin calls or forced liquidations. Forced liquidations is where the market is going to pretty much automatically close your position for you. And if you don't pay the money back that you owe the broker because you're paying with leverage, which means they're giving you capital, then you could be subject to court fees and they could owe you money, or you have to owe them money. Okay. So diving deeper into the intraday margin rule. The intraday margin framework is a sophisticated replacement for the outdated PDT rule. Instead of a blanket restriction, it uses real-time metrics to determine a trader's capacity for risk. And here's how it works. So real-time calculations. Brokerage firms will now calculate and enforce maintenance margin requires throughout the day. This provides a more accurate and responsive measure of a trader's risk level. So position-driven leverage. Your trading leverage will no longer be static. It will fluctuate based on the specific positions you hold, their volatility, and the concentration of your portfolio. So for example, a highly volatile tech stock will consume more margin than a blue chip utility stock. And the impact on different strategies. This can make strategies like scalping or fast-paced equity trading more viable for smaller accounts. However, it also introduces a new layer of complexity, requiring traders to understand the specific margin impact of each security they trade. So here's an example scenario, trading under the new rules. So let's consider a practical example of how the new intraday margin framework might work for a trader with a small account. So let's say, for example, Alex, right? Okay, let's use that name for example. Let's say Alex has a trading account with a balance of $5,000. He wants to execute more than 3 day trades in a week, which was previously impossible under the PDT rule. So in the old rule, Alex would only be restricted to 3 day trades. He could not execute a 4th one, regardless of the quality of the signal or his risk management, okay? Because it's 3 trades in a week. Now with this new rule, Alex can now make a 4th, 5th, or even 10th day trade, and his ability is no longer limited by a number of trades, but by the intraday margin available in his account. And his broker monitors his risk in real time. And if he takes a position that's too large or too volatile for his account size, the broker system will simply prevent the trade. So risk and key considerations for traders. While the new framework offers unprecedented freedom, it's not without its own set of risk. Traders must be prepared to adapt their strategies and mindset.
you can be subject to intraday margin calls, where unlike the old rule where you were protected by a fixed floor, you may now face intraday margin calls. If your positions move against you, this requires immediate action and could lead to forced liquidations. And education is going to be paramount. Understanding concepts like maintenance, margin, concentration limits, and intraday exposure is now a non-negotiable part of a day trader's playbook, and a lack of knowledge could lead to significant losses. And firm-specific rules. While FINRA sets the regulatory minimums, individual brokerage firms are free to impose stricter rules, and traders must be aware of their broker's specific policies, as these can vary significantly. And the removal of the 25,000 PDT rule, it's really just a monumental step towards monetizing day trading for brokers so they can make more money. And it's a monumental step towards modernizing day trade regulations, making it more accessible for everybody. Okay, so God is good. It's an opportunity for you to come on the charts and make some money just by being disciplined. Make sure you get informed. Head over to Stackmode Network for all trading education. And this rule is going to make trading more accessible. Okay, it's going to bring more volume to the market. More people are going to start trading, inshallah. Okay, and it's also going to come with an increased amount of responsibility. With more power comes more responsibility. Okay, love you guys so much. Stay prayed up with God. I'll catch you in the next one. Keep grinding. Peace.
You might think that inflation is a normal part of life, but the reality is that your purchasing power is silently being stolen from you every single day by the very institutions claiming to protect it. Central banks have the power to print infinite amounts of currency at the push of a button, which dilutes your savings and forces you to work harder just to stay in the same place. They control the supply, so they control the value, and Bitcoin completely flips this power dynamic on its head. It's the only asset in human history with strictly finite supply that cannot be altered by any government or chairman. There is no backdoor and there is no print button because the code is absolute. And while fiat currency relies on trust in politicians, Bitcoin relies on mathematical verification, and it's created by actual power and resources. This is not just about digital currency or making a quick trade. This is about the separation of money and state and ownership. In this video, I'm going to show you exactly how Bitcoin renders the central banking model obsolete and why it's the ultimate hedge against the system designed to devalue your life's work. Let's dive into it. Let's go and let's jump into how central banks hold a monopoly on the money supply. So as you know, things have to be systematically processed when it comes to central banks' systematic formations, such as wire transfers or direct deposit, for instance. Certain things have to hit on certain days and certain time frames due to the fact that approvals have to be made by the centralized banks. Now, when we're trading cryptocurrency, you're working in the decentralized world. Everything is way different. Okay, everything is based off the peer-to-peer transaction system. Everything works off of smart, autonomous contracts. So whenever transactions are sent over, pretty much computers do all the processing. When you send a wire transfer over to somebody or even to yourself to another bank, the bank has the ability to approve or decline that. Cryptocurrency puts the freedom back in the people's hands. And let's go and let's jump into how all this works and why central banks really don't like this. Let's talk about the loss of monopoly. So central banks manage the economy by printing money, which is quantitative easing or pretty much restricting it. And Bitcoin supply is fixed at 21 million. So it having that fixed statistic baked into it, one, not only makes it more scarce, but it's going to have a more baseline stability cooked into it, and inflation is going to be a lot more manageable. When it comes to fiat currency, you can pretty much print infinite dollars nonstop. That's you might see things from 10 years ago might cost completely differently from today, since more money has been printed over the years have gone over. Okay. And the competitor. So for the first time, citizens now have a viable opt-out option. So if a central bank debases its currency due to inflation, people can flee to things like Bitcoin. And this forces central banks to be more disciplined, limiting their power. So you might have seen things recently as of 2025 when this video is coming out. Banks are now starting to incorporate certain things like Ethereum, XRP, and Bitcoin systems within their system, since they know that people are now looking towards cryptocurrency to manage their money or even hold their savings. So instead of getting 2% or 3% APY stands for annual percentage yield, people rather go put their money into a cryptocurrency and let their money grow faster at a rapid rate. And not only that, it's going to be a lot more manageable too. If you go to the bank, if you have 10 bands, you go pull up on the bank, a lot of the times you're not going to be able to pull that out right away. You might have to come back tomorrow, the next day, because the bank has your money pretty much invested. Okay, so if our money's parked in the bank, it's going to be their money too. It's being used. That's why certain things like Zelle have withdrawn deposit amounts, because they don't want people just
pretty much managing their currency how they want. Cryptocurrency takes that all the way. If you want to send $1 million today and tomorrow, you can do that. With the normal traditional central bank based off of fiat currency, they're not going to let you do that, since that puts too much freedom in people's hands, and a lot of business moves can be made a lot quicker. So instead of the banks having the power, now people have the ability to build certain things like banks, their own hedge fund systems, and their own funds, etc. So now people have the ability to have some more individualization for their family even as well too, versus having to run to the banks every single time. So back in the day, people would have to keep all their cash in the banks for the most part. Okay, things aren't like that today. Now you have the ability to even keep your cryptocurrency on something small like a USB drive. Okay, so keeping it extremely decentralized, and the IRS can't get to your USB drive unless they raid your house and find it or things like that. Okay, so no more having random money put out of your account, or even if you get sued, for example, they can go into your bank accounts and clear you out. If you have your money parked in cryptocurrency, that's money that they can't touch, and it's pretty much digital cash that nobody really knows that exists. So let's talk about the threat of censorship resistance. The modern banking system is used as a tool for geopolitical control and surveillance. Big on surveillance. They want to see every dollar that's coming in and out. A lot of things have been changing recently too, since 2020 plus. As far as cash, for example, you can't really use cash to get certain things. Like a lot of realtors and realtor companies won't accept cash for certain down payments, since you can't really prove that you're a real legitimate person and where that money's actually coming from. Okay, so central banks want to make sure everything is controlled, and pretty much don't want you to have freedom for certain ways that benefit them every single time. Certain ways it does protect society, but for the most part, things aren't always fair and realistic, because it is the world. So if somebody's working hard at their lawn mowing business and they've been stacking up cash, okay, their money shouldn't be obsolete. So now you have things like cryptocurrency where you're going to be able to put that, send that over to your bank account, and then you could file your taxes and do things a little bit more legitimately there, versus just having random cash come out of thin air and then you deposit it and they're like, well, where's this coming from? Okay, so your cryptocurrency can be baked in and a little more hidden, and it'll help you out in a lot of ways too. And Bitcoin is really a neutral, permissionless network, and it helps you bypass sanctions. Systems like SWIFT allow the US to cut off nations or individuals from global finance. And Bitcoin operates on the peer-to-peer network, just like we talked about in the previous slide. Meaning if you want to send $1,000 to somebody in Africa, you can instantly do that within the next couple of minutes if you wanted to. Okay, if you want to do that via PayPal or the traditional bank system, it's going to be a lot more difficult. They're going to put some type of hold on it, have to verify your transaction, and it's going to be just a lot more difficult overall, making financial blockages significantly harder to enforce. And financial privacy is going to be a big factor as well too. So Bitcoin is going to be pseudo-anonymous. Central banks and governments prefer total visibility due to the fact that KYC laws are in place, know your customer, and AML, to track taxation for the most part. So pretty much just the government wants their piece of the pie when it comes to any type of currency. So a decentralized ledger obscures the identity layer that they rely on. So certain things like the SEC were fighting with Bitcoin legislators, etc., and that led to certain dips. But now the US government and other governments have started holding the currency themselves, and certain laws have been getting passed. So central banks are trying to gain control, but for the most part, Bitcoin at the core forefront of it is still peer-to-peer and a currency based off of freedom. So we'll jump into the neutralization of interest rates. Interest rates are going to be the steering wheel of the economy, and Bitcoin creates a parallel system that doesn't respond to that steering wheel. And the liquidity trap. When the Fed lowers the rates to stimulate the economy, they want people to spend pretty much. So if people instead borrow cheap fiat to buy Bitcoin, which is a store of value, since especially it has a limited cap, giving it scarcity, which is immediately going to give it value, the stimulus leaks out of the real economy and into crypto assets, because people are starting to wake up as well. And broker and transition mechanisms are going to come into place. If a significant portion of the economy uses Bitcoin for settlement, central bank decisions, which involves raising or lowering rates, affect fewer people, rendering the central bank increasingly irrelevant. So it's like trying to slow down a car by pressing the brakes, but the car has decoupled from the wheels. Okay. So Bitcoin's coming in to solve a lot of problems, especially now since people are starting to be more open to international travel too, and living in certain other countries, especially US citizens. And you're gonna, instead of have to go through certain transfers for your US currency, You can easily just keep everything in cryptocurrency and spend that all over the world simply, instead of having to go through that headache of a transfer system. And let's talk about CBDCs, the counter move, and what are they doing about it? So they're copying tech, but keeping the control, and enter the central bank digital currencies, and it's programmable money. So unlike Bitcoin, CBDCs are centralized, and governments could theoretically program money to expire, which forces spending, and restrict what you can buy with carbon limits or freeze accounts instantly. And definitely total surveillance is going to come into place too. So a CBDC ledger would give the state a real-time view of every single transaction in the economy, eliminating the concept of cash-like privacy entirely. And they market CBDCs as safe, convenient Bitcoin, but the reality is that it's the exact opposite of Bitcoin ethos of decentralization. So keeping the freedom in the people's hands is really the main point of crypto. Yes, there's money involved, but honestly, you can make way better profit doing other things, such as like trading futures, for example. Even if you trade crypto futures, that's gonna be way more profitable than holding and keeping spot. But as far as you holding your Bitcoin, your cryptocurrency, you're really doing it for your ownership and your assets. Okay, having ownership, especially in something that helps the future, is what's going to help you prepare your forward and keep your money in that constant cycle. So instead of you being on the hamster wheel, put your money on the hamster wheel. Have everything flow. Okay, so after you get that big bag from futures, let's say for example, you know to go ahead and throw it into Bitcoin, which consistently makes profit year after year after year after year. So instead of you having to hustle and bustle forever, you could maybe sit down and chill because you have enough money from hustling, bustling, stacked in your investments, and then your wheel will be spinning forever. Okay, so if you decide to use your fiat currency and throw it into something that's gonna help your money flow into the hamster wheel, inshallah, you'll have a lot easier time. So they try and stop everything, just like they try and stop certain herbs as well too. They can't stop the Bitcoin network itself, since it's distributed globally, and they target the entry and exit points and targeting on ramps. So regulators pressure banks to not do business with crypto exchanges, even though they're starting to do it anyways, because they know people have to sign up for their banks, otherwise they're going to crumble. So if you can't transfer fiat to an exchange, it becomes very difficult to buy Bitcoin. And let's talk about some regulation by enforcement. So instead of creating clear laws, agencies like the SEC sue crypto projects to drain their resources and create uncertainty, driving innovation offshore. But thank God, it's been a lot of righteousness going on. Certain people have been getting freed from jail, such as like the Binance creator and Bybit and stuff like that has been starting to get back on the United States soil. So a couple of years ago, around 2022, 2021, they started locking people up for enforcing certain cryptos or creating certain crypto brokers such as Binance and stuff like that. Thank God certain people have been freed, and just really things have been changing, and the crypto future is starting to look bright, especially since the US government now owns hundreds of millions of dollars worth it. That's really a solid and good factor, letting us know that, okay, the US doesn't want to fall behind since other countries also own hundreds of millions of dollars worth it too. Okay, so instead of being stubborn, the US is now actually turning on their brain, and that's leading crypto to future all-time highs, since the US dollar is the global currency of the world. But we never know, within a couple of decades could be Bitcoin. So a lot of things are changing, exciting time in the world, and central banks are pretty much on a game theory vibe. They can't end Bitcoin. The network is way too resilient and distributed, so they're pretty much trying to conform because they know people are starting to wake up. The righteousness is starting to oversee the darkness in the world for sure. People are starting to care about their health, want freedom for their money, and people might have family in other countries too. And you can easily help out your family in other countries with cryptocurrency. Once again, not as easy to do that if you're sending straight fiat in any country you're in. And they can't ignore it. Okay, it's sucking liquidity out of the fiat system. People are no longer keeping their money stacked inside of savings accounts, getting that 2%, 3% APY that most banks take advantage of in order to make profit. People are now just taking that money and putting it right into cryptocurrency. Even same thing with credit too. A lot of people are starting to wake up when it comes to credit. Instead of balling out, just buying things, people are now taking that, either they're investing in all of it into some kind of business and buying cryptocurrency, buying any type of shares that they can too with the cash that you can extract from the credit card if you can't extract the whole thing. So the likely outcome of everything, integration, and that's been slowly happening. A lot of banks are starting to finally realize, and as we start seeing more younger people get into CEO level positions,
I can see things change as well too, inshallah, especially as Trump come into office. The crypto support has definitely been insignificant rise. So banks will eventually have to custody Bitcoin and treat it as a reserve asset, just like gold, because they know people aren't going to be going for anything else. Okay, people are now more open to leaving the US more than ever. So now the US is very desperate to make the right decisions to keep people here and keep America going forward. So this fundamentally changes how the global monetary system operates in the long run. And a really small percentage of the world only owns Bitcoin. So don't think that you're too late. You're really, really early. And there's a limited amount. Okay, you don't want Bitcoin to be mined up and be like, oh man, I wish I bought Bitcoin in 2025. You don't want to be doing that. Okay, I don't care if you got $5 in your account right now. You don't need to be buying nothing. Go buy some Bitcoin. Okay, live off the credit card, spend all your cash on assets, and watch how your life change. Wake up, pray to God, take care of your family, stay down, and get in stack mode. I'm gonna catch you on the next one.
Class, let's go and let's jump into it. How working on your trading discipline helps you think long term. Understand that process is going to be greater than the process. We gotta focus on the discipline. God tells us to be disciplined, be patient for a reason. You can't think you're about to get rich overnight. Okay, it's going to be a consistent journey. It's going to take you day after day, grind year after year, and being disciplined decade after decade. If you're thinking this is a get rich quick scheme, if you think you're about to just come into the market and get rich overnight, I recommend that you guys go find something else. Okay, but if you're ready to grind out this process, be here year after year and generate wealth and transform your entire self as a human, let's go and let's jump into the lesson with discipline. So short-term versus long-term focus. So the gambler's mindset. So gamblers decide to focus on the next trade. Okay, so they focus on the next trade. Okay, and the immediate P&L. So you can't do that. Okay, yes, you can focus on the next trade. Don't let this trade destroy you if you decide to take a loss. Okay, but you can't just immediately focus on the next trade. Okay, whether you take a L or you take a win. Okay, whether you lose or win, you have to pause for a second. Don't immediately try to take another trade. If you lose, don't try to take another trade trying to make some more profit back. And if you win, don't try to take another trade trying to make even more. That's greed. All right, don't try to just trade immediately again. Relax. Okay, don't let any emotions destroy you and just focus. And don't let any emotions trigger your trading material. Okay, no greed, no fear, no FOMO. You don't enter off of any of that. You enter off of strict criteria. If you're going to be breaking retest trader, you're going to wait for resistance to be broken, turn it to support and take it up to the next level. Okay, and your outcomes, right? You should not be having extremely random results when it comes to how much you're losing. For example, if you're losing different amounts each time variously, okay, and it's random, not calculated, you're gambling. You should know exactly how much you're going to lose when you put down the trade. And stop asking yourself when you get onto the market, how much can I make today? Ask yourself, am I going to stick to my plan? Does this setup look like an S plus criteria setup that I want to go ahead and take? You're not going to make money every single day in the market. So remove all of these short-term mindsets. The short-term gambler's mindset is not going to get you anywhere but being sad, okay, with no money in your bank account, because that's all where it left me when I was a gambler. Okay, destroying my account, chasing the next one, even making really good profit over and over again, destroying my account. Okay, not being able to keep it, not being able to consistently grow it. Okay, so, and then I had to really develop the trader's mindset and start understanding that this is a whole left to right chart. Okay, these stocks are out for decades, year after year. The whole market is meant to be played long term. So it's about keeping your account alive, taking trades that's going to keep your account alive, and prioritize those trades instead of just trades that's going to make you money. Okay, so focus on the system's edge. So instead of focusing on the next trade when you win or lose, having a frantic mindset, focus on the system edge. Reflect what you did wrong, or journal your trades, and then go ahead and see if you could stick to that for the next 100 trades. Okay, if it was a win, stick to that. Okay, stick to that system and keep doing that for at least 100 trades. If it was a loss and you stuck to your setup criteria, you could do the same thing. See if that system, that edge truly doesn't work. You can't just swap system and edges because of a couple of losses. Okay, you have to really understand your market edge, grind it out, fix any kinks, and stick to it. Okay, switching edges every 2 seconds, switching to this indicator, that indicator, is a big reason why people don't end up becoming profitable. If you're going to be a break and retest trader, you only trade break and retest till the end of time, for example. So long-term traders are also driven by logic. They don't trade off of emotions.
They understand their probabilities. They understand they're not going to win every single trade. They understand that their risk management is going to be imperative, and they know exactly how much they're going to lose in case they take a loose. Okay, so in case they take a L, and in case they lose, they know exactly how much they're going to lose. And they have a consistent equity curve. Okay, low drawdown. They don't let their trades suffer too much. They play with the stop loss if needed. Okay, which is an automatic order that's going to close your trades when needed. And they make sure they play for sustainable growth, growing your portfolio over time. And they ask themselves, am I following my trading plan? Or how much am I risking today? Okay, instead of just wondering about how much am I going to make today, ask how much am I risking? Does this calculate between 1 to 10% of my account? Okay, and if so, then you can go ahead and implement that within your strategy. And long-term survival is achieved by prioritizing capital preservation over just immediate gain. Okay. So discipline, it's going to be the foundation of process, and that's with anything. Okay, whether it be praying to God. Okay, pray to God every single day. Okay, requires discipline. Working out requires eating healthy, eating clean, working out Monday through Friday, for example, 5 days a week. And discipline isn't just about winning. It's about making every action replicable and measurable. And a strict entry-exit criteria is going to be needed in order to participate within the markets within a logistical way. So if your setup doesn't meet all of your criteria defined in your plan, you don't trade. Okay, and this prevents emotional entries and revenge trading. So make sure that you have your risk limit intact. Okay, know exactly how much you're going to lose, know exactly where you're going to enter, and know exactly where you're going to exit. Okay, once you have these 3 things in place, you can go ahead and take your trade. Okay. And some non-negotiable stop losses. A 1% risk, let's say, for example, per trade limit ensures that no single loss can derail your multi-year trading trajectory. And the soft loss is going to be extremely needed. Okay, so your risk limit can be between 1 to 10% of your account. Okay, and consistently journal. Okay, I'm going to drop the Stackmode app too, where you guys can go ahead and journal. Use a physical journal, Notion, Discord, whatever, and you can document every single trade, even winners with high fidelity, and they ensure that you have the data needed to make objective long-term improvements. Even if you fall into a season where you feel like you're not hot anymore, you feel like you're not winning like you need to, you can go ahead and check your journal, check out the profits, and just go ahead and replicate what you were doing then. Okay, don't change anything. Be as consistent as possible year after year, inshallah. So the bridge control. Risk control is going to equal longevity. Okay, so why does 1 to 10% of your account per trade? Okay, why does that discipline force long-term thinking? And this is because you're not instantaneously ready to destroy your account over one trade. Like, you know what, I'm going to use all the money in this account. It's either I win or lose, forget it. Okay, no, you're not building any edge like that. You're not working on yourself like that. Everything is a grind, and survival is going to be paramount. If you risk 50% on one trade, you must make 100% on the next to break even. And disciplined risk management, 1 to 10%, makes the next trade a simple statistical event, not a catastrophic recovery event. Okay, so you guys don't have to trade within a sense like, oh, I just lost this amount. I just traded with 60% of my account. And then you only have 40% of your account left. So say you lost 60% of your account, right? Then you only have 40% of your account left. Then you're about to trade with all of that, trying to make it back. Okay, and you're going to have to put on multiple trades, and your emotions are going to be all over the place. But if you lose 5% at a time, 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 and then you win 40%, you're good. Okay, you're good. You have to stick to that type of structure. Understand the logic is going to be in front of you. Protect your edge as well too. Your trading system is going to work over hundreds of trades. You have to focus on the long term. And discipline ensures that you execute enough trades in a consistent manner for your statistical edge to actually materialize. Inconsistency destroys your sample size as well too. Okay, don't just start losing yourself once you start making some money. Don't start throwing on more size than need to be. Don't start taking setups you wouldn't normally take, and focus on yourself and be blessed with the ability that God has blessed you with. Okay, and just keep growing it by staying locked in, staying disciplined, and staying down. Okay, keep reinvesting your profits into more different plays. Okay, keep being disciplined within the real life. Don't spend money that you don't have. Okay, and take your time and enable compounding. Compounding growth is the engine of long-term wealth, and discipline prevents large drawdowns that stop the compounding process. A small, consistent gain preserved is infinitely more valuable than a huge volatile gain followed by a huge loss. And the drawdown trap. To recover a 25% loss, you need to gain 33%, okay, which is going to be pretty manageable. So to recover a 50% loss, you need to gain 100%. And to recover a 75% loss, you need to gain a 300% win. Okay. So discipline is the tool that locks you out of the drawdown trap, forcing your focus onto the next consistent
decision after you've reflected, after you've journaled, okay? And if you follow your criteria, you're gonna stick to that plan. Not the last emotional mistake, okay? Don't just hop into a next trade as soon as you lose, okay? Relax, take your time, reflect on it, and then come back stronger. So the metrics of longevity, expected value, EV, expected value formula. You have the win rate times average win minus the loss rate times average loss. So expected formula, okay? Expected value formula is a long-term forecast, and EV tells you what your average profit per trade will be. And over a large sample size, let's say for example, took 500 trades, okay? You can go ahead and check to see what your average profit per trade will be, okay, once you calculate everything will be. And depending on your contract size as well too. And discipline is essential because it's only the factor that's going to ensure your actual performance that meets your theoretical EV by controlling the inputs, okay, your average win and loss. So the disciplined trader's EV, let's say they have a win rate of 45%, for example, okay, you can have a win rate of around 90% if once you get pretty good, okay. Something I've tested myself. April had a really consistent month, posted every single trade on my Discord and stuff like that. And average RR, okay, the risk to reward, okay, let's say they have a 2-to-1 risk to reward on average, okay, that means they're doubling their money. So let's say they took a trade for $50, they're making $100, okay, a trade, okay, so that's going to be a 2-to-1. So the EV is going to be positive. The system has an edge. They're making money consistently, they have a good win rate, and their account is growing over time. So let's go over the inconsistent trader nullifies EV, and the emotional trader destroys EV by changing the variables. They move stop loss, which then destroys all your percentage equity curve, which then increases your average loss. I know when I was moving stop loss, destroying everything, it was definitely messing up P&L. And they cut winners short too. Stop having so much anxiety. What did you enter the trade for? You got to really trust the end like that God bless you with. Stop closing your trades early. That's cringe. All that fear, all that anxiety, you're trying to get rich. You know, rich now Rari. Stop being scary. And stop chasing low quality trades. Okay, that's really going to decrease your win rate. Okay, we're here to win. We're here to put in some trades that are going to be high quality, expecting us to safely make some money, inshallah. And without discipline, the EV formula becomes meaningless, leading to random destructive results. So make sure you guys are doing everything within a structured, unbiased formula. So the final step, treat trading as a business. Some of you guys are taking it as a game, as a mini game, scalping on the 1 minute, 5 minute time frame, having fun, smiling, cheesing, losing all of your money. Okay, when you're a trader, you got to understand that you're the boss, you're the CEO, and your role is to not predict the next price move, but to manage your capital, execute the business plan, okay, in order to catch the price move that you want, the directional bias based off of, and then analyze your performance, okay, consistently withdraw certain amounts. Let's say I make $1,000, I'm going to withdraw $500. Then I'm going to take 30% of that and put it away for taxes. You have to understand you're your own boss. You have to be structured with even the money that you're making. And daily discipline is the only thing that's going to ensure success. Focus on the 10 steps, okay, you must take today. Focus on the process rather than the 10,000 other ones that you hope to make tomorrow, okay? So focus on the 10 steps. Don't focus on the $10,000, okay? Focus on the 10 steps, okay? Focus on what you need to do. What's stopping you from getting the $10,000, okay? Your discipline. Get more structured. Lower your ego so you can stop blowing up your account. You can start actually growing it and start winning. Okay, come to me for mentorship if you need. Head over to Stackmode.net if you're struggling in trading. And have a compounding mindset. Okay, I'll give you guys a free call as well. And understand that small, positive, disciplined returns executed consistently are the only reliable path to long-term wealth creation. And longevity is going to be the true goal. And think in centuries and act within seconds. So, say prayer to God. Keep grinding. Catch you guys in the next one. Once again, you can head over to Stackmode.net for all trading education. Peace.
The strong reasons why market's going to be going in upwards directions is due to the fact that these stocks help the United States economy. That's going to be the strongest reasons, and there's a reason why the billionaires within the trading community are people who play United States stocks companies, whether owning shares and options such as Warren Buffett, etc. Because it's going to be honestly the easiest market to play. Forex market is very sideways. Futures you can't hold overnight unless you have a certain amount of margin. So the United States stock market and even cryptocurrency is going to be great realms to just buy and hold your money. Okay, so let's go ahead and continue the lesson here. So these stocks aren't just random stocks listed on TradingView or these brokers so people to just make invisible money.
These stocks are real companies that people actually work at, okay, that we might have worked at in real life, okay, and they generate real income. So since they generate real income, they can also employ people. So they can employ people. And when they employ people, these people pay taxes to who? The government. Okay, so as long as these companies are making money, okay, and people are working at these companies, then the government will continue to make more money. So these companies being profitable, these companies doing well, these companies making money, they help out the government. And anything that helps out the United States government will be pushed. Okay, that's just what we know about trading and just fundamentals of things. Okay, if it helps the government, it's going to be pushed. Okay, there's a reason why cryptocurrency didn't get a big push until SEC laws and stuff like that were regulated. Okay, so until the government regulates it, and unless the government has something to do with it, it's not going to have too much value until then. But every single one of these stocks boost the economy since they put jobs out for people. Jobs include people who pay taxes. Taxes go to the government, making the United States more wealthy. Wealthier we are, more power we have over other countries. Okay, so it all starts from just simple things like wealth. So options and the fact that these shares and stocks go up in an upwards direction is really important. Okay, it's way more important than people even think. Okay, so market's not just, oh, I'm gonna come on here and just make some money. Okay, it's real life stuff happening on these charts, and really understanding everything is gonna help us understand what we're gonna be trading for. So market's going in an upwards direction. So this is why we're gonna be focusing on call options. Okay, so as we know, call options, they pay you whenever you think price is going to go in an upwards direction. Okay, if you speculate and you're buying a call option and you think price is going to go in an upwards direction and you're correct, then you get paid. Okay, so that's going to be a call option. And the reason why we're going to be focusing on call options is exactly what I just broke down. These stocks have incentives to go up. There's also going to be laws such as the short sale restriction that are going to be in place too, to make sure that these stocks don't just fall flat down to zero. Okay, there's a reason why decades of these stocks of going in an upwards direction has been a thing. Okay, so it's about letting go of all the fear, trusting God, not having any weird anxiety of, oh, what if it just falls down to zero and it's time to start just investing and being a boss. Okay, so we're going to be talking about the proper levels to play at. Okay, and we're going to keep talking about why we're playing at these levels and what we're buying. Okay, I always want you guys to understand why. I never want you to just be like, okay, just do X, Y, and Z and just do this. It's going to work. No, I want you to understand the deep reasoning why this works, why people are billionaires buying just shares and call options. Okay, so it's about finding things that are undervalued and catching the sweep up. Okay, every company wants its share price to go down. It doesn't make sense to really play puts due to the fact that market is not built to go down. Exactly. And even when market does go down, exactly. And even when market does go down, people are quick to buy the dip. People are quick to buy the dip, and market will recover right back to wherever it dipped from heavily. It'll fill it right back up. All it is just a discount. All it is just like clothes and cologne and whatever. It's just going on sale. That's all it is. Market just goes on sale whenever it falls down. So puts don't really make sense to purchase, especially when you get on your higher time frames, especially when you're playing companies that have good revenue and actually make money and the share price increases year after year. Playing puts, not only are you going to have significantly shorter trades, your take profits aren't going to be as easy to put down because one, you can't predict where the market's going to bounce at. Okay, so you can't predict where the market wants to stop at all the time. Now, shorting and stuff like that comes really from Forex traders and is something that's seeped over to the stock market. But the Forex chart and the stock market chart is completely two different worlds. Okay, stock market just goes up in an upwards direction. Okay, and that's just the truth of it. Okay, if I pull up the Forex chart here, Forex is extremely sideways. Okay, you have price action all the way up here, We got price action all the way from here from 1977. We got all types of stuff going on. Okay, but if I click on the fluffy stock market, it's literally going up in a straight line. Okay, it's almost impossible to not make money in the stock market. This is why I'm so passionate about teaching in these videos. I'm starting to realize that they've literally made it to where we can just get money for free. It's welfare. It's genuine welfare. Instead of making stupid decisions, trying to flex for people who don't care about us, trying to make decisions that are just way too fancy right now instead of staying down and investing. Okay, those are the things that keep people back from being financially free significantly early. The opportunity is here for us to just invest money and infinitely turn your money into more money. This just goes up in a straight line. It's impossible for anyone to not make money on the United States stock market. It's impossible. Okay, and it's about just making really good decisions. So price has an incentive to go up. So forget put options. We're focusing on calls. Okay, we don't want to be shorting the stock market. There's a reason why you can't even short the stock market on a lot of brokers too. You also have to think about that from a logical perspective. Most people on most brokers cannot short with shares. Okay, they can't short with shares. They can only purchase shares. So everyone's trying to just buy the stock. Also, CEOs are trying to be richer than the next CEO. So they want their company's share value to be going in an upwards direction. They want to be classified as a billionaire. So also more incentivization to go in an upwards direction. And there's also something called dividends. Dividends are going to be what the stock pays out. So the more you invest into a stock, if a stock is making good income, it'll pay out what's called a dividend. And that's going to be money that it pays out back to the shareholders. Okay, so it's like, you know what? Thank you guys for investing in us. Here's some money back. Okay, here's your reward. And that's what it's going to go ahead and say. Okay, so if a company has enough money to do that, that means that it's profitable. If it's profitable, it's most likely going up on the stock market. Okay, so there's incentive for it. The more profitable something is, the more it's going up on the stock market. Hence why when a company makes a big deal, it just shoots up. Okay, because it's now more valuable. Okay, the more money and the more valuable something is, the more of a high share price it'll have on the stock market. Okay. So, cool. That's keeping those things in mind. So now let's talk about when a setup is going to be good to play and when not. Okay. So let's say, for instance, here, I have this area up here. Okay. One area that we're not going to play at is going to be called all-time highs. Okay. We're just not going to be playing at all-time highs because, one, we're trying to catch a sweep up. Okay. So all of your setups will look like a V. Every single setup will look like a V. Okay. And what your profit is going to consist of is the right side of the V. Okay. So the left side of the V is going to be the resistance. Okay. This is where price is falling in a downwards direction. So you can see here, you could see price creating resistance here. Okay, this is the left side of the V. Price is falling down. Okay, the left side of the V. What we're looking for is playing the right side of the V. Okay, we're playing the right side of the V. All of your trades are going to be the right side of the V. Okay, you're going to be buying call options, expecting price to sweep up. Okay, that's what you're going to be looking for. So how can you play the right side of the V if price is falling the left side at all-time highs? You can't. Okay. So let me show you a good example of an actual good setup. So this is how we find a setup. What I'm going to be looking for is a couple of things. One, I'm going to be looking for higher time frame areas. So I'm going to make sure that I'm on my higher time frames. I'm going to make sure I'm on my weekly time frame first. My weekly time frame is going to help me see everything. It's going to be my eyes. I'll go from my weekly time frame to my daily time frame to my 4-hour time frame. Okay, so you're going to start off on the weekly time frame first, due to the fact that the weekly time frame is going to help you once again see everything. It's going to be like an eagle eye, okay? Because tunnel visioning when it comes to trading can be extremely bad, okay? You want to be able to see the full picture and not just what you're seeing on a smaller time frame. You're then going to go to the daily just to see the picture painted a little bit in more detail. And then you're going to go to the 4-hour to see any hidden candles. So what we're going to make sure is that whenever you're on your 4-hour time frame, and this is why we can't just use the daily and the weekly, we have to make sure our extended trading hours is on. So as you can see, the daily and the weekly don't have that. That's due to the fact that they don't show pre-market hours because the weekly and the daily go off of 24-hour blocks. So that's why we still need our 4-hour time frame. And then we're going to be able to turn on extended trading hours to see all the true candlesticks that we're missing. Okay, so so yeah, extended trading hours always needs to be on. So we're going to go from the weekly to our daily to the 4-hour. So let's go ahead and let's mark out a setup, for example. Okay, I'm going to talk about what I'm going to be looking for, and then I'm going to jump onto the charts. So my setup is only going to consist of 2 things. I'm only going to play setup 1, which is going to be a support mirror. Okay, if you see price bouncing at an area of support, you're going to be good to go ahead and purchase there. Okay, if you see price bouncing at an area of support, reacting from another area of support, okay, that's going to be a good area to purchase. Support is going to signify an area of demand where people want to buy the price. So it's going to indicate where buyers step in. Okay, so buyers step in an area of support. And we're buying call options, meaning we get paid when price goes in an upwards direction. Okay, so we want to be buying at areas of support. Okay, so if you see an area of support mirror itself one after another, that's going to be a good setup. Or it'll look like this. Sometimes you'll have an area of support. Price might run down through it. Okay, it might not bounce at the other area of support. It might break below it. But then it might come back up and bounce at the support again. Okay, even this would be considered a support mirror. Okay, so even if price runs down underneath the first area of support, if price decides to bounce at the area of support again, that's a clean support mirror, I like to call it. Okay, so you'll either see one area of support bounce right after another, or you'll see an area of support mirroring an area of support from the past that maybe didn't get reacted off of immediately. Okay, so your setup will either look like this, or it'll look like this for criteria number 1. And criteria number 2, very simple. It's when an area of resistance gets broken, and an area of resistance is going to indicate where sellers are. So resistance indicates where sellers are due to the fact that people have too much supply. So that's why resistance gets created in the first place. There's too much supply. When people have too much of something, when they've made too much money, they're like, all right, you know what? It's time to close. I'm out. Okay. And then they're going to go ahead and close their trade simultaneously. And a wave of enough people doing that is going to create what's called resistance. Okay. That's going to create resistance. So let's continue on here. So if an area of resistance decides to get broken past, okay, if an area of resistance or support gets broken past, we know that's called a breakout. So resistance getting broken past and turned into support is going to be called break and retest. Okay, break and retest. Okay, waiting for resistance to turn into support after it's been broken. So it's when you're waiting for the resistance to turn into support after it's been broken. Okay, if you see this, you can take the trade pretty much safely. Okay, we're going to talk about some certain criteria, how to read daily closes, etc., what a close is. But let's talk about some more fundamentals we are going to be looking at. it's important to have a logical mechanical process before we put down any type of size or money. Okay, did price do this? Did price do that? Having a large checklist is going to save us a lot of money when it comes to making any type of mistakes on the market. Okay, so one thing we're going to pay attention here too is the earnings. Okay, whatever broker you're on will most likely tell you, but before you put down a trade on whatever stock you're looking at, make sure that you look at the earnings. The earnings are going to go ahead and let you know when the report is going to come out, and the stock can significantly make upwards or downward sweep when these earnings reports come out. So we want to be making sure that earnings aren't anywhere near. Okay, if earnings are 7 days or less away, and you're trying to don't open a new trade. If you're already in something, it's fine. But if you're trying to open a trade and earnings are 7 days or less away, don't do it. Okay, because the price action is already going to be weird, and people are going to be wary of the same thing. They're going to wait for earnings to happen first and then make the trade. Okay, so if you see earnings a week away, 7 days or less, don't take the trade. Okay, just don't take it. Now, if earnings is far, you're fine. So those are going to be the criterias we're going to be taking. Let's talk about it on the chart. So once again, we're always going to start off on the weekly time frame, doing what's called top-down analysis, TDA. T stands for top, D stands for down, A stands for analysis. Okay, top-down analysis, TDP, TDA. Okay, so what we're going to do is I like to always mark out, okay, where would I want to close this trade if I got in? Okay, I can see price made all-time highs up here. So let me just go ahead and draw a zone up here. Okay, and I like to just eyeball. Okay, we don't use any indicators. We're not going to need any indicators. What we're going to do is pay attention to straight candlestick price action. Just like I told you, price should be doing the right side of the V fill. Okay, so we can see price decided to fall in a downwards direction here. Okay, this is going to be the left side of the V. Okay, and what we're doing is catching the right side of the V. Okay, we're going to be catching the right side of the V. So let price form the left side of the V, and then we're going to get in and catch the right side of the V. Okay, so you can see price maybe potentially trying to make a low right here. Okay, potentially trying to make a low right here. Let me go to my daily. Okay, I can still see price making a low right here. Okay, I can see, okay, I'm on my daily time frame. So I'm going to get on my weekly, put an area of resistance, put a zone around it. Okay, because I know, one, price has an invitation to go in an upwards direction. Okay, it helps the government, helps the economy. It's trying to go and be the most profitable and helpful company. Okay, it's a lot of recognition, and as human beings, we care about things like that. Okay, so recognition will be coming with being the most profitable and best company. So in order for that to be credible, share price has to be decent. People have to be investing into it. So let's increase the share price. Okay, that's what people are hoping for. So let's drop better products so people buy from us. That is what people are really hoping for who are behind these companies. So let's think like them. Okay, so you can see price deciding to make a bottom here. Okay, so then I'm going to start on my weekly. Okay, I can see just this large gap of space here between here and up here. So here I have the left side of the V. Okay, I have the left side of the V. Price already created it for me. And then price already drew out the bottom point. Okay, so now I'm going to go to my daily here. I can see price drew out the bottom point for me here. Okay, now